Wednesday.
How about it? Hump day.
Yeah.
All right.
I think we get through this one.
Now, this is when traditionally your weekend starts.
Yeah, this one especially. I don't know if I've told you, taking Friday off.
I'm sorry.
Going to Miami this weekend.
Wow. Okay. So
yeah, really the weekend.
All right. I
Here
guess,
and I'm out.
I guess we need to have a concept session for the team on what full-time employment means. It's like 5 days a week.
Usually.
Now, granted,
yeah.
Frank
Lead by example.
He got the special exemption where, if he's here 3 days a week, we're supposed to be blessed. 2 is acceptable. 1 is what he likes. But so you're going to Miami.
Yep.
For
a friend's wedding. First of my friends getting married.
Wow.
Congratulations, Julian and Hunter. Should be a great time. But yeah, get
Julian and who comes up with these names?
Their lovely
Julian.
Parents. Yeah. Yeah, it should be fun. It's in like the Everglades. So yeah, that's where Hunter's.
You're
they're both
doing it
from
all
there.
on a fan boat or something?
I think so. I'm
Fantastic.
hoping. Yeah.
All
just,
right.
A lot of.
Are you
planning
in the
involved.
wedding?
I am not. No.
Okay,
thankfully. So should be low pressure, but still got an Airbnb with like 10 of my friends.
Is this a Northwestern friend?
Yep. Yeah. So we're
Excellent.
all together.
Wow.
Yeah.
And now how old are you, Glenn?
I'm 23. He is 20.
Wow, he's getting married young.
He might be 25.
It's not young. That's not young. I mean, it seems like it's young,
Yeah.
but it's not.
We're seeing a lot of engagements, though. I think
Look at you.
if people made it through
Okay,
pandemic
I
and
don't want to
whatnot,
put you on the hot seat here, but
please do not.
but it seems like the tower of Glenn and his significant other, who he actually, I cannot confirm nor deny she actually exists because I've never met her.
This is true. I'm
Seems
pretty.
like-
I've gotten pretty good in Photoshop, is what it really is.
The tower seems like it might be tilting a little bit here, my friend.
We're holding strong.
Are you?
Love always wins.
They
you know,
said that
but-
in Pisa too, and that building's like this now.
and
so.
it stayed right there.
Yeah, you're right.
Bend,
It's
don't
been
break.
there for 300. That's right.
So-
Wow. So Miami, that's fantastic. All right.
So yeah, I haven't been since we went.
So what is a? I mean, are they having a big family wedding? Everything, or
Yeah, not entirely sure what it'll look
do
like.
they live in Miami?
Yes, they're
Okay.
both from Miami. Now they're living in Colorado. He's going to med school there.
Okay.
And so it'll be nice for them. They still have a lot of hometown friends, so having it at her home in the
nice.
Everglades, yeah. So
Very good.
should be fun. Saturday festivities. We have Monday off, which is really nice too. So
Hey, you actually don't have Monday off. Last time I checked, again, Forex never sleeps, so we're open.
Okay.
But you have Monday off, so.
yeah.
Well, that's good.
yeah,
So are you going to come back Monday?
Yeah, to the coldest day in Chicago this year.
Is it supposed to be
I
cold?
think it'll be like -1.
No,
High of
really?
Like 3, yeah. So hopefully
okay.
that doesn't affect planes. Who
Miami's
knows?
going to be nice, I imagine.
It's going to be nicer for sure.
Yeah.
So yeah, you got anything coming up? This
No,
weekend?
I will work Friday and probably work
That's
Monday.
so weird. Yeah, I don't really get that.
I know. It's just I didn't
wrong
apply
with
for the right job. That's the problem. But well, that's great. And now the missus lets you off the leash, so to speak.
Begrudgingly, yeah. We're going to dinner tonight.
And you didn't have get a +1, or you didn't want to admit to the +1.
I barely made the cut. So
Really?
I was a super sub invite.
Look at you.
Yeah, so I'm flying.
Whether or not that's true, I could see the sincerity in the way you pitched that to her.
Thank you. I practice in the mirror.
I was going to say that's well done. That's a
Man,
that's a veteran move.
Yeah, no. That's
Well
good. Thank
done.
you. Yeah.
Very good.
But yeah, we're going to dinner tonight at the new place on Fulton. Probably butcher this. Il Carciofo. It's artichoke in Italian, however you say that.
Okay.
It's right here on Fulton. Roman-inspired restaurant. Same chef that does the Rosemary
Oh, that should be
restaurant,
good.
right up the street. Yeah.
Okay.
So,
So
6
is it like
months
Northern
with my
Italian
girlfriend.
or what?
Wherever Rome is.
Okay. So, well, no, that'd be Southern. Okay.
Yeah.
Very good.
So
wow.
I'll let you know how
All
it
right.
is.
Butter her up appropriately, and then off you go.
That's the plan. Yeah.
Well done.
I hope she doesn't see through it as clearly as you do.
Well
'Cause, I
done.
feel like it was pretty smooth.
Well, good thing she's sleeping in and not watching this. So,
Yep.
but that's exciting. Very good. That'll be a nice weekend. So you come back Sunday, get the complete blood transfusion Sunday night,
Yep.
and you got Monday to
Recuperate.
Very exciting stuff.
Yeah.
All right.
Should be
First
good.
one down. Now, do you have more? I know Rob Mitchell, one of our team, last year I think he went to 6 weddings, was in 3 of them.
Egregious, yeah.
Yeah.
No, it is not full swing, thankfully. This is the first and the only engagement among my friends.
Very good.
Hopefully we've got
And is
some
it the
years to come.
traditional rehearsal dinner Friday night, wedding Saturday?
Yes. Not sure what they're doing for rehearsal dinner, but not my business, so that's good.
Okay.
I'll just be there on Saturday, smiling with my dancing shoes on. I think, actually, it's pretty funny. I think they might. I can't tell if one of my best friends is in the wedding, and I can't tell if he's joking. He went to the bachelor party, which was in Key West, and he said that they both plan to be barefoot for the ceremony, and I completely believe him. They're
Seriously?
one with nature. And
Did they
so-
write their own vows? Please don't tell me they wrote their own vows.
Probably.
Oh,
or they'll
jeez.
maybe they'll act them out, charades. I don't know, but so yeah, it'll be entertaining.
Oh,
to
I'll
say
never
the
forget
least.
when my brother got married. His wife wrote their vows, and it was, again, this was 30 years ago. It was,
So no chat GBT to proofread.
oh my God, it was. I remember the line: "Paint a little, dance a little, and always flush the toilet." I'm like, really? Oh my God! The stuff in the book that the minister says isn't good enough. You've got to paint a little, dance a little. Oh,
And so
all
you
right.
were tearing up right there in the frame.
No, I was like kind of retching up, but
That's really funny
oh my
that you
God.
remember it so
yeah,
vividly.
because it was so. I mean,
Oh, because you took it, you copied and pasted it. Is that how you remember it?
I know mine was very. Again, I wasn't. Nor my wife is a very practical person too. We went with what was standard operating procedure. We
First
didn't feel the
Corinthians or
need.
something?
We didn't feel the need to get creative. I don't know. That sounds so like angry old man get off my lawn statement. So good for them.
Yeah.
Whatever works.
I married my sister. I officiated. her
That's
wedding.
illegal in some states. Oh, okay.
I
Oh, you officiated?
Yes. And it was very small. They wrote their own vows, but I just kind of I don't remember any of them, honestly. So that means
Now,
they weren't
where
that
did
bad.
you do that? North Carolina or?
No, it was here. It was on like Navy Pier. It was very small. They just wanted it was like kind of.
And you
out
could
of
do
pandemic.
that. Is it a fallacy that it's legally you have to be a minister or something or not?
I did a certification online, yes.
Okay.
But it is state by state.
Okay.
And so I did sign the paper. I don't know if I had to do the.
Did you have the flowing robes and everything?
No, they didn't let me do that. They said, please.
The
keep
hat,
it."
the whole thing? No.
Yeah, the big scepter as well. No, just a suit, and I had a little folder.
I
And,
guess
know,
for Frank,
I-
you and I should do this jointly. But I want flowing robes.
and on horses for sure.
Oh, we'll definitely be on horseback. Yeah, maybe the flowing robe doesn't work then.
Yeah, no, we get more flow.
Yeah. What do you have for us today, my friend?
Yeah, should be an exciting day. Midweek, we're getting some movement in this dollar if we pull up the platform. And we've got a very hyped up CPI inflation report coming up today, which I know you're excited about. You've been telling us your guesses all week long, your own model forecasts.
Oh my God!
What do
I
you
could
got?
Care less. Just let it be different than what they're looking for. What are they looking for?
Yep.
0.2, 0.3 or
Well,
more?
I think this is why we're getting a little excited about it. Is we're expecting year over year an uptick in inflation, coinciding with
The PPI.
the PPI softer, and we're with the less than expected rate cuts.
So what's the month over month?
Month over month, we're looking at
0.3 again.
0.3. Yep.
Okay.
So we'll see. I think this is getting the year over year is getting a lot of attention, just from retail, just because is the Fed going to cut? No. Inflation's ticking up. We're all doomed.
Okay, it's 1 month backward-looking number of a basket of goods that if everybody had, they couldn't survive with. So, again, don't get caught up in the context. Again, inflation is important. If inflation is systemically via CPI, PPI, ECI, or whatever you want to look at, there's 20 different metrics. The Fed has the favored one. Is it the ECI? I think no, it's not, because that's employment cost.
PCE.
PCE, right? For us as traders, if you're a macro trader and you part of it is you want to try to chart economic activity, that's great. Any one data out of a data set has only so much value to it. For me as a trader, I'm less inclined to get wrapped up in the macro story. Yeah, inflation's not at 2%. The Fed wants it there. I'm more inclined to, if the number prints, again, let's talk about yearly. If it prints, 3%, what are we going to see happen? When I say see, and this is the trail, see happens is the algo-driven initial reaction to the number. So a high print there, what transpires?
In Forex markets, we should see dollar strength.
Agreed, because we'll see the bonds get kneecapped.
Yep.
And now the bonds are actually a little bit higher today. We're a half a tick higher on the long end. We'll go right back to those lows of 111, probably test that 110.25 low from yesterday, which was kind of a cycle low. We'll probably go right there. But remember, bonds will rally, the dollar will rally, but where are we doing that from? Dramatically, dollar highs and bond lows. So what is more interesting to me, does it stay there? Or do we test those lows and do we come off? So if we get a print of 2.7 or 2.6, what happens?
Anybody's guess. I mean, we see it come down, dollar come down. But
initial reaction is they'll sell dollars.
But yeah,
absolutely.
The momentum.
We'll see Aussie rally. We'll see Euro rally. We'll see pound rally. Dollar yen will come off. It was interesting because everything reacted to PPI yesterday except the yen. It just sat there. Now the yen weakened later in the day, but completely unrelated to PPI. So we'll get this algo-driven reaction to the number. Whether or not it sticks will be the interesting part. As traders, that's what we want to see. They challenge the lows in these currencies or the highs in the dollar. Is it met with people taking profits and looking at that extreme, or are they going to challenge anybody who's short dollars right here and trade through those and continue to go? That we'll get an answer to probably by 8 o'clock in the morning, and that'll be interesting. So it's really, again, the number itself carries a certain amount of context for the macroeconomist or those thinking about the economy. For traders, it's whatever this estimate is and the actual.
Right.
That's what we're looking for. So set your game plan accordingly. What do you want to do? Are you looking for a dollar rally to sell? Well, this may give it to you, it may not. If you have a position on, you think about sizing and management, both taking some profits or where am I going to determine I'm wrong? So it becomes, you want to make all these decisions before 7:30. So you have 46 minutes to do that and think about what you want to do. Is the dollar high? Are these currencies on sale? Absolutely. Let's take a look at Kiwi. Did we bounce a little bit yesterday? Yeah, but
nothing really sticking behind.
That's not a particular.
Yeah.
Right. That's not a particularly healthy bounce. The only thing I can say is we're off multi-cycle lows,
Right.
sub 56 cents or sub 55.5 cents. Euro looking at actually having a little bit better tape action to it. And let's go back down. Let's break that down to a more intraday chart.
Take it down to the 15-minute.
Sure.
Yep.
So we've actually seen the market do something we haven't had. 3 days of up moves. And while we've seen pullbacks, we saw a little bit of pullback later on in the day yesterday where the euro traded off its highs a little bit. Never going back to that previous, we see this stair step up here,
Right.
the second step. So tape action-wise, this has been much more constructive. So,
than some of those risk-on currencies where you are at those lows. Good news, you are getting a little bounce back, but hard to sustain right now.
right. So this is, in terms of, are we bottoming? Was 102 the cycle low? I don't know. But tape action wise, this is performing a little bit better, which makes me think that if you do get a hot print and we quickly go down to 102 and a half, that may be, again, 102 and a half happens to be the first step. If you're looking at it, that also happens to be a little bit over the one standard deviation daily range, which I think is 42 pips. If it breaks 50, 55 pips, and you want to be the contrarian of, I think this currency is cheap, that's an interesting entry level. And then you think about, where do I manage it if the freight train keeps going?
Right.
One way to look at it.
And that's what I think is interesting is with this, the fear added, and we'll get that initial reaction, but I think why the macro story in this is that if it is a lot hotter than expected, are rate hikes on the table? And I think that if any storyline is to catch a lot of people's attention, that one might recenter dollar expectations, because I feel like we've been at these low or dollar highs and just testing new levels. But if rate hikes are on the table, does that change the story completely?
Right. Now, Fed Watch Tool still has a hike cut priced in. They moved it out further in time. Does that come out of the market, and do we get a couple of chuckleheads calling for, the next move on the Fed will be to higher rates? I think that's the pendulum swinging too far.
Yeah.
The fact that they stopped cutting is in and of itself. Remember, we had at one point last year 7 cuts priced in 26. Going from 7 to 0 is a pretty dramatic shift. But what I like here about structure is, when you look at that Kiwi market, there's no bottom under there if it trades lower.
Right.
So if you want to buy it because it's cheap, that's your call. But your game plan around what's a reasonable level to get out, you tell me. There's nothing underneath it. So you have to pick a dollar amount you're willing to risk on it. Here,
I see.
Because of the structure,
Yep.
this is giving me an idea, okay, where did the market find value yesterday? Around 102.40 and a half. 102.40 to 50. We spent a lot of time there, and then we traded a leg higher. If that's the case, this kind of starts to give me where the market expressed some interest in being long. Does that continue to show some interest down there? If I want to be the contrarian and buy the dip a little bit, and if I'm wrong and they take out those lows, the next stair step is probably where I'd manage them. I like setups where I can define where I want to take some profits if I'm right, and also if I don't have anything on it, I'm looking at an opportunity. Tape-wise, this kind of gives me a setup where I can put some guide rails around it from previous tape action. And where if we go over to Kiwi, and and let's squeeze it up a little bit, we don't have the same constructive tape action whatsoever. And in other words, we haven't built on, we built some gains, we didn't hold on to those gains, unlike the euro, and we're rolling over a little bit here. This is a little bit more muddled chart. Interesting trade, sure. It's 56. It's funny. A friend of mine reached out to me and was looking at, he'd been looking at property in New Zealand. And if you think about it, a year ago, Kiwi was trading at 70 cents. The property he's looking at with 56-cent Kiwi is marked down by almost 30%.
Yeah, crazy.
So, and he happens to have dual citizenship. So it's, he's like, I'm looking at houses now that are, for me, really on sale. And it's an interesting dynamic. So yes, cheap currency, tape action, not as constructive. Make of it what you want, though.
But I think what you're bringing up is super important, and we can reference just these past few months as examples of, if you are saying a market is cheap, that the dollar can't get any stronger, and you're entering some of these contrarian positions without any expectations before, be it based in tape action or a dollar amount loss. If you're coming into it without expectations, you've been burned pretty bad over months because there really hasn't been a lot of reprieve. And if you're just picking a price level, every new extreme has been a fresh high for dollars. And so coming into it with an expectation of exit, good or bad, beforehand has been really important, as well as your time frame, because people can be stuck in this for more dollars than they initially thought,
Right.
and just for longer, because a lot of these are mean reverting markets historically, and so it really psychologically gets easy to justify. I mean, this will come back, so why would I realize the loss? But then all of a sudden you're in this trade for 3 months.
Right. And the question becomes, but from where?
Exactly.
Now, I traded Kiwi, and this was still on the floor when Kiwi traded 48 cents, and the Reserve Bank of New Zealand
Did you buy a
intervened.
house?
No, yeah, I was trying to hold on to mine at that point because I was long Kiwi from 52, 51.50,
Oh, geez.
and they were selling 100 lots in a fury because they were liquidating people, and it wasn't. Yeah, the 48s I bought were building inventory. And I was quite relieved when the Reserve Bank came in and just goes, we're 50 bid on the world. So, and the
Wow.
market found some stabilization there.
That sounds terrifying.
It was a wild ride. But my point being is, while this is, from a pot odds standpoint, very cheap, currencies get elastic when they get into new ranges. So setting those expectations around what I'm willing, yes, it's cheap, but think about, you could have said it's cheap at 58 cents.
Yep, I
And
was
at
just about to say right here.
And at 57 cents.
And you haven't seen anything back
And you
there.
were never given a reprieve.
Yep.
So think about what your goals are. And if the idea is it is cheap, realize that exercise of you have to feel comfortable picking a point that's a new low, that's, again, even cheaper, but where you're going to manage expectations. That way you go into it, you can take advantage of the opportunity, manage it, and then come back and move on to the next opportunity. So let's take a look really quickly, Aussie Kiwi. So we're talking about two commodity pairs that have not performed against the dollar that well.
Interesting. So here we're looking at the daily chart.
And why I'm looking at this, guys, is we know Aussie's really weak. We know Kiwi's really weak. Is one more weaker than the other? And how can I look at? Well, I could do the math. I can look
Right.
at high to low percentage wise.
You don't need to.
I don't want to. Yeah, I'm too lazy to do the math. What do? I look at the relationship between those two currency pairs, and what that tells me is they're both cheap by about the same percentage. This cross hasn't moved that much lately.
Yeah.
Is there a trade here? Not for right now, and we're running out of time. We'll go back and take a look at this maybe tomorrow. But no, they're both in very low levels right now. One hasn't outpaced the other in terms of one's fallen appreciably more than the other. That's what the cross tells me right here.
Yeah, an important check and frame of reference. Last thing I want to bring up is, are we looking at this pound dollar market? We've seen it much more elastic than even the euro dollar in recent trades. So is this a place to look for this CPI reading? Do we see a more elasticity in this market than perhaps a euro?
I think so. I mean, they've done a lot of damage here. I talked to three friends this morning, all who live in the UK, who are they have a Labour government right now. All my friends are Tories, they're conservatives, and they're all, oh, this Labour government is going to destroy the pound. It's going to par. We'll get a reaction here. Mm-hmm. I think there are other things playing through here. Again, the gilt market, their equivalent of U.S. Treasuries are called gilts.
Interesting.
Is getting sold very, very hard. Now, our yields go up and our currency gets stronger. Their yields go up and their currency gets beaten up. Why? Different set of drivers on how the economy is doing. It'll be interesting to see if we have. I don't honestly expect to see as much of an outsized impact CPI in sterling as I do in things like euro and those commodity currencies.
Just because of the amount of storylines around this one, whereas the others are free to be reactive to this news alone, at least for the moment.
But this has, a tremendous markdown. We saw euro sterling move dramatically. I would be more inclined to look at some euro sterling if I was going to trade CPI against it, with the idea of selling some euro and buying some sterling, just because what I'm doing is taking out the dollar component and picking up currency that is a little bit more relatively cheap than the euro right now, and seeing how that plays through.
Gotcha.
One way to look at it. What I love with Spot FX is you can parse these. You don't have to go out and construct euro sterling.
Right.
It's right there for you. It's tradable. So great walkthrough, my friend. This has been really fun. So in half an hour, we're gonna get an opportunity to trade. So this is great. Coming up next, Tom, Tony, and Vanetta. Stay tuned for that. We'll be back with you tomorrow at 6:30. Have a great day.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. tastytrade. Make your move.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a tastytrade account. Plus, smart tech and a broker who's got your back at tastytrade. Make your move, genius. tastytrade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both, and what a great morning it is.
Oh, you're warm in your house.
I'm warm in my house. Sadma paid me the $20 he owed me since Sunday. It's a great day.
I mean, it's just cheaper to pay him
I
something.
know.
Just shut up.
I know. Just to shut them
It's
up.
cheaper to keep her.
Yeah, right?
It sure is. It sure is.
Definitely
How
cheaper
about little
to keep
bad
her.
coffee boy?
What?
How about little bad coffee boy?
Because of your shirt. Yeah.
Okay. Good. I'm feeling good today. I'm all locked and loaded.
For what?
I don't know.
For CPI?
He can't wait.
You know, it's weird. I was supposed to have something to do last night. It doesn't matter what it was. And it got canceled.
Oh,
Great
your book
story.
club?
Go ahead.
Yeah, my book club. Anyway, so it got canceled. So I feel like it's the weirdest thing, but I feel like I've got tons of energy because I didn't have to do anything.
Oh, okay.
Is your country club not open on Tuesdays also, Tom? In the winter?
You know, I don't belong to a country club, just for the record.
Yeah, no, I know that. I am
There's no
I am aware.
place.
You're not as cool as Scott Sheridan.
There's no place that would really have me, and I don't play very well by the rules.
Right, yeah.
I don't like the fact that you have to tuck your shirt in. And
You do belong to Soho House, though, so
that's not a country club.
it's a private club.
And in all fairness, I haven't been there in a year and a half.
Okay, but it's
I lost my card.
okay, but you're presenting yourself right now like you're a man of the people,
am a
like
man of
Bat.
the people.
You're not. No,
Thank
you belong.
you. Thank you.
belong to the Soho House, which is an elite private club.
Oh, please.
That's right.
It's not that
Even
elite.
though Brittany wrote your application.
It's not that elite. They have like 100,000 members.
And he answered the questions.
Yeah, but there's 330 million people in America.
Whatever.
Okay, whatever.
I should
Don't
go there
bring
more often.
facts. Don't
I
bring
don't.
facts into this conversation.
You know, it's funny when our old office was next door. I loved it. Now that it's all, now I got to drive.
Who told you to move the office? I didn't tell you to move the office.
Still have the office.
Man, why? What is the Tooch
Don't
doing?
test us. We can go back.
It's just the parking situation.
Yeah.
You know, so I don't know. There's a bid on it now, so we'll see what happens.
All right.
Yeah, we'll see.
There's a bid on it.
There's a bid.
So since you had a free night, but since you are morally superior to people like me, Bat, and Scott Sheridan, and you don't watch TV,
Yes.
but you do watch 45 minutes of TikTok a day, what'd you do last night?
Well, I just watched TikTok. No, I actually didn't watch any TV last night, none at all, and I didn't watch any TikTok. But
You just stared at your wall. What do you? Because you don't read.
I can't read.
Finally.
I actually had I got in trouble. I had to write a paper.
Wow,
Yeah.
you had homework?
No, not really homework, but I was working on a proposal with somebody, and
Oh, I thought your wife was making you write like 1,000 times. I will not try to be funny.
no, but I've done that too.
Yeah.
No, I was working with somebody else. We were working on a proposal, so we just for something, and it just took forever. So anyway,
Surprised it didn't end up in my inbox.
it might still. It might still. It's a
Oh, I
little.
love
rough.
that for me. I love that for me.
It's a little rough around the edges.
Sure, great. Happy to help with more unpaid labor.
I always look at Tom's account to see what time he woke up in the morning, and I saw he was up at 3:16 in the morning.
What do you
so
mean?
I figured it was going to be a long day, but it's
For
not
your
bad.
trades, your trading accounts.
Did I make a trade at 3:16?
3:16 and 22 seconds. Yeah.
Huh. I think I did that sleepwalking.
You bought back some MNQ.
Oh yeah.
Yeah.
Yeah, that was a good buy. They're 60 handles higher.
Why were you up at 3:15 in the
I'm always
morning?
up.
That sucks, dude.
Yeah. I'm always up. I don't really.
Have you ever tried to track your sleep? So I got a new Apple Watch over the holiday. So I track my sleep every night. I'm kind of like obsessed with it. It's really interesting because it knows when you're in like the deepest part of sleep. It knows when you're in like
I know.
REM. It knows.
I
when you're
never been in a deep sleep.
It's just really. You've never been in a deep sleep.
No, I never. Well, Corinne has one of those
The rings,
Aura
the aura
rings.
Aura
rings.
rings.
Yeah.
She likes
My
that.
wife does too.
Yeah, they like that. She likes that because it tells her what kind of sleep and whatever.
Sure, yeah, it's really interesting.
Yeah.
Did you just slip there? Did you just slip there when you said they like that? Do you know, like, have you talked to my wife about her aura ring?
Yeah, she calls me every day to tell me about her aura ring. I mean, really, she just calls me to cry a lot and say, "Can you please bring him back to work? Get him out of the house." Yeah, I mean, yeah. I mean, women who are married to friends of mine just call me all the time, just crying. How do you get rid of this guy?
Yeah, that's not true. That's not true at all. Bat, how was your evening?
My evening was good. Thank you very much for asking. It was a quiet night. No hockey. We got finals, so Vinny got a 90 on his history final.
What about the science one that he aced?
We haven't gotten that back yet.
Okay,
We're still waiting. Today's math and tomorrow's Spanish and English. So this is the home stretch. This will be a tough one.
Spanish is tough.
He's good in Spanish.
I hated foreign language tests.
Why?
Me too. My brain didn't work that way. But he's good at English.
I just wasn't very good at. I took French.
Yeah, because you've nailed it in English. You're like, I talk good.
Oh, so true.
I didn't like French, and then so when I was in high school,
that was the language that you took in high school was French.
We only had 3 choices. We had French,
Latin.
Latin came later.
Oh, okay.
I took Latin for 2 years after that. So we had French, Spanish, or Swahili. Those are the 3 languages we had a choice when I was going.
That was what was offered.
That's all that was offered
in Larchmont, Connecticut.
and I decided. Then they offered Latin, so I switched to Latin. I hated Latin. Latin was the worst. Latin didn't make any sense to me. So, and for somehow,
but Swahili made sense to you.
More sense than Latin.
It's literally the foundation and the underpinning for much of the etymology of American language.
That's
right.
exactly the argument my dad made for me because you have to take Latin.
You have to take right.
Oh yeah, you have to take Latin.
Oh my God, you just used words I've never heard. What was it? The etymology?
Yes, etymology. Yes.
TP has a master's degree in Latin,
and he's useless.
Yeah.
And I proofread his cherry bomb every night, and I'm like, man, oh man.
I'm like, who the hell gets a master's degree in Latin? Like, I don't.
Do you know what drives me nuts about TP? It's like the most boomerist thing ever. It comes from like the typewriter era. He puts two spaces after every period, and it drives me and the email team nuts because we have to reformat it. But it's your generation, like you were, because you're literally using typewriters.
You know, I've written.
That's why I failed typing, so I would be better in the future.
TP and I used to write so much stuff together, and we would sit there and forget about the book that we tried to write. But
that poor writer almost unalived himself.
But forget about the book. But we really did write a bunch of stuff together. You know, from proposals down to letters and all this kind of stuff.
Sure, you were a scrappy startup.
But we did this for 20 years.
Yeah, I know.
And his writing, he's a very good writer.
He is a very good writer.
But his writing style would drive me crazy sometimes.
But you both have idiosyncrasies, but it's fine.
Yeah, but TP's is in English at least.
No, I would clean his stuff up. But no, he's a good writer.
Yeah.
Yeah, he was always but anyway, we wrote a lot of stuff together, but he would drive me crazy.
I'm a good writer too, right, Tom?
Yeah, sure.
We have data, and with the first full week of congestion pricing in the books, New Yorkers begrudgingly, because New Yorkers do everything begrudgingly, they are saying, you know what, it's working. So you have to pay a $9 fee to come into the city, and the MTA says 200,000 fewer vehicles entered the congestion relief zone below 60th Street. And so people are like, hey, I was in the Lincoln Tunnel. It took me like 3-4 minutes. And again, I don't know all the geographies, but they're like, it's working.
First of all, can I tell you what? They opened the express lanes. There's no traffic going home last night.
Yes.
Unbelievable. Yeah, finally, after like a year straight of.
I thought it was only inbound, not outbound. Or they're reversing them.
Yeah, they got it right.
I'm not sure. I know that they were open.
Yeah, they go both ways now.
Okay.
I know they're supposed to be reversible. I didn't know if they were reversible.
No traffic going home yesterday. 0.
Well, and also because anyone who had sense was allowed to work from home yesterday because the roads were incredibly crappy.
All I'm telling you is, after it's been a full year since since there has been a date.
Don't get used to it though. Don't get used to it. By March they'll be closed again.
Right? Yeah, they're going to start up again
for
in the
another
spring.
2 or 3 years. Yeah.
That's so ridiculous because it's been already 3 years. But for 2 or 3 months.
Listen, dude, as a South Sider who had to live through literally a 20-year-long project on the Dan Ryan, don't come jawing to me about 3 years. I do a 3-year bid on my head.
That is true. That is true. I got to give you credit for that.
It was nice this morning and yesterday afternoon to go home with no traffic.
Again, most people work from home today. I'm just,
please.
I'm just saying. But do you think we should have congestion pricing here in Chicago?
No, because I don't think we don't have the same problem.
We literally have the worst traffic in the world. Like we're in the top
have the worst
5.
Highway traffic.
How else do people get here?
Let me ask you a question. If you live in Manhattan, do you still have to pay?
I'm not an expert on New York City.
Like if you live
I think it's
zone,
like the bridge and the tunnel.
I know, but if you live inside that zone where they charge,
I don't think so. I think it's mainly people from New Jersey. But again, I don't.
Yeah, I mean, if we could keep people like Tony out from the suburbs to the city, I would be all in for that.
Your economy would go down if you do that. You can't do that.
But there still might be zones. Like maybe you live, outside of.
Like in my
but you still live in New York City, but you want to go to like the financial district. If you want to go into the 60s or the 50s.
I don't think Chicago's the same as New York by any stretch. But I don't know.
But people were like, hey, yeah, you know what? I took the subway. It wasn't too bad.
Yeah, I don't think they'll do that in Chicago, but we do have like weird permit parking all over the city.
Okay.
Yeah, in the neighborhoods, you mean?
Like
right?
you can't park in front of my house on nights that the Cubs play.
Yeah, but you chose to live near where the Cubs play.
I know.
No, it's okay for him.
Like I don't have permit. I don't have to have a permit for my parking in my neighborhood.
You don't? Okay.
No.
Yeah.
So it's.
But nobody wants to go there.
Okay, you know what?
The worst deal the city ever made was when Daley sold the parking to some private equity firm for like one.
Right, they sold all of our meters.
They sold all of our meters for like 20 years for like $1.2 billion. It's like a $10 billion loser.
Yeah.
Mm-hmm. It was probably one of the best private equity deals ever made and one of the worst business deals the city has ever made.
We're not great.
I don't know what Daley was thinking, but he screwed that up horribly.
All right, well.
I mean, it's literally like a $10 billion loser.
Sure. It's not gret. Well, that's why they got to nickel and dime you for going 22 miles an hour past.
I got another
past a non-functioning school. You got another ticket?
Yeah. Oh, bastards.
Wait, what happened?
Speeding ticket?
Well.
A speed zone ticket?
Speed zone ticket.
How do you not know where all the speed zones are by now?
I know where all of them are, I just forget. I actually know where every single one is around me, but I just forgot. And it's like, I think it was $60 or $70.
Oh, that went up.
Yep.
No, I thought it was supposed to be like 100.
No, your first offense is like $35, but then your second offense is like doubles.
Oh, you're a habitual offender.
And then if you don't pay, it doubles again.
Yeah.
Yeah, and I can't blame Sadler for this. Every time I go to visit him, I get a ticket.
They sneak up on you.
Time.
Do you know?
It's 5 miles. It's 5 miles over the speed limit. They hit you.
Yeah. Do you know a good hack for that, Bat? And for you, I know.
Yeah. Don't go visit Tom.
No, if you put in your directions into Apple Maps on your phone, even if you already Tony, you already know how to get to Tom's house. But if you use Apple Maps,
it pops up on my car. My car.
It'll pop up on your car. But if you don't have, I'm sorry, we don't all have $100,000 Teslas. But if you got a RAV4 like your girl, you use your Apple Maps. It'll tell you speed zone ahead or red light traffic
Waze,
ahead.
It'll tell you Waze.
Right. That's okay. Apple Maps or Waze. So even though Bat knows,
but I'm a man. I know how to do this. I mean, I'm a man. I go to Tom's house.
Okay, you're both men that owe hundreds of dollars to the city. Then be a man.
I don't put things in my,
He doesn't put things in his thing.
Okay. Did you hear, Chicago? We had another little critter. They pulled a coyote out of the Aldi in Humboldt Park. And then on Sunday, a plane at O'Hare headed to Phoenix had to come back to the gate because it hit a coyote on the runway and it had to come back to the gate.
Saw it. I saw the whole video. That was crazy because the pilot's like, I hit something,
Yeah.
And that was crazy. But the coyote they pulled out of the Aldi, did you see the video?
Oh, it's huge.
It was 2 cops, and I was like, call Chicago Animal Care and Control.
All I can tell you
but
is
the cops didn't know what they were doing.
He grabbed it from the tail.
That one cop who grabbed the coyote by the tail and pulled it out, that guy, I wouldn't want to mess
But then the coyote darted back in. He's like, you don't know me like that. You need one of the lasso. First of all, you need a white woman in Lululemon to be like, come here, little doggy.
Yeah, right.
You need your wife.
I'll tell you right now, that cop that pulled that coyote out by his tail, that guy, you don't ever want to mess with that cop. Whoever that guy is.
Bad hours.
You do not want to mess with that guy.
But the coyote, pictures have been updated. He is resting comfortably at a wildlife rehabilitation facility. He is scared, but once he reacclimates, he will be released in the wild. We got the video here.
This cop
on social media.
This is insane.
This video, viewed millions of times, shows police yanking the animal by the tail from the produce section of this Aldi in Humboldt Park.
Poor baby.
Witnesses say the animal had been roaming the parking lot.
Yeah, he was roaming the parking lot, and then someone had left a door open, and then he got scared, and so he went into the store. But this has happened before. Remember when the coyote was just hanging out in the Quiznos in 2007?
Yeah, it was in that sandwich shop.
Yeah,
I'm just saying.
Juice aisle.
I don't know. If there was a coyote in there, I'm not pulling him out by his tail.
I would be like, can I pet that dog? I can't pet that dog. I would think that I could just rescue a coyote because I think that about myself. I'm just saying, I think I could do it.
Yeah.
Have you ever heard Michael Che do his bit on pit bulls and white women?
No.
Never heard it?
No, but I mean, I can envision it. It's probably pretty funny, but maybe not safe for morning TV.
You were able to get to that in the 45 minutes a day you spend on TikTok? Where'd you find the time?
This is an old one. This is from 10 years ago.
Is it from SNL or from his stand-up?
Yeah, it's from his stand-up.
Oh, okay.
Yeah.
That's funny. Anyway, hey, we got a great show for you today, whether you would yank a coyote by its tail or not. It's a wonderful Wednesday here at Tasty Live. That means a lot of great content headed your way. At the top of the 8 o'clock hour, strategies for your IRA, trading basics for IRA accounts. Would you be making changes in your IRA because of this new administration?
No.
I just didn't know. I was just saying it because there's articles when I'm looking for news. I didn't bring any of those articles.
Would I make a change to the way I trade?
Right, maybe lightening up on bonds or doing something else because of the administration or I don't know.
No, nothing.
Just being all into Fartcoin. I don't know.
Trying to do something smart.
No.
Right, SMRT.
No, I don't make any changes.
Well, we're going to talk about strategies for your IRA. That's at 8 o'clock. Then 8:40, because it is Wednesday, it's Assume the Position Wednesday. We got What's Your Assumption at 8:40. Tom and Bat try to do viewer-submitted trades where viewers write in with an underlying and a directional bias. 9 a.m., we got Skinny on Options Math. Jacob in the house. Judging predictions. He's going to talk about Breyer scores.
Yes.
Is that how he ranks his favorite ice cream? What's a Breyer score?
It's a Jacob thing. I forgot exactly, but
okay.
Yeah, he's
because me, butter pecan number 1 seed.
Really?
Yeah.
Butter pecan.
Black people love butter pecan. It's true. That's just science.
I don't even know if I ever had butter pecan.
You ain't black.
Oh, come on. You had butter pecan with
I'm
your
not
mom,
a butter. I'm not a. You got to remember, I don't like nuts.
You don't like nuts touching your face.
That's right. That's right.
I don't think I've ever.
You don't
had
want nuts
butter
going
pecan
into your face. I remember that.
Can I tell you my favorite butter pecan? Real fast. Kopp's in Wisconsin, the iconic custard stand, because they take the nuts and they slow roast them in butter and then fold them into the custard. Oh my God. It is not good for you, but it is delicious.
Their cherry custard is the best.
Yeah, everything is the best. Anyway, Jacob's going to be in talking about Briar scores. We got live from the trade desk. We got Scott Sheridan, big boy Scotty S, before he heads to warmer climates. He's going to talk about the top trending tickers over at Tasty Trade. And at 9:40, we got Johnny Trades, Nicky Bat, coming in with his account to give you some trade ideas, which you will poo-poo. And of course, don't forget, at 10 a.m., the lovely ladies, Liz and Jenny, are going to be live from the floor of the SIBO today. So,
yes,
yeah, you know what? Saz has kind of learned a little bit with Johnny Trades. He's been doing a lot of his trades because they've been good trades.
He has.
It's revisionist history, but
This is not revisionist history. Anyway, hey, let's get this Boeing going. Got a number coming out and some other stuff to do. You want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Breaking news.
Across the wire. Leading story. Top story. Jump in.
In today's headlines. This just in.
Breaking news.
All right, everybody. Today's a wonderful Wednesday. It's January the 15th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings, Mr. Bat. What's on deck for today?
Well, for today, you've got not quite as good as banks as you had from yesterday. You got PNC, Morgan Stanley, Bank of America, and then you got UNH. I know you had a position there, but Goldman Sachs is up $10 to $14, bouncing around. JP Morgan's up $1 from earnings. Citigroup up 3, and Wells Fargo up 2. So all of them are up. All of them are up inside the expected move. We'll see what today brings.
All right. Hey, first headline says Wall Street traders hold their breath before CPI. What a weird day in the markets yesterday, with like NASDAQ being down a lot and then going up and then down and then being kind of whippy into the close. What do you make of the tape action from yesterday and then basically ending up flat? Stocks bounced around all day long as traders were unwilling to make any significant bets as they await the key inflation number that's going to come out today. What's the expected move for today?
The expected move for today. Good question. I don't know.
Something that you don't hate.
Shocking.
In ES today, you talking
about? 44.
Yes, in ES, Bat, yes.
Yeah.
Well, the SPX is 44.
SPX, yeah.
A little bit more than 60-ish on even the S&Ps.
Ooh, okay. What are you anticipating? Like, are you hoping to roll up your bonds? Are you gonna batten down your hatches? Are you gonna flipper your gibbets? What are you doing?
The only thing I really care about is the bonds, and I need them to be like anywhere from. They're 111.12 right now, which is the highest they've been in a while.
They're about 12 ticks off of the bat low. You are correct.
I need them to be, let's put it this way. There's no number to the upside.
Okay.
114 would be good for me.
All right, come on.
That would be a great morning, 114.
Hey, companies are expected to post their best earnings growth in 3 years, but the biggest gains won't come from big tech. As Bat reported earlier, financials should be the biggest profit gainers this earnings season. What are you seeing in your earnings plays so far? How did your bank plays shake out?
Well, I think this is the first one, JP Morgan.
Right, yeah, but financials are kicking it off, and financials...
I mean, I'll let you know when we get out of JP Morgan. I mean, so far it looks good. If the stock's only up $1, it's good.
Okay, well, some of the laggards of last year, like energy sectors and healthcare stocks, have been doing pretty good into 2025. And so you have UNH on the clock today for earnings. So we had financials, a little bit more financials today, and then UNH, of course, being a big healthcare stock.
Yeah, UNH has dropped $100 though off its high, so it's hard.
But like things like XLV though have been doing well relative.
Okay, we'll see.
Okay.
We don't trade a lot of UNH, just to be fair. We have one.
You don't trade a lot of XLF or XLV either, but I thought they were still worth mentioning.
Okay.
Okay, girl. Hey, JP Morgan says altcoin ETF inflows may be as high as $14 billion should they get approved by the SEC. Analysts at the bank predict the suite of proposed Solana ETFs will take in anywhere from $3 to $6 billion within 6 to 12 months, while the cohort of XRP funds could gather another $4 to $8 billion in the same period. Do you think the event horizon for these getting approved looks good for like Solana ETFs and XRP ETFs.
Yeah, I do. I actually really do. I think we fingers crossed, we're hoping to bring, a lot of these, Cardano and Solana and a bunch of other cryptocurrencies back to Tasty. So
yeah, we've had it before, right?
Yeah, I mean, we don't know. We know the new administration is going to be friendlier than the last administration.
Yes.
But we also don't know how fast that change is going to take place.
Sure.
And we're also waiting, just like every other firm is, we're all waiting for some kind of clarity because, and I'll tell you, the real reason is because without clarity, the fines are 100x whatever we can make. So like,
right.
We can make $1,000 and get fined $1 million.
That's not a good trade.
No, I know. That's the same issue everybody has right now. So that's why brokerage firms, cryptocurrency firms or exchanges are different, like Coinbase. But
right.
That's why brokerage firms in America, like Tasty and Robinhood, Interactive Brokers, things like that, we only have a limited number of offerings because the SEC has basically said, if you go forward with this, your fines are going to be worse than you're not going to make as much money as you're going to get fined.
Right.
You can't. It's not a zero-sum game there. It's a negative game there.
You can't win.
Bat, what is crypto doing this morning?
Yeah, Bitcoin hanging out at 97,600. That's about mid-range for the last week or two. I mean, remember, it got as high as, well over 100 and change. It got as low as almost 90 when we're hanging out at 97. So mid-range for the most recent move.
Just real fast, this is funny. I had to have the electrical panel in my condo replaced because they overloaded one of the circuits. So thank you for doing that. Anyway, so the electrician came to replace the panel, and he was like this older guy, and he's like, "Oh, what do you do?" He's like, "Oh, I'm a financial news reporter," and he's like, "What do you think of XRP here?" And I'm like, "What?" And I was like. He's like, I got a lot of Ripple, and I'm like, okay, good job, man. Anyway, good times. How about Coinbase?
Coinbase, I knew you were going to ask that, so I looked it up. Coinbase is 256 and change, up around $1. Remember, the market is up here. Even the S&P, Nasdaq, Russell, Dow, all up about 0.5 percentage point. So most things are going to be higher.
President Biden issued a new executive order to speed the construction of AI data centers to bolster national security. The move empowers the Department of Defense and Department of Energy to lease federal sites to build out data centers with clean energy resources. Not sure if this means anything super important, but I thought I would mention it. So.
No, I don't think it changes anything.
All right. Hey, keeping it moving, quantum computing stocks rebounded yesterday after a massive sell-off as an industry executive says the opportunity is real and they're spectacular. No, quantum computing stocks have been taking it on the chin ever since CES when Jensen Huang went on stage and was like, look, I don't really see this being a thing for a while. But let's talk. And Julia has a wonderful new series on quantum computing that she
We're doing it Friday, but
yes.
But let's be realistic about this. These stocks like RGTI, wasn't that trading like $25 or something?
Yes.
I mean, some of these stocks were trading.
But it closed 48% higher. I know you love it when I use percentages and not the real number.
Yeah.
But that was like a $5 stock that went to 25 and now it's back to 7.
Yes. That's 48%. Right. QBTS was up 23%. Qubit was up 14%. I'm just saying there's opportunity. I think it's fun. So you guys don't have any quantum exposure.
No.
All right, we're going to see what happens right now in the Bondolinis.
And go.
And
bonds 111.27, 111.12. They just ticked. They're up about 30 ticks, 25 to 30 ticks right now, Sadnoff. Even the S&P is up 56. Nasdaq up 260. So far, they like the number, Sadnoff. Russell up 40. Dow up 450. Everything's up, Sadnoff. Bitcoin 98.7. Oil up 60 cents.
We are selling some notes up here, just so you know. We have not got filled
selling some longs.
Yes, selling some long notes. We have not
even
got...
the S&P's up 63, Sosnoff.
Whoa!
Yeah, I'm not worried about...
America.
Thanks, Joe Biden.
Wait, this is Joe Biden still? I forgot we're in that.
He's still president, Bobo.
Yeah.
We're selling out the long notes we bought significantly lower.
Long bonds significantly lower?
No, notes.
Significantly lower? That you bought lower?
We bought the notes lower. We're still short a ton of puts. So the notes, we just flattened out a bunch of notes that we bought the other day. Bonds, we haven't sold any yet today, but we bought some, like a little bit lower. I mean, around 111-ish, 111.02. They're kind of seem like they're a little bit stuck here.
Yeah, 111.24, 25. They got up to a high of 112 even.
I saw that.
Remember, 32 ticks. They're 25 right now, 26. They're 5 or 6 ticks below their highs.
Yeah, I saw that for like a brief second. That 112.
I saw the 112 print for a brief second also. I agree with you.
You sure you guys didn't just hallucinate?
I'm keeping all my short puts, but I'm going to sell out some of my long bonds. And let's see.
Goldman Sachs up 15, just to quote the earnings.
What's JP Morgan?
JP Morgan was up $1 before the number. It is up $2 right now.
Double your pleasure, double your fun. Thanks, Jamie Dimon. He gets
double
shit
big
done.
We're selling our bonds now. Just the longs we just bought at 27, 28, 29.
That's correct.
Yeah, that's good. So finally get to take a little bit of a profit.
What about volatility? What's that doing?
Oh, it's going to get killed.
Okay.
Yeah, /VX already down 65 cents. I would expect it to be a little bit more. Even the S&P is up 71 now. Big move in even the S&Ps. Russell's actually the strongest, Sadnoff, up 47.
Yeah, because that's just the bonds. So.
Yep.
That's nice. It's like a 2% move in the Russell.
That is correct. Good job out of you.
All right, so we sold our bonds. Good trade.
2.25% move to be exact.
Good trade.
Core inflation rate slowed to 3.2% in December, which was less than expected. Hey, back to your regularly scheduled programming. Intel is going to spin off a venture capital arm as the chip maker continues to restructure. They plan to spin off Intel Capital. I didn't even know that was a thing, but it's a venture capital wing into an independent firm. Intel up small in overnight trading. It has been laggard in the chip.
Yeah, it's up like 30
Intel's
cents.
up 30 cents. Let's not have a party yet.
Yeah, let's not declare this a brew.
That's 1.7%. So
I can see how this is going to go today.
In other news, OpenAI is unveiling a new era where ChatGPT has a new task feature, and it can offer job scheduling, reminders, and more. It can be it's getting one step closer to becoming a full-blown personal assistant. So, Tom, you could just type into ChatGPT, and it could make you a schedule, reminders, book you tickets, do all your things, bada boom, bada bing.
It really can't, but what it could
No, it's getting one step closer to it.
It really can't do any of that, but what it can do is it can remind you.
Yes.
So it can say, hey, did you book your ticket?
Right, yes. And the task can be recurring or one-time reminders. So if you want to receive updates every morning of it, like summarizing your email or project updates, it could do that.
I already have one of those things.
Okay, all right. Hey, I'm going to keep it moving here.
I already have one of those things that reminds me every morning.
Sure.
Hey, you haven't done this, you haven't done this.
You haven't done
You know
this.
what? The last thing I need is ChatGPT to also remind me every day, hey, you know what? You haven't done this yet.
ChatGPT less likely to stab you, though, much less than your employees who work here. So
Yes, ChatGPT less likely to sue me, stab me, yes.
Or slap
kill
you.
me, or slap me.
Right, yes. Yeah.
But it is probably going to be the most annoying reminder ever.
Hey, the SEC yesterday, just in a last blaze of glory, filed a suit against Elon Musk, alleging the billionaire violated securities law by acquiring Twitter shares at artificially low prices. In his purchases, Musk underpaid for Twitter shares by at least $150 million, according to the SEC. Do they have a leg to stand on?
I don't even know what that means. How do you underpay for something that's a public company?
Yeah, I don't know.
I'm not sure I understand exactly what.
I don't. He did commit securities fraud allegedly by failing to disclose that he had amassed the active stake.
Yes, you are required.
Right, yes.
When you acquire a certain amount of a company, you are required to disclose.
So that's why they're saying he underpaid for it. So he was secretly acquiring it. So then once people found out about his involvement, then the stock went up. So the SEC is like, okay, so you had all this.
I don't know what the actual percentage number is because it depends. Each company's different.
Right.
But there is a certain disclosure requirement when you're over a certain percentage of any.
Greater than 5%, I believe, is what it says here.
Some things like in the UK, it's greater than 3%.
Right.
In the US, maybe it's 5%. I don't know what the number is. But yes, you have to disclose ownership. And that's why most of these, that's like what you'll see with Warren Buffett when he's doing it. He'll say, he has to disclose it at some level.
Yeah.
Hey. So no, before we go any further with more articles, I just want to mention that the euro is up big, the pound is up big, your yen is up big, and the dollar is a little bit soft.
Yeah, this is the biggest move we've seen kind of in the yen in a while. And it's also another 400 bips in the euro, and the British pound is up over 100. So this is a very good day for the good kids between bonds, notes, euro, and yen. It's a good morning for the good kids.
Is today the day to ask you for a raise?
Well, I don't need the S&Ps. I don't need the S&Ps up 80, but
84.
But we didn't come in with any short deltas, so
sure,
that's good.
Can we look at Tesla? Because we're talking about Elon Musk. So Tesla had a whippy day yesterday.
Tesla was up big.
Tesla did have a whippy day.
And then it was down big. It closed down like $5. I actually thought,
I saw it down 17. The news came out yesterday. Yeah.
It came out yesterday during the day. I know it. Because the stock was up big in the morning, then it was down.
Tesla doing that same thing today. It's up about 15 to 411.
Meta announcing they are laying off 5% of the lowest performers, and they plan to hire for impacted roles. Meta just making all sorts of changes as the new year comes. But it is the second or third tech company now to start saying that we're doing performance layoffs. Microsoft also announced performance-related layoffs.
So if you're rated like under 3?
I'm not sure what the rubric is for Meta because I don't work for Meta, but there's room for improvement if you are maybe at a 2 or a 1. If you put on a PIP, the Facebook parent has a total workforce of more than 72,000 people. So that's a lot. What's Meta doing this morning?
I have no idea.
Yeah, Meta's on my do-do list. Meta 606 and change. It's up about $12, but everything's going to be a little bit higher this morning if even the S&P, NASDAQ, and Russell keep these gains.
Over 500,000 TikTok refugees. Please don't call them that when there are actual people who are literally refugees. But over 500,000 TikTok refugees are flocking to China's Red Note. It is the #1 app in the App Store. I was actually talking to Kai about this, and he told me that my Chinese was pretty good. It's called like Hongsu in Chinese.
It's called Red Note?
Yeah, it means like little red note but it's actually more equivalent to like our Instagram or Pinterest. It's not a direct TikTok, but it is actually even more Chinese owned than TikTok, if you could believe that. It was like, so the government has the funniest thing ever. Like if they ban TikTok, but then they just radicalize people to go on an even more Chinese app.
That's funny.
But Chinese citizens automatically are embracing the new American adopters of the app. They're putting subtitles on their video. They're sharing memes. They're making jokes. Like everyone's having a good time. It's kind of interesting.
Yeah.
Yeah. We'll see what happens as the deadline approaches. The CFPB is suing Capital One. This is great. for cheating customers out of $2 billion in interest. The agency said the banking giant used deceptive marketing to obscure differences in interest rates between two of its savings account options. And basically, like, as interest rates continued to soar. So Capital One was basically offering people literally pennies on the dollar. And the CFPB was like, look, this is what the rate's tied to. It's like, you can't do that to people.
100%.
And this is great. Like, if you looked at what your money earns in a savings account, it's abysmal.
I can't believe they pulled this off for as long as they did, and they didn't think they were going to get caught eventually. Unbelievable.
Yeah, the agency said that Capital One deceived holders of its 360 savings account by conflating it with its newer high-yield savings account, a 360 performance savings, and so it funneled people into the lower yield one.
Oh, you wanted the higher yield.
Oh, what happened
we didn't know
was
that.
Yeah.
Oh, you didn't want the 0.0%.
Right.
Oh, you wanted the higher yield.
Yeah, that's our bad. That's on us.
Why did you say so?
Yeah,
Well, we
that's
can do
why
that
you
for
have to say
now.
performance.
Yeah. Oh my God. That sucks. Swedish fintech unicorn Klarna said that it had agreed to a new major distribution partnership with payment giant Stripe. The deal will let Klarna offer its popular buy now, pay later plans to merchants using Stripe's payment tools in 26 countries. This is important because Klarna is set to IPO this year, hopefully.
Well, it's important to Klarna.
Okay, well, you trade Affirm, which is in the space.
Not really, but
Oh, now okay. Now you're back.
yeah, I don't really care.
Agreeable
Thanks,
Tom.
Thanks, Vanetta.
Agreeable
Thanks, Vanetta.
Tom
Really appreciate
lasted
that.
for about 6 minutes, which according to his wife checks out. Interesting downward move in the pharmaceutical space, continuing a downward move that we saw in Moderna earlier on Monday. Eli Lilly shares dropped yesterday as the drug maker cut revenue guidance on weight loss drug demand. Eli Lilly expects around $3.5 billion in revenue for its diabetes treatment Mounjaro and $1.9 billion for its obesity drug Zepbound. Street hated it. Stock worst print since 2021.
Yeah.
Lilly just off of its lows by about $7. Remember, it's a $700 stock, and Moderna up small.
Okay. Do you have a Lilly position or just Moderna? Just okay.
Just Moderna, and it has not been good.
And then UNH on deck for earnings today. So
Yeah, we have an it doesn't matter.
okay, all right. Well,
We need
UNH basically unchanged here, so I'm not
We need
surprised
UNH
with,
to do
everything higher.
absolutely. We need UNH to be unchanged.
okay.
It
The Federal Trade Commission released a 60-page report targeting the 3 biggest pharmacy benefit managers, and they claim the companies hiked the prices of specialty drugs by thousands of a percent to generate $7.3 billion in revenue. Some things that are tradable in the target are UNH and CVS. Basically, they're like, look, you guys price gouged people to the tune of 7.3 because they're like this weird middleman.
I can't
in the
believe that they would
pharmacies.
price gouge people.
I know. Oh my God. Why don't they just give me the medicine that I need to live? Like, why do they have to price gouge? But WBA,
CVS unchanged.
Walgreens Boots Alliance did have good, like an uptick earlier this week. I saw.
It did. Walgreens is hanging out at $12.50, up about another 20 cents, but it did rally from under 10 to over 12. You are correct, Vanetta.
Shares of U.S. and Canadian cannabis companies retreated yesterday after a DEA judge postponed hearings on whether to reschedule marijuana, and by rescheduling that means to reclassify it to a less dangerous drug category. Right now, it's a Schedule 1 drug, the same as some other like more like serious drugs, but we haven't talked about cannabis in a while, and it's just
Honestly,
people have been waiting in the
what-
industry for a while for this to happen.
I don't even know what cannabis stock I would trade if I had to trade one right now.
Okay, well,
Yeah, I agree with you. Yeah.
there's some ETFs like an Advisor Shares Pure U.S. Cannabis. Okay. Tilray? No,
No.
nothing. All right.
No, can't do it. I can't find one.
Bat you might got to get your sister on the horn because Southwest Airlines is pausing corporate hiring and most summer internships to cut costs. The Southwest CEO Bob Jordan outlined the cost cuts in a staff memo. The carrier has been under pressure from an activist investor to improve returns. They're getting rid of, they're pausing corporate hiring, getting rid of summer internships, and as well as some non-contract hiring. LUV.
Now that she's management, she has to go the party line here. She had to vote for this, of course. We didn't want to, but she did. $32 and that $33, basically unchanged here. Love has not been, it is higher, but it has not been the high flyer like you have in some of the other stocks like American Airlines, UAL, Delta, and such.
Tom, you have a unique business opportunity here. Would you like to hear about it?
Sure.
So Starbucks, it's just all companies, just the starting off the year by just being just as terrible as possible. Starbucks announced they're ending its open door policies. They're like, yeah, you know what? We're sick of all of you. So they're scrapping a policy that had let anyone hang out at its cafe or use their restrooms without making a purchase. Tom, what is Bad Coffee's policy?
We haven't.
Can I use the restroom sound enough if I don't buy any coffee?
He's very regular.
If I'm there at 10:15, can I use the bathroom?
For you, only you. Yes.
Okay.
So you don't have an open door policy either, then?
Yeah, we do.
So So I don't have to buy anything. I can just hang out in Bad Coffee. I don't have to buy anything.
You can just hang out there all day.
Okay, cool. See you later.
Have a party.
What are you guys doing in Starbucks?
Sadnam, you got a Starbucks position?
I do. I'm a little tiny bit long.
Okay.
$94 and change. It's up a little tiny bit, about $1.
Yeah,
So something that I think is interesting is the decline in what people call like third spaces. So people have a space, like obviously you have your house and you have school or work, but there's like these third spaces that's supposed to bring communities together.
Yeah.
And it used to be like coffee shops, cafes, like stuff like that, where people could hang out and do stuff like that. But Starbucks now has sort of pivoted and they're really more just about filling mobile orders. And so people just are rushing in
So
or
they're
out.
trying to go back to, that's why if you sit in Starbucks now and you order a drink there.
Some Starbucks don't even have a place for you to sit anymore. Like, they took all the tables out.
Their whole point here is they're trying to get back to the way they used to be, which is if you sit in the store now, they'll refill your coffee.
Yeah.
But we are completely opposite. We're a neighborhood coffee shop that just wants everything.
Well, it's great. I think Starbucks has made a huge error here. I think you really should patronize your local businesses. I also was remiss. I forgot to mention you and Dylan, Truth or Skepticism today at 1:00. What are you talking about?
There's a lot of topics on the table.
Okay. Oh, it's gonna. I hate monitoring social, but okay, great.
It just depends how much pushback we want to get from the
Sure. Nope.
from the chat room.
This is a sad story, but it's hilariously sad. A woman in France. Did you hear about this?
No.
A woman in France was scammed out of 830,000 euros after believing she was in a relationship with Brad Pitt. He needed surgery, but because of his difficult divorce with his former wife, Angelina, he needed money. All of his funds were locked up. The scammer used AI to Photoshop pictures of Pitt in hospital gowns and in other situations, and the woman was sending him money, and the scam continued until the woman saw a celebrity gossip item on TV with Brad Pitt using his legs to walk and his much younger girlfriend.
All I want to say is
it's sad, but come on, lady.
I mean, couldn't really
830,000 euros.
Brad Pitt.
Right. I know. Ooh.
You hear this all the time, like on Howard Stern. They always think that like Liam Neeson or something like that. That there's some lady dating Liam Neeson, and then somebody else calls up and goes, "Hey, I'm dating Liam Neeson," and they're all like getting scammed. It's really silly.
Yeah. This is. I mean, and this happens happens on a lesser scale, like even to me, like someone in my DMs will be like, oh, hey, I thought and I'm like, you were fake. I'm like, I'm not talking to you. I was like, this is a scam.
This is horrible.
It is horrible. Anyway, finally today for my viral video of the day, I just like to see kids getting after it in whatever sport they have the most passion for. And this guy set up a pretty interesting rig to work on his basketball skills, and the internet has bestowed upon him a hilarious nickname. Watch this. That's right. It's LeBron James. And then it goes through the net into the bucket, comes back out. That's pretty good.
Great.
He's LeBron James.
That's good. It's got a little Larry Birdish thing to him here.
Yeah, like a little French lick. The hick from French Lick.
Can he go to his right, though? That's the problem.
That has been my time.
He's a lefty, shooting lefty, and I don't know if he can go to his right. I don't know, Sadnoff. It might be a one-trick pony like the bat used to be. Anyway, we'll take a quick, that was automatic from the right. We'll take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send. Even the S&P's up a whopping $90. We'll be back in 90 seconds.
To my trusted financial advisor, let me know your thoughts on reinvesting what very little remains of my money into ramen noodle stock, now that I'll be eating it for every meal until I die. Best, Cynthia.
Sometimes it feels good to get smart. Get even smarter with live market insights and insults.
They're all frickin' losers. There's no skill.
From the smart mouths at tastylive.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
Get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Make your move, genius. Tasty Trade.
I came from a unique family background. My father was a trader at the Chicago Mercantile Exchange. He was a cattle trader. Now, my grandfather was actually a pork belly trader, and when the exchange was founded, it was actually founded as a butter and egg exchange, and they were in the egg business. So back in the 20s, they were part of the founding membership of the Chicago Mercantile Exchange. I pushed my father very hard to let me start as early as I could, and he was incredibly kind and generous to give me that opportunity to start. The exposure to the markets was kind of that connection for me that made everything come to life. Within the world of futures, there are 6 distinct asset classes. So I am usually putting together a portfolio within equities and energy, metals, foreign exchange, and interest rates. Also agriculture, I tend to combine a series of positions, some directional, some pairs trades, others with an options or a theta component, trying to put together a portfolio that takes advantage of opportunities, price extremes, high volatility to generate productive returns.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a look at the market, Sadnov. Going to be a big day to the upside for the market. Even the S&P is up 87 handles, just a skosh off of their high, Sadnov, a 1.5% move on the even the S&Ps. NASDAQ up 360 and change, a little bit better than a 1.5% move, almost a 1.75% move. The Russell's the big leader, up 3%. Huge move in the Russell, up $62. Dow up 657, up a 1.5%. Volatility in by 80 cents, big 4.5% move there to the downside of volatility, bringing us back under 18. Bonds up 114, 112.11, Sadnov, after the bat low at 111. Yes, that is correct. Bitcoin up $2,400 to 98 and change. Sadnov, everything is up here across the board. Silver up another 2%, that's 70 cents. Gold up 33. Oil up 74 cents. All big moves. There's actually nothing that's lower except volatility on that futures list right now, Sadnov, at least for the first page. We mentioned euro, yen, pound, all higher also. Dollar lower.
Hey, why not us?
Why not us is right, Sadnov. Good job out of you so far for the morning. Try not to screw this up.
Okay, let's see. Let me get rid of this.
Goldman Sachs up around 10 or 15. JP Morgan up a buck or two. Citigroup up a buck or two. Wells Fargo up a buck or two also.
I'm Tom Sosnoff. He's Tony Batista. We got to move. Let's go. Emails that came into us overnight. January 15th.
Yes, sir.
If I have a naked futures...
Quarterly tax day, so I don't know if you're probably missing it, but go ahead.
Yeah, I'm missing it. If I have a naked futures options position on, which is out of the money, but on the day of expiration it goes in the money and I'm assigned, what happens if I don't have enough buying power to cover the trade? I know that with stock, I could go to the market the next day and sell the underlying. But what happens in the case of futures on commodities or currencies?
The same is going to apply here. Now, having enough buying power to sell the stock, you probably don't if you didn't have enough buying power to buy it, obviously, but you get the morning. I mean, you'll be able to do the same thing. Sadnov, you're going to know more about this than me. I'll defer to you.
What happens in this case, if you have a naked futures options position, the buying power requirement for a naked futures options position is going to be virtually the same as it's going to be for the future itself. Because as you get close to expiration, the futures option and the future they're treated the exact same way. That's the way span margining works. So if you have enough money to hold the option position, you have enough money to hold the future. But if you didn't have enough money to hold the future, because the requirement says that there is a requirement that you have to put up the capital to hold that position overnight, then our risk team would close you out.
Right, but let's say it slips through the cracks, or they had enough money and other positions went against it overnight or something like that, because there's always going to be that like gray area. What would happen?
Then they would close it out the first thing in the next morning.
Exactly, in the morning. That's
but you would not. But you would technically, you would lose control of that position and it would move over to our risk team because they're not going to let you, their job is to protect the firm. And if you don't have enough capital to hold the position, they're going to liquidate you.
Mm-hmm.
But again, naked futures options positions are different than naked listed option positions. Listed options, you can have 20% of the capital and it requires 50% for the stock. In the futures world, that naked option that's at the money or in the money is going to have the same requirement as the future itself. That's the way span works. So this rarely happens. And if you didn't have enough money and somehow it would be almost impossible to slip through our risk team unless it was a last second move. And if you slipped through that, then they would liquidate you the next day. You don't get,
very good.
There's no gray area in the futures world. Let's go next slide. You mentioned today in the morning that you are long IWM. I did. I've been long the Russell for a couple of months. My question is, with bonds at 110 and interest rates rising and the US dollar being so strong, why would you be long now? Well, you're getting to see exactly why I'm long today. Bonds are up 1.5 points. The US dollar is getting crushed, and the biggest mover is IWM. Sometimes you just have to be a contrarian.
Yeah.
I mean, I didn't know
totally
when we took this email, I didn't know what was going to happen today, but I trade as a contrarian. So I was betting that the bonds, they're over 112 now. Interest rates are, dropping a lot this morning, and the US dollar is getting killed. So that's why I'm long. I figured when bonds rally, so will IWM. Let's go next slide. I heard you mention how you always use 25% as your profit target with 0 DTEs. I found this to be a good target for lower pop trades like iron flies. However, for higher pop trades like wide iron condors or credit spreads, I find I like to target somewhere between 35 and 50%. 25% just seems too low a profit target for a higher pop strategies. What do you think?
And they're still talking about 0 days here, right?
Yes.
Okay, I love it. And if it's working for you, continue to do it. I think in 0 days, taking the profits a little bit quicker is prudent from our research. But I love what you're doing. You're sitting there watching it, obviously. Sounds like you know what you're doing. Go for it.
Exactly. If you want to wait for 35 to 50, go for it. All we can do, okay, is tell you that based on our research, our research optimizes your long-term results based on that 25% number. The long-term results, just your total P&L over a certain period of time, which in this case is almost 2 years, is better when you take profits at 25%, regardless of what the strategy is, than when you wait for 35 to 50. But if you're doing better at 35 to 50, then you do that. All we do is just give you research that optimizes the return. That optimizes all the statistics. If you think you can do better, go for it. We are 1,000% hoping you make as much money as you can make. Let's go next slide. How does one develop market awareness? This is a tough question for Tony.
It is a tough question to answer too. I think like anything else, just by doing, watching, and just trying to get your hours in, get your 10,000 hours in to quote the book and the saying. I think really it comes from just watching the market. Like anything, it comes from watching and doing. You learn more, you develop a little bit of awareness of what's going on in the market.
Yeah,
and that doesn't mean you know direction. That just means you have a feel for how markets behave. That's all.
This is something that's, this is a tough question for both of us because we've been sitting here staring at markets for the last 40 years. And literally, this is our entire lives. So, like, it's a tough question. Imagine you watched every baseball game the Cubs played for 40 years. I think you'd have pretty good market awareness of both baseball and the Cubs.
Sure.
We've been sitting around watching everything for 40 years. I think I have a deep appreciation and an understanding of how markets work and things like that. I just still don't know what's going to happen next. Just like I wouldn't have known who's going to win next.
Then why are we so bad at marital advice?
Yeah, that's a good question. I don't know. Yeah, good question. But I think
next question, please.
It's just you develop market awareness through doing. Just keep doing it. You'll be fine. Let's go next slide. When
Whoa.
When you close out any given short premium trade to take profits, do you always look to redeploy the capital on your next trade at an equal or greater premium amount than the debit you paid to close out the winner? Or do you just place another trade based only on the trade mechanics and you are not concerned if the new trade brings in less premium than the premium that was closed out or the previous trade that was closed out?
No, I don't look at it that way, but I seem to do it anyway. Like usually if I'm closing a trade of normal size and a normal amount of buying power, when I find another trade, I'm usually deploying the same amount of buying power and collecting around the same premium. Now, if you watch my option trades today podcast yesterday, I actually discussed something like this about taking a little bit more risk, a little bit less risk, because I was uncertain about the market's move. So you kind of skew it, and I used less buying power than the trade that I had taken off before that, but that was a conscious effort. And subsequently, I collected less premium. So I think you do this by default, just by where the market is and how you're looking at the probably profit on the trade coupled with the buying power and its probably success. So I think this all takes care of itself with your own assumption on what the market's going to do. You don't take off use a round number. You have $1,000 worth of extrinsic value. When you put on another trade, you're not looking for another $1,000. You're just looking for another trade, right?
Yeah, I have zero memory to the prior trade. I stick to the mechanics, but I couldn't care less. If I'm closing a trade, I have no idea. I really don't think about how much buying power I'm freeing up. I really don't think about, if I'm trying to replace the same trade. I have to judge each opening trade looking into the future on its own merits, and that's it. I don't look backwards. I only look forward. So the answer is I'm only looking at the new trade. I'm not looking at the past trade. I will redeploy the capital, but I'm only looking at the past trade. I'm sorry. I'm only looking at the new trade. Sorry about that. Let's go to the last slide. You often stress the importance of trading in uncorrelated underlyings. How do I make that determination if I'm not trading the SPY? For example, what if I'm trading Meta and JP Morgan? How do I know if there's a correlation?
I mean, this is, first of all, I believe in especially the markets we've had over the last couple of years, it is damn near impossible to have an uncorrelated portfolio. I think it's a unicorn that can't be found in my world. I'm willing to have that argument with anybody who wants to have it, at least over the last couple of years. You can look at the beta weighting of each of these, Meta versus JP Morgan, to the S&P and extrapolate out from there. That's the way I would look at it.
Yeah, we do have beta weighting on the platform. We do also have correlation on the platform to the S&P.
Yes,
so you could check that way. But, sometimes you just have to use common sense. Meta and JP Morgan are both U.S. equities. They're going to have some positive correlation. If the market crashes, Meta is going to go down, and so is JP Morgan. If the market goes up, Meta is going to go up, and so is JP Morgan. But they are from completely different sectors. One is a NASDAQ stock in a tech sector. The other is a banking stock in a financial sector, and it's part of the S&Ps and Dow, I think. So these are not highly correlated underlyings, except for the fact that they're both equities. So is there a correlation? Yes. Is it an important correlation? The answer here would be no. And that's just common sense.
Awesome. Let's take a quick 90-second break. Side note, we got a segment that we're bringing back, and I love it. Strategies for your IRA coming up next. We'll be back in 90 seconds. Let's Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
started trading around 2018, soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tomas, we are back, my friend. You know what that means? An old new segment, sad enough. One I love and talk about on my podcast, Option Trades Today, all the time. Strategies for your IRA, sad enough. Go.
Strategies for your IRA. Go. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thank you for spending the morning with us. And we go from 7 a.m. till 10 a.m. Central Time. We're located in Chicago. If you're new to Tasty. And
that's you and I, Sosnoff, and then we got a lot more programming after that.
Yeah, we go straight through to 6:30 at night Central Time.
Mm-hmm.
So here's the crazy thing: we start at 6:30 in the morning with Pete and Frank, and we go till 6:30 at night and finish up with Victor Jones from 5 to 6:30, and then that's 12 hours, and then we start again at 1:30 in the morning, 1:30 in the morning Central Time, which is 7:30 in the morning London time, with Rich and Angie from our London studios. And they go for 2.5 hours right now, on their way to be going to there'll be 4 hours of programming quite soon. So right now we're at just basically 15 hours a day. And my goal is to get to 24 hours a day, Tasty 24 hours a day.
It's been your goal for since the dawn of time, yes.
Yeah. We just have to get out to Singapore and figure out how to launch, how to build a new studio there, and then we go 24 hours a day. So, anyway, lots of stuff going on. So today, just like Vanetta said, Liz and Jenny from the floor of the SIBO. After we're done, and then Dylan and myself, and then everybody, all the other hosts chiming in all day long. And we're going to be adding some new young guns. Errol moving up to Chicago. Gus coming over from Bad Trader. So we got some young guns coming onto the network. So it's going to be fun. We're breaking up the we're mixing up the old guys with the young guys, and we'll have a little bit different kind of lineups coming up in 2025. Different shows, different lineups, different everything.
Awesome.
All right, let's do this so we don't run out of time here. It's 8:16. Market's crazy this morning. S&P's up 80. Bonds up 1.5 points. Everything's Everything's green except for volatility.
And that's the way it should be, Sadnov.
Good day for Tasty Nation. Strategies for your IRA. We don't do this very often, maybe once a month, but I thought this is pretty good. Let's talk trading basics for IRA accounts because we're getting into that fund your IRA season. So let's see what we got. Trading basics for IRAs. It's from our research team here in Chicago. While trading in your regular brokerage account offers flexibility in capital contributions and higher capital efficiency with potential leverage, trading in IRA accounts provides its own benefit. We get into this all the time with different trustees and different companies that think, oh my God, how could you trade an IRA? And we're like, how can you not?
And you can do all the strategies that you can in a regular account, in an IRA account. It's just going to cost more buying power when you put some of those positions.
Here's the cool thing about Tasty. We were the first firm, because we fought for this for years. And I don't even think anybody else has even copied us at this point. But we let you sell anything you want to do in a regular margin account, you can do it in an IRA account. You want to sell a naked option? Go ahead. You want to trade futures? Go ahead. You want to trade futures options? Go ahead. Long, short, whatever you want to do. We let you do it all. The capital requirement's a little bit different than an individual margin account, but we let you do everything. And we've been fighting for the retail investor. We've been an advocate for the retail investor now for 25 years. I like to tell the story when we first launched Thinkorswim back in 2000, 2001, and we offered option spread trading in an IRA account. Other firms' compliance teams were writing to me going, you guys can't do that and we're going to report you. I'm like, report us to who?
Right.
There's no agency. Who are you going to report it to? Why don't you report it to your own CEO and tell them to get with the program? And we would fight with every firm that was out there. And you know what? I think we proved that, we did change the whole industry with regard to that. So tax-free or tax-deferred growth on investments, enabling investors to benefit from tax advantages and the power of long-term compounding. I mean, you could say that about any kind of an IRA account. But what's the difference for us is that we have the largest range of trading vehicles, strategy options, and products. So products, strategy options, and every trading vehicle, every piece of technology we have geared to the same stuff. Let's go next slide.
Yep.
So 2 types of IRA accounts. There's a traditional IRA and a Roth IRA. The difference between the two is the timing of when you pay taxes. A traditional IRA is tax deferred, meaning you don't pay tax on the contributions initially, but you'll pay taxes upon withdrawal. In contrast, a Roth IRA involves paying taxes upfront on contributions with free withdrawals in retirement, making them slightly different when trading. Okay, that's cool. If just in case anybody didn't know the difference between those two, that is the important thing is there's no tax.
From a trading standpoint, I don't do anything different in my IRA.
The annual no tax is the only thing you care about, and that's the same for both. It just depends on when you pay the taxes and what the withdrawal procedure is. Most of us started with traditional IRAs. Some people, they convert to Roths, whatever. Let's go next slide. We don't have a preference. It doesn't matter to us. IRA accounts work similarly to brokerage accounts in terms of investment flexibility and control, offering stocks, options, futures, options on futures, bonds, mutual funds, ETFs, REITs, everything else in real estate, depending on the underlying, we don't offer all this just because, our trustee doesn't want to deal with real estate. I'm fine with that. Let's go next slide. You can even go, you can hold physical gold. You can hold lots of other things. You can hold private equity investments in some IRAs. Just depends who you want your trustee to be and how much money you want to pay for that, for the right to do all that.
Yep.
So then there are different kinds of IRA accounts designed for.
And there's no fees at Tasty Trade, right? So not for an IRA account. Management fees or holding fee or anything else.
No. But there are regular IRA accounts and there are what we call limited margin IRA accounts. And at Tasty, we only offer limited margin IRA accounts, meaning that you can't actually borrow money. So there's no margin ever. You cannot borrow money in an IRA account. So forget that. So they call them limited margin because that gives you the ability to trade options, futures, and options on futures. But So they call it limited margin, but there's actually no margin. Let's go next slide. So the key difference between trading in a regular margin account and an IRA involves the buying power requirement or the margin requirement. In IRAs, all naked short options are cash secured, generally leading to higher capital requirements than margin accounts. In an individual margin account, you're basically putting up about 20% of the strike price, let's just say. In an IRA account, you're putting up essentially 100%. That's it. That's the only difference. That was the compromise that we had to make with our trustee to allow you to sell naked options in an IRA account, because we have no way to have come after you to get more money. So that's how it works. Let's go next slide. So if you want to know what the difference is, why we allow it, that's why we allow it. With everything else, the premium being equal, higher buying power requirements result in lower potential return on capital for option sellers in an IRA. A common strategy to mitigate risk in naked options and boost potential return on capital is to use defined risk strategies such as spreads. Could be a vertical, could be an iron condor, could be anything. But if you spread something off, the difference is the capital requirement is a fraction of. We just showed you here. A naked short put in the spiders could be $14,000, and to sell one at the money $10 wide put spread could be $600. So the difference in return on capital goes from 6% to 66%. If that's interesting to you, that's cool. Let's go next slide.
Sure.
So, and again, all we're trying to point out is just that if you do things, if you have plenty of capital in your IRA account, you don't have to spread something off if you don't want to. But if you don't have enough capital, you spread it off. IRA accounts are quite similar to standard margin accounts. They offer comparable range of products and trading strategies. They're structured for long-term investment, calling for lower risk levels and more conservative positions than regular margin accounts. However, all positions in an IRA account are cash secured, meaning higher buying power requirements, higher margin requirements for naked position, which reduces return on capital. A typical approach to enhance potential return on capital while mitigating risk is to use defined risk positions. What's our take?
Correct. And a lot of times I will look at that when I'm doing a trade and talk about how, in a regular margin account, the buying power might be, $3,000. In an IRA account, it might be $30,000. Let's look to make this trade more IRA friendly, or even just buying power friendly, by buying a further out of the money option somewhere for pennies on the dollar, whether that be a nickel, 10 cents, 30 cents, whatever the case may be, and see if that fits your account. Does it make it more viable for you to use less buying power by a factor of 10 and give up that 20, 30, 50 cents or whatever it might be to buy back that buying power in your IRA account? I think it's powerful, not only an IRA account, but even in a margin account that might have a limited amount of money, whatever that may mean to one investor. Floor is another investor's ceiling, correct?
Okay, sure.
Very good.
Yeah,
that's so agreeable. I love this. Agreeable Tom is back. I missed him. We'll be back in 90 seconds. We're going to come back with the opening bell after this. I think I lost him. I was too deep into the weeds for you. I'll be back in 90 seconds with the opening bell.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me. Yeah, yeah. Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with the opening bell, Savnov. The opening bell is imminent, about a minute and a half here. Even the S&P is, although they are slightly off of their highs, they're up 81 handle, Savnov. Their highs being 59.79, trading 59.64 right now, Savnov. Almost up 100 near their highs today, up around 90 plus. NASDAQ up 334. Russell up 52. That's the strongest in the group, although it has been the weakest of the group so far this year. Dow up 630 and volatility in by 81 cents. All that is logical, Sadnoff. And bonds 112.21, one tick off of their highs. How does Daddy do it?
Yeah, sure.
I was talking about me with my 111 low there.
Oh, you're Daddy. Got it.
I'm Daddy. Yes, I'm Daddy today. Sorry. The understudy will be playing the part of Daddy today. We regret that the real Daddy is.
Well, what day is today? Today's January what? 15th?
15th, Sadnov. That's right.
So it took 15 days in January to finally have a day where everything went our way.
It only took 6 months last year.
Oh yeah. Usually it takes 3, 6, 9 months. Finally, we have a day where
improving.
Finally, we have a day where everything's going our way. So
that is correct. Currencies too. Throw those in there. You've been long currencies for quite some time. Those are catching a bit. Also, there's the opening bell, Sadnov. I'll mention the earnings plays just to get those out of the way. Goldman Sachs now up 26 with the market being a little bit higher. It was only up around 14 for most of the morning. JP Morgan up $4. It was up $1 or $2 earlier. Citigroup up almost $3. It's been sitting there for most of the morning. And Wells Fargo up $4 to 75 and change. You got PNC, Morgan Stanley, Bank of America, and UNH for today.
Got it.
Let's go to those that are bucking, Sosnoff. Not many, but one surprising one might be UNH because a big component of the Dow, and the Dow is up almost 1.5%. UNH for earnings tomorrow morning. They'll come out. You have to do something tonight. Down around $6.50, and then everything else is just volatility, Sosnoff. As you can see here, only a handful, and by handful I do mean handful, stocks slightly lower, and on the upside it's pretty broad-based. You've got just about everything. Goldman Sachs, I already mentioned, up 23. MSTR is going to be up 14 with Bitcoin up almost 2,000. Home Depot up 13. Tesla up 12. Meta up 14. Coin up 10. All the usual suspects higher today, Savnov. I didn't mention NVIDIA. NVIDIA is up only $1.70.
Yeah, I'm looking to see where are our problem children? Where are you? Where aren't you?
Well, you've got a good P&L so far today.
Well, I should.
I understand that.
Yeah. I I should. There's no question about that. I mean, they got every damn good position on. I gotta roll up some. I just gotta roll up a few putties.
Sure. Me too. Goldman Sachs up 22. That's something I'll probably have to move up.
Yeah. I mean, yes. The answer is yes.
Talk to me, Goose.
I am. I'm just looking around to see if there's anything here that we can. So, JP Morgan, the first one, the earnings report, JP Morgan, looks like the stock is actually down, isn't it?
Which one are you looking at? JP Morgan?
Yeah, I thought you said it was up this morning.
It was up $1 or so. It's down $1 and change. It opened this morning at $2.50, which is $4, $3.50 or $4 higher than where it is right now.
Yeah, so we just covered JP Morgan, and that actually turned out to be a nice winner.
Good thing.
It came in $1, a little over $1. Goldman Sachs, just looking at
which
earnings,
was up 22, is now up 27. I don't want you to tell me. I thought you said it was up 20 a minute ago. Well, it was.
Yeah, Goldman Sachs is actually a small loser, tiny. I mean, we kept it on small. I didn't love that play, but it is definitely not a winner.
Like I told you, I wish I never saw Goldman Sachs.
Yeah, you're right. I mean, I kept my position tiny. So I'm just going to roll up puts in there. Because I think that's the only thing you can really do.
Agreed.
Yeah, I'm taking a look at some of the other stocks here to see if there's anything else that, man, look at IWM. You don't get a lot of $5 up moves in that stock, do you?
No, you do not, kind sir.
You do not. So we're just gonna adjust some IWM positions and some Coinbase and some Monster, and then we're pretty much
buttoned up here.
I mean, button up's a bad term, but we're okay. Let's put it that way.
Okay.
Okay. I don't think there's.
Well, I mean, listen. We talk about the bad days. You're having a good day.
Yeah. Right. I mean, buttoned up. I guess you can say that.
Okay.
Maybe Qs and we're not even losing any money in the Qs, which is shocking. That's because they're just killing premium.
Volatility in by 93 cents. Yes, you are correct. That's almost a 5% move in volatility. Talked about how volatility has been staying bid last couple of days, making it ideal for new strategies, not for existing strategies, but for new ones for sure.
Yeah. It's kind of, I don't know. What do you think here? Because we have a bunch of different things coming up in a couple of seconds. A bunch of different positions and stuff we can put on. On what's your assumption?
Yeah, I don't mind usually fading up moves, but this is not an up move that you look like you want to fade. Everything looks like it's in place. Now, that doesn't mean even the S&Ps can't be up 50 on the day, that there might not be some downside movement here, but man, this looks pretty broad-based. And we've been depressed. I mean, what was the Russell down almost 10% off of its highs, and even the S&Ps were down around 5 or 6% off of their highs made last year. So, I mean, we had a little bit of down move going into this for sure.
For sure. And I also think that
I think the Cherry Bomb addressed that last night, actually.
I think that when you get in a situation where you have
Cherry Picks. Apologize.
This kind of an up move, up 80 points, I'm not fading it first thing out of the chute in the morning. That's for damn sure. But they took enough premium out of this thing today, Tony, where I don't.
Oh yeah, they sure did. If you have positions that were short premium and you haven't maybe reached your goal, you might take a look at what the Ivy rank and some of these stocks are going to be. Yeah,
I don't think that they. I really don't think that let me just see some of these things. I don't think that there's I don't think there's any reason to get short today. If you want to get short, you wait till tomorrow. But I told you, I thought that my concern was early. I've been saying this since Sunday night. Monday and Tuesday, I was worried. Wednesday and Thursday, it tends to be pretty bullish going into Jan expiration. And so I think I've been very clear on this since last week. And hopefully people, got lucky. I don't know.
Yep.
So we definitely did not come into this being short. On my screen, the only stocks I've got that are really lower. Man, I thought Intel would be better than up 14 cents.
Even the S&P's up 75. They just dropped about 10, 15 handles off the highs.
Yeah, UNH, like you said, is down $6. And
that has earnings. Yep, coming.
It does have earnings, tomorrow. And it's funny because I have a 5:30. I have an iron fly at a certain strike, right where we are right now, and so I'm going to cover it and then wide. What's the expected move in there?
In UNH?
Yeah.
In UNH, Tom? UNH, you're looking at about 20 some odd dollars.
Well, maybe I'm not.
UNH down 6.
Okay, maybe I'm not going to cover it. Looking at stocks that are down, I mean, Nvidia's down 20 cents, which is crazy weird.
Yeah.
That's it.
Okay, beautiful.
I mean, I don't have anything else that's down.
Agreed. Yes. Not too much that's down. But I got a segment coming up for you, Sadnov, that you're gonna have a hard time. You're gonna be adjusting trades. I'll say this: we got what's your assumption next, and when you've got a 1+% move in the E-mini S&Ps and almost a 2% move in the Russell, anything you looked at yesterday, pricing is going to be significantly different today. So you want to take a look at that?
Let's do it.
Let's take a quick 90-second break and come back. We got more Tasty Live immediately following these messages from our sponsors, which is just Tasty Trade and Tasty Live. We'll be back in 90 seconds.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
I went out this morning, out my front door to look to see my pumpkin.
Yeah?
It's gone.
Your pumpkin is gone?
Gone.
Seriously?
Gone.
After we just talked about it?
After I brought it back all the way from Wisconsin, carried that monster of a pumpkin, it's gone.
It was huge, you said, right?
Huge.
I mean, it was like a really, really big pumpkin. I was on Google Earth last night, and they found your pumpkin. Like, they must have taken a picture exactly when your pumpkin...
Yeah.
You must have put it out there.
Did you steal my pumpkin?
What pumpkin?
Did he take my pumpkin?
I don't know anything.
Because my neighbors have pumpkins outside and they don't, and all their stuff is there. My pumpkin's missing.
It's a nice looking pumpkin, Tom.
You drove down to the city and you stole my pumpkin. Oh my God.
What are you talking about? Seriously. Seriously, I don't know what you're talking about. This pumpkin came willingly. It was being...
Oh my God.
It's very happy.
This is a conspiracy. I hope people watch this and realize who you really are. You stole my pumpkin.
I live for this crap. Are you kidding me?
He came to the city and took my pumpkin.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4 grand. which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with the E-mini S&Ps up 87. We've got, what's your assumption? Now we've got what's your assumption?
Yeah, how are your positions here?
You know what? They're okay, so enough like you. I didn't come in really with any short-ish delta. I mean, obviously, you wish you jumped on more after that move lower in all of the indices, but volatility contracting by almost $1 now, 5% move, helping everything. I think Goldman Sachs up 15 was better than up 25. That's my only bad thing. Even Tesla, which I have a little bit of kind of neutral to shortish delta, up 15 right now. IB rank is 79, and Tesla's come in from the high 80s just yesterday. So far, so good.
Yeah, I think that I think this move, like, I don't think it's possible to play for up 90.
No,
I mean, I just don't. So. It's not even. It's not like, you know, hey, you can't play for it. You know what stock I can't get? What stock I hate? Micron. As much as I want to play that stock, MU, it is such a pain in the butt to trade.
Yeah, IB rank of 23 in there right now, relatively low. Options are they look like they're good. It seems like a trade by appointment. It's got good volume, but man, it moves for a $100 stock. I mean, you know, you got a 3-4% move. It's hard to get behind that.
I agree. Just looking around to see if there's anything crazy, and you know what? I wouldn't say this move is that crazy.
Hard to say on a 90 tick move or 50-point move in Russell. But listen, we've been soft for a while, Sadnov. So
I agree. This
move brings us right back.
Anyway, I'm pretty flat here, pretty good, I think. I don't think it's too much. I don't think there's too much. All in all, I don't think there's too much damage.
Sadnov, if you look at the E-mini S&Ps year to date, we are just over where we opened the year. I mean, and you take a look at what volatility has done at 1745. Volatility is just under where we opened the year. It had a nice expansion and contraction. I mean, if you stayed mechanical, this is kind of what you hope for.
All right, we'll take it. I'm not complaining.
Mm-hmm. Yep.
Something.
Yep.
Finally, we got a day where everything went our way. But all right, let's do it. I'm Tom Sosnoff. He's Tony Batista. Let's see what we got. Let's see what we got here today.
I'm ready.
What's your assumption? Trade ideas, other people's assumption from Tasty Nation all over the place.
Oh, these prices are going to be all messed up, Sosnoff.
Yeah, that's all right.
All messed up.
That's all right. I'm very skilled at bad prices.
You excel at bad pricing, actually.
I do excel at bad pricing.
Some would say you were gifted with bad pricing.
What do we got here? A little Taiwan Semiconductor. Now, do they have earnings coming up this week? Did somebody say that?
TSM, I can check my Taiwanese sources. February 4th, Sosnoff.
Oh, not yet. Anyway, Justin from Detroit. Stock was actually a little was down this morning. What's it doing now? Now it's up $3.
63 cents, Sosnoff. Up 63 cents.
TSM? I got it.
Oh, sorry. I was just TM. I punched in the
it's
wrong
up $3.
Up $3. $3.07. I apologize. I didn't look at the stock price. I apologize.
It did open down. When I was looking at this morning, it was red on my screen. I'm like, what the hell's going on here?
201.5. You are correct. 201.45, which would make it down on the day. It's near its highs of the day of 204.80 right now.
Justin's a little bullish. This stock has it's off its highs. Where is its highs? Around 220? Yeah.
Yeah, 220 and change made about a week or so ago.
A tough stock to trade, Justin. I mean, premiums coming in there a lot today. I'm totally fine. I have the 195 210 in February. I'm completely cool with selling some more strangles in there. I'm not necessarily bullish like you are, but I think the 175 240 looks to me to be like just kind of a cheapy, 175 240. It's not my favorite stock to trade, but it's better than it actually has better liquidity than it looks like. I guess that's the easiest way to say it. Let's put this on and then let me adjust price here a little bit, just to see where we get filled. We're gonna sell the 175 240. It's kind of right in the middle. I'm doing it based on there I go, got filled. 363. 363.
You are correct. You rolled some too in TSM. That's why it'll look different.
Yeah.
Even the S&P's up 99.
Yeah. Crazy. Let's go to the next slide. I made a lot of adjustments this morning, brought my deltas into line, so I think that was some good adjustments so far. Let's go to the next slide. Thanks, Justin.
Good no fade on the market so far, too.
Yeah, Justin, just because we're up so much today, that's why I went kind of neutral. From Notre Dame, Indiana. Vicky. Big game Monday night, Vicky. SPX bearish in the 7-day. Well, you're going to have a way better price to get bearish at this morning than when you wrote this thing yesterday. 40 delta
Yes, you
call,
are.
broken wing butterfly, 10 by 20 wide. Trend is down. Reversal could touch the middle. $4 credit, 63. Let it settle to. I let these settle to cash. Well, I hope you're right. Our current SPX position. It's kind of weird. It's right. Oh, we rolled down calls yesterday. I see. We're all over the place. All right, what does she want to do here?
Looks like she's a little bearish.
Okay.
SPX is going to be higher in the next 7 days for sure. She wants to do a call broken wing butterfly, $10 by $20 wide. So she's buying a strike that's 10. She's selling a strike $10 away, and then buying a strike that's $20 away.
40 deltas. Oh, 40 deltas. Okay. SPX.
That's the delta she's buying.
I'm going to buy the 40. How wide is
correct.
this?
So she wants to go $10 by $20. So the embedded short spread is $20 wide. So if you're buying the 40 delta, what are you buying? The 59.70 size?
No. February. I'm doing February.
Oh, so you're not doing the weekly?
No, because I got to do Feb just to make it just keep everything in line. So
You got to do Febs because
if I do this,
the AM with 36 days.
yes, 60-30, 60-40, 60-60. That's what she's talking about, right? And it's the same thing. It's a 390 credit.
That is correct. 30, 40, 60. $10 wide by $20 wide. Correct.
Yeah.
Uses a limited amount of capital, all things being equal, because it's a defined risk trade.
385, Vicky.
385. Mm-hmm.
Pretty damn close.
Vicky's been watching option trades today. I think she has.
Pretty damn close to what you wanted, Vicky.
Mm-hmm.
Let's go to the next slide.
I don't know. It brings you this trade, Morgan Stanley. We got Michael in Denver.
Hold on one second. Let's just do this.
MS had earnings this morning. It's up $4.70.
So Michael from Denver, I don't know. Morgan Stanley, earnings Thursday morning. No, they were actually this morning. Bullish, but the price is near an all-time high. Wow, this stock's 129. What the hell? This is gonna be a tough one for us, Michael. I don't even like the volume in here. On a day after earnings, it's not that good. What would you do in here, Bat?
Oof. I would probably abstain.
I know this is kind of an abstain for me too, but I'm going to do something small, Michael. I'm going to sell the 115, 140 strangle for $1.60, just to have a position on in there and support you, just so I could watch something. I don't really like trading Morgan Stanley that much, but we did something small. We sold the
relatively small amount of credit, right?
Yeah, 160. It's nothing.
Buying power used.
Yep.
Yep.
Don't love that trade this morning, especially after earnings. Let's go next slide. Fred from Bellingham, Washington, the VIX. Buy at the money calls just in case this market blows out in Donald Trump's first 30 days. They're cheap at $2. Well, if they were cheap at $2 yesterday, they're going to be a hell of a lot cheaper this morning.
Right.
We haven't traded the VIX in a long, long time. If we were going to trade the VIX and we're going to buy a call spread, we'd probably do March. Give ourselves a little more time. And if we're going to do an at-the-money call, I wouldn't buy the calls outright. I would buy a call spread. VIX is down $2 today.
Yes. Better time to do it today than yesterday, I'll say that much.
Yeah. 15.18 for $1. 15.18 for $1. I don't know. I don't know where this thing trades. I think it trades cheap.
That's what they say here. Call spreads are going to trade cheap because of the skew in VIX.
Well, it doesn't trade that cheap, Tony. I mean, here's the thing, Fred. I don't trade VIX options very much. I mean, at least I haven't for the last, let's say 5
I mean, you're buying the 15, 18. The forward slash VX is 17 and change, right? I mean,
yeah.
What month are you doing this in?
March
with 61 days.
Yeah.
I mean the at the money option is basically 20. So I mean 19 and change. Right?
I know. I bought the 15.18 for $1.30.
That's an in the money spread, just to be clear to everybody.
Yeah. Mid price is 128, so I paid up 2 cents. I don't like. It's not a trade I would make.
It's a cheap shot. It's not going to move for quite some time.
No, it's not a trade I would make on my own. I'm just supporting Fred. It's probably not a trade I would make. Let's go next slide. and I'm pretty bearish on the market after January 20th. I thought I didn't want to get short this week because I felt like we were going to be up until Friday, and then after Friday, it kind of scares me. Ethan from Charleston, South Carolina, looking at the quantum computing sector, QTUM got overbought and overheated, and comments about the future. Good time to collect some rich premium now. I have not traded the stock. I know Julia has. IONQ.
Stock's up $6 today. Doesn't tell you the whole story. The stock is down from 54 down to about 30. It's 36 right now. That also doesn't tell you the whole story. It ended the year at 20. It started the year at 10. So this is a stock that in a year went from 10 to 50, back down to around 28, and is now back to 36.
All right. Well, what you doing here? I agree. You got the IB ranks 92. Yeah, sell a little premium. I don't know if where you get filled in this stock. I sold some premium at 275, the 2560. I don't know. Ethan, it's a crapshoot, dude. I hope I hope it works. Pure crapshoot. Let's go to the next slide. Clara from Bologna, Italy.
I'm glad you said it properly.
Did I?
I believe so. Bologna.
Bologna. Well, you thought I was going to say baloney?
You are a classless couth, so I thought maybe.
Bologna?
Or Bologna.
All right. So we're looking at lift here, Clara, and you want to do March, April, sell 2 March straddles, buy 1 April straddle. I got $3 at the 13 strike. All right, let's take a look. And she wants to sell 2 March straddles. Stocks. Well, actually, you got to do it's right in the middle. So you got to do the 13, 14. It's like a straddle. And in April, you got to buy the 13, 14.
Okie dokie.
Okay, but she wants to do it 2-to-1, right?
Yeah.
There's not a hell of a lot of volume in here, Clara. It's a 2. It looks like it's a 230 credit. Oh, because you did the straddle and I'm doing the tight strangle.
Yeah.
I think it's going to be around 230-ish. I haven't traded lift in a while. I don't know how good these markets are. Have you traded lift?
No.
I'm going to do a little price discovery here, Clara. I think I was a little rich. Maybe 225. I don't know. We're working it. Nothing done yet.
We're working it, boss.
Let's keep going. SPOO's up over 100.
I see that up 102. NASDAQ up 430 and change.
Zach from Madison, Wisconsin is looking at XLU. I was hoping I didn't have to trade XLU in all of 2025. $77. Short-term lows, great IVR, high interest rates. Any bond bounce should help it lift its price. It did. It's up $1.70 today. You want to sell a little XLU premium? Is that what he wants?
It seems like it.
Similar to being long bonds. I agree with you. There's not a hell of a lot in here, just so you know. If you're going to sell premium, you got to sell 75, 80. It's just not a lot. It's dead smack in the middle. It's like $1.34. Take a fill, Phil. 224 on Claire's trade. Let's see what's moving against us here. Ooh, look at Tesla. You little pig
Yeah,
lotto.
Tesla up 19 or 20 now. Yeah, up 20.
You know, it's funny. I saw the news last night in Tesla, and I was like, I figured the stock will be down today. That's how come. Maybe it was out yesterday during the day, obviously, but you never know.
No, you do not. Up $20.
Yeah,
Make it
amazing.
holler.
$20 make you holla. And I adjusted aggressively this morning, and it still didn't help that much. All right, let's go to the next slide. We're filled, Zach.
Beautiful.
Nike. Nathan from Reno, Nevada. Nathan, we're already long Nike, but let's take a look. NKE. We've been long Nike for a while. It's been a struggle, I'll be honest.
Call it like I see it.
Yeah. What do you want to do? Price is just sitting on its butt. I agree with you. Hasn't gone anywhere. Stock is a PIG pig.
Mm-hmm.
You can pick your poison here. Want to sell the 70 puts?
Sure.
Ivy rank's really low.
Puts or schmutz, you can see that.
Hold on. Ivy rank's super low.
It is low.
Let's not do that. Let's buy the 70. $70.75 call spread. Let's buy the 70.75 call spread. 231.
That was easy.
Yeah, that was too easy. I mean, are they going to be up like 120 today or something?
They're up 103. Good, no press into it though.
I mean,
sometimes not the trade you make; it's a trade you don't make.
Sometimes it really is the trade you might not make. All right, let's go to the next slide. Kyle from Akron, Ohio.
Hey, Kyle.
Yeah. Let's take a look, Kyle. See what you got here. Want to do AMD. Let's take a look at our AMD. Bullish. A lot of bulls out there today. Good call. AMD up 270 today. We are actually long AMD. We are, let's see what we got. So we're short some extra puts in AMD, and it's actually worked out for us quite nicely. I'm going to, what does he want to do? He wants to get bullish here. I can see that. 105, 140. 105, 140, the strangle. That fits our position because we're naked short the 115 puts as is. And I'll just keep those little bit of long delta in there. Let me see this. What do we got here? Okay. What's next?
What is next?
Cornelius from Phoenix, looking at SMCI. SMCI, have not traded this in a while. $30. I guess that's probably pretty much mid-range, isn't it, for the stock? Yeah. What do you got here?
Yeah.
Moving back north. Well, you think so. You don't know that, though. Let's be fair. Ivy ranks decent. What do you want to do in here, Cornelius? Just assumption is moving back north. Okay, Tony, what do you want to do in here?
I hope he did this yesterday, right?
Huh?
I hope we did this yesterday.
Well, stock's only up 25 cents. How about selling some of the 26 puts? Delta of 26, sell the 26 puts at around 195. I don't know how good these markets are. I don't think they're that good. 195. We stayed small, just sold the naked puts in there, Cornelius. We'll see what happens. Let's go to the next slide. Trying to get a bunch of stuff onto. Oh, that's it?
Yep. That's it. You made it.
I didn't use all my bullets. Taiwan Semiconductor, we sold a strangle. SPX, we did.
And I believe that has earnings before the market opens tomorrow. I don't know what I said. If I said it differently, just letting you know.
Okay, because you said February.
I made a mistake then. I apologize.
Okay. SPX, we sold an upside call broken wing butterfly. That one's a little short delta. VIX, we bought a call spread. That's a little short delta. IONQ, we sold a strangle, but there's huge call skew in there. Lyft, we sold 2 March strangles, bought 1 April strangle. That's the ratio we used for a 2 something credit. XLU, we sold a naked put. Nike, we bought a call spread for a little less than 1/2 the width of strikes. AMD, we sold a strangle, and we're still short some naked puts in there. And in SMCI, we sold a naked put. A very mixed bag of tricks.
Yeah, definitely.
9 out of 10 fills.
Good job out of you, Sosnov.
There we go.
Let's take a quick 90-second break and come back. We got the skinny on options. Matt, that's right. With your man Jacob immediately following these messages. We'll be back in 90 seconds with Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move. Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Success is a combination of lots of non-correlated or lightly correlated underlyings to reduce risk.
It's better for your investments to trade volatility than it is to own S&P index funds at Vanguard. That's what you're saying.
I can't sleep at night as a passive investor.
Why not?
Because I think the risk is too great. Here I am, I'm a derivatives trader. I have hundreds, if not thousands of positions on, and I sleep fine because I know what I've done. What we do, it's a mathematical equation. What asset other than fear is mean reverting? And it requires no additional capital to play both sides of the market, then why would you even be directional in the first place?
The problem with what you're saying is it makes a little too much sense.
Yeah, it's logical.
And so it raises a lot of
scares the crap
skepticism because it makes a little too much sense.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live. That's right. With this bit of ski and options math, my friend Jacob. How are you, my friend?
Good morning, Tony. I'm well.
Good morning.
How are you doing on this bizarrely
phenomenal? I'm with Tom. It's beautiful.
Yeah, just like every day.
Just like every day. Same Jacobs.
You live a charmed life, Tony. You get to.
I do live a charmed life. I do.
Jacob, people spend.
How about you? A little bit less charmed because you spend every day with Tony, or?
Oh, that's hurtful.
People would spend a lot of money to spend every day with me, and he gets to do it for free.
Oh man, I don't know what to say about that.
Sucker's born every minute.
Thank you, Jacob. Thank you. You said it well, much better than I was going to say it.
All right. Speaking of suckers, I don't know about this segue, but today we're going to talk about how believable probabilistic model should be, and sort of how do you evaluate how good a model is done in the past, given that, right, it said it was 70% to rain, and then it did or didn't rain. How good or bad of a prediction was the 70%? And there's a number of ways that this gets handled. We're going to cover sort of one of the most fundamental and widely used ones called the Breyer score. I did have to look up how Breyer pronounced his own name, because if you asked me, I might have said Breer, but it is Breyer. But it is the Breyer score, which is going to be a way to take a model and look at its list of predictions, look at what its outcome, and it'll assign a value for how good those predictions did at predicting the outcome, and give you sort of a sense about whether or not this model was a good model or a bad model, even though, you know, a probabilistic model can't inherently be right or wrong, because, you know, it either rains or it doesn't rain. It doesn't 70% rain. So yeah, let's get into it. Should be pretty straightforward.
Let's do it.
Let's roll forward, John. So, you know, there are places in life where you can use a deterministic model, right? If you drop a bowling ball off of a roof, you can use a pretty deterministic model of gravity to tell you how fast it's going to fall and how much force it's going to hit the ground with and those sort of things. But in sort of more complicated systems, most things involving people or markets, or whether or not we think there's actual randomness going into them, or they're too complicated to capture every aspect of in a deterministic way, we use probabilistic models to describe a lot of things in life. But it can be very difficult to evaluate how good of a job they did, even after the fact, right? For example, the weather forecast, right? This is the thing I constantly complain about, is that people will say, the weatherman, he's never right, because sometimes they go outside when it said 90% to rain and here it is sunny. And it's like, No, the weatherman is in fact very good at his job, because he said that there was 90% to rain for the past 10 days, and on 9 of them it did rain, right? And that's what it should mean if you say it's 90% to rain. Right? It'd be wrong if it rained all 10 of them. Then he should have said 100% to rain.
Right.
So this is going to be sort of giving a mathematical way to evaluate how well they've done by lining up all their predictions and all of their results and seeing how well it did. So this is going to be a number of tools. They're all called scoring rules, and we'll go over Breyer scoring, which is sort of the most canonical one. Yeah. Let's go. In essence, Breyer scoring is a mean square error between observed probabilities and predicted probabilities. But we'll break it down some more specifics. So scoring rules are generally structured to penalize inaccurate predictions, with larger penalties given if you're if you said it's 90% to rain and it's sunny, that does count against you pretty badly in sort of how these scoring rules are going to go. But meanwhile, when it does rain, that's pretty good for you, or at least not very little bad, because in fact what's going to happen is that every prediction is going to wind up being judged as being somewhat bad unless you predicted with 100% confidence and were correct. That's the only way to get a 0, and higher numbers are worse. So the Breyer score for a model that made n predictions, right, said that there were n things, and it gave each of them a probability pk. So right, the first event had probability p1, the second event had probability p2. And then if you afterwards you look and you say this chi, that's that funny looking x, that's a Greek chi. Chi k is just the characteristic function, so it's 1 when k happened and 0 when k didn't happen. So right, if it rained on Tuesday is one of our k is one of our n predictions, then chi k is 1 if it does rain on Tuesday and 0 if it doesn't rain on Tuesday, and pk is the probability, is the forecast for was it going to rain on Tuesday. And you just add you square the difference between whether or not it happened and the probability was given, right? So, for example, if you gave something 100% probability to happen and it did happen, that's going to contribute 0. If it didn't happen, it's going to contribute a full 1 to this sum. There's a 1 over n at the front so that you don't penalize models just for making more predictions, right? It should be able to give as many predictions as you want, and then you evaluate it based on how many it gave you. And so an important thing here is that whether or not something happens, right, whether or not chi k is 0 or 1, if the predicted probability was 50%, it's always giving a quarter, because it's a 1/2 minus 1 or minus 0 squared is always a quarter. Whether or not it's positive a half squared or negative a half squared, you get a quarter, which means that 50-50 predictions always contribute 1 over 4n. They're sort of right in the Bayesian land. They're called the minimally presumptive or the priors, right? They're really not much of a prediction when you say 50-50. That's very hard to evaluate. Did you do anything like a good job? Meanwhile, if you made absolutely fully confident 100% predictions, they either are giving you 0 or 1 over n. Lower Breyer scores are better. And then this has the property of being a strictly proper scoring rule. And this is more or less what you want in a scoring rule of any kind, which is that if the predicted distribution exactly matches the true distribution, then you get a minimized expected value, right? You're always going to expect to get some Breyer score, some positive number, but the expected Breyer score will be minimized exactly when your model is true. And the worse your model is, the higher your expected. Now, of course, those are expected values for the Breyer score. The realized values of the Breyer score have randomness in them because it matters whether or not it did rain or not just how good your model was, right? Sometimes you get unlucky and come out with a big Breyer score. All right, let's do some examples. I think that'll help clarify some things. Right, so most American election models say that almost every race is 50-50. It just is. It is what they do, and that means that they're always going to have a Breyer score of about a quarter, no matter what the model was. Right? It's very difficult to evaluate between them because they're all coming out at almost exactly a quarter because none of them made any strong predictions either way. And the only way to get sort of a good conclusion out of that is to have a very large n, where you'll get some that are slightly more than a quarter, those are bad, and some that are slightly less than a quarter, those are good. But you need a very large n to get it away from a quarter. Breyer models that aren't probabilistic at all, but are just fully deterministic models, either have Breyer scores of 0 or 1, 0 when they did a good job, and 1 when they were wrong about anything. But to give a more nuanced version, a model which says 70% to rain, well, when it does rain, that contributes 0.09 to the Breyer score. And if it doesn't rain, that's 0.49, right? So, right, we said 0.25 is sort of our baseline. This model didn't say much of anything. 0.49 is this model did a pretty bad job today. Right, it's 70% to rain, but here it is sunny. But 0.09 is pretty good. Right, this is to give you a sense of scale. Right, how good is a 70% prediction being right? How good is a 90% prediction being right? A 90% prediction being right will contribute 0.01, but being wrong will put 0.81. And then for complicated systems, right, so this is all just, right, rain, yes, no, a strike break, yes, no. For more complicated systems, right, where you have, it could be in any of the following ranges. We're still going to be sticking to discrete. There's a continuous version, but it's much more complex. You can expand it out into, right, I made n predictions, each of which says that it has R possibilities. So to assign probabilities like, right, it's 25% to be below 100, the stock to be below 100 expiration, 25% to be between 100 and 110, 25% to be 110, 120, and 25% to be above 120, right? Then you get the PJKs, or like 1 over 4, and one of them will be true, right? Because one of the chi JKs will be 1, and the others will be 0. So right, for the model to do well, you want the one where it's 1 to have been sort of your high prediction, and all the other ones to be low. That gets you sort of your more robust Breyer score. But it's the same fundamental thing where you take the observed the observed reaction at either 0 or 1, and you subtract it from the predicted probability and you square it, so that it doesn't matter if you're positive or negative. And that's it. This gives you numbers given a model and observations, it gives you numbers to tell you how good the model did. Right. And we sort of, as a baseline, we want it to do better than a quarter. Because a quarter is sort of your most hand-washy, uncommittal nonsense model that doesn't make any real predictions. And I think I wanted to introduce this today because I think in the coming weeks we're going to have a couple of market measures where I'm going to try to look at how our Black-Scholes model Breyer scores do as far as predicting expected moves and those sort of things. But I wanted people to have a baseline about what is a good Breyer score, what's a bad Breyer score, what's going on under the hood before we have a market measure where it's just Breyer score 0.18. What a good model.
So you have something to judge it against, almost like back testing.
Yes. Right. We're gonna use this to check our back tests, essentially, to see how well our sort of our Black-Scholes model is doing versus sort of maybe a more fancy model, maybe a less fancy model, maybe just stocks go up or down every day 50-50 is a good model. We'll get to see. I think we'll come out that that'll have a high Breyer score. Black-Scholes model will have a relatively low one, but not that low. Right. And then people will dream of having perfect models, but we won't ever have them.
Very nice.
Tom, how are you? You feel good about this? We can go to takeaways.
I'm not sure. I don't really get the. I'm not sure I get the point.
The point is that we have there are a wide variety of ways to get right. When the platform says the in the money percentage is X%, that's being done by under the hood. It's running something very much like a Black-Scholes model simulation, a large Monte Carlo number of times, and coming out with this is how many times the option expired in the money. But we can also just look back historically. How frequently did 30 delta options expire in the money? And then we want to compare when those happened to how frequently they were predicted to happen. And the Breyer score gives this algebraic contraption in the bottom right here, where you take the predicted probabilities and the observed occurrences, and you come up with a score to see how well the predicted probabilities did.
But how could it? They have to do really well.
No, I mean, right, if the model's really bad, it'll do badly, right? If instead of the Black-Scholes model, you were just using some really crude model for underlying movements, right, that they went up or down $1 every day, then you'd wind up with the predicted probabilities being way off.
Yeah, that I get. But if you're talking about option pricing, don't they have to be pretty much the whole thing would fall apart if they weren't really good?
We will see. We will see how good they are. You perhaps that'll be the result. We're all looking forward to seeing some nice low Breyer scores. Something in the 0.15 kind of range. But we'll see. Maybe a model that just says everything's 50-50. Right? If you can't do better than the everything's 50-50 model, then you're not a very good model, are you?
Yes, agreed.
Right.
Then you're just Tony Batista.
I always thought it was I always thought it was plus 70%, but
what was plus 70%?
How often they're right.
Well, but that's the thing. What does it mean to be right? Right? They didn't say it will or won't strike break. They said it's 65% to strike break.
Yeah, I thought to be right means making a penny or something. Whatever, making money. In the end. That's a different way of evaluating a model, different from how statisticians would choose to do it, where statisticians want to compare how frequently you're right to what your predictions were. But the market maybe is the better way to do it, which is, did you make any money following your own advice? All right.
We'll see. Maybe we'll be able to show that the models that have lower Breyer scores are more profitable. This will be interesting for the next couple of weeks.
Okay.
But I want to set this up as a baseline because otherwise, it's going to come up and mean nothing to people. Okay, so whether it's weather or markets, rain or strike breaks, evaluating probabilistic predictions is tricky business because, right, maybe the answer is, did you make any money? But scoring rules such as the Breyer score, ranging from which the Breyer score always ranges between 0 and 1, gives ways to evaluate how probabilistic models did, given some predictions and observations. In most of them that are developed, higher scores are worse. You can invert them and make it the other way around, but that the typical setup is that high scores are bad. statisticians like it that way. And if no one is willing to predict to a prediction, it's going to be hard to do better than 0.25. So that's sort of where we want our things. For a more robust system where we think we can do a better job of modeling it than just guessing everything that we don't know 50-50, we should expect better than that from our models. And we will in the coming weeks see how well our models actually do.
Beautiful. I love it, Saz. We're back testing ourselves. I appreciate that.
Yeah.
The way you want to do it.
Yeah.
So we're going to take a quick 90-second break. Do you know why?
No.
It becomes that time of the day when we get to bring in my friend and yours, Mr. Scott Sheridan from the Scott Sheridan Studios, followed by Johnny Trades. That's right, Nick Batista, immediately following these messages from our sponsors, which is just really Tasty Trade and Tasty Live. We'll be back in 90 seconds with Tasty Live.
Hey Doc, your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is gonna be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's gonna be hangry.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Put on your yarmulke, here comes Hanukkah, so much Funica. Instead of 1 day of presents, we get 8 crazy nights.
I gotta tell you, that does look like a Tony Soprano tracksuit. Like you're getting a little.
He's all tracksuited up,
right?
I was waiting for somebody to say something, and if I had pants on, then I would have the Sopranos tracksuit on, right?
I made burnt ends chili yesterday. Scott's never really had it, so I brought it in.
Today, so he can try it?
Yes, it's not hot, so yeah.
We have a microwave. Is it okay if we microwave it, or will it ruin it?
Whatever you want with it, yes.
It's very rare when you get an outbreak that you get to film the origin of it.
I brought you in chili.
Did you?
Yes.
He did. He brought you in chili. Nobody was allowed to touch it. Now
It's in their
been sitting
refrigerator.
out for hours.
Now, I got to talk about the chili. Here's my comment about the chili. You were right, not enough spice. They needed to be like, I don't know.
He doesn't chop his up enough.
Is that what it is? Yeah, it's like something was off.
You can chop him up a little finer.
And then maybe pan saute him for a little bit.
Yeah.
Not enough beans. And the tomato, what do you use? Like Hunt's tomato sauce or paste or something? Just throw it in there?
Oh my God.
I love you, Tom. Scott. I really do. I really do. This is my favorite segment by far.
I made a little video. We have
Oh, no. Is this going to embarrass me?
the holiday spirit here at Tasty Live. So you're welcome. Have
we seen this?
Watch this. No, you've not.
I didn't proofread this. Oh, God.
You want me to get in first? You want to get in first?
Saz, get in here, you big stud.
It's my bad arm.
Been over your head?
So you're naughty.
I'm nice.
You're naughty.
I gotta read. I'm
no,
nice.
it's naughty.
No, nice. Ho, ho, ho. Merry Christmas and happy holidays from Tasty Live.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
But I don't know.
Tomas, we are back, my friend. And you know what that means? Time for a little bit more Tasty Live. That's right, your friend, and he's my friend from the Scott Sheridan Studios, Mr. Scott Sheridan. Mr. Scott Sheridan, how are you, kind sir?
I am excellent, but I'm pulling up news right now for Tom that he's asking because it's very important. London School of Economics.
Do you know that I went to the London School of Economics?
Oh my God.
TikTok.
Okay. Was this a setup?
I was not, but did you know that I went to the London School of Economics?
No, tell us about it. Wait, was this the summer that you were interning for the House of Commons?
Yeah, I had to go take one class.
So you didn't go, you took a class. It's like Tony saying he went to Aristar and Argonne or whatever.
I had to take one class at the London
John
School
Jay
of Economics.
College of Criminal
Sorry,
Justice.
John Jay's College of
Which
Criminal
was,
Justice. What'd you say?
I just want to say, the most painful educational experience I've ever had in my life.
Why?
It was so boring. I had to take an economics class on like, UK economics, whatever it was.
Okay.
And I had to take an economics class.
Was that part of the requirement for your school, or was that part of your requirement for the House of Commons?
It was part of the requirement for the program I was on. The program I was on was at my school. It was every school in the country. There was like
right. So if you went overseas, you had to do this.
Yes.
Wait, was this the summer though?
No.
Oh, it was a semester?
Yeah.
Oh, your semester abroad. So how did you study? How did you graduate?
Oh my God, you privileged SOB.
Yeah,
summer
wait, how did you
abroad.
do this? So
I had a summer abroad too. It was in
school.
Reese Park in Brooklyn. Summer abroad.
No, forget that. Congratulations, you're the only kid that got in from a state school.
6 months. It was 6 months.
Right. So did you graduate in 4 years?
Yeah, sure.
How did you get out? Like, how many hours did they give you for the House of Commons? You got 16 hours or whatever?
Whatever the one class plus that. Yeah.
Oh.
I went to work every day.
My summer abroad in 1976 was Lori Sakowitz.
This is 1977.
77 maybe. Mine was 76. Lori Sakowitz, huh?
How's Lori doing?
I have no idea, but I bless her heart and I hope she's well. Her and her family.
Oh my God. Do you send holiday cards?
I don't think so.
Okay. So anyway, let's get back to this. This was your junior year?
Sophomore.
Oh.
Second half of my sophomore year.
Oh, that's impressive.
Yeah. I got it. I applied. I didn't think I was going to get in, and I got in. So
applied this had to be something. Go ahead. We got to hear the backstory. This had to have been a dinner conversation where you say you're going to do it. Your parents said there's no chance that you're ever going to do this.
My parents weren't involved.
You just applied. And it was you and your sister.
No. Some teacher
got you to do it?
Yeah.
Oh, that's good.
Yeah.
See? The importance of teaching. Oh, yeah. Sorry. I don't want to get into this with you. The importance of helping people.
You guys are in charge.
I don't want to get involved.
No. Coming every day.
I tried to get out of the London School of Economics class. That's for sure.
Why?
I couldn't, because I didn't want to do it. Because I was busy.
Was it still London School of Economics? Isn't London School of Economics right down by the British Museum? It's in a nice area, isn't it?
It was fine. It was right by where I was working.
Yeah.
I don't remember the street.
Where'd you stay? Airbnb? They put you up in a dorm?
An hour outside, an hour on the train.
Yeah, but an hour, it's funny because now that I know that we work with people in the UK, an hour is like you live in the city. Like everybody travels. Like an hour is a short commute.
I had a 1 hour ride I stayed at the last stop.
I've never heard of a city where people commute longer.
New York City.
No chance.
So
no chance.
Where I grew up to commute to Wall Street if you wanted to.
Yeah.
It was 40 minutes to Grand Central.
Uphill in the snow.
40 minutes to Grand Central. Then you had to take the subway.
Did you switch drivers at that
Only
point?
when he was carrying. Only
when my
his
helicopter.
The driver, the first driver would take him there, and then the next driver
Only
would
when the helicopter or the driver wasn't available.
Okay, so what was it? 40 minutes to Grand Central, and then another 30.
Well, you had to from my house. I had to walk to the station.
Oh my God, walk to the
20
station.
Minutes. 20-minute walk to the train station.
Oh my God.
40-minute ride on the train.
Was this when you were working at
and then a
Lehman?
subway.
Wait, not Lehman. Drexel Burnham.
Drexel
Plus
Burnham.
I also worked in the summers.
Drexel
in New York
Burnham.
Drexel.
As a messenger.
A messenger, like for businesses or for the floor?
On Wall Street, like I was one of those people that would carry like checks from one place to another, and you just walk in. No one let you in the back door.
They trusted you with that?
You don't know. It's not. You couldn't actually cash them.
Okay, so wait a minute. Let's
Just
get
bring
back.
them
How
from
long was it?
one
Right?
place to
Hour
another.
and a half each way for you?
Oh, at least maybe 2
Because my dad, when he went to Brooklyn Tech from 180th and Clinton, he said it would take him like an hour and a half because you have to go down through Manhattan and over.
Yeah, it took me almost 2 hours, almost every day, each way.
My mother used to take a bus to work every day to make $9,000 a day to support her
Why does he
son
have to
because
yell
they're
every time
dead.
he's telling you
Because
that?
her husband
A year,
was in the
a
joint.
year, we know.
$9,000
Who
a year,
gives
not a day.
crap?
That's Batista. That's Tony Batista money. $9,000 a day.
$9,000 a
Not
day.
sorry, $9,000 a year, picking up nickels and quarters off of people's tables. You're talking about your commute?
Hey, $9,000 a day is Sheridan money.
$9,000 a day. All right. So a
Sorry,
question for you.
$9,000 a year.
Why do you have to yell every time you're telling
He's
a story?
from Brooklyn.
It's the Guido. It just
It's the
comes
Guido.
out.
It does.
It's like it's
This,
one of those,
this is coming from your offspring.
Yeah,
I didn't,
no, I can.
I didn't say anything.
I can say it's
Son,
just like
that hurt a little bit.
You notice that?
A little bit.
Like
little bit.
it's like it comes from
that hurt. That hurt. No,
That hurt a little bit. Pain.
Yeah, it's just a thing. The voice gets a little higher.
Higher.
You gotta like.
Yeah.
Yeah. It's just like it's one of those things.
You got to put the emphasis in the right place.
Yeah.
Yeah. All right. Did you do that when you were little?
It was hard because I was usually unconscious. I
will say there's.
I was usually after. I was like this. I was like, no, stop.
There's no chance your dad hit you. Your mom maybe.
I was actually talking about it with Gina, and I was talking about because we watched the video of Vinny. Have you seen the video of Vinny's penalty as 5-minute major?
Oh, for cross-checking?
No,
cross-checking.
I heard your dad was proud.
No, but there were some heckling in the crowd of some of the dads.
Of Vinny's team or the other team?
Of the other team at Vinny.
And
Vinny's, saying, oh, your parents are this and that bad, blah, blah, blah. It was a lot of heckling of the other.
Did you get a fight?
No, but if that happened when I was playing football, if that happened when I was playing football, and there were times where things happened with other coaches, he would have ran across the field and choked the guy out. I'm not kidding. I watched my dad run into restaurants and do some things. So
in a restaurant?
These are other stories. We don't have time for all these stories.
Plenty of time. It's our network. We got lots of time for
the
those
long
stories.
story short is back in the day.
I was angrier back then.
He would go after.
Were you on performance enhancing drugs, like you taking steroids?
No, I didn't.
He just
I
had
didn't
high
have
T
control
back
of my maturity.
Yeah.
Yeah, he had a lot of height. Yeah, he was.
You know?
A lot of testosterone.
I mean, with all due respect, he was really obnoxious.
Yeah.
Like, I mean, like you couldn't, like as traders go, you could put him on a pedestal because he was as obnoxious a trader as there was.
Tony, you're gonna take this?
He was. Yeah,
The
he
truth
was
hurts,
obnoxious.
guys. The truth hurts.
Yeah. When I broke my nose, he told me to tell people that I spilled his beer.
Oof.
They'd be like, "So how'd you break your nose?" I'd be like, "I spilled my dad's beer."
That's why.
Hey, watch this. Watch this. You ever gonna spill my beer again, son?
No.
That's why everybody was so happy when David threw him into the wall and he stuck in the wall because he got what was coming to him.
True story.
Did you stand by Lapper?
Not too far away from him.
Yeah. So that was the crowd. That was the obnoxious crowd.
No, they were all obnoxious. I mean,
Lapper was head and shoulders above me.
Not really.
I don't know. I don't know from what I'm hearing.
Yeah, I don't think so.
Oh my God, Sadov! Now that hurts. Now that hurts really bad. I
don't know.
I don't know either.
I don't know.
I mean, our section.
I logged a lot of hours with you. I don't know.
Yeah, our section was a little different.
Yeah.
Oh, you guys were obnoxious in a different way.
Oh, you're making the Jewish comment? Go ahead.
Yeah.
Yeah.
What are you saying?
Go ahead. You're making the Jewish. Go ahead.
No. Who was deeper in Ira's pocket is what you guys would get obnoxious about. Oh, Sadnov is the deepest in Ira's pocket. No, I am. No, I am.
Look at him. I'm not.
Well, you're a little upset about something. You're a little hurt ass.
He's a little angry 40 years later.
Why? Because you couldn't get the flip? He didn't have pockets?
No. I wasn't Irish enough for flip.
Anyway.
Yeah.
So, what else?
What else?
I got business.
What kind of
What
business?
are the spoos up? Over 100
Ready
still?
to do it.
You're up 99.
99.
Did you catch the
Bonds up almost 2.
Did you catch the down move?
Yeah.
Up from 108 to 99?
Oh, he did in bonds. No.
Oh, bonds.
Yeah, he needs like another 4.
Are bonds 113 handle?
112.24.
112.23.
From off of the bottom of 111.
Oh my God,
off
another
the bat bottom of 111.
Yeah, Bat, I got to tell you, you did call the bottom the other day.
A lot of bottoms.
Yeah, you did call the bottom the other day. You said, see, bottom's in place, and then they sold off like 50 from there.
A lot of bottoms.
Now I think you got the bottom.
I think revisionist history here by Mr. Scott Sheridan.
I can play the video. We have tape.
Let the emails prevail. I will send them to you.
No, today's the first day we got bonds, Russell, and dollar.
Dollar finally.
Yeah,
finally.
dollar down.
Oof.
Finally, that pig.
Yeah.
Pig.
Yeah.
Oof.
I've been scooping some Euro bottoms.
Nice.
And by the way, no police record over here, unlike other people you may have named here. So if I was obnoxious as I was, I am unscathed.
But you probably just had it expunged. You know people.
Yeah.
Right? You definitely were charged. Okay. On multiple charges bid, and then we'll say it's a clean record. All right.
And Nikki, I couldn't hear that guy. The way the place was built, there was a wall in between the two. Because if I would have heard that guy, he would have gotten under my skin.
Yeah, I figure.
Oh, the dad.
The old bat would come out.
The dad?
Yeah.
Yeah.
Was he caught?
Gone.
Oh, was he picking on Vinny?
He was like, yeah,
he said things about Vinny that were really mean, but I mean, whatever.
Yeah.
And then he started saying the same things about Vinny's family.
Yeah.
About who?
That's a quote.
Yeah, the family. He was like, yeah, screw your family. I'm trying to be, PG here. Swearing.
He used
about,
he used one of my lines, like about his mother and his father.
Yeah.
Oof.
Wow.
It was pretty wild.
You kept your act together?
Wait, who videotaped this?
And you kept your act together with that? You're getting soft.
One of my coaches
who's going.
One of the coaches who films from that side sent it to me after the game was over when we were home.
Oh.
Good thing he waited. Do you play this team again?
No, that was the second time we played. We might beat them in the playoffs.
Oof.
If they make the playoffs.
I might come to that game. Tell me when that one is.
You better bring Steve. You need muscle.
Need the muscle, Scott. I might need the muscle.
Bring Slappy.
Bring Steve. You might need to call actually David for this one. You bring David, nobody's going to start with you.
You two should go and talk to Steve and ask him the type of things I say at the game. I say nothing but positive things at the game. Oh. And I talk about the other team positively too.
No.
Hey. No. Ask me if I care. Okay. The last thing I do is care what you say at a 14-year-old hockey game. All right?
You are so vicious, Sosno.
I don't care. I'm just saying.
You're so hurtful.
I don't care.
I have to say, it's a valid point.
You know what, Sosno? You should try to be nicer.
I'm nice. I just don't care.
I got to defend Tom on this one. He has been great the last few days.
Well, bonds are
really?
up to
You were so mad at him on Monday. You were so mad at him.
Wait a minute. What's today? Wednesday? What happened on Monday? I forgot already. I probably was, but what happened?
I can't mention it on air.
It's the softer, gentler Tom of 2025.
Yeah. I'm being very
well.
gentle.
This is the casual size we got right now. He's got his leg crossed. He's got his arms in between his vajayjay. He's just hanging out. He's just buying his time.
On that note, top 15 symbols going through the system. First 40 minutes a day, no broad-based indices or futures. Tom, for you, number 15. Coin at a 30. For everybody else, Tesla at a 78, Nvidia at a 13, AMD at a 53, JP Morgan at a 24, Apple at a 39, TLT at a 38, MSTR at a 37, Meta at a 51, Amazon at a 58, Microsoft at a 41, RGTI at a 54, PLTR at an 81, IBIT at a 57, Goldman Sachs at a 30, and number 15 for Tom, Coin at a 30. Rounding out the next 10, TQQQ at a 36, Hood at a 68, IONQ at a 93, Netflix at a 73, SoFi at a 57, Goog with an L at a 51, and AVGO at a 32.
Good job, Scott. They won't say it, but I'll say good
Tony,
job.
I appreciate that. I know you have more important things to do, which is to get to Johnny Trade. So I will exit stage left. You can roll the music.
Play some music, John.
There it is. Want a couple trade ideas?
Give them to me.
You're in a good mood today.
Wait, Nick. From the Scott Sheridan Studios, Mr. Nick Batista.
Thank you.
Johnny Trades.
What do you got?
Got a couple trades for you.
All right, give them to me.
I think you'll like some of them. I tried to go into some new.
All right, that's fine.
Do a couple new strategies because I'm trying to run through all the strategies for my life cycle of a trade videos on YouTube. They're great. If you need to, learn the basics of just managing positions, they'd be really good for you to watch.
Okay.
So I'm looking at the first trade. I'm going into Intel, one of your favorites.
Locked and loaded.
Locked and loaded. I'm sure you are. I'm selling the 21 strike puts, in the money puts, synthetic cover call.
I'm already short, worse than that.
Long, worse than that.
Short puts. Hang on.
Yes.
So my current Intel position is I am short the 20 and 23 puts. I have nothing else.
Okay.
So
you got it. You're long stock.
Yeah, I'm just naked long.
Love it. Well, this one I uses about half the amount of buying power as you would if you were long stock, short the call. So
yep, I'm just naked long. Yep.
Very nice. I think that was a blessing.
Okay.
GM, you got a position?
I do not.
It's one that I don't trade very frequently, but
either.
You got Ivy rank relatively high. It does have earnings. Ivy rank at 71, so it is high. Earnings coming up on the 28th, I believe, or something like that, 27th. So that is something that's in play.
I don't think I've traded it in a year.
It's gone from like 40 to 60. It's now sitting at 50, so it's been bouncing around that range for the better part of a year. I'm selling the 48.57.5 strangle. It's a pretty much 20-ish delta on either side. You got $2.50 wide strikes to the upside, so you got to kind of pick your spot there, either the 55 or the 57.5. I moved it to the 57.5.
175.
Beautiful. Used about $600 in buying power.
Filled.
Nice little trade for you.
I like it.
I figured filled. Small, low price stock.
I don't watch that much. Filled.
I don't either, so we will manage this together. Beautiful. I'm 2
Earnings
for 2.
on the 28th, just to let you know.
What?
Earnings are the 28th, as Nick was saying just a moment ago.
Yeah.
I had to give up 1 penny to get filled. I don't know where you filled it.
Right around that. It was. They're penny wide markets.
Yeah.
They trade.
Yep.
I'm going into IBIT. Got a pop in Bitcoin. Doing an iron condor here.
Hate that stock with a passion.
I know. I don't know why you do. I figured
because I can't get filled on anything.
I know it's because of the single options trade in nickels. The spreads trade in pennies.
I can't get filled on spreads in there. But maybe
you got to go like 2 or 3 cents below. It's you got 70% implied volatility.
I understand.
It's moving.
All right, what do you got?
He throws around those two pennies around like the manhole covers. You kidding me?
I know. That's what I'm saying.
What do you got?
All of a sudden, mid price to him is golden. Like that's where we got to be filled. You know, if you only get filled about 40 to 50%.
Right, what do you got? What strike? Give me the strikes.
I'm doing the 52.42 put spread.
$10 wide.
$10 wide. Yeah, I'm a Johnny. If you want to go naked, just sell
52.42. What's the other side?
64.74. If you want to be a big boy, sell the 52.64 at $4.
64.74. 52.
How do you not look at a $50 stock with 70% implied volatility that's moving $3 a day back and forth and not want to sell some premium there?
And say, get me in there, coach. Let me play.
This is nirvana. This is short premium nirvana.
I'm more bearish than you, but here, what?
I know
what
because
price?
it went up and you missed it, and now you're mad. You know, can't be mad.
Don't get mad, Sadnov. Get even. Be a Batista.
No, I'm gonna do it. I don't even mind. I just want to see how much you have to give up to get filled in there. Hate this. Yeah, this stock is. I don't care. 2 cents, not bad. All right, filled.
2 cents.
I did a little bit different.
If I had my wallet on me, I'd throw the $2 at you.
52.42, 63.73.
Beautiful. That's it. I got Sadnov, 3 trades.
Since you paid me my money from Sunday that you owed me on Wednesday, do you want me to throw the $2 at him, Nick? I could do that via Venmo or something like that.
Please.
I could do that. Sadnov, we're going to take a quick 90-second break. You want to know why? Because Wednesdays are special for Liz and Jenny. Do you know what they do?
I'm not exactly sure. Hair and makeup? What?
They broadcast live from the SIBO, Sadnov. That's right. It should be a busy day there with the even S&Ps up 96 and the NASDAQ up 447. SPX is the pit that they sit in, Sadnov. It's up $94, a little over 1.5% move. There's going to be some action on the floor. Sadnov, if you want to get your juices flowing, because I know nothing gets your juices flowing like the noise from the CBOE, maybe you should tune in to Liz and Jenny. What do you say?
I got it out on my screen right now.
Beautiful. Nikki, you did a great job. Sadnov, we'll take a quick 90-second break and come back. We got more Tasty Live with Liz and Jenny next from the floor of the SIBO. Immediately following these messages. Peace.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to Tasty Trade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. Tasty Trade.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
All right, yeah, I'll talk to you. There she is. Hey, you found the place. Good. glad you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive?
What?
Uh-oh, watch yourself. We don't want to get hit by a car.
No.
My brother did that once. He can't talk now.
Oh, my God, I'm serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11? First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
It's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing is moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking, the beautiful brunette to the left of me, our favorite day of the week, live from the SIBO.
What a day to be alive, Liz. What a day to be alive. Spoos up 97. Did you see this coming?
Yeah. Oh, yeah.
I was hoping for it.
You did say, you're like, I hope we get a good 100-point update tomorrow.
Did I say that?
Yes.
Well,
yes, you did.
I've been rooting for it. My account needed it.
Well, this is not the high of the day. I mean, we're off the highs of the day. We've seen it over, I think, 104, 105 was the high, which is, yeah. And these guys have been pretty active. The natives have been pretty wild behind us.
We had to be here a little early today, which was so much fun because we were here pretty much on the open. Crazy market, crazy action on the open today.
Yeah.
They were really busy. Things have slowed down a little bit, but it's still a busy day in the market. Not only were SPOOs up 100, up 95 right now, but big news is bonds. Bonds were up 2 full points today, which is huge.
Thank the Lord, because my account needed it. My account needed it. I mean, stocks up, bonds up, which is a crazy day. And I think we can thank the bank earnings and CPI, right? You know,
yeah, I would.
Citigroup, BlackRock, all those guys are lifting up the market on top of a good CPI.
And CPI, so maybe we saw, and who knows, right? We have both camps on the Tasty Network. We have both camps. We have the bears who think this is just a rocky market and we're going to have more of a bear market this year. We have people who are a little more bullish. Liz and I hope that we saw the recent bottom last week, and we'll have a few up days in a row.
I mean, we're kind of kidding. Everybody wants two-way action, though. That is true. Everyone wants, every trader that I know wants a little bit of two-way action. There is no one-directional move.
I know, but you'll notice that on our show, we're happier when the market's not.
I'm not going to lie to you. I feel like you're happier when the bonds are up. You've been way too heavy in TLT and bonds lately.
I've been too loaded up in bonds lately, and so this, we were joking. Let's go to the platform. Let's pop into the platform. We were joking on the train coming in today. Weeks ago, I said I was going to get out of my.
I almost fell off my train chair when she's like, I said I'm not going to get out until 91. I was like, 91?
That was weeks ago. Weeks ago, I said I would get out of my TLT position when I got up to 91. Well, that's changed. That's changed. I can't say that. I'm not sticking to that 91 anymore. But can I get an 88? Can I get an 88?
88? Where's Bandy when you need him? We used to have an auctioneer who watched us. We loved him, and Bandy's come to a bunch of shows, but he's been gone for a while.
I know. So lots of movers and shakers, and we have a busy show today. So let's talk about the show. We have an amazing study by Jacob, and Jacob is alive and well. He is about 4 hours away from the fires. So
6.
4.
6. I got 6 from Tom. You got 4?
I got 4.
Oh my! We can take it to the tape.
Let's take it to the tape. We both texted Tom and asked Tom, "Can we bother Jacob?" I didn't know if he was displaced because of the fires, if he was there, and I thought I got 4.
He's 6 hours away.
Hold on. 6 hours away.
Yes, ladies and gentlemen, the answer is 6.
6 hours. 6 hours away from the fires. So Jacob is alive and well. Made a new study, and for viewers who have asked for studies, he's on it. I know I've gotten emails. You've gotten emails. People looking for new studies. He's on it.
It's in the queue. They're in the queue. There's a lot of people asking for studies. It's not going to be, that prick. Well, we will get to it. He was on just before us, before talking with Tom and Tony with Scott. Jacob's looking good with a full-formed mustache.
And it's not even Movember.
Well,
so we've got a study from Jacob, SPX study. Speaking of, I don't know what time you want to do it. It's almost 10:05. Yesterday we put in Jajun twice. We did the SPX.
Oh, and it came off.
I'm going to go. All right, I'm still on the platform. I'm going to go to SPX. We did twice the Jajun trade yesterday.
Yes.
On and off. We didn't follow our rules. We left it at the end of the show, and it hit.
Well, yesterday was bonkers. So, it was a fight for, I said during our show, the Bears are in full control. And then, after our show, the Bulls were in full control. And then, the Bears were in full control again. It was a two-way action if I've ever seen it.
And at 2:49, now I wasn't at home trading like I usually am because it was snowing. I was driving my daughter around. I didn't want her driving. So normally I'm sitting at my computer trading at the end of the day. Yesterday I wasn't. I was on my phone. And at 2:49, I looked and I almost bought a 0DT SPX call. But I was on my phone, so I'm like, I'm not going to do it but I almost did.
Did it rage into the close?
You know what? It would have made $3,000 by the end close.
I was woulda, shoulda, coulda, ladies and gentlemen.
I was not happy, but that's how much we moved in the last 10 minutes of the day.
Maybe we're back.
Points.
Maybe we're back to the moves at the end of the day.
It was a big move at the end in the last 10 minutes yesterday.
Okay, so that SPX, the second SPX, did not get pushed out. That'll be pushed out after the show.
Well, I don't know that we need to push out yesterday.
Well, you got it. We got it. Yeah. Well, are we going to do it today? Is the question.
Who's up 98? Are we playing for up 104, up 106?
The study is that there's more up bars during our show. Let's pop it in. We're playing a little bit with the house's money as of yesterday. We're going to close it. We say this, and then we left it yesterday. We're going to close it at the end of the show, so that gives us about 54 minutes 53 minutes and 53 seconds.
It's tough though. Spoos are almost up 100, which means we need it up 106, 107 in order to get out of it. This is my only hesitation. But
now I understand the hesitation. Try to do the in and out.
What is
where you're washing extrinsic value?
Oh, I see what you're saying.
If you're washing extrinsic value or you're getting a little bit more extrinsic value, then it doesn't need to move. I know that sounds crazy, and those usually aren't our rules.
Okay, so here, this...
Yeah, this is good. You're buying 10 and selling 12.
$3 is a hefty price, $2.90.
Yeah, but you're buying 10 and selling 12. So if it doesn't move, you'll still make money.
I'd love to get this for $2.90. It was just I'm going to put in $2.90 bid for that. Oh, and we're filled. Now I'll try to sell it for $3.40.
Yeah. And spoos were 96.25 when we put it on. So we needed up 101. Actually,
I think we needed up a little more today, right?
Well, even though we sold more extrinsic value than we bought?
Maybe not.
I think that might be the caveat here.
Okay, so I'm trying to sell it for $3.40, but we're asking for a lot. We're asking for a spoos to pop back over 100. I don't have a problem with doing the other side too. If someone thinks like, oh, maybe we'll pop down a little bit.
Yeah.
When we're getting two-way action or we're getting movement like this, you can get in and out of either side.
Love Jajun. It has become a verb, not because the Jajun trade comes from the study that he did, which is the call spread, saying there's up bars. But we know, all Tasty Nation knows, you can Jajun in either direction.
Yeah, so I think it's, right, it's not only, it could be a verb, it can be an adverb.
Describing a verb.
Describing the trade, right? Or an adverb. It could be what is it if it's describing the trade? If it's
describing a noun, descriptive, adjective.
Adjective. It's an adjective. I think the Jajun trade.
I think Jajuning is like running,
and it's also an explanatory. What is it when it's like an exclamation?
Jajun. I mean, it could be anything you want it to be, ladies and gentlemen. Anything you want it to be.
It covers the entire everything in the English language.
Yeah, it does.
Okay, so we've got it in. We'll see what happens at the end of the show. We're hoping for spoos up 106. I'd like to see that again today.
I'd like to see it again today. We'll see.
We also are taking live tweets. I'm gonna let's see, taking live tweets. Send us a tweet.
Include the hashtag LIZJNY.
Yeah.
Or for you people like me, pound LIZJNY.
Earlier, Punish Pixels came in with a question about a possible study. So, sure, we're going to take this idea, comparing a butterfly to a crab trade. We're going to take this idea to our team and see if they could put together a study about this.
And they so I'm pretty sure he gives pretty detailed on what he's looking to do. And at some point, maybe Punish Pixels will kind of walk through, not a study, but maybe Jenny and I can walk through it tomorrow on our show, just when we're not on the SIBO floor. So we'll take a look in depth. Won't be a study. It's going to be just two floor traders taking a look at it.
Sounds like a good idea. But great idea, Punish Pixels. We can look at it, but we can see if our team can put a study together. I'm also trying to get our team to do some kind of study on all those different NVIDIA underlyings to compare them.
Oh, yes.
Working on it.
Yes.
I got to call Kai. Do you have Kai's number?
I think so.
I don't know.
I believe so.
I think, we converted Kai. He's now a cruiser. He's going on another one.
I know. And he had a good room.
Oh, really?
Yes.
I don't know, but he went on his first cruise. We convinced him. Now he's going on another one.
Yep, he's a cruiser. He's a cruiser. All right, in the essence of time, do you think we should pop into our Jacob study?
Sure.
Let's do that first.
Sure. Okay. This is a good one. 0 DTE profit targets in the VIX. So how does the VIX affect your trade, your profit target? And not really your trade, but your profit target.
Your profit target. I'm going to show you. Well, I know it's hard for you to go back and forth. I was just going to say, just to keep things where they should be, I'm going to go to the VIX right now.
Right. Where is the VIX today?
So
yesterday we saw it in the 19 handle.
So VIX is down 215 right now. It's 1656.
Which is what we would expect to see on an up day like this. So when we had that day when spoos were up 40 and VIX wasn't coming down, and you were talking about, geez, that's surprising. Spoos are up 40 and VIX isn't coming down. Kind of a tell, and the market turned around.
They're getting a little wild.
So today, down to 16.
Down to 16.
All right, 0 DT profit targets and the VIX. Lately, we've been looking to refine our mechanics for managing these 0 DTE trades. Experience experienced option traders know that the implied volatility environment can be one of the most important things to keep an eye on.
How have different profit targets for selling 0DTE premium performed based on the level of the VIX at market open?
Okay. All right. Excellent.
Can we tell them to be quiet?
It's not that big. There's big. I was trying to listen to the trade. It's not that big. It's only a 50 lot.
The best part is every trader down here has like the gruff, loud voice.
Or maybe it's bigger. Maybe it's bigger, but it's hard to hear.
I won 40 minutes 55.
Love it. See? So that's what I love about this is you can hear these people. When I'm at the basketball games, I can tell when there's an next trader.
I hope that the viewers at home can just hear the noise.
I think they can hear us.
They can only hear us. Do you want to replicate what's going on behind us?
First, you have to smoke a pack of cigarettes to get the voice as thick and gruff as you possibly can.
That's good. You have to smoke. At least you have to drink like 10 cups of coffee and smoke a couple packs of cigarettes before you come to work.
Step one. No, I'm just kidding. These guys are great. These guys are great. Okay,
right.
There we are. So then, what's number two?
Back to the study.
Okay.
That was funny. Using nearly 2 years of data in 0DT SPX options collected every 10 minutes.
Pretty standard. Examine selling 30 Delta Strangles every day at market open with winners closed at a variety of profit targets, ranging from 15 to 45 of the credit received.
Okay. Contrasted performance between those days when the VIX opened above or below its mean. So 1602 is the mean of the VIX over the length of this study. And we just looked, VIX is 16 and change.
16 and change, so it's still above the mean.
Yeah, I'd err on the side of caution.
I will. It's a decimal point away, right? It is.
Sure.
Yeah.
All right.
Okay. All trades were assumed exercised at mid-price, and the cost of BPR controlling long strikes was neglected. Subtract 10 to 15 cents per day for more realistic results.
Now, you're talking about that, where all these studies say if you're buying wings, subtract 10 to 15 cents. We had a viewer email us looking for a study, looking for the optimal place to place your wings. So we passed that along to Jacob, and that will be coming in the future. So
that will be coming
tuned.
in the future.
All right, so here we go. This is overall. So this is VIX above 16, below 16. Doesn't matter where the VIX is. This is placing those strangles and then your different profit targets, what your average P&L is, your win rate. But this is not taking VIX into account.
No, this is the average. And it's interesting because I'm surprised they didn't put this one last.
That's why I had to clarify. Like, this isn't the study is about the VIX and profit targets, and this doesn't take that into account. So we can come back to this.
Yeah,
I agree.
That's what I was going to say. So we're going to look at a low VIX and a high VIX. If it's under 16 or over 16, what you should be selling in SPX 0DT.
Okay, but here, if you look at these win rates, 93%, 90%, 86, they're all high win rates and all positive average P&Ls.
They are.
You've got a range of 42, 85, 75. The best case scenario in this is managed at 25%.
25%, yeah, 25%, 15%.
Yeah.
We know this in the 0DTEs. It's best to take your profits earlier. Jacob has proven this time and time and time again.
All right. Now, high VIX. So this is VIX over, what was it, 16.06?
16.02.
16.02. Good memory, Liz.
You got 6 on the...
She has a better memory, right?
I don't know about that.
I'm not sure, but yeah, I thought it was. I thought Jacob was 4 hours away. Maybe, I can't see if I don't have my glasses on when I get my text.
You told me it was 6 hours away. We talked about it.
I already forgot.
Okay, but nonetheless, either way, high VIX, you've still got a high percentage of win rates, but the one thing that jumps out at me is the 35% profit target if you've got the high VIX. $146 is a significant jump from the average.
A huge jump. So you're looking at average P&L of $87 a trade at the 25% profit target, which is usually where we hang our hat, to $146 average P&L if you're holding on for 35% profit.
Yeah.
Which is a big change, a big difference. So basically, if VIX is over 16.02, you wait for that 35%.
Right. Yes. And you can see the C-bar on these is, in me, a moot point. These are all around the same, and they have been in the averages. So you can kind of knock out that C-bar column. I'm glad he keeps it in just because it keeps people...
And sometimes we do studies, and you're looking at the average P&L, and it's not that big, and you're like, well, if I'm giving up 15 cents to buy the wings, and this trade might not be worth the risk. But here, when you look at VIX over 16...
35%, $146?
Yeah, it's okay. You can buy those wings. It's not going to cut too much into that profit.
Well, and because you're getting, when the VIX is high, you're getting more premium. So
But Honestly, today, where did you say the VIX was right now? I don't.
1620.
Oh, I can see it. 1653.
Yeah,
it's right up there. 1653. I would err on the side of caution, maybe, and go for the 25%.
I think I would rather go for 25 any day. Because if you're selling VIX strangles, not VIX strangles, I'm sorry, SPX strangles, they're huge.
If I'm selling the strangles, yeah, I'm probably going for it.
My bar to take the percentage is very low.
But when you're buying those wings, I almost think when you buy those wings, you're giving up something. Here's something people need to remember. When you buy those wings, you're giving up something. So I think when you're buying the wings, you have to take your percentage down. Your percentage has to come down because that strangle would be at 35% much quicker, 25% much quicker. When you're buying those wings, I think you have to take your percentage down.
I think you're right.
So that's going to be coming in the future. Hopefully, we want more studies with wings.
Well, he does say.
Bust out your.
It does say take 10 to 15% off these.
I know, but I would like more studies with wings.
Yeah.
Because I think it might affect.
Well, it's a little bit more realistic.
Yeah, and it might affect your profit target. And do you still have 1 year for Liz's birthday? I made her a shirt that said, I love 10-cent wings.
I will wear that next week.
Can you bring that?
It is a skin-tight red tank top that says, I love 10-cent wings.
We were smaller back then.
We were smaller.
When we started the show 15 years ago?
No, the worst one is, so she gave me 3 skin-tight red tank tops. One says, I love 10-cent wings. The other says, I love free longs.
And what did the other one say?
Oh, God, I don't remember.
I love jade lizards.
I love jade lizards, yes.
So, okay, number one, they weren't skin tight when I bought them. They might be now, because we're 15 years older and probably 5 pounds heavier. And I'm being generous.
I love 10-cent wings, I love free longs, and I love jade lizards. Those play anywhere you're going to wear them out.
Hey, you know what? I'm going to make us all new shirts that say I love 10-cent wings. And we're going to wear it. And they really spark conversations when you're out.
Oh, yes. Boy, do these spark conversations. Okay.
Okay, now, low VIX.
Low VIX.
Low VIX. Low VIX. Now, low VIX below 16, you're right back to the advantage of 25%.
I mean, take a look at low VIX, 35% profit.
This is the problem.
That's a problem.
This is, you buy those wings, you're not making anything.
No.
35%, you're negative.
You're negative. It's negative and negative. Yeah. You're supposed to subtract 15 cents.
Right. So, 15% profit target, 35% buying wings, maybe these aren't worth it. That's why I think we need more studies in adjusting profit target with the wings. Or, again, to the viewer's point who emailed us, optimal place for placing wings.
I want an optimal place for placing wings. I do like that. Because the wings are so subjective as well.
Right.
But let's go to the takeaways, and then we can go back to the average if we want to.
Sure. So when you're looking at this is interesting because we usually don't have studies where we're looking at low VIX, high VIX. If I go, and you see the average panel, only 34 and 24 for the 15 and 35%, but still 83 at the 25. If you go back to that first chart, they're all higher because this takes all of them into account.
All of them.
And it's that when VIX is over 16, boosting the P&L. So some may say, you know what, I only want to do this trade when VIX is higher.
I don't know. I think when I look at this, I say just take 25% and call it a day.
Yeah. Yeah.
Because that 25% seems to be pretty solid.
I get it.
Yeah.
And not fool with it. But where's this now? 1660. Popped up a little bit.
Well, that means spoos are down. Can't see that well, so.
Spoos are only up 88.
Yeah, that's a problem.
That's a problem for the Jajun.
That's a real problem, Jajun.
Jajun, we're talking to you. Okay. Take
and it's a person.
Like I said, noun, verb, adjective, adverb, whatever.
Yep.
Takeaways. As with longer dated options, short 0 DTE positions perform better out of a high VIX than a low VIX.
And that was there. The least affected profit target was 25. You little 25, I love it. Which was the best performing overall mechanic considered due to its strong success, even in low volatility.
Okay, so 20, like Liz said, if you don't want to overthink it, just
stick with
25%. In a high VIX environment, however, traders who waited for 35% profit targets made off better.
And it was by a significant amount, too. I will tell you that.
Sure.
A significant amount, for sure.
Okay.
Other than the importance of aggressively taking profits, hard and fast rules are tough to come by in the fast-paced world of 0 DTEs. You're watching the fast-paced world behind us.
And I like what he's saying there. It's hard to come up with a hard and fast rule because these have only been around a year. We have just a year's worth of data. These results could change after this year.
They could change.
Right.
But I would like to state for the record, no rules are ever written in stone from Tasty. Everything is kind of a generalization of a loose-based guideline. So there is no cut and dry here.
That's why Liz and I break the rules all the time.
The rules are there are no rules.
But thank you, Jacob, for making rules for all of us to break.
Yeah, but perhaps we can be forgiven for being a little bit more patient with our winners on days when VIX opens higher. Now, VIX has been higher this entire year than 1602.
Well, it's January 15th, so for 15 days, VIX has been higher.
So let's go. Let's pop into the platform. I want to take a look at VIX.
All right, into the platform. SPOO's only up 88. Come on.
Patience, young Jedi.
I tell you, Liz's point, since we collected more extrinsic value, if we get back up just to that level, maybe if we put it on around, SPOO's up 96, if we got up to 98, maybe it would come off.
Maybe?
Maybe.
There's a possibility.
Okay, so here we have VIX 16 point, I hate to say it, but 6.66. Hate to say it.
What do you hate to say?
Well, well, never mind. Never mind.
16.68?
It was 16.66.
Oh, okay, got it. But there's a point in the middle, so it's not. You're not saying them all together. You didn't say them all together. 16.68. So we're down 10%, but it's still above the average. So on a day like today, you would have gotten a lot more premium. But can we take a look at the chart? That's what I wanted to do. Look at the chart of VIX.
Here we go.
So since the beginning,
since the beginning of the year,
has it ever been beneath it? No.
The lowest it got, 1571 on January 6th.
Yeah, that big update.
Yes. January 6th?
Yeah.
That was the big update?
I think so, right?
Maybe. Yeah, I mean, it would make sense.
Well, yeah, because the VIX is inverse.
Makes sense if we had, so this big update.
Is it January 6th?
January 6th. Yeah, January, when it popped up, when it opened up, and you had that little jump up in the bar. Sure.
Yeah.
Okay.
We popped up today, too. So, I mean, those are the days.
Okay. Well, a good study from Jacob. I don't know. Most of his studies are selling SPX on the open. And that's what we usually do if we're selling premium in SPX, it's on the open.
Yes, a lot of times. And that's why you notice during our show, we're buying that debit spread. Because I do think, well, Jacob has done studies. You can still sell premium around now-ish. It's a little bit less, but it's better earlier. If you get to the point where our show is over, if you don't see Liz and Jenny live, don't sell premium.
Don't sell premium. No, I don't sell premium after.
Nothing is a trade recommendation, but if I don't see her live, I don't sell premium. In SPX 0DTE.
It's usually early on.
Yeah.
And I know TP had done that, like sell a put spread in NDX, which you can do that in SPX too. Instead of the Jajun trade, instead of wrapping around, you could just an out of the money put spread, and I think that's okay at this time of our show.
Yeah,
looking for that afternoon pop.
So you know what's interesting though is even was it last week or 2 weeks ago? The last time we were here, I was talking with a bunch of these guys, and they were saying that the 0DTEs are very active on the open in the first hour or so, and then they kind of die down, and that makes sense with.
And then
it kind of edifies
they
the
get
studies.
busy at the end of the day.
They get
because
busy
the people
at the end of the day.
we know who are buying them just looking for movement, that's the end of the day.
Yeah, it's the end. Right.
No one's selling them at the end of the day.
True that. Right back to up 96.
So
can't stop, won't stop.
We're like our trade is just it's just a scratch right now.
Yeah.
So,
but at least we're not losing.
No, we do have quite a bit to manage. We put on that Citigroup earnings trade. Before we get into Twitter, I am going to take a look at that Citigroup earnings trade. We bought a diagonal. It was $3 wide. We paid $1.50. So paid $1.50 for a $3 wide. Most we could hope for was about $1.50. We made $130 on it.
So you can see that the short, the 76, is still worth 57 cents. I mean, that could still come out of it. I don't think we need to hold it for 57 cents. Let's get the heck out.
Wait, let's see.
The extrinsic value is still there, right?
Is it still there?
Oh, it's 32 cents. Sorry, I wasn't looking at it right.
Oh, yeah.
There's still 32
cents, but I think we just take it off.
Yeah, you got to take it off.
We have more earnings coming up. It's busy. Earnings season is going to get busy. So taking off for $2.85, 15 cents shy of that $3 mark, because that's the distance in these strikes. All right, so that's off, and that was good. Worked out. I'm glad we went to the upside.
And just a public, yeah, me too. It's the left side of the field. Usually it's this side.
I know. Good. I'm glad that other side's getting smashed. Because, like, as a trader, you want to stand in a busy pit. You want to be in a busy pit. When we were back on the floor and we were in the equity pits, traders would move to where the action was. They would want to go to the pit where the action was.
Yeah.
So if I'm on this side and they're getting all the business over there, I'd be trying to move.
It's hard to move. Sometimes you get run out. Frank will tell you stories about people running people out of it.
Oh, when new people would try to come to our pit, when it was like the fiber optic heyday and we had Corning Glass and everyone wanted to come to our pit, we'd chase them out.
Yeah.
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 They'd get chased out.
Or tell everybody you weren't making money. That's okay. Okay, right. So we're out of that. We do have quite a bit of earnings today, right?
And we do need to we need to decide what we're going to do with our bond position.
Oh, that thing. Okay.
You're complaining.
I am complaining.
16. We have 2 days to go, 113, 112 put spread.
I say we stay the course. We put it on when it was 113, 112. Let's close this and roll it out in time. Or we can leave this for 2 days and roll it tomorrow.
It was higher earlier. We saw bonds up 2 full ticks. This thing was a complete scratch earlier. Now it's down $132. So earlier today we did see a bigger move up in the bonds. Is it going to fall back down? Are we going to get continued movement up tomorrow? I don't know.
Is this day one? We're not making money on it yet. We're still out. I put year to date on my screen. We are still out on this bond position.
Right.
I think we scratch it. I don't want to work this hard for a non-scratch if we're getting movement in our direction.
No. So you could see the chart here, to Liz's point, is this day one? Are we going to get a pop back up?
I don't know.
I don't know. If Annie did anything, I would.
But I don't want to lock in a loss. I say, we're going to take a vote and it's 50-50 either way, but I say we leave it or roll it.
We either leave it or roll it.
Stay the course is all I'm saying.
So the only reason I would say roll it right now, and I wouldn't roll to the same strikes.
No, you don't.
Right now we have, I guess it doesn't matter. We're short the 113 put, which has about 14, 15 ticks in extrinsic value, and we're long the 112 put, which also has 15 ticks in extrinsic value. So that's a wash. If we were in a situation where we had much more extrinsic value to lose, then I would say definitely roll it now. But we could wait. We could wait till tomorrow or Friday. We can just leave it and hope bonds get above 113, which is really wishful thinking. But
it is wishful thinking. But
we were almost there.
We're almost there.
Yeah.
Yeah.
So, and if we go to next week's, go the 9-day, we could do the 112, 111 and a half. That would give us 26 ticks there, which is about $406.
Let's do it.
So 26 to sell out the 9-day spread, and to buy ours back is 34.
Hold.
Yeah, let's just hold. Let's just hope today's day one.
Hold.
All right, we'll leave that till tomorrow.
Okay.
But that is our biggest P&L mover today in this account. We're up, our bond positions made $350 back. Other movers, CCJ is up $1. We just have some short puts.
So you'll notice we're in good shape on all of them, but there aren't any big positions. Our big ones were Citigroup and bonds.
Right.
Everything else is just adding up. But there's nothing that needs to be taken off yet. If you look at that P&L percentage, that's really your gauge. Delta Airlines is the only thing that's close, and that is 45, and I would take that off.
Delta Airlines.
Because it's a strangle.
Oh, right. I was going to say, that's unusual. Delta Airlines is down today. That's there are very few red items today. Delta
Airlines is one of them.
So we've almost made 50% on that strangle, which is crazy because we've only been in that strangle for 5 days.
Well, Delta Airlines was huge implied volatility when we put it on. That's implied volatility at its best.
All right, so let's get out of that strangle.
Yeah.
That was quick.
That was pretty quick.
Honestly, you usually don't see 50% on a strangle in 5 days.
The other thing that you can manage is DraftKings. You can roll it out. Oh, no. That's earnings. We're going to go through earnings. We're going to sit on that one.
We have the 40 put. It's worth 85 cents. 16 days to go.
Yes.
I know DraftKings is up today, but I'm staying long on my DraftKings until, I think I said this yesterday, until after the Super Bowl. Or until leading up to the Super Bowl.
So the end of February. I mean, DraftKings is a core position of mine, so I'm going to be with Drift. I lean bullish in DraftKings, but it's because I'm selling things around it. I'm always doing something against my DraftKings position.
Again, my husband's in Germany, and I'm in charge of all of his DraftKings fantasy
and
stuff.
Because of that, she's a bull.
I'm in DraftKings so much now, I can't get rid of my DraftKings position.
All the kids like it too.
Yeah.
Okay, so DraftKings we don't need to do anything with. Take a look at Micron. This is the decision, right? Okay, so Micron is also a strangle that holds up quite a bit of capital. We're up 35% in 7 days. Not bad.
Look at Micron, up $5 today. That's a big move for Micron.
It's a big move. I mean, it's still smack dab in the middle of our strangle.
And Micron took a hit a couple weeks ago.
Yeah.
You could see it dropped down, was only in that little bottom range for a week or so, and now it's back up. So it's kind of nice to see Micron jumping back up. We're happy for Jack JT. We know he's a permabull in Micron.
Yes, he is.
I'll take the strangle off.
I think we should.
Okay. Replace this order.
My question to you.
Yes?
Why do you leave your one hand like this?
Nobody sees it. Nobody sees it. Liz sees it. Nobody sees it. Because I walk like this, too.
I know. She keeps both hands up like this.
Well, I don't want to. There's this pad on my computer. If I accidentally bump it, it could knock something out of place.
Oh, I was just very confused.
I don't trust my left hand.
It's like you're trying to swear in to do something.
Hi. Jenny Andrews. I promise to take off this Micron strangle.
Perfect.
But honestly, nobody can see.
It's just very bizarre where it's like this the whole time.
Nobody,
up like this.
If you look at my camera picture, no one can see what my hands are doing.
All right, take off the Micron strangle.
And people laugh at me because sometimes I'll walk like this.
You always walk like that. She walks with her arms up, kind of like what is this? Is this a Tyrannosaurus Rex?
What, like a dinosaur?
Yeah, like a dinosaur. That's you always walk like this.
Is it the T-Rex?
You walk like a T-Rex.
Maybe I was one in a past life.
She walks like a T-Rex, and people, who was it, that guy in college who's like, why don't you swing your arms? No, it was somebody in college who's like, she doesn't swing her arms. I've never seen anything like it.
Okay, but I have to think about it.
Because otherwise she walks like this.
And Tony would always laugh at me when we were on the road.
Yeah.
But if I think about it, I have to really think about it and say, swing your arms, swing your arms.
Swing your arms. Listen, you can't make this stuff up, ladies and gentlemen. You cannot make this stuff up. Hi, Chip.
Oh, my gosh. Spoos are only up 75.
No!
That Jajun trade is in a world of hurt.
I think that's why I'm just getting delirious. I don't even want to see it. Okay.
I think you're delirious because we took the early train.
Check.
It's what time? 10:30 is my first cup of coffee for the day.
That's a problem, ladies and gentlemen.
Liz was trying to give me her caffeine strips.
Yeah. Been trying to slip in her water for years. Okay, you're out of Micron. We've got a lot of stuff to do.
No, it's still working.
No, but you're working order.
And I promised that I would get out of this Micron strangle, so I'm going to.
Okay. So I don't think there's anything else to manage. We do have earnings, we have Twitter, and we have What's Your Assumption?
All right. Yeah, we're busy.
Ooh, Micron.
I just paid the
public service announcement. Everything will be pushed out afterwards. It's just a little bit too chaotic for me to ignore her.
This is not good. Only up 77.
No, it's okay. It's okay. Just have faith.
I'm not worried about this Jajun trade. I'm more worried about my account.
Oh, okay, good.
I didn't really close much, or I didn't do much today. I was busy. Okay. Anything else in our show account?
No, I think we're good in the show account. SoFi is 30%, but we're going to wait for 50 because it's small.
Yeah.
That's it.
Okay. So into just making sure.
There's lots of tweets coming in. I mean, you're not refreshing because there's a lot of tweets coming in.
I know. I have to try to refresh Twitter. Okay, here we go.
Yeah, there we
go. Listen, Jenny forever. Good morning, ladies. Bullish quantum computing, IONQ. Is it too late? How about a long-term play leaps?
And then bearish Tesla. It's not a bullish news. They've stopped production model of Y in China. Okay. Have you watched Will Ferrell in Stranger Than Fiction? I have not seen Stranger Than Fiction. My dog's name is Will Ferrell, and I will watch it.
Yeah, maybe we'll watch it this weekend. What are you doing?
I'm going to be with all of our friends.
Maybe you guys can watch it.
We're not going to watch movies. We're going to be drinking.
No, that's not this weekend. That's next weekend.
That is this Friday.
No, it's not.
Darn it.
It's not.
I don't know what I'm doing this weekend.
Okay, so the quantum computing. I'm going to tell you my personal quantum computing story. My son, a computer engineer, he's into quantum computing. Like he's had, I don't know, classes or whatever. Like he's talked about going on and studying more about quantum computing. I bought, so for him, I put the quantum computing stocks in his account, in his trading account. He went in there and he was like, "What is wrong with you, Mom? Get all these out of here, sell them all." And he said he says it's so many decades away that doesn't make sense to invest in them now.
What is it? IONQ?
That's his take on them.
So hold on, IONQ, which is
IONQ.
It's up $7 today.
IONQ.
It's up $7 today. It was also on What's Your Assumption, and we nixed it because it was up $7 today.
Well, you know, if you look at the chart, these quantum computing stocks, they have had a crazy run. Then they fell after the
Jensen Huang,
right,
whatever, yeah.
at CES. Now they're bouncing back up. My family of engineers, they all say it's decades away. What are you going to do? Put your money in here and hold it for 20 years?
But if you are product agnostic, would you sell a 91 rank?
Not in something that went from 5 to 55 and now to 36. No, I wouldn't sell options in something that went from 5 to 55.
I don't know. Yeah, you're right. Because this looks very meme-ish.
Meme-ish. Right.
And I love that meme-ish is a word too.
Meme-ish. All right, people getting busted for walking behind us.
It's okay.
Okay, so I'm not doing anything in these, and maybe I'll regret it. Maybe they'll keep going up. But
so they were looking at some leaps. I mean, sure, if you want to, you can make some very, very small, bullish, long term if you wanted to.
I mean, what are you going to do?
I don't know.
Like, you're going to go to January 2026?
January 2026.
And sell the, that's...
Listen, I'm just being nice to Punish Pixels. If they want to be bullish, they want to be bullish, IONQ, go for it. I mean, it is up $6 today, and hopefully you did it yesterday, but they were punching things, so I don't think they did.
So here, if that 30 put in a year from now, that 30 put's $1,100. You can get $1,100, and you wouldn't, so you make
Did you press the button on that? Is it really only using $200?
That's, okay, the margin guys are going to come out and change that someday soon.
But it will still only be $2,000 to the downside because you take what you collect to the downside. It would be like $18.
Yeah, you're getting $1,100. Your max loss is $1,800. Even if you're using $2,000 to make $1,000, the return on capital is great for the 365-day year leap.
When she is right, the margin gods are going to come take that away from you at some point.
Don't expect that margin to stay like that. Someone hasn't seen it yet.
All right, let's pop back into Twitter real quick.
Okay. Back to Twitter. Uncle B2. We, the viewers, can definitely hear the commotion and occasionally someone yelling behind you. Great.
That's awesome. I'm really glad they could. I love the buzz and the energy of the floor, and I like hearing it. Part of me wants to jump in. I know. We were having that discussion on it's more fun to film here. We love our students. We love our people at the. No, we love our
people.
We love our tasty people, but we love our SIBO people too.
But it is fun to be here on the floor.
We love our SIBO people too.
All right, Herb, can you go over your can't lose TLT trade?
Well, you can lose. It's just.
I'll go over it.
Yeah,
the caution tape. He's talking about the good old caution tape. But honestly, Herb, the caution tape.
And Herb, good job on the callback. That was from years ago. Nice work, Herb.
That's kind of like what to do with the money that's just sitting there. You've got nothing else to do.
Correct.
And I have not done it in a while. And
the reason is it's very capital intensive. There is a little bit of risk factor in there, but it's not. You can't lose too much.
No, but honestly, it's a trade for when the bonds are just sitting there. It's a trade for when TLT is just sitting there. We're like, oh, bonds are at 100. They're just sitting at 100. Bonds are at 90. They're just sitting at 90. Bonds aren't sitting anywhere. So they're moving. So I don't know if I would do it with bonds moving so much. You kind of have to pick your point where you think it's going to...
Just go through the trade.
All right. All right, so we're trading 86.50. So the assumption of this trade is that we're going to sit around this level of 86.50. And this trade is you would buy the straddle further out in time.
Yeah, so it's opposite of what we usually do.
In the 65 day. No. You sell
the straddle farther out in time.
No. I can't remember.
You sell the farther out, buy the nearer term. Because usually it's the opposite. If your long leg is farther out, then you get some capital efficiency. If your short leg is farther than your long, you do not get capital efficiency.
So do we want to go 65 days or do we want to go...
I mean, we're really not going to put this on, but I just want to show her.
So let's say we go to Fab and we sell that 86 straddle. could wrap it around 86, 87. So we're getting 270. So our break evens are 83 and a half, 89 and a half. Then we want just decay for the next 10 days or something. So then go to the 10-day, 9-day, and you buy the wings.
You're buying at your break even. So it's completely counterintuitive. You're actually going to put up all the capital for that farther out straddle.
Now the thought in TLT was that the wings are so cheap. So you look, I go to the 9-day, those wings are 7 cents, but to the upside is the problem.
Aha!
So where am I? 86 and a half?
Forever give me there's a gotcha, in the words of Dr. Kim.
No, I guess it's not bad. 89 and a half. Well, it's weird. As soon as I put that one in, I lost my break evens. Do you see what I mean? So here, 83 and a half.
Yeah.
And 89 and a half. So yeah, they're not expensive. So you've got 8 cents and 7 cents. So you're giving up very little, and you're selling that straddle in the March. So you're just hoping that
How much capital is it holding up?
$1,600.
This is what you do without when you don't know this. We talked about this trade to your point when bonds weren't moving. Number one, and number two, when you had some capital on the sidelines that you didn't want to risk, but you wanted to put at use.
If bonds sit right around here, I've done this trade many times, and every time I would get like $30 out of it.
Yeah,
I would get $30, $30.
In a riskless trade.
And I don't want to say every time.
No,
that was my profit target. Get $30 out of it, and it was kind of when bonds were just sitting there. If we sit here and that March decays and your wings weren't very expensive, like you put this, we could put this on and leave it on for 9 days and watch it. But the problem is going to be if bonds are whipping all over the place.
You don't want it to go 2 year long and sit there.
Then you can lose a couple hundred.
That's the only thing is if it goes 2 year long and sits there.
If it goes to the long, but then your short straddle doesn't have much extrinsic value.
Yeah, but
I don't care if we put this on and watch it.
You can lose a little bit of money. We can put it on overnight. I mean, how much is it?
$1,600.
Ship it. We just got that back in Micron.
Well, we couldn't put it on overnight. We'd need to leave it for the 9 days.
Okay, do it.
I mean, but I don't know. Like right now, I think for us, we don't have a lot of money sitting on the sidelines. There are better ways for us to use our money.
Yes.
Maybe I'll do it in my account and just keep an eye on it.
Yeah, there you go.
But it's kind of like sell a straddle further out in time and buy the wings shorter term where you're not paying much for them, but at your break evens.
Yes.
Okay.
Thank you very much, Herb.
Yeah, there's
now
a walk down
back
memory lane.
to Twitter. Just make sure we get to everybody, and then we can go to Bob's earnings, or we can go to what's your assumption, because it is 42.
Okay, so SIBO posted. Love them.
I know, I love it. And that's I think that was day one. The only reason I know that is because I'm wearing my zebra dress. Those of you who know what the zebra trade is.
Oh, yeah, you are?
Yeah.
All right, Bob on fire. Good to hear from you, Bob. Today's earnings, SNV, Taiwan Semiconductor, United Healthcare, Bank of America, Morgan Stanley, USB. So a lot of earnings today.
And I know a lot of some of those overlap on
what's your assumption. So maybe we go through what's your assumption before we jump in.
Yeah, let's get to all the tweets. I think there's some that just came in too, and some beneath it. We'll get to those, and then we'll go back and forth.
Theta Busters took SPX put debit trade instead of debit call spread.
That's right. You jajuned to the other side.
I think when the market's moving like this, you can do whatever way you want. I don't think I know we've got that study of more 5-minute up bars than down bars in the afternoon, but when you're getting movement, put it on whatever direction you want.
Yeah. It's a defined risk scalp, so good for you.
I can't wait for summer. Look at Frank.
That's not Frank.
Oh, that's someone from YouTube. I was like, look at
No,
Frank.
there's Sadie's in there, but Frank isn't in the car.
No, but look at Frank's car and his house up in Wisconsin.
Yes, that's what
looks pretty nice.
I was like,
what town is he in?
Ooh,
Rhinelander.
Rhinelander, because I drive by it.
There's his wife in the car and his cute little dog up in Rhinelander.
Awesome.
Frank was willing to come all the way back to Chicago to shovel my driveway for me.
Frank's the best.
I know.
She did hit her head twice, Frank. So I think
that's why I was walking like this today.
I don't know what. I thought maybe they would keep the hands down after you hit your head twice. All right, let's pop into what's your assumption. What do you think?
Okay, a great idea. What's your assumption? Are you ready for it, Liz?
I'm ready.
John, hit us with the theme music.
I am ready.
Okay, here we go. What's your assumption? First up, TSM, Taiwan Semiconductor. This is Justin from Detroit. Bullish earnings, neutral to slightly bullish on TSM with weekly IV at 90. What's the play?
Well, Justin, if I'm going to be bullish on earnings, I'm going to be diagonal city. We've kind of talked about this. It's a good risk reward scenario. You got to make sure you're paying it under 50% of the width, and that seems to be how I would be bullish. That's my personal opinion.
Okay, and it's interesting when he sent this in yesterday. He said 90 rank. We've seen VIX come in today, and I know they have earnings, but VIX is down today. Taiwan Semiconductor vol is down today because rank was 90 yesterday. It's 50 today. With the 90 rank, if you want to, you can sell puts. But we decided we don't really love the risk of selling puts on earnings anymore, so we've been doing the diagonals instead.
Right, and I do love puts. Honestly, on earnings, I like to pick a direction, and I kind of want to experiment with this. We did it last time.
Every time, same direction. See how we do with earnings.
So, and you can kind of tally. So this morning we made $130 in Citigroup, right?
Yeah.
So that I'm looking at earnings plays as non-durational, kind of tallying. So let's take a look, because you're going to see a lot of diagonals.
Can you actually keep a note? Can you write it on your phone in the notes? Let's keep a tally going of our earnings, and if we just do these call diagonals and everything for earnings, see how we end up. And not everything, because if they're really expensive, we won't do them.
Fine.
Okay. All right. So if I'm going to do one, I go to this week's expected move. We're looking at about 215 to 217. So I can compare them both. And selling that, going to the 9-day, buying the at the money, which is about the 205. So if I do the 205, 215, that's $10 wide for $591. It's kind of expensive.
I was looking at the 217.
The 205. Well, earlier it was up higher, right? Where it's supposed to only up 77 now. If I do the If I do the 205, 217, it's going to be more expensive. I think it's a little bit different than when we looked at it earlier. 205, 217.
So the 205, 217. So what's interesting here is when I say expensive, it is going to be more debit outlay, but it's going to be less a percentage of the spread. You're selling the 217 in the 2-day, and you're buying the 205.
It's not, honestly, it didn't change much.
Well, that's what I'm saying. And then it's less, when you said it's expensive, it is a little bit more expensive, but it's you have less of a width of the spread.
Yesterday we said we'd love to pay a third of the width of the spread. In Citigroup we paid about half the width of the spread.
Well, under a half is what I always want to pay, is under a half.
Here you have 524, and you've got 205, 217, so it's 12 and a half. It's 12 and a half. So we're paying less than 625. Sometimes we see it even better.
Yeah.
But
so I don't mind this. This is what's your assumption? It's earnings.
525 is our risk. If Taiwan Semiconductor's down on earnings, we could be out 525.
But you do have the long for the next 9 days.
Sure.
So when we do our tally, we're going to say when it ends.
When it ends. Great.
Deal?
Are you reliving our old commercial? The rock, paper, scissors?
Rock, paper, scissors, shoot.
What'd you do? Who wins?
Jenny won. Jenny won.
All right, 521 debit. I'm going to put that in and send that diagonal. That's a bullish trade. We have about $600 in profit potential on that trade if Taiwan Semiconductor goes up on earnings.
Yes.
$500 at risk.
Okay.
Okay, next up, Morgan Stanley. Michael from Denver.
So Morgan Stanley, you're going to have to read for me, though.
Sure. Weekly options, Morgan Stanley's earnings on Thursday morning. I'm bullish, but the price is near an all-time high. So, hey, we saw the same thing in Citigroup. Price near all-time high, and it still went up.
Okay, so my question to you is, I'm just discussion points, I don't know either way, but you saw, Morgan Stanley's up on the heels of market being up, banks being up. So I still think
I kind of want to look. So Morgan Stanley's up 4%. Right now, Citigroup is up almost 7%. So
yeah, is there room to run?
Is there room to run? If they have good earnings, could it be up a little more?
Sure.
We'll look at the diagonal again. It's not that expensive. If I buy that I could go either. If I buy that 130 call in the 9-day and in the 2-day sell the 136, I'm going to give ourselves more room.
Yeah.
I'm only paying $230, and this is $4. It's $6 wide.
Love it.
All right, so this is hoping for another move, a second day up in Morgan Stanley, risking 230.
And you're filled on that. I don't know if you were filled on Taiwan Semiconductors. That's okay. You don't have to chase it.
I'm not going to chase.
We're not going to chase anything either. Okay.
No. No, I'm still working Taiwan Semiconductor, but we're filled in Morgan Stanley.
Okay.
Okay. Next up is XLU bullish. Zach from Madison, Wisconsin.
Zach?
Oh,
this was supposed to be deleted.
No. Here, I remember this, Liz. Okay, XLU bullish, medium term. XLU is trading at a short-term low with great IVR, plus interest rates are high again, so any bond price bounce should help lift XLU's price, similar to being long bonds right now. Zach from Madison, Wisconsin. So let's see, with the bond move up today, how much is XLU up?
It's up 1.57%. Yeah, it's up.
So we got a little move in the bonds. You got a little move in XLU. If we were bullish in XLU and wanted to keep it going, there's not a lot of premium in these options, even with the high rank. So we said we would just do a zebra.
Oh, you're right. We were looking at a Feb zebra because if you want to be bullish, and the zebras are cheap, so we can go through the zebra, which is a zero extrinsic back ratio with stock replacement.
Right.
Yeah.
So
sure.
I'll throw it in. So zebra is selling a 50 delta, buying 270 deltas.
So 77,
Actually,
75?
I can make this cheaper and bring it to the 75. Right.
Yeah, do the 77, 75.
$441. So pay $441, and it's like we're controlling 100 shares of stock. It's like we're long 100 shares of XLU. By buying 270 deltas, selling 150 delta, this is giving us long 100, pretty much 90-something deltas in XLU.
Yes.
For $441, instead of buying the stock for $7,600 or $3,300 on margin, it's much cheaper.
So buying the stock would be $3,843
on margin.
On margin. So $3,000. Now the other thing is you can go buy a single option, but that single option for $4 still has 50 cents extrinsic value. So by putting on zebra, you're washing the extrinsic value. You get to make 1-for-1 with a defined risk setup.
Excellent, Liz. I'm going to ship this.
Do it. I'm glad you remembered that.
The markets are a little wide, so I'm going to pay up. I'm going to pay $445. We're along 100 shares of XLU. It already had a bounce today. We're not going to look for much out of this. If XLU bounces 50 cents tomorrow, we might get out of this.
I mean, when you have a defined risk setup, you can't be making that much.
Well, but when you have a zebra on it, you make as much as the stock moves.
True.
So there's no cap.
No, but you and I aren't bullish. You and I are not bullish XLU. So we're not going to go from, we don't want it, well, I don't think it's going from 76 to 100. I think it might be going from 76 to 78. Yeah.
We have enough bullish bond positions to throw in another.
Okay.
Nike bullish. This was one of those that I think we were like.
Are you surprised that everybody's bullish?
Well,
Nike's down today.
So Nike's down today.
Nike can't catch a break.
Nike's down today. It's near recent lows.
Nike can't buy an uptick.
The hard part about Nike is the 15 rank. I would normally say sell a put, and that 70 puts $1.50. With this low rank, I hesitate to say sell a put.
It's hard because we have so many other bullish positions in on something that isn't participating in this much of a market rally. It's very hard to jump into right now.
If me personally, if I thought, oh, I'm bullish in Nike, I want to be long Nike, do you know what I would do?
I would buy this 67.5 call.
That's exactly what I would do. I would buy the 67.5 call, give up 70 cents of the up move. I've got 100 shares of stock by buying that call for $4.50. If I wanted to be bullish Nike, that's what I would do.
This is my next step that all of our viewers are way smarter, but this is the next step I want to teach my son. Is buying
I don't know,
calls.
Liz. I think you're pretty smart.
Well, no, I'm saying our viewers are smarter than this. But my son, my next step for him is buying a call. I'm going to teach him how to buy calls because right now he's just buying stock. So you can do a $70 stock for $400 and control 100 shares
I know.
of it.
And you hear, like, if we say buy calls, you'll never see us buying out of the money calls. We're not buying out of the money calls. We're buying in the money calls with very little extrinsic value. I would love to buy the 65 or 62 and have even less extrinsic value.
Yeah.
But then that's just tying up more capital. I'm willing to give up 70 cents on the up move to have those 100 shares.
Yes.
I'm going to ship this.
Ship it.
And this might break Tasty Mechanics a little bit, but we're almost 50 years old. We've been doing this for so long. We don't care if we get in trouble.
Oh, my gosh, I got a phone call from school the other day where my son hands my phone to somebody else, this kid Maxime, who's trading. He's been trading for 2 years and he's only 18. So you know what? He's buying and selling calls and puts. He's coming over. We're going to talk one day.
Good for him.
Yeah.
Good for him.
Maybe I'll bring him down.
But you know what I mean? The longer you've been doing this, the longer, like, you can do what you want to do.
No.
You know the rules.
But that's why we were talking. They're loose guidelines and they help people when you're starting out. But I will never forget my friend Cutter telling me this. You need to understand the rules in order to break them.
Well said, Cutter. Well said. All right, next. So we're in that too.
Yes.
Next up, we have AMD bullish. You're right. They've all been bullish.
They've all been bullish.
AMD bullish. Kyle from Akron, Ohio. Oh, so half of Logan's friends are in Akron, Ohio, because he goes to Miami, Ohio. And there are a lot of kids from the Akron area.
Are there really?
Mm-hmm. His roommate is from Akron.
Oh, really?
Yeah.
Oh, cool.
AMD bullish. AMD's earnings on February 4th. The price is at a 50% discount compared to 2023 highs. Short put or maybe play it more conservative with the Jade Lizard.
Take a look at AMD. I mean, it is 50% of its price. The high was somewhere around 187 in June or July, and now it's trading 117. So here,
do you personally have an AMD position?
I used to. I don't anymore.
I have. I'm not sure if I still do, but I have had just either like short puts or
something. You still have it if you don't know.
I might have it. I don't know.
I think so.
I probably do still have it. Okay, so bullish AMD, 50th rank. Earnings are February 4th. But honestly, you're getting $7. You're getting a decent room, even if you stick in that 16-day.
And they're bullish.
I could sell the 110 put for almost $1.
And get what's your capital?
And that's 16 days. And then if it's dropped down there, then I've got earnings vol to try to combat the loss.
Not bad. That's not bad. I was also thinking earnings setup calendar, but that seems expensive.
Oh, if we want to be bullish through earnings, we could sell the 16-day, like give ourselves a little bit of room. Like how about the 122 or something, 16-day?
Well, I think if you look at the 23-day, yeah.
But they're expensive.
Yeah, it's too expensive. I kind of like selling puts. Let's do it.
And I kind of like selling puts before earnings, so that if it falls between now and then we've got the earnings vol to play with.
Yeah.
So what do you think? 110 put for 96 cents?
Sure.
Okay. We have $19,000 in buying power, so we're all right.
Well, getting rid of the only strangles that we had today released all of our buying power.
Yes. Good call. Good call. Okay, and next we have SMCI. This is the last one. SMCI bullish, 30 to 60 days.
Bullish. Everything was.
Yeah. And this is Cornelius from Phoenix.
Oh, Cornelius!
Oh, Cornelius. We met Cornelius.
I love Cornelius.
I knew it sounded familiar.
I love that name, so I remember meeting you, yes.
Shout out. I love you and your family. SMCI bullish. If Cornelius is bullish,
I'm going to load the Flotola.
I'm all in.
I love Cornelius.
I think in SMCI, we could do... What do we want to do? Because you're crossing earnings.
I'm fine. If it's Cornelius, we're bullish. Not that we favor anybody else. We love all of our viewers equally.
But my question is, if we're... So SMCI is pretty beaten down. I've been in SMCI quite a bit. Are we going to go through earnings?
Yes.
Okay, here, let's try. I'm going to go through earnings, and I'm going to buy an in-the-money call.
I was going to say do diagonal. So buy the at-the-money in the 23-day.
Well,
make sure
I don't want to give up a lot of extrinsic value. So I was going to go and buy the 27.
In the 23-day?
In the 23-day.
So you're giving up $164, fine.
So I'm giving up $1.64 in extrinsic value. I'm just glancing at the puts, giving up $1.64 in extrinsic value. And then I'm going to go try to sell out of the monies in the 9-day, and then the next one, and the next one to cover that.
Do it. Love it. So it's a little bit of a hybrid. Cornelius knows what we're doing.
So I'll sell the 34 and a half, or the 34 and a half for 50 cents. So I'm going to pay $5.05. But then next week I'll sell another one.
This will be overtraded to the umpteenth capacity because we are going to be in this for a little bit.
Well,
unless it goes right up. Perfect.
But hey, if Cornelius is in, we're in.
We're in.
That guy.
Solid.
Talk about smart viewers.
I know. I'm
going to make sure we got to everyone's tweet because we are out of time. And I have a hard time updating Twitter here. But
I can check real quick for you.
Yeah, double check. Is the Theta Busters our last tweeter?
Hold on. Hold, please. Yes, we did. We're good.
Okay. All right. That's it. Out of time. Busy show. Full hour. Jam-packed hour. Craziness on the floor today.
Yeah. I mean, we'll see what today brings. Spoos are down 80. We're totally ignoring the
Up
Jiaxing
80.
trade. Or up 80.
I forgot. I mean, we haven't. We'll decide. We'll make a decision and push it out on the follow page.
Yes. All right. Everybody have a wonderful afternoon. Good luck with your earnings trades, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
See you tomorrow, everybody.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
Trading is hard enough. Here's what liquidity is. You want to be like water. Liquidity is in reference to how easily you can get in and out of a position, from volume to open interest to actual price at which you can buy or sell your position. It's important for all traders, from stock traders to futures traders to options traders or even crypto. Tight bid-ask spreads and high volume are characteristics of good liquidity.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
All right, so I've got some good news and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, it's not going to work out. That's the bad news. The good news is at tastytrade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
tastytrade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man Mike Butler, and of course, Mr. Thomas Westwater for our Westwater Wednesdays, which are back. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my buddies, Mike and Thomas. Thomas, how are you, sir?
I'm doing good. I'm trying to stay warm, you know. It was a cold one this morning, so... I
think we have negatives coming soon.
Yeah, next week.
Middle of next
Monday,
week.
Tuesday, yeah.
Oh, yeah. Oh, yeah. Sunday, high of 11, low of 1. Monday, high of 5, low of -1.
It's the long nat gas trade there.
I know. You were talking about this last week. You gave us a fun weather chart for your content last week on Natty Gas. Looks like it's playing out a little bit to the upside.
Yeah.
After
done well.
What happened on this massive bar? Was that when we had our? I think we had our segment. What was the date? Was it the 8th?
something like that. Because we had, or did we miss it because? Oh no, we had a day before Carter.
Yeah. Wednesday?
Yeah, Wednesday. What was the date on that? I think it was the 8th. Yeah, it was Wednesday the 8th. You had that huge move higher, and then we had a move up to 4.4, retrace that all the way back. So you had your back-to-back 5% up moves, it looks like, or just about.
Classic natty gas stuff. But yeah, Monday, we're off on Monday.
Yes.
This upcoming Monday.
Do not come in.
MLK Day. So
I think futures open at 5.
Yeah.
Do they? I don't know if they trade on Sunday too. Do they trade on Sunday from 5 to midnight? Because isn't there like a 48-hour rule? I think it's for.
Yeah, I think you're right.
The futures can't be closed for more than 48 hours, and that's why they open on Sunday at 5. So I think they might trade.
I'm gonna check right now.
Yeah, for a period of time, but a good PSA from Mikey if you're wondering why your stonks aren't moving on Monday. It's because the options and the stock market itself will be closed for sure.
It looks like the futures are open.
The whole time from Sunday through?
I don't.
I know Tom is.
This chart that on CME's website is so wonky.
They're moving first call, right, John? To Monday? I believe they are.
Yeah. We'll have more information by Friday. How about
yes.
Because right now.
You sprung that
I don't know. It says that they're open Tuesday, January 21st, but it's listed under Sunday and listed under Monday. So maybe they're not. I don't know. Either way, we physically will not be here.
Yes. No shows on Monday. Yes.
But yeah, kind of crazy to see the weather getting chilly, natty gas mooning, everything else mooning.
CPI this morning after
big fake out. PPI was a little skittish. CPI was like, oh, never mind. Let's moon it.
What's the net of the? Because I know those two things go into like the decision making. Obviously, with bonds up a little bit today. They're telling you that rates maybe come down at some point. What's your take on the net of the two?
Yeah, I think the market's just looking for any reason to go up. So this coming in a little bit below expectations, even though we're not, at the lowest over the past few months, I think the market's just saying, let's do it. It's good news. The yields going down is saying the Fed has more room to cut. So later this year, more rate cuts, good for the markets. I mean, softer dollar, good for gold, silver, commodities.
I think this is the first day I've seen the dollar. And it's kind of moving higher as we speak. But, I mean, the dollar has been super, super strong. I scalped out of a couple of my euro contracts here. Good timing because the euro is now back to where it was yesterday.
Yeah, I mean, the DXY, the basket, is still a little down, trimming a lot of those losses from earlier this morning. So
yeah.
The dollar is hard to put down right now. I think that's just with the tariffs and expectations for more deficit spending. It's a hard case to go short against the dollar.
Glad I got out.
Yeah, I mean, some of these other currencies like 6E did pop today. It's selling off a little bit, but 6J,
Japanese yen.
Yeah, Japanese yen is popping a little bit here. But we'll see. Yeah. Big moves in some of these high concentration stocks, though, in the NASDAQ. Microsoft up $10. NVIDIA up a little bit, but yeah, Microsoft, Apple, you name it.
As we've seen time and time again, it's all at once.
Yeah.
No slow and steady.
Yeah, very strong correlation with the Mag 7.
Yes.
Netflix has earnings. Netflix up 15. Netflix has earnings on the 21st after the close. So that's on Tuesday after the close. I'm going to write an earnings preview today, most likely. So keep your eyes peeled for that. That'll be the first big tech stock that announces that we pay attention to. Banks are tomorrow and Friday.
We had a lot of them this morning, actually. So we had J.P. Morgan, Citigroup, BlackRock, Wells Fargo, Goldman Sachs. Those are all making some nice moves higher, or at least were this morning. You got J.P. Morgan up $4 and change. Goldman Sachs was at like 600, up $30. Wells Fargo up $4 and change. Citigroup. So all the banks reporting good numbers, or at least the market taking them as good numbers to the upside here. I close out of a JP Morgan earnings trade that I had from the cherry picks yesterday. If you didn't get it, you can sign up and it'll trigger it to send it to you. We gave you a list of a bunch of the earnings that are coming up over the next week or so. Gave you a downloadable spreadsheet on just some data on the S&P 500 stocks, so you get volatility, IV rank, the movements over the last 1 month, 6 month, and year, so you can see what's up the most, down the most, all that sort of stuff. We also took a look at the SPX guesses and gave you the distribution going out towards the end of the year to see where our viewers are thinking the market will go. We put the median analyst expectation in there as well. Do you have a guess of what do you think? And the median analyst
for the end of this year?
For the end of this year. Because we started at like 5,900, I think. We were basically right here.
I mean, 50, 60, 600, 6,700.
66 was the median.
Okay.
But I feel like it's usually, they usually under, like it's usually not as bullish as it is.
Yeah.
But, so they put it right at 6,600. So we got some data on that too. And then 2 trade ideas. I did JP Morgan, which I closed this morning. Nice trade. And then Tesla, Iron Condor. So.
And we still got Bank of America and Morgan Stanley tomorrow. So still some banks left, but looks like they're chugging along.
Yeah.
JP Morgan record profits for the year. So
Bank of America up $1, almost 3% here today. A little sympathy move.
Yeah, and I mean that's feeding into the Russell a lot. Banks do well. Russell's heavy banks. Even though the bigger banks don't do the same thing as those smaller banks, it's still showing. The underlying financial conditions for them are good.
Yeah, if you look at KB is one of the regional banking sector ETFs up a lot in the last day, 5, 6, 7% the last 2 days. Big move there. Quick little market update. E-minis up 87. Not really the high, but we've had a explosion to the upside, about 120-ish, 110-point range. We were up 110 at one point this morning. The high being 59.91, so about 20 points higher from here, 107 to the upside. NASDAQ up 392. You've got the Dow up 625 and the Russell up 40, as Thomas was saying, a lot of the banking stocks helping to lift the Russell and the NASDAQ, the strongest of the group, but it's a buy everything day, it seems like, or at least, if you had bought over any period of time, you're getting paid back today. Oil up $1.83, 78.20. It did look like we had a little bit of weakness in the overnight session. It got down to 76 and change, so we've had about a 2-point intraday range. Today, volatility futures, 1750, down 95 ticks. A big move. You got the VIX in the 16 handle. Just a couple sessions ago, we were talking about in the low 20s. 21, I think, was like the high. 31 was the high, so just over 20. It has come in significantly, at 30% drop in volatility over a couple days. Big move. Bonds up almost 2 points, and I think they did get up in the 12 handle. They did. Or they almost got to the 13 handle. 112.30 was the high of the session. Gold and silver both moving, I presume, on the move in rates. With rates coming down, that should help some of the metals. Gold up $33. Silver, the bigger beta, or the higher beta, having the bigger move to the upside. $1.12 almost here, 3 2/3%. And Bitcoin was 100K. I don't know if we got it on the spot.
Spot was 19.5. Futures got into the 100K mark. It seems like it's just a risk-on day. Can't miss
As it should be.
As it should be, yes.
Send it. It's the motto of 2025.
Yes.
Send it. Did you do anything this morning?
I did a ton of things. You must not have watched Johnny Trader. I'm very upset with you.
I was reading and editing content.
No excuses. I did. I did a couple new trades. So in the Johnny Trader account, we sold a put in Intel. So that's just a in the money put is a synthetic cover call, trying to get a new little strategy on.
Ooh, Intel.
It hasn't moved anywhere. So, and
it's at the lows of forever.
Yes, it hasn't gone anywhere. So figured it's a low risk, Well, I guess it could. That's all subjective. But in my opinion, low risk. I did an iron condor and an IBIT into this pop and vol, and as well as this move higher. And I did a strangle in GM.
There you go.
A little cheapy there. On this account, I managed a bunch of trades. I closed out the rest of my Euro position. I had good timing this morning. It's still up from, where we were trading 2 days ago when it was in the 102 handle. So, it's been a nice little rally there. Close out the JP Morgan trade. I managed the QQQ crab trade that I turned into a call diagonal spread with this adjustment, selling the 535 against it. INQ, I closed out of this butterfly that I had on. I closed a little bit early. I wish I had held. It's up $4 more today, so it would have been an even better trade, but you take what you can get. Managed an IBIT position in this account, so I closed out of that put spread. If you remember yesterday, I bought that put to cap the risk and reduce the buying power. Obviously, you're getting a big move in Bitcoin over the last 2 sessions. Now closed out of it, took some profits there, and I have that butterfly on the upside that I kind of legged into along the way, freeing up almost $2,000 in capital as well, which is great. SMH, somebody in the chat gave us that. I had a short put spread, close out of that. That was a nice one. And then in Mara, I closed out of a short put. Mara and MicroStrategy, Coinbase, all those stocks having a move in tandem with Bitcoin itself.
Lovely.
Yes.
I have some positions that I could consider closing, but I'm going to leave. I have a Microsoft call diagonal, long March, short fab. I'm going to leave that for earnings. I like the rebound we're seeing today. And I think we might see it continue through that earnings announcement. And then that's pretty much it. IBIT is looking good right now, but this is the year-long trade, so I'll be in this forever. I did close the EWZ position. It was a call zebra in Feb.
Shady.
Yep. Long the 21 twice, short the 23 once. That was a 70-cent winner.
Nice.
Into the rally this morning. Just taking off some risk. That was a shorter-term expiration.
What was the debit on that?
340.
Nice.
And I sold it for 410.
Great.
Yeah.
Nice little 15, 20% return on capital. Nice little trade.
Mm-hmm. All right. It is Westwater Wednesday. We're streaming live on YouTube. If you want to join us there, pop over to Tasty Live. You'll see this video front and center. We're looking at corn and soybeans.
The corn man is back.
Corn man is back. What do you got for us today?
Yeah, so the January WASD was released on Friday, so I've been wanting to talk about it a little bit.
Okay.
So we get, of course, the monthly updated numbers. At the same time, this report came out alongside the quarterly grain stocks report. So, typically the January report is one of the bigger ones for the year. You're getting it alongside that quarterly report, and it's I believe the final numbers for the last year, but we're going to be looking at projections for the current year versus how they were 7 months ago, kind of see how those changes occurred, and take a look at positioning and price action in the market. Corn, I'll just say right away, I'm still pretty bullish on. It's made a good move here in January so far. It's up about 4.5% for January, and that follows a bullish December and a bullish November. So we're coming out of a period where back in August, we hit, the lowest point since 2020. Corn prices plummeted. There was a ton of supply on the market, U.S. supply, Brazil supply. Some other places were doing pretty good as well. So now we're coming out of that. And, there's a few things to talk about before we get into these numbers. One, January, farmers are going to start getting ready to sow their fields and everything in a few months here. So right now they're purchasing a lot of those supplies, everything from fertilizers, et cetera, all those input costs, they're getting ready to buy right now. With the prices rising in corn, the supply they do have, they're going to be releasing some of that onto the market just to get some money to help pay for their upfront years coming up here. So naturally, this is a time when we see farmers release any excess supply they have onto the market. So perhaps they're waiting for 5, perhaps some farmers are doing it now. But what prices are telling us is that, we're withstanding any additional supply being put onto the market. And let's just take a look at this chart really quick. The bottom or the middle number right there is the January WASD numbers. And I'm comparing it to 7 months ago back in May, just for kind of compare how the trend has been going over the last half year. So production, January, 14,867, so 14 billion bushels. We are, a little bit up, not really, it's only a marginal change. So production is the same, imports are the same. Exports here are increasing. So we're shipping more corn out of our country. U.S. is the largest corn producer, so that's a pretty important metric to look at. It either shows that demand is rising outside the U.S. or supply is decreasing, or perhaps both of the same things happening at the same time. The big number to look at, though, is ending stocks. So January ending stocks came in under estimates. That's what helped push those corn prices up here over the past week. And now we are approaching that 5 level, which is, you could say psychological resistance, or perhaps a price target where more farmers are going to sell these products. So, a 30% reduction from 7 months ago in ending stocks, that's pretty notable. And, that's one of the reasons we're seeing a lot of this upside right here. If we go to the next chart.
Especially because it was at lower prices. I mean, we've reversed basically corn's trading at essentially what it was trading at in May of last year, but you have less ending stocks there.
Right, exactly. So yeah, we see the blue line is corn. We're approaching 500. We've been at 500 plenty of times over the past few years. You look back to 2022, we are all the way up at 800. And despite that, net positioning, meaning longs are more long than shorts, it was up around 450,000 contracts. The past week, we saw a big increase in that COT positioning. We got all the way up to a little over 300 contracts net long. Prices rising, so of course that makes sense. But just comparing it back to 2022 gives me the impression that longs have more ammunition, so to say, towards getting more long. So on one hand, you could say perhaps positioning is overextended. It's time for a break, especially as some farmers can perhaps be releasing some supply onto the market. But I'd say, we have a little bit more room to go up. A lot of these macro factors, we've had this bullish WASD. So, for me, corn getting up to 500, which I believe right now is about, what is that, like 8%?
Yeah, 5%.
About 5%. So I think we can make another 5% move over the next week and get that 500 price before we think about reassessing. So, if it wasn't bullish WASD, I'd probably say look at going short right here, let the market resettle into a new price structure, wait for more news to come out, perhaps next month's WASD. So I think taking a long trade right now is probably the way to do it. Volatility in corn, it's
relatively high. I mean, at middle.
Okay.
Yeah.
So maybe like a long spread here is maybe one way to do it, to get exposure to that.
I like that. Or, I mean, I was just flipping through some of the other ags. Soybeans having a nice move higher, but still, very much in the dumps there.
Yeah.
Looking at wheat too, wheat hasn't really participated in that up move. Is there anything in the WASI that, kind of points to why these two are not participating in the same sort of upside?
Yeah, so the next two slides, we're actually going to talk about soybeans.
Of course. You wouldn't leave me hanging like that.
Yeah. But I'll just say right away, the main factor keeping soybean prices down right now is Brazil. Brazil's having a really, really good year with their harvest.
Okay.
They're estimated to reach over 320 million metric tons. Soy exports over 100 million tons. So that would be a record year for them, and it would be a nearly 10% increase from the last year. So Brazil, they put out their main crop is soybeans that they export. The next largest is corn. So they're when you look at U.S. prices, Brazil is like the next country to look at if you're analyzing the soybean and corn markets. Whereas wheat, you're more looking towards Ukraine and Russia, that very fertile area near the Black Sea where a lot of that product comes out. But just looking at this chart, it's the same chart as soybeans, just the numbers, or the same chart as we just looked at for corn, but these are the soybean numbers. Now we see that ending stocks number, it has dropped 14.6% from 7 months ago, but it hasn't dropped nearly as much as corn, and it's been more in line with what analysts have been predicting. So it hasn't been surprising markets. It's kind of been expected. Yes, it's dropped. Imports are up. Exports are unchanged. Prices, the average farm price is slightly down. So, it's just not as bullish of a story as corn. It is bullish if you look at, just these numbers. But again, Brazil putting out a lot of product, and we haven't been surprising estimates that much. So, I'd say I'm fairly bullish actually on soybeans, but not so much as I am on corn. Mm-hmm. And if we go to the next chart, we'll kind of see that speculators
mixed.
Yeah, they haven't gone net long yet, like they were back in 2023. And these prices have sold off a lot over the past couple of years. Speculators have gotten, less bullish. But as prices are coming up here the past few weeks, it doesn't look like there's a huge appetite to get right back into the soybean trade right yet. I think that's because of Brazil. So once Brazil's harvest is over, perhaps, we could flip it more net long. But for right now, it's certainly a less bullish story than corn. So keeping it all in context, I think corn is the play to do. And I think, right before I left for leave back in November, I said corn was one of my top trades going into the end of the year. So that's played out, and I kind of nothing's really changed too much for me. I think corn is going to continue to do well this year. It's just once we hit that 500 number, I think that's going to introduce some profit taking, some cooler heads saying, let's reevaluate. And then we could probably talk about another corn trade, maybe in a few weeks or a couple months.
I like it. I can hear you clicking, so you're setting something. I was thinking of just like an at the money call spread.
Yeah, with a short at 500. That's what I was looking at.
Oh, I wasn't going to go that. So you're going to do an out of the money call spread.
Oh, yeah.
Oh, so you're
just keep ripping to 500.
I like that.
Once it hits 500, you just close it, regardless of what the P&L says. It's it's a $280 risk, but a $700 max profit. If we get up there within the next couple of weeks, it's not going to be $700 max profit, but you'll get maybe $200, $250. You could double up.
You risk one to make three, pretty much.
Yeah.
Basically, you're putting $290 on black, and you just need the roulette to hit black once. You'll double up. Or you can wait for a pullback. What do you think about that? Because we've seen a pretty substantial rally over the last 4 days, 450 to 478.
Yeah, I think waiting for a pullback is fine. I don't know if I'd necessarily short it.
Yeah.
Just because there's been a couple down days over the past couple weeks. But if we look at Friday, since that report came out, we've only had really one down day, and we lost 0.4%. So, you know, I think the buying is still strong here. There's volume coming in. There's a bullish technical structure. I think a short would be, it's. I think your risk here is, better to the upside.
Yeah.
So.
Certainly some call skew as well, which plays into your trade as well. Makes it for the same amount of capital outlay, you have much higher reward than you can get to the down, playing the downside.
Yeah.
So I like that. I went with just an out of the money short put spread. So I did the 470, 460. Figure I go and do a different, a little something different than you, and we'll see what happens.
Yeah.
I like that trade though. It's just kind of a, all you're going like all or nothing kind of thing. You want to have a cheap shot, couple, 2-3x potential on it. I like that trade.
You could also do something like selling the 470, 460, and then buying the 500, or even something
net
out
zero.
of the money. Yeah.
Just have the upside play.
Yeah.
I like it.
That's what we call the Super Bowl. Super Bowl-ish.
Yeah.
Yeah, I think what I'll do, since I'm going to go with the debit route, is I'm going to see if we get a pullback the next couple days here. And if not, I'll probably do something like Nick has, like the 470, 460 with a spicy long call.
It's funny that you mentioned, because they were, the farmers liquidate some of the stock that they have in the ags, and then have to get ready for the next planting season. The first thing that came to my mind, I was like, I gotta look at what John Deere is doing.
Yeah.
And all these stocks, like, it's the same day that corn had that big move. Like, John Deere was up, $25 on that day. Let's see if Cap moved the same way. So that's an interesting sympathy play that I wish I had known about before.
There you go.
Yeah, Caterpillar, JD.
And I don't think they were earnings, because they both have earnings middle of February.
I mean, what's with the move in JD? No, this is wrong.
JD?
I'm looking at it.
Yeah, that's
wrong.
the China
Very
stock.
wrong. Yeah, big move there. Huge bar.
Yeah.
John Deere, those tractors. I actually, before I went to school, I went to DePaul in the city, but before that, I went to Northern Iowa University.
Really?
Just for like
for a visit?
For a visit.
It's the corn metropolis.
Yes. And when I was there, I was like getting the tour, and they sat us down. They're like, this is a great university because you'll be fed into John Deere. Like you'll basically get a job at John Deere if you want. And I was like, what am I, like, where am I? It was just such a weird situation, because John Deere around in Chicago is like, you have to be outside of the city, obviously.
Yes.
But it
You
was
don't
just
have
such
a lot
wild
of
thing.
tractors
It was like, yeah,
downtown.
you're a shoo-in for a job at John Deere. And, probably not so bad considering, let's just say, you get a little stock.
Yeah.
And back then, let's see, 2010.
Way back then, when
back in the
dinosaurs
day.
roamed.
Yeah. So yeah, John Deere stock was sub 100 back then. I'd probably live out there. Probably have my own tractor. Things could look very different if I went to NIU. We'll say that.
Somewhere in an alternate timeline.
Exactly.
Yeah.
You're on a tractor.
Parallel
Right?
Well, that's here now.
Yeah.
I mean, isn't that the whole, the Google said, like, quantum is, like, we could be in the matrix, basically?
Yeah.
I mean, yeah, of course.
Day to day.
I totally believe that.
I believe it more and more.
I'm done not believing stuff.
Yeah.
I'm totally on board with everything.
Okay. I like that.
Quantum.
Yes, man.
Black holes, aliens, yeah.
Give me it all.
Yeah.
Why not?
Prove it wrong. Prove it wrong. How about that?
Oh, my God. You're so good.
Good stuff. But yeah, love the analysis. You're in on corn.
I am in. Out of the money,
Soybeans.
short put spread.
Soybeans is interesting too, but I'll stick with Thomas's analysis. I'll look for a long corn position. Maybe I'll get lucky with a little pullback in the next day or so.
Guys, Are you guys doing anything in natty gas?
What's your play? What are you thinking?
I mean, I'm bullish on natty gas for this year.
Okay.
I think we could get up to 5. After this winter, especially if it remains cold, that's going to bring down stocks a little bit more going into the summer. So we'll have to build them up more. But next year is if you look at the Widowmaker spread for next year, March and April, not this year, but 2026, it's showing that supply is going to be really tight at the start of the next withdrawal season, November, December. So I think there could be like a fight for supply, Europe, trying, and then we got all this AI data centers. They're going to be pulling a lot of energy. There's going to be a lot of natty gas plants, new ones over the next couple of years, I think. I think we're going to be looking at 5 by, maybe.
Are there any natty gas stocks that you would look at? Because I know I don't know if it's just us or in general, because the futures only go out to this May contract, which I don't know which one that would expire to into the future, but certainly not a year out in time. I don't know if those are totally tradable, but I would love to get a stock that I can add to my watch list.
There's Kinder Morgan.
KMI.
Yeah, KMI. They've been tearing with natty gas.
Yeah, there you go.
Pumping.
It's probably a good one. It just broke the previous swing high from November.
Mm-hmm. Okay. I like that. See if it's a tough one.
And we got this Arctic blast coming next week. I think it'll be a high of 2 here.
You think we get a short-term natty gas little pop to the upside?
I mean, the thing is, natty gas, like, people have been so willing to sell the rips, and this one is holding up fairly better than the previous ones we've seen over the past, all the way going back to June.
The capitulation pain.
Yeah, we're kind of seeing some flip in, that kind of behavior there. So it's looking bullish. I think I'd wait until a pullback to get long again right here. You get these couple days up, then you get a big down day, then, a couple more days up over the past month. So I think maybe hold in line with that.
Does your view on natty gas correlate to your view on oil right now? Because, we're back to basically the highs that we've seen over the last, year or so. Is this, staying high, or are you, not as bullish?
Yeah, stocks have been doing pretty good. We've had like 8 consecutive withdrawals. The prompt spread is flashing a signal. I think we're at $1.33 right now for backwardation. So that's pretty bullish right there. It's signaling that the physical market is tightening up. We just had new sanctions on Russia, their 25 shadow fleet or whatever you call it. They'll slow them down for a bit, but they can adapt and find ways to go around those sanctions as they've done. Yeah. And that's the same way for any sanctions on commodities. You find ways to get the product offloaded, do it, where you're out of sight.
Yes.
But right now it's causing supply uncertainty in the market. At the same time, you had OPEC, Saudi Arabia's Aramco raise prices for their Asian customers. You got China more inclined to do stimulus. So, OPEC seeing that, raising prices, more economic activity. At the same time, U.S. production is kind of maxed out, at least effectively. We can see a little bit more out of it, but really it's we're maxed out, especially on refining activity too. The thing is, crack spreads are not participating. So those fuel prices aren't rising relative to oil. So that's not going to be promoting, downstream from taking in a lot of product or utilizing as much as they possibly could. So I wrote an oil and a natural gas yearly forecast there on the blog sites. But, the EIA, the IEA, OPEC, they're all forecasting around 73 to 74 around there for end of year. I said, we could go up to 80, possibly stay around there towards the end of the year. We're already up at 80. So I think this is kind of the top range, I'll want to get long right here, especially coming into the swing highs we saw back in April and July. So this could be a good time to probably sell it.
I like that.
Maybe back down to 75, 76. But for right now, it's bullish. So, I'd be fine selling here for a little bit. But once we come back down to that 75-ish level, I'd probably want to look at going long again.
Kind of surprised. I'm looking at the OVX, which is oil volatility. You have to type in OVX :CGI in the platform. It was some CBOE change. I don't know if they need the OVX ticker for something else or whatever, but you got to type it in that way to pull it up. Oil volatility really hasn't exploded to the upside, even though this is a relatively big move. I mean, we're back to kind of the high of where we've been trading. Typically does have call skew and skew to the upside. You typically see when you have big moves to the upside, volatility also comes with it. But that's a little odd that we're not seeing that pop and vol there. It's a little higher, but nothing out of, its range.
Yeah. Maybe that signals maybe you see a little pullback here. Similar to what we talked about with the E-mini futures and how it felt like we've crashed from the highs down like 5-6%, but volatility hasn't really been saying we should expect anything like too crazy. So, I mean, of course, today's move was driven by the CPI report. And anyone that says otherwise can just pull up a 1-minute chart at 7:30 a.m.
Well, I think we've talked about it before. You always have, like these market events bring in, bid volatility higher. Yeah. You always have fear going into it's just like earnings. Like into an earnings event, regardless of, the expectation, there's always going to be a heightened volatility. And I think after, PPI and CPI come out and you kind of have that breath of relief, that's a natural, volatility contractor, which, is a natural buyer for markets if you have volatility coming in.
And I think if the CPI was different and you saw a 100-point sell-off today, I think today would have been the day where you really saw the VIX react in that fashion. But not seeing it. No. Down 10%.
No.
All right, beautiful. Popping over to the YouTube chat now. H. Montero, thoughts on inflation returning due to disruption in supply chain, egg shortage, rising prices. You have a personal egg shortage. We were talking about that yesterday.
Yeah, they're slacking. So when the sunlight, the shorter days, they start producing less. So we're getting like 1 per day.
Whoa.
Not enough because I eat like 3 eggs every morning at least, most mornings. But yeah, they're slacking. Eggs now at the store, they're like $5-6.
You got to get them one of those. Don't they have like the fake sun lamps?
Yeah, they do.
Are the chickens smart enough for that? They're like.
So the thing is, you can trick them,
stuff.
but you reduce their total egg laying life if you do that.
Oh.
I'm trying to, go for longevity over just getting my eggs right now. But maybe I should do that with where egg prices are.
How long do they lay eggs for?
I think it's like 5 to 7 years.
All right.
Yeah. So.
Yeah, that's a lot.
They slow down after a few years, but.
5. That's a problem 5 years down the road.
Yeah, right. We'll just get more chickens.
Yeah, you get more chickens.
They cost like $2 each when they're chicklings or chicks.
Oh, really?
Yeah.
That's a lot cheaper than I thought.
Yeah, they're pretty cheap.
Wow, you can you go to your favorite Costco and get a full chicken for what, $6, $5?
if you can get it fast enough.
Yeah, if you're not
on the rack and there's people.
You're not fighting the other people for them.
Yeah.
Yeah, but I'm out there each night yelling at them in their faces.
On.
Yeah.
Work.
Speaking a different language.
Is there future? There's futures for eggs. I don't think they're on they're probably through like ICE or something, right? I think there's some sort of egg futures.
I think there used to be. I'm not sure if there is anymore.
Yeah. Let's see.
Yeah. I'm not seeing anything.
They trade on the DCE. So 5 tons is the multiplier. Yeah, I don't think they're.
Huh. Maybe one day.
Yeah. My own analysis of the grocery store, I'm with Thomas. They are certainly higher.
Yeah.
Yeah.
Along with everything else, but.
Yeah. Okay. Strangle an Intel instead of a short put.
You could. I just fear a upside face ripper, whether you have, some sort of takeover, merge, what do they call it when the government
saves you?
Yeah. Bailout, something like that. I feel like that's I'm fearful of that upside risk than it going to 15.
Yeah.
The stock, it's clear that 20 is kind of where it's been trading, so that's just my own opinion.
Yeah.
So I would avoid selling the call.
Yeah. I mean, there's certainly risk in both directions, but the velocity risk has got to be to the upside.
Yeah.
Unless you're in an earnings announcement and they fail again and the stock just tanks. Like that's really the catalyst here, but yeah. Could do it if you're wanting to get that extra premium. Bullish crab in IonQ.
Oh man, these things are back in style. Up $9 today. The other one, RGTI, RGTI. Rigetti, yes. There you go. Up $1 and change. You got to be careful with these. Yes, definitely has high volatility. But they, it's warranted when you get a 30% overnight move. So what are the strikes that he was looking at, or did
just wondering how you would set it up?
Typically this is a tough one because there's so much call skew and you don't have that many available strikes. I usually go, and you can even see the skew in this is so extreme that out of the money options have a higher delta, and you can have a higher than 50 delta, which shouldn't be the case. I'm looking at April here, but you can see it in the curve. Your deviation to the upside is almost like your 2 standard deviation is a double to the upside. Pretty wild move.
Yeah. But really long April, short Feb is still.
Yeah.
It still sets up in a normal way where you're paying about half the width of the spread. Like if you do a 40, 50, 60, long the 40 in April, short 2 of the 50s in Feb, and then long 1 of the 60s, you're paying $5 for that. It's a long-term trade though. Like you have to hold this to February's expiration.
Yeah.
Because the IV is so high that this premium isn't going to come in until you're much closer to February's expiration. And you need the stock to be around here. If the stock drops, you're going to see losses on that long call. But you have 92 days, so.
Yeah.
Certainly a way to reduce cost basis.
It got up to 55. I was looking at this like a 1x3 for credit. You don't like that? $1,200 in buying power?
I don't know. I mean,
this is a Sosnoff trade.
Yeah. The unlimited upside risk in a stock that can go from 30 to 500.
Yes. Yes. A 1x3 for a little credit.
Yeah. Tiny credit.
Yeah.
Unlimited risk.
Uh-huh.
But yeah, the crab trade I think is fine. You just have to understand you're gonna have to hold this thing for a while.
Yeah.
But you're reducing your cost of the long option by 50%.
Yeah, your April skew is just crazy. Maybe when they open up March, we can look at this, which they should come on the table and after the January expiration rolls off. So once at the end of this week into next week, we'll probably have the March open up. We'll take a look at that. I think that'll be a little bit of a easier setup for us here. They'll probably have way more strikes too.
Mm-hmm. Ben says low corn equals excellent beef prices. Is there a correlation there?
Yeah, I mean, it's a feed so it's an input for cattle.
Okay.
So, it helps cattle farmers out if their feed costs are low. I'm not sure if the cost of the corn actually makes them taste any better, but
yeah,
they might be getting a little more feed.
We certainly don't see the cost saving either.
Yeah. But one thing I learned is when it says grass finished beef, in the grocery store. You know, the farmers could technically just let their cows go out for like one day before they slaughter them, eat some grass for a day, and then they can label it grass-fed beef. So
awesome.
I think they're trying to change the rules on that. But
I assume because they would have to analyze like what is in the,
or give like a minimum
like
amount of
what's
time.
in the, yeah.
Yeah. But have you guys ever had like Japanese Wagyu and you can literally, when I had it, you can literally taste the grassiness like in the beef. Like you could almost taste like the grass they ate. It's pretty cool.
You must have had some in Japan. You
Every
must
day.
have. Yeah, you must have.
Literally every day. It's so cheap.
It does taste different
Yeah.
than American beef.
You know what else tastes different in Japan? Salmon. Raw salmon. It's also a different color.
Well, it's
very different
a real color. Yeah.
True.
It's not farmed in its own duty.
All right. Manny, Happy New Year indeed. Thoughts on VRT? Considering selling a 221 110 put or a strangle 110 160.
I don't think I've ever traded this.
Vertiv.
What is this? Let's see. Okay.
I mean, it's totally fine.
Software, so it's in tech. What are we looking at? The 110?
110 put or a 110 160 strangle. I like the put by itself just because I don't really do like iron condors or strangles in an earnings cycle. Because with risk on both sides, you're playing for IV contraction and time decay. You're not really going to get as much of that with earnings in that cycle in Feb. So I like the short put by itself, where you can get paid on a directional move. But yeah, either way, solid return on capital if you do the short put or the strangle. Just understand that like if you're trying to get with the strangle, if you're trying to get like $250 out of this thing, you're gonna have to hold it till after earnings.
Yeah,
it's not gonna come out until after earnings. So
earnings expected to be on the 19th here. You can see kind of volatility increasing in those back months. So it's probably somewhere in with, just before the February 21st expiration. $1,300 in buying power. I kind of like this 105, 155. Try and manage it quick, couple weeks before earnings. Take 50 cents to $1 out of it. Let's see what the open interest is. Not great, but some strikes trade. Yeah, this one doesn't look like it's super. On the call side, people are trading the upside, but. All right, I'm going to do the 110, 155. Try and take $1 out of it. Something along those lines. 532. See if we get filled. 530 maybe. I'm going to let that sit at 530. Next one.
Brett, looking at IonQ, 35, 40, 45. Long Feb, short Jan 17. So a short-term one.
35, 40, 45?
Yeah. Yep. Yeah, basically it's a symmetrical butterfly where you're pushing the long option further out in time.
Yep.
So that is the definition. This one is you're paying a little bit more than the width of the spread in terms of the 40, 45 embedded call spread here, but not too concerned with it considering you're getting all that extrinsic value in 2 days.
And that long option, even if it goes, we looked at this yesterday with the JP Morgan trade, even if it goes like $10 in the money, let's say it goes to, stock goes to basically 50.
Yeah.
You're still going to have $1 of extrinsic value in this total position that, you'll make 50 or 60 cents on that sort of, even if you're fully in the money. And that's because of how high volatility is.
Yep.
So I don't hate it.
JR Spock has 6 chickens putting out 3 eggs a day in central Colorado. Probably much warmer temperatures in Colorado.
Probably, yeah.
But still low though. You said they're like 1 a day basically.
Yeah.
So if you got 6 only doing 3.
Still,
How many do you have?
15.
got 15, you're getting 1?
Yeah, I don't know what they're doing. I might have to put a light in there.
Yeah, it's a
be-
protest.
Yeah, they might be chittering. They're like, we're done with this.
Yeah, it's too cold.
Yeah.
Sun's not out.
Yeah. That's probably the issue. The sun, we don't get the sun in Illinois.
Yeah.
That is true.
I think it is the sun.
Like, you know what's bad when I'm walking to work and I stop in the sunlight areas and I just like take it all in for a couple minutes.
You have to.
You literally have to. Pablo, not a box spread, the one you were looking at before, but the premium and intrinsic from the shorts, that's probably correct. But if you look at the expiration graph, it's literally just a 1 point wide vertical spread.
What is this in?
It was a box spread that was in IBIT, but it was different. It was basically an iron condor that's like this, not a full box spread. So it's a vertical spread ultimately.
Okay.
But if you look at the expiration risk graph, you can just do the same strikes that give you the same risk graph, and it'll be more simple. How wide would you have to go on an SPX broken wing butterfly for it to be worth it? I can't get a feel on that strategy. It's tough.
Yeah, I would say, and by worth it, it's hard to quantify that too. I would go as wide as possible. I think we've talked about like 100 points wide is probably, what you would want to do. When you think of it on a, just move the decimal place and you were looking at SPY, you'd want to trade something that was at least $10 wide, right?
Yeah.
I mean, we're not trading $1 wide is $10 wide in SPX. They're just a multiple SPX 10x size of SPY. So I would say 100 points is probably like a minimum.
Where you're looking at, getting some movement out of that.
Yes.
Broken wing butterfly.
Yes.
Because the more narrow you go, like even a 50 point wide, you're still like, the more narrow it is, the more similar the deltas are, the more similar the prices are, and you just have to hold it all the way to expiration. Like if you do a 5 point wide or 10 point wide, you have to hold that. I don't care what expiration it's in. You have to hold it all the way to expiration to get anything out of there. Where if it's 50 points wide or 100 points wide, now you can get a directional move and have your long option go in the money and you can see a profit there. Where if it's too narrow, it's just not going to move because the deltas and values are moving in lockstep with each other.
Yeah. Which means you're going to put a lot of, like your risk on a SPY butterfly, a 10 by 20 is going to be like $1,000 minus whatever your credit is. Here, to put that same sort of size trade on, you got to put up 10,000. So, like the butterfly, I did a broken wing butterfly in here that was 25 by 50. That was about as big as I could go, bought in the risk on that, and now it's just like a lottery ticket. And I think I even wrote that in like the follow trader comment of hitting a 50-point range. It's a low probability, but now this trade won't move. Like it's trading at 50 cents right now. It was 50 cents yesterday. It hasn't, it doesn't move.
Mm-hmm. JP, why is the market so choppy intraday lately, but after hours not choppy at all? That's pretty typical of most days. If you just look at the activity or volume intraday versus after hours, everyone that's trading the markets is trading when the markets are open. There is still activity in the after hour sessions, but it's certainly much less than the active market hours.
Yes.
A lot of people talking about the Jajun trade.
That probably worked this morning. I think we had a little bit of a sell-off. Like they were, and by sell-off, I mean we were only up 70 at one point.
Mm-hmm.
So
only up 70 is basically crashing.
Yeah.
Last time I checked. DraftKings, big pullback in the last hour, sell the 37 or 38 puts.
Well, that's all you. I have a. It was up like $1 and change this morning. What happened?
I don't know.
Yeah, it dropped from 41 down to 39 in just the last moment here. I have the 37.42 strangle here. It came in another 40 or 50 cents just on that move.
But volatility is certainly getting bid there. Earnings coming up on the 20th before expiration. This might be an interesting time to.
Apparently, some companies sold a bunch of shares. I don't know.
Buy the dip, Mikey. Come on.
DKNG, baby.
Big move.
What is your what's your take on the weekend here? 2 minutes left.
Oh, I don't know.
Let's nail it down to one game because really there's only one game that matters.
Yeah, Bills Ravens.
Ravens.
My heart says you can't fade a home dog.
Yes. But.
Which is shocking because I figured the Bills would be not only a favorite, but they would be the heavily bet team.
Yeah.
But it seems like people are on the Ravens.
Yeah.
So I think I'm going to fade that and go the Bills. And I have a soft spot for the Bills.
I mean, there's I think there's 0 Ravens fans in this building. There's probably 600 Bills fans in this building.
So I think that's what I got to do.
I agree. I think it's hopefully going to be the highest scoring game we've seen all year.
Yeah, the smart bet is to take the under, which is sad. But you know that is.
But if Rob and Maria were in the chat, they would say smash the under, smash the home dog.
Home dog, yes. Yeah. Yes. So that's my play.
Okay. We're out of time. Thanks for tuning in. If you got any questions, you can find us on the interwebs, specifically Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Thomas is at FX Westwater. Thanks again for the analysis. Corn and soybeans.
The corn man is back.
Yes, he is.
We'll see.
We're looking for a pullback. I'm looking for a pullback in corn, then I'll throw a bullish trade on.
I got it already.
Nick's already in because he's got the short premium side of things.
Yeah.
So the pullback matters less. But yeah, we got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. And we'll be back same time, same place, 11 a.m. Central tomorrow. Peace.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
He squirreled it all away. Now his financial life is dead.
Don't die like squirrel.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, "You'll be in a hotel by either the first night or second night."
And then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone, and it says Venmo $20.
I almost had to pay him $40 because there was a little.
Okay, I need help understanding. This is the problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
We are back. It is still Wednesday, January 15th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater in studio. Thomas, happy CPI Wednesday.
Oh, yeah. It happened. So it wasn't the greatest number, but it wasn't horrible. But the market found an excuse, and it took it, and we're up. So
not great, not terrible. The inflation number was warm, but it wasn't hot. And I think that's what the market was fearful of. And as we turn to the charts here, this is an abbreviated Futures Power Hour. Truth or skepticism is at the top of the hour. So we're going to go through this quickly here. We could see that what really drove the rally isn't the fact that we have a big decline in headline price pressures. It's that we're seeing the components within the inflation series themselves cool off modestly. This, to me, is the big standout right now. 37.7% of components of the US CPI are now at 4% annualized or below. That's still far too high, to be clear. But it's some of the lowest readings that we've seen now going back to the middle of 2021. So breadth within the inflation data series, it's improving right now. Headline is increasing at the rate with which one would expect given the base effects data. And so this feels more like a relief rally, not a reason to think that we're going to be pricing in these Fed rate cuts that have disappeared off the board over the past few weeks.
Yeah, absolutely. I mean, from what I'm seeing with bonds, it looks like the market's kind of taking this number as saying cuts could be back on the table later this year. So, I think, I'm not sure if that's the exact function that's allowing stocks to rally. We also got good bank numbers. So I think it's kind of probably a mix of those two. Some excitement going into earnings season now. So I like
inflation's not terrible. Yeah, inflation's not terrible. The banks are printing money. What could be going better for a day like today? And quite frankly, as we turn to our charts, it's a market that you say it kind of happened. CPI, it's a thing that happened. I actually think that's the apt description of today's price action, Thomas. If we were to look at a 5-minute chart here and see where we ended up right after CPI, that 8:30 a.m. candle brings us to 59.66 and a quarter. For most of the day, we've been oscillating around that. We're only 10 points higher now. So the day's move, in effect, was the CPI release. It's been a lot of sideways churn since then. But I want to revisit a point for the Futures Power Hour listeners that were here on Monday when we were talking about the projected move through the middle of this week. At the time, we were talking about how CPI could lead to a big move, and this CPI report had the largest single-day VIX 1D going into it that we had seen going back to 2022. The market could move back up to 59.90 or so, well within the 1 standard deviation expected move at that time, and it wouldn't mean that we had put in a technical turn. Now, today we hit a high of 59.91.75, and we haven't cleared the 1-month moving average. That comes in at 59.80.75 right now. We're at 59.76. So it's a nice improvement, but this congestion chop zone is still very much the congestion chop zone. We have not exited it one way or the other.
I'd say this is probably, for the past month, a market that is more inclined for shorts. Short these tops. But it's also not. There's been some good price action on these lows too. So either way you want to play it, I think volatility is pretty low. I mean, for the VIX. But some uncertainty has been removed with the CPI report. I'm kind of looking for the next time the VIX comes higher. If we're in one of these, if we're near this upper trend line and the VIX is getting high or rising, then I'd really like a short there. Otherwise, I might wait for the market to settle back down near your purple trend line and then think about getting long again.
The purple trend line could be the neckline in a head and shoulders pattern, Thomas. It's been something we've been watching here for the past 2 weeks now in this new year. We still haven't received a significant break. It's one of the reasons why it's difficult to trade a top unless you get that confirmation. Also, is it a continuation pattern higher? Possibly, but we haven't seen the downtrend off the December and January swing highs break. So what to do? The volatility perhaps is the best guide here, continues to fall off. We take a look at the spot VIX in today's session, and we can see that we're down to 16.65. That's quite the turnaround this week when we gapped open higher and hit a high of 22.04 on Monday morning. So 6 sticks down in the VIX is not nothing. Do you think this is the spot with which traders can take that deep breath, or are you like me who says, I'd like to see a little bit more before I really get bowled up again?
Yeah, I'd like to see more. I think there's still more to come out. But we're moving into a decisive time right now. We got tech earnings coming up. So the big names, the huge market cap companies, those are, I don't want to say make or break. I think the overall trend of the S&P this year is going to more rely on monetary policy, but if anything, over the next couple of weeks, it is the tech earnings. So the big ones, I think Netflix is the first to report. And then we get, the Microsoft, the Apple, Google, Amazon, Tesla, all that good stuff over the next couple of weeks. So, we'll have to see how the numbers are. I'm cautious, really cautious about tech earnings, but the banks have done well. They exceeded expectations. Maybe that holds, but it is a different story between those companies and what they do. So I think we'll have to wait and see. But watch the price action as those come out, and that's going to be kind of, the telling key as with anything else. So if we do resume this bullish structure that we had before this, kind of degradation in the technicals, I think it'd have to be on pretty strong numbers, and not just meeting expectations, but beating them.
We look at how the banks have performed here today, up by 2.26%, outperforming each of the major indexes as it stands at this point in time. The past few days, we've been noting how banks have been holding up better than everything else during the downturn. Unlike the S&P, which filled the gap from the election, banks did not. They actually held up through it. And now they're breaking the downtrend off the highs from the end of November, December, here in January so far, perhaps pivoting through an important swing area. JP Morgan, Goldman Sachs, Bank of America, Wells Fargo. Who else do we have today? BlackRock. So many.
BlackRock.
5.
We get tomorrow morning. We get Bank of America and Morgan Stanley.
Right.
So
Bank of America, Morgan Stanley tomorrow. So, yeah, but it's all been good across the board. They're all beating. Their FIC is doing well. Equity trading is doing well. There's really nothing to complain about, and the interest rate environment remains helpful. So, if we think about how banks are performing here, how even semiconductors are performing here today, we had that false breakout last week. We're trying to get through that aforementioned trend line again today. XLY, consumer discretionary, potential bullish falling wedge here off the uptrend from the August and October swing lows, which may now be the January swing low here too. There's a few reasons to think the path of least resistance in equity markets right now may be a little bit higher, but how much higher do you feel comfortable with? I mean, if we can see some prints in the 6K area for the S&P 500, I would start to feel a little bit more comfortable that we've exited this congestion territory. But until then, there have been false starts on both sides. So we do need a little bit more technical evidence, in my opinion, to really take that kind of directional momentum-based bet. Just that's my style, and the style factors still make this relatively unappealing, even with today's rally.
It's the chop.
It's the chop. Hate the chop. Hate the chop. The Russell here, we were watching this yesterday with Jamal Thomas. We looked at that 4-hour chart. We were talking about how it looked like the bear flag could be getting into an area of a potential reversal. And if we did reverse higher, we pulled into this triangle at some point today. It could mean a move up to 2,300. Psychologically, I made a lot of money, Thomas. In the real world, I didn't place the trade. Kicking myself here today.
I hate it when that happens.
At least psychologically, I was correct, right? 2303. I think I feel better when I don't place a trade and it ends up not working, because it's like, hey, I didn't lose money. Whereas now it's like, Well, anyway, 2303 is the high here in the Russell, and we back off a little bit. This is now back in the midst of the channel that defined us from the middle of December onwards after the Fed meeting. So directionally, what do? The risk to reward getting long here is kind of crap. We may have hit the upside area near 2,300. I don't know. I don't like it at all still. Not at least not here.
Yeah, I mean, it's definitely not a trend day. We were up almost 3, or actually over 3% on the Russell futures ahead of the open after that CPI print. So it was looking really, really nice. You got the banks doing well, which Russell's heavy on banking, different kind of banks, but still feeding into that story. Then you got the CPI. So not a trend day where, you'd expect it just to gently glide higher, and then Thursday, Friday, you get some more upside. It's showing me that people aren't too keen on getting too long. It's like, take what you can now, get the risk off, and then, we're in kind of a precarious situation where, one CPI print isn't exactly giving a green light for the Fed to keep cutting. It's kind of just saying it's a possibility. But we really need more data, and I think the market's going to remain in limbo, so to say, for at least this week.
I concur with you right now. I mean, we were talking yesterday about how it looks like bonds and stocks are effectively the same trade, as it were. And, bonds are doing well today, up 1.44%. ZB is also off of its highs. And so you've seen stocks come off their highs as bonds have come off their highs. Bonds rebounding here the past half an hour or so. Stocks pulling up a little bit more the past half hour or so. This market seems to be hinging on inflation fears. And the fact that we don't have blowout inflation numbers in the period with which we're expecting base effects to carry us higher, this feels like it's relief. I don't want to call it more than that right now, because it doesn't look like anything more than that. Like you said, there's none of that steady float to the upside that you expect to see with continuation and continued buying over the course of the session. It was like, oh, I can get out at a better level than I was in yesterday. Let me take some profit here. But if we get to the 1 month, Thomas, if we find ourselves later on this week, closing the week out above 6K here in ESH5, it's hard to say that we're not at least attempting to do a bullish breakout. And you'd have to look at it seriously. If you can get through 23.25 and Russell, you have to look at it seriously. And in the NASDAQ, it's the same thing. If you start poking through 21,500 by early next week, it looks like then we could start to treat these as continuation patterns rather than waiting to see if there's any more directional chop. And the low volatility, the VIX potentially falling below 15, we just go into the toolbox and we say, what do you do when technical momentum's positive and the VIX is below 15? You buy calls and you go fishing. So maybe that's what we do then for the next few weeks if the market gives us a little bit more confidence on the price action side.
Yeah, exactly. That's kind of going with what I said earlier. I'd like to see volatility come down a little bit more, getting long. It's not like, a lot of times last year we were pushing into new time highs, and that incites the FOMO trade where everyone wants to get in. Here we're kind of breaking that trend, going down for at least a few weeks now. So this chop it's normal to me that this is happening, some indecision, but still people wanting to trade it. But the conviction is going to have to be a lot higher if we want to attack those December levels.
I will continue to bide my time. I suppose on an individual basis, if only to start tilting into some equity things. I have an order working right now for some XLY calls. I think that we're going to go back to the highs if this breakout holds, so I'd like to be part of that. Likewise, SMH. It looks like we may be breaking out again, so I'd like to be part of that. I'd like to see us move back towards 260. So not quite there with the equity indexes, but beginning to poke around here on the long side for some of these high beta names, which, SMH has been constrained for the better part of the last 4 months. I know we're all very fearful of the tariffs and what they may do. I happen to think a lot of that's priced in. So we'll have to take another roll of the dice there, Thomas. Other than that, though, I do want to spend more time in some of the other futures products here today. Second half of the week before we get off equities, you think more chop city, or do we get the breakouts that people like you and me are looking for?
I think more chop. A little more chop. Next week, I think with earnings, we could get a little bit more of a directional play.
Are you surprised by the lack of reaction to the Israel Hamas ceasefire news today?
Not really. It was already kind of moving on the back burner. The thing about geopolitical risk is even if the actual risk stays elevated, markets start discounting it over time as time goes on and nothing happens, right? And that's kind of a story you see with Russia too. The fighting, even if it keeps going on, you don't really see that geopolitical risk come up until there's some really decisive moment. So it's not really surprising to me that this isn't coming off. I'm not surprised.
Thomas, we'll turn our attention to bonds here in this shortened Futures Power Hour today. The question that I've been seeing everywhere, text messages, Teams messages, tweets, emails. I'm pretty sure someone said a messenger pigeon as well, has the bond market bottomed here. The price action is compelling. Can't deny that. Would be the first close that we see above the daily 8 EMA going back to December 6th. Why the daily 8 EMA? No particular reason except we're moving up the Fibonacci scale, 5, 8, 13, 21, 34, etc. But I pointed out because during the recent swing lower since the middle of December, it has been that particular moving average that we haven't seen eclipsed on a daily basis. It's been the defining characteristic of this momentum downturn. So moving to the other side of it today does give you something compelling to work with. And this drop in vol as well, the IBRs have come off meaningfully today, suggests there's a bit of exhaustion here. I would also point out that you get a MACD buy signal. So short-term low to work with very much may be in the cards right now on a technical basis. Do we have the volume figures yet for this week? No. But you know what? 419,000 contracts traded today in ZBH5 already. That's a pretty encouraging sign. Westwater, I'm going to take a Spivakism here. If we really want to feel confident about this, we forget the diagonals and we look at the horizontal trend lines. And that means support that we had all through late December, closer to 113, probably needs to be cleared out before you can get really, really confident. But the tenants are there. This is certainly on my watch list. I would love to be in there to look to sell a put spread to take advantage of this volatility. I'm almost ready to pull the trigger.
Yeah, I know we've talked about it a lot over the past couple months. Is the bond market bottom in? I know it's been a popular speculative trade. I've been wrong again and again, but what I'd say right now is what better time than now? Just looking at this price action, I think if you want to take a stab at it, that's what I'd say. What better time than now?
People may say, why not yesterday when we were below 111 or 2 days ago when we were below 111? Well, we saw how the market's been responding recently. Good news has been bad news. Even the PPI report yesterday, the bond market shrugged off. So today was actually, this is an important litmus test as far as I'm concerned. Can we hold on to gains in bonds, in stocks, in the face of what should be encouraging data? That this tail risk of, do we really need to think the Fed's going to hike again this year? Those odds cut down today. And that's very much like what happened last April, Thomas. We're going through April, you have the Israel-Iran tensions, and going into May 1st FOMC meeting, you have a market pricing in a 0.3% chance of a 25 basis point rate cut last year. And the Fed has to come out and say, that's not going to happen. Don't worry about it. Maybe this is the data series that the Fed can point to and say, listen, we're on a pause right now, but we're still so far away from hiking. We really don't need to think, you guys really don't need to worry about that. You can get a May, June type of market then where bond yields are able to relax a little bit. Stocks are able to move up a little bit more. There's still some wood to chop for me, though.
Yeah, so if the bond trade and the stock trade is the same right now, do you try to diversify away from that at all or hedge against that? Since if you get long stocks and bonds, it's kind of you're playing a correlated asset for at least assets that are correlated in the short term right now.
I would posit that if I were to try to hedge that off, I'd go long crude. Just given the fact that crude and the long end of the curve have had such a tight relationship in recent weeks that has tightened. Yesterday at market close, the rolling 5-day correlation between ZB and CL was negative 0.96. Again, it's only 1 week, but the rolling 1 month was negative 0.79, and that's up from negative 0.66 at the start of the year. So if I wanted to be long stocks and bonds here and I was worried about putting too many eggs in one basket, which eggs these days are getting more expensive, and as a aside, I suppose I should ask, are you price gouging your neighbors, Thomas?
We talked about this. So winter when my chickens their production is way down. I could put a light in there for them to stimulate them, but just leaving them be for a little bit, rest for the winter. They use all that energy in staying warm instead of popping eggs out. So I'm buying eggs like everyone else. I cringe when I look at the price and have to buy some when I have a flock of chickens in the backyard. But is what it is.
I feel really insulated from this. I have been paying the same price for eggs for like the past year and a half at my grocery store. They have not moved whatsoever. Huh. Even though the signs are up like you're gonna, egg supplies may be limited because of bird flu. It's still $6.99 for 18 cartons, which I don't know if that's expensive or not, but that's what it's been.
That's not too bad. I think a dozen here is like 4 to 5, depending on what brand and all that stuff you get. Yeah, I mean,
we can talk about eggs all day.
I can, but the crude right here is at 80. I mean, were you going to talk? What's your next slide? Is that energy?
We're gonna go over to gold and silver first, but because we're having this conversation, let's just loop back to there and let's go over to energy, which, ignoring the ceasefire news, much more concerned with perhaps other machinations in this market. But this is looking like the next leg of a breakout perhaps is getting ready to begin, Thomas. You think about crude oil off the highs in April and July 2024. That trend line is breaking here today. We are not through the horizontal lines. There's still a lot of wood to chop there, about another $1 to chew through in terms of what could be potential supply above. But if I'm thinking about long bonds and long stocks and what's the risk there, it would have to be long oil prices, because oil prices going up are going to feed through into inflation expectations. And if inflation expectations are moving up, then the Fed may not be able to hike, but they're certainly not going to be able to cut to the degree that they've told the market that they want to this year, which is 2 cuts. So I find this to be the most interesting and important chart in the world right now. Nothing would serve the stock market and bond market better than a $2 or $3 pullback in oil prices here, which not happening on the other side of the ceasefire deal.
Yeah, I mean, if you asked me a couple weeks ago if oil is at 80 and I'd probably say 60, 76, 77, but I wouldn't say 80. This is a really strong move. Like you said, that trend line breaking, but the horizontal level, I think, can give you a little bit stronger technical resistance. I actually wouldn't mind selling oil a little bit here. I think you're right, a $2 or $3 pullback. I think that's definitely plausible over the next few days. Profit taking could drive that move, certainly. EIA numbers were a little bullish today. They weren't exceptionally bullish, but you got the news about the new U.S. sanctions on Russia's shadow tankers, those tankers that are elusive to the sanctions that have been in place. And this is causing some short-term supply disruptions. At the same time, you had Saudi Arabia's Aramco raise prices for next month's official selling price for the Asian buyers. That's signaling that demand is expected to rise in Asia. And in fact, China is ramping up in stimulus measures. They're jawboning a lot about supporting the economy through not only monetary measures, but doing things through direct government stimulus. So, the oil picture has been getting bullish. Prices have been reflecting it really well. So I think it's time for a little pullback here. Volatility is a little bit low. I'd like it to be higher to take a trade like this, but at the same time, you have the U.S., this Arctic blast coming in that could take some oil production offline. In fact, some production has already come off, about 1 million barrels per day amid this cold weather. So we'll have to see how much that impacts refinery activities and things like that. So interesting week for the next week. I think if, we didn't have this extreme cold weather coming in, we probably would, in fact, be pulling back a little bit right now. So we tipped 80 almost on the dot today. Where'd we get up to? About 80.04, and then we pulled back. So definitely could be some profit taking at that level. A lot of orders set there to sell, perhaps. I don't know. I do like a longer term long oil trade, but I think the risk profile right here at 80 is probably not that great.
It's crazy to think that we were 10% lower literally a week ago.
Yeah, really sharp moves.
And this is one of those, we've been talking about this with Radigan a lot on overtime. He's had a lot of success over the past year and a half when geopolitics perk up. What do you do with oil? Well, if volatility jumps alongside the price in oil, you sell it. This time around, volatility really didn't jump, didn't go anywhere, even as oil was pushing up. So we're kind of standing in front of a freight train. The risk to reward wasn't great. On a vol selling basis, this still isn't attractive. It's only at 27.8 IVR. If this was a 90 IVR and we're up at resistance, no question, risk to reward is going to be great in your favor. You could do it real tight to get a nice probability of profit in your favor. You're not risking too much. Risking 3 to make 1, not risking 5 to make 1. But at these levels, the volatility still kind of, I don't know, for me, I'd like to see something of a turn first, in part because we just haven't seen the short-term momentum broken. We can call it the 5.8 envelope or the 5.21 envelope. We've just been riding this higher here for the past month. So technically, I'd like to see something that gives way. This has been in a MACD long or buy signal setup since December 11th, for what it's worth. So maybe a sell signal there just so that momentum's broken would give me something to chew on. But 28.8 IVR right now, I need a little bit more. Thomas, something that you gave me, though, which continues to serve me well, is the natural gas longs. Last week, we were talking about the salt cavern inventories being drawn down. This week, you're sending me charts of the new polar vortex coming in. What should we be looking at with natural gas this week?
I mean, it's also been really interesting. The cold weather, of course. The cold weather, a lot of people see it at face value as it increases demand, right? Which it does. People are using more energy to heat their homes. But when it gets this cold, it also takes production offline because those facilities risk damaging their equipment if they're running in freezing and sub-zero temperatures. So they take that production offline, and that kind of a confluence of factors sets up there to drive prices higher. That's what we've been seeing over the past couple months, past couple weeks especially. We got up around 4.4 the other day. Sold that off very aggressively, but now we're coming back with the second day of gains here. And we are in levels that haven't been traded now since June. So this move is pretty strong. I'd be buying dips here, at least for the next couple weeks, as long as this weather forecast holds, as long as we get these cold temps still in the U.S. So if you get up back around 4.4, you could think about selling again, but I think right here it's a pretty decent long trade, and you have decent volatility in the product too, at least more than oil. So I think this is a more exciting trade than oil is right now.
Yeah, when you got me going back on this last week, the volatility readings were right around 50, I believe, in the IVR, short the 290, long the 275. So we continue to have some nice price improvement off of those levels. It looks like it's a breakout, a bottoming pattern that's just gathering some steam right now. So I'm content with holding, as it were. But given the opportunity, if there is a pullback, this looks like a still valid trade setup to ride to the upside right now. Natural gas inventories, as you noted last week, they're still getting drawn down at a very aggressive pace. I tweeted out the chart earlier today of the 2-week ahead temperature forecast from NOAA. But outside of that small little pocket in Southern California that's being ravaged by the wildfires, most of the country is still looking at below average temperatures for the next 2 weeks. I was just talking to my wife this morning about her commute to work next week. There are going to be a few days where it's in the single digits actual temperature, and the feels like will be negative Monday, Tuesday here, 35 miles north of New York City. So you're talking about a large chunk of the country's population that's going to be a bit colder than normal. As we make our way through this January, Thomas, natural gas seems to be enjoying it, and I certainly have no other trade than to jump along. Speaking of jumping along, silver's jumping along today as we circle back to metals, which we typically do after rates, but in today's inflation-driven conversation, this time it made sense. Silver's up by 3.84%. So let's talk about this interesting price action here, Thomas. I see a double bottom that came together. It hit the exact measured move on the highs on January 10th. As we pull back on Monday, Tuesday, we get our doji. Wednesday here today, this looks like a Morningstar candlestick cluster at resistance in what was a double bottoming pattern. So this looks like now support. And we're also doing this to get back into the uptrend from the August and November swing lows. It feels like we may have a silver bull run right around the corner. The downtrend off the October and December highs is not too far away. We poked through 31.87. We may have the next leg up right around the corner.
Last week, I think you asked me, I said I didn't really like this silver trade, or maybe this was 2 weeks ago with the chart. I said it didn't look incentivizing at all. This looks a lot more appealing to me to get on the long side. I think I probably missed a little bit of the move already, but, if we set a new base, I think I'd get long. The problem is the volatility is so low that you're limited in the ways you can play it.
For most people, SLV is probably the best vehicle to do this in. I'm just trying to get this lined up to, granted, fairly illiquid lows that we had last January in this contract. But we can see that this is basically a trend line that goes back to February last year, the lows in August, the swing lows that we have in November. So clearly we're going to fight to get back above that trend line. If we can get through there, we have this cluster. The way this has worked out in the past has been buying at the money or out of the money call spreads with enough duration on your side, 45 days at least, maybe even longer, out to 60 or so. You want to retain some intrinsic value, but gold, silver, when they break out, they tend to just run. And we saw this back last September, October. We saw this in the spring last year, or late winter, early spring last year. So I don't want to dismiss this. It feels like there's a little bit of a rhyme and rhythm to this market. What we saw from May through September last year, October now through January, February, similar type of price action. The way to structure this, though, Thomas, you talk about the thinness, 44,000 contracts traded today. I don't think 41 days is enough time, so we would go out to a long vertical call. Long the 34.5, short the 35. Did we do that? You're risking 1 to make 4.
Yeah, it's not bad at all.
When I do those out of the money call spread trades, I really like looking for that 25, 30% probability of profit. This isn't worth triggering just yet because we aren't in breakout territory just now. But again, just very much like the bonds, this has to be on the watch list. And if we then think about how silver and gold trade, these are US dollar denominated assets. And if the dollar's falling, yields are probably coming off. And when do gold and silver do best? When yields are going down and the dollar's going down. So the constellation of cross-asset moves coming together in a way that could be more supportive for metals here at this start of the year, that doesn't discount the possibility that we still see more chop in stocks. Plenty of times we've seen gold, silver rally while stocks have been doing nothing. Maybe we're getting ready for that again here too. But Thomas, gold prices, a second attempt now to break the trend line from the highs end of October here in December. We tried and failed earlier this week. Maybe second time is the charm. But the metals are looking good right now. And that is a sign unto itself about the bond market and the currency markets.
Yeah, the breakouts from the pennants and the triangles, I don't like to play the chance of it breaking out. What I like to do usually is see a breakout, fall back to prior resistance, and then take a position to get that extension higher. So yeah, this is interesting. The thing is, the dollar was actually quite resilient today, given the move in treasuries. So, I'm not sure if this is a one day and then we'll come back down as the market moves past the CPI print. I'm not going to play it just yet, but I'll be watching the levels you have drawn. I think I have the same trend line drawn on mine.
Volatility isn't too high either, which is one of the defining characteristics. One thing I'd point out is that over the past 2 weeks, volatility has started to rise as gold prices have perked up a bit, which is something you like to see. You want to see gold vol go up as gold prices go up if you're going to be operating on the long call side, not just because that's how you make your most money, but behaviorally, that's when the market tends to be the most directional. So right now, gold, silver, they are right on the precipice of being, I think, fairly actionable. And copper prices, they continue to do wonders too. It's a very strong momentum market bumping up against that 1 week moving average the past few days. I have short put spreads in here against the 405 for that's it, period. 405 for put spread. This is continuing to work. It's a 26 IVR though, so I don't know if I'd be putting on a put spread here. If we do see a pullback, it might be an opportunity to get long deltas vis-a-vis some at-the-money calls. Either way, though, another metal, gold, silver, copper, and oil, quite frankly, these are growth-sensitive things that are perking up. And if they're perking up like this, it probably means the dollar's looking at a little bit of softness. So I guess we're putting all of our eggs into one basket, Thomas.
Copper is actually moving above its 200-day SMA today on the continuous contract. So that's one interesting development. First time it's traded above the 200 days since early November. So you kind of get that double bottom almost too from the November and the early January swing lows. So I like that. So not a bad setup here. I think copper goes higher this year. I have the forecast for the year up on the News and Insights page. So $5 copper, I can see it happening this year. So it's a good move, but I think we could get there as long as China keeps stimulating. Thing is, their concentrate prices are very low right now, so they're smelting more copper right now. So hopefully, if the demand keeps up with that, it'll be good for copper futures.
Thomas, before we take a brief array over to the world of currencies, let's circle back on our greens. Last week, we had you on Wednesday. We talked briefly about the WASDE report. We did have the WASDE report. What did we learn about the soft ag?
So we talked about this just last hour on OTCL. The WASDE corn, the ending stocks came in under estimates compared to 7 months ago. We're 30% lower on ending stocks for this marketing year, the 2024-2025 year. That's caused, prices to rise pretty significantly. We're almost at 5 now. However, we're going into the time when farmers usually sell any excess product they have. And with these higher prices, they'll probably start to do that, especially as we get up more towards 5, because they need to get ready for a new harvesting year. So right now they're getting ready to buy all their input costs. So they need some money. So that supply could come out. I'm looking for a move to 5. I'm still bullish here. At 5, I think you take some off, or you look at even getting short a little bit. But corn through the rest of this year, it's looking like it's going to keep going up. If the WASDE's estimates keep on showing bearish numbers here. Soybeans, less bullish on those. Brazil is having a really good year on their soybean harvest. And soybeans are their number one exported product. They're a huge producer of soybeans in the world. So they're kind of working against the prices there. We've had some upside, though. The WASDE was also decent for soybeans. However, compared to 7 months ago, we're only 14% lower on ending stocks, where corn is double that number. So corn, if there is a bullish trade between corn, soybeans, wheat, the big AG products, I'm still looking at corn the most.
We move over to the world of currencies here, Thomas, as we wrap up this day to talk about the dollar potentially topping. I ask it in the form of a question, not because this is Jeopardy, but because you mentioned that there is a late-day turnaround in the U.S. dollar. We see that the euro rallied to the trend line from the November, we'll call it the January swing high so far, underside of support that we had in November and in December, and then we fail. In fact, the euro is now down on a day where nearly everything else in the world that's related to rate sensitivity is moving in a direction that you would think the euro should be moving. What do you make of this?
I don't know what I make of this. I make it that Europe's economy, I don't like it for the outlook for this year. I think there's a lot of concerns around tariffs with Europe, their security situation, their energy situation. There's a lot of question marks over Europe. So I don't think investors are too keen to be really piling the chips there.
There's a lot of volatility in the space right now. Pound has a 69.9 IVR, the euro a little bit lower, 36.7, Canadian dollar 72.1. This to me is a really fascinating trade setup, in part because we have a pretty clearly defined channel that's forming. In the context of the price action, one might assume that's a bear flag. And certainly today, it seems that we've hit resistance in the form of the downtrend from the September, we'll call it November, December swing highs here. It feels like the thing that I want to do is sell some puts under 69, but this is not telling me that we're going to get ready to break through 70 yet. How do you approach this, or do you just wait?
I haven't been trading the Canadian dollar a lot. It hasn't been trading with oil at all. A lot more of the story is just U.S. rates. I don't know. I wouldn't mind selling the put, like you said. There's decent volatility there, but for me, I'm hands off on this one.
The Canadian dollar is certainly an interesting animal right now, but if we were to take a look at the chart and think about selling that put spread down here, 68.69, it is an 80% probability of profit right now, going out to 51 days. You're risking 4 to make 1. So if you tighten that up, you can get slightly better probabilities, or at least a distribution of risk to reward. But there is a pattern there to work with right now. We just need to see the breakout. You don't call the bottom unless the downtrend breaks, and today we're treating it as resistance, like we are in so many of these things. Thomas, the yen is perhaps the most interesting because we hear last night from Governor Ueda that effectively the next BOJ meeting is live. They could hike rates there. Although given the BOJ's penchant for fanaticism, or fantasy, I should say, they like to mislead the markets and get us all dreamy about what may occur with the BOJ normalization cycle, only to tell us not yet. The Fed not being able to cut rates further this year, though, is a curveball for that equation, because if the BOJ wants to maintain a certain interest rate differential to keep the dollar-yen exchange rate in a certain area, then they can't let the Fed stop cutting without the BOJ themselves hiking, right? On the other hand, if there's a trade war coming, China's going to use their currency to offset the impact of U.S. tariffs. And so Japan can't really allow its currency to get too strong, lest it sacrifice manufacturing share to regional competitors. This feels like this is undersold is the point I'm getting at, or rather the volatility here is understated. It is only a 30.3 IVR right now. It feels like the next week or two we could get a fairly sizable reaction. This is a great environment for a reverse iron condor. I'm planning on talking about that with Ilya later today. I actually don't think he's in on overtime. So tomorrow we're going to discuss what this looks like on overtime. But 6J, I think the vol may be understated right now, Thomas.
Yeah, I mean, reverse iron condor would play into that perfectly. I don't know. We're making a move not only on the CPI and how it affected, Treasury yields, but those comments from Ueda. Are they going to hike? Like you said, they're a little fickle. So for me, I think a move higher is probably more likely than a move lower, but I'm not too convicted in that view. So I think your trade works out. Yeah, I think that's probably the way to play it.
And actually, not even reverse iron condor, like the reverse iron fly. A trade that we missed in crude back in December. We were talking about it before the holidays, just looking for, a spring that's coiling. It's going to break out. You don't know which way it's going to go. So, you buy the guts, you sell the wings, hoping for a breakout in either direction. That would have worked out beautifully in crude over the past few weeks, given what's occurred here. Maybe that's the play, right? We don't know if the BOJ is going to throw in the towel and let the Fed be the boss, or they're going to try to fight back, or if they're going to give in to China. But there seems to be a decision coming. So I think that we're going to be looking at 0064 as a thing of the past sometime soon. We probably are going to be 200 pips higher or lower, maybe within the next week, possibly. I think 31 IVR may be understated. So I'll be sizing up trades around that over the course of today. What's next on the calendar? Tomorrow, it is a busy day, January 16th. Retail sales here in the morning out of the U.S. Initial jobless claims as well, the typical Thursday release. We'll have business inventories and the NHB housing market index. Again, this week, Treasury auction calendar, really light. Bill sales, nothing that we really care about from the futures perspective. Thomas, at the end of every one of these shows, we do a brief bit of education here on Futures Power Hour. Today, we're talking a brief recap of contract mechanics. If people head over to tastylive.com, top banner, Learn Beginner Futures, where they can find this coursework put together by the fine folks on the Tasty Live research team, You can learn more about contract mechanics, which we've been talking about in recent days here. We've established that a futures contract represents an agreement to buy or sell the asset underlying the contract for a predetermined price at a predetermined point in the future. We've also made it clear that futures contracts are slightly different than other financial instruments insofar as traders will be required to trade out of their original position at some point prior to expiration. Otherwise, they're obligated to take physical delivery on their side of the original agreement. But you don't have to worry, Thomas, neither do I, because most futures contracts are closed or rolled prior to expiration. Less than 2% actually go to delivery. That means most people are using them to speculate, hedge, or spread risk. They're not actually dealing in the physical goods or the underlying assets. So futures contracts, these are agreements, again, to buy or sell the underlying asset. The physical delivery is extremely rare when you are trading. We've talked about symbology to help understand the product that they're trading based on the expiration month and year. And each futures contract has that standardization in terms of size, value, minimum price increments. Gold is troy ounces, oil's by the barrel. Of course, you can learn more. Go to tastylive.com, top banner, learn beginner futures, or click the link here on the bottom of the slide. It takes you there directly. Thomas, I will see you maybe later today for overtime, maybe not. Otherwise, I'll talk to you tomorrow. But for everyone else, stick around. Dr. Jim Schultz is here. He's here for from theory to practice. Up next after a brief break on Tasty Live. And that's a joke because it's Westwater Wednesday, which means it's Truth or Skepticism Wednesday. Sosnoff and Radigan here. It's time for me to go, Josh. Goodbye.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up
the RV for a 6 to 8 day trip. We're supposed to be there about
4 days.
48 hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You stood up because that was the smart move.
I appreciate you. You're
yeah.
Saturday morning, I look at my phone and it says Venmo $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was beautiful.
It was
beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, closed everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch
He's hurt on this one.
Muskies. Some bass.
Very quiet.
I left Friday at 10:30. I was back Saturday at 10.
AM?
Yeah.
You didn't make it 24 hours?
No.
Who broke down?
They all did. They all did. I rented a boat for Saturday, but the boat was broken. It rained for 5 hours. When we got there, it was...
Now the RV on rvtrader.com.
No.
Yeah.
Whoa, wait a minute. How do you get to Florida now?
I don't care anymore.
Oh my God. First of all, I'm sitting in the captain's seat. I've never been invited to come sit in the new captain seat. But what I'm concerned with is the size of these screens. And he's still doing this.
No, let's take a look. They did not hold that rally at all.
Phil, you got a partial. 973.75.
I'm looking at this like I have to move my head to get through the top, the top symbols. I thought he had like a little computer and he was getting down.
He hasn't learned that he could like swivel his head. He has to see the screen. He has to go like this.
To me. And then, you know what? Money goes to money. You did it. Good job out of you.
Yeah.
I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay, I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
here we go.
Really, all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Move with the rhythm. Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Hello, everybody. We're back. It is Wednesday, 1 p.m., and we're in the middle of January. Dylan, as you just mentioned to me, this is going to be our last show before the end of democracy.
It's a big deal.
It's a big deal.
Market. Last time you'll have a Fed rate that's not controlled by the President of the United States.
There you go.
Again,
we got a nice little
independent Fed.
We got a nice little rally going today in the bond, so I don't want to mess anything up here because
remain calm.
I needed this just to kick things off. It's been a
while.
It's been a dark road down the bond path. So finally getting a 1.5 move to the upside is.
So do you think that means something? Because it's another day, 2 days now, where you have a different thing happening. Do you think that that's relevant to the Trump cycle and all this?
No, I don't think. I think this is just a crazy, one of the most oversold markets, the bond market, and to a certain extent, U.S. dollar being overbought, bonds being oversold. I think it's just, I think this has nothing to do with anything political.
Politics. It's just
nothing.
But do you think it has anything to do with this fear of inflation and
no. This is what they've been calling for decades or centuries a dead cat bounce, and we needed a dead cat bounce here. So this is nothing more than that. Don't let's not get any.
This is not a turning point in expectations for inflation or growth.
Well, I hope it's a turning point. I don't care about the macro story. I hope it's a turning point for bonds and prices, but just to get them back to some level of normal, so we can stop choking on them. But I think that the traders, all over, whether you're a commodity trader or, I'm sorry, a prop trader trading, futures, or you're a retail investor, I think the world's long bonds here, and and I think that just getting a little break, getting a little upside movement in there, getting a little break from the pain of just choking on these things, every
for sure. But for me, because I've been choking along with everyone else.
Yeah.
The question is, do you believe the 2-day rally? Because it's not just today. Like that, this price action is notably different than recent history, or even intermediate history. And is that meaningful?
Let's see if we can get a couple of days going here.
Too soon for you.
Yeah.
Who knows? Right now, who knows?
So we got so much stuff going on, Dylan, and you're back in the U.S. And
I'm here in New York. I'm working. I'm in the office every day like a working man.
Oh, took you 40 years.
It won't last. Don't get used to it.
And you can't go to L.A. anymore.
You can't even. It's a different topic. It's a recovery. He's gonna build Trump land out there. That guy.
I don't know what they're gonna build.
30 years from now, there's gonna be Trumpville.
I don't know what they're gonna build.
Be the Palisades. Anyway, it's incomprehensible. That to me is actually more stunning than I guess a nuclear weapon. I think it's actually more meaningful than even. I think it's meaningful in a different way. I won't say more meaningful, but I think it's meaningful at a level that's different, but it has different aspects to September 11th for people in Los Angeles.
Oh yeah, no question. Not as.
But in September 11th, we didn't lose our houses. We didn't wake up on Wednesday morning and nobody had a house.
No, but you lost 3,000 lives. I'm
not saying that 9/11 wasn't the most traumatic.
Yeah.
I'm saying suddenly taking away 10,000 units of housing from Chicago, from LA, in a night, which you can't even imagine. If I said to you as an engineer, I said, Tom, listen, I need you to take down 10,000 houses. You'd say, I don't think I can possibly do that. Like even with bombs, I couldn't take every house.
But an act of God versus an act of terrorism is very different. I think the shocking thing.
Agreed, totally agree. But I'm saying, as somebody who lived in New York now and has friends and family in Los Angeles now, there's a shared trauma of everybody losing their house and their school and their grocery store. Like that's a very specific and challenging life experience.
I think it is traumatizing for everybody out there. Obviously, my son lives less than a mile from, the center of all this. He lives right in the middle of Santa Monica, and which is literally like
it's the next door over.
It's the next town over, and I think I've done that Pacific Coast Highway drive, from Los Angeles to from Los Angeles down to Malibu, 25 or 30 times. And it's unfathomable to think that there's nothing there anymore. And the idea that there's no way that in 2024, you're thinking that's even possible. Not even.
I don't even, that's my whole point. When I saw the coverage from all of what we all have seen, but I didn't know that was mechanical. If I hired the best mechanical engineers and I said, you got to drop 10,000 houses, basically very few people can die, which is also almost impossible, by the way.
Yeah.
They're lucky. We're so lucky that these fires started at 10 a.m. and not 10 p.m. on that first day.
Yeah,
the whole thing, all day to clear out of there. Thank God, honestly.
Yeah.
The
whole thing is mind blowing. It's unbelievable. And, I have a lot of personal stories, and I'm sure everybody does, because it's such, LA's a huge city. Everybody's got family and friends and everybody around there. It's crazy.
And Altadena and Eaton and so it's a stack of areas. It's not one area.
Yeah.
All over the city.
Yeah. Yeah. Crazy. Anyway,
does it matter because we don't want to spend, does it matter outside of the social consequence, which I think is massive? I guess this is a question I was asking myself, and my argument was that maybe it forces climate pricing into the insurance prices across the board, and maybe it forces real estate prices down as insurance gets priced up.
The only thing that I think,
because of the catastrophic sort of obviousness,
the only thing I'll say about insurance going forward is that I do not know how. So I would not trust the insurance companies to price any of this in the future, because they're going to be very emotional, and it's not their models are going to. And I'm not saying that this is wrong, but every single model that they use is going to be like in 2, 3, and 4 standard deviation mode. They're not going to be able to give a normal quote into perpetuity. It's never going to happen again in LA. So which
then lays on the entire real estate of one of the most valuable real estate pools on earth.
Agreed. So I actually have a solution. I don't know.
What would it be? Because 70% of those places are not insured. I mean, it's part of the catastrophe. It's not just like the structure of the insurance, property and casualty insurance structure is the one thing that may get changed permanently from the LA fires, in my opinion.
So the way you solve this, and I'm not, again, I don't have all
What's the math solution, though? You're Mr. Trader. What's the deal?
Yes. So the math solution is a trade. And the math solution to the entire insurance issue in LA is that you make it exchange based. So in other words, if Dylan Radigan or
and you're saying the diligence is who does the diligence on the risk calculation?
You don't need efficient markets don't require due diligence.
So you just go to Kalshi and you say insure Dylan's house.
Well, no, you're not going to Kalshi. Forget Kalshi. This is an exchange based marketplace for a home. For example, you have a piece of property, you want to build back your home, okay, on Malibu. It's a $20 million house, just as an example. You want to get some insurance. So, and of course, you cannot go to insurance company anymore because either
State Farm left last summer. Let's live in reality.
Yeah, it doesn't matter. It doesn't matter. Every single.
I'm not blaming them. I'm just saying they were regulated. The whole thing, there was price caps. They couldn't price the risk. It was out of control. It's like the end of government. Are you kidding?
Totally. So in other words, you're talking about one of the most expensive pieces of real estate in the world, like right along the Pacific Ocean, literally on the Pacific Ocean.
Literally.
And you're talking about nobody's going to write that policy because nobody realized that fire could cross a highway and all this crap onto a beach. Just
fire hurricane. It's a new thing, man. It's crazy.
Okay. Well, it could be an earthquake. Who knows what's going to be next time? So what happens?
We've never seen I never even thought of a fire hurricane.
So what happens is we put everything on an exchange, and essentially what happens is then there's a two-sided market. So Dylan Radigan, you built a house for $20 million. You want to get insurance. You want to see how much insurance you want to buy. The other side of that marketplace is anybody. The insurance company could be the clearinghouse, but for example, I can write your insurance because I'm willing to write a portion of that. I'm not saying I'm going to do 20 million, but maybe
I'll come back to the customer side, because ultimately you're going to. So what's the price if I go right now? I can't get anything, or it's a cost 10 times what it used to cost.
Okay, so let's say
what happens? What is it on the exchange now? I got the same house. I don't.
So exactly. So
what am I looking at over at Sosnoff Insurance Brokers?
Well, it's not Sosnoff Insurance Brokers. It's still being cleared through State Farm or somebody.
Okay, you're just a buyer. We're all just in there nibbling.
I'm just writing the policy.
You're a nibbler.
Basically, what happens is I collateralize. Let's say I want to do $1 million, just as an example.
That's right.
I collateralize. I take $1 million of risk on your house as personally, and for
5 years or 20 years or some time window.
It could be minimum, let's say 3 to 5 years, maximum 20 years, whatever it is. And the rate I get is whatever the marketplace is.
I understand your logic.
So my
consumer result.
So for me, I would be willing to write $1 million policy for 5 years. Okay. Yep. If you're going to pay me, let's say 60% a year, done.
And now let's say I go to State Farm.
Well, let's say it's 30%. I'll do it for 30%.
My point is the price better in your model than it is in the current market?
It's probably a fraction of it. It's probably half.
Do you think it's 80% better?
No, it's probably half. But I will write it.
Half better.
It's at least half better. I will write this insurance at some multiple of risk-free.
But let's say it's half better, which still represents a double of rates across the most valuable pool of real estate on earth.
Exactly. So I'm willing to write this policy for you. And let's say risk-free rates are 5% right now. I'm willing to probably I'll write $1 million. I'll take $1 million of risk for 5 years for 30% a year, 35% a year. No problem. I'll do that. I'll probably do it for significantly less than that, but I'll do that all day long.
All right.
But I'm just giving you an example. Because they're going to be at rates.
And I think that the point is are the fires relevant beyond their regional trauma, which is obvious. And the answer is maybe there's reform in the insurance markets, which would be a success story for everybody.
They're going to need to raise capital, and it's going to trade at a ridiculous multiple because they're going to have to write policies. It's going to trade at a ridiculous multiple. It's the same thing that happened after the hurricane in multiple times in either in Louisiana and also in Florida, when insurance companies went out and raised capital at like 3, 4, 5 times risk-free rates just to write policies in areas where nobody would write the policy. Except we should put it on an exchange. We should make it into a two-sided market. I don't care if it's just for accredited investors, whatever you want to do. Just you can't do $2,000 type thing, and you put it out there and you let people bring the market down, because you'll find out exactly what the marketplace is.
And how quick could that be stood up? Could that be stood up this week if somebody wanted to?
No, but it could be
Ken Griffin, the SIBO, you. If you wanted to do it by Friday.
Just think about this. Ken Griffin would write this in a heartbeat. I mean, he'll buy a bankrupt company. He'll do the deal like in GameStop, to fund some bankrupt hedge fund. For sure, he's going to write.
Right, but let's say California is like ready to start cleanup on Friday.
I would think that this.
Can you get a policy on a week from, on Monday?
I would think if you're a hedge fund, if you're a private equity fund, if you're venture capital, if you're a prop trading firm, or if you're a trader anywhere and you understand how the math works here, it's no different than clearing somebody, than writing another trade. I mean, obviously there's outlier risk. A fire like that, an act of God, is outlier risk. I would write that policy. I would put money up for that in 2 seconds, because it's just a good risk reward. If you give me the right number.
But do you think the mechanics exist where like that could be offered in a week?
No, but it can be offered very quickly. I don't know if it's
within a month, regulatory.
Yeah, sure. I don't know about regulatorily, but
technically within a month, regulatory.
Oh my God. Well, the models are already there, so it's not even, the matching.
Most of the time is regulatory, legal, and like permits.
But that's how you do it. The answer is that's how you do it. They could probably raise a few $100 billion in a matter of in basically overnight. And they get the market down to where it's absolutely perfect. Now, the insurance companies might hate that because it takes away all their edge.
Well, it'd be an unregulated insurance product, so it would have all these barriers on the permit side, because it would go in with the real estate brokers as unregulated, and they would badmouth it. I mean, I'm saying that's their risk anyway. As they remember, their big thing is that no matter what, insurance rates are going up and real estate values are coming under new forces, both up and down, actually, depending on the situation. But the real estate situation is going to be permanently different. And the question is the insurance situation for all housing, not just LA, but Chicago, Miami flood, New York flood.
Just think about what this would do.
Milan, ice storm in Milan takes down all the trees. It's crazy. I mean, everywhere.
the reason insurance companies would hate this is because this is going to destroy, as much as they complain, this is where they get all their edge in times of panic and acts of God and things like that. This is when they are able to, basically gouge customers and raise rates to ridiculous levels, because statistically the chances of this happening again in LA are, slim to none. They're a fraction of 1%. It's like a 100, it's a 100 standard deviation move. It's not going to happen for 100 years, but they're going to get to milk this thing for, hundreds of billions of dollars. But then all of this.
But not just in LA, they could also do it in New York, Long Island, South Florida.
Sure.
I can bump numbers all over town.
But while we're on this topic, another topic that is highly correlated to this is who you basically burnt LA to the ground. Who's gonna fix this? Where are you going to get the people from? If you close off the borders and you shut down everything, who's cleaning up this mess? Who's rebuilding all this stuff? Where are these people coming from?
They're the same people. So here's the interesting. Let me answer your question.
Please.
I solve this.
Please.
So I have a huge number of people that worked as staff in a lot of these houses. Basically, the huge gardening, cleaning, and family support services. One of the biggest employers in the world per square foot, I would bet, because big houses out west where people are living the so-called good life.
So your nanny's going to rebuild your house?
No, but your gardener is.
Your gardener's going to rebuild your house.
Your gardener.
Godspeed, Mr. Radigan. Godspeed. Okay, because that is not going to happen. All right. It doesn't work like this. All right. It does not work like this. All right. So you better rethink.
So if I show up in your place with a team of gardeners, you're not going to sign off the deal? You're not going to send the wire transfer?
No.
You're not going to ratify that deal?
No. Now, I know it's going to take a long time for...
If it's Radigan and a bunch of gardeners at your house in California, you're like, we'll see you never.
I only know one person. I have one friend from Chicago who was an entrepreneur, very successful, who built a house in Malibu. And he told me that it took 7.5 years. And this guy's not a bullshitter. He's a straight shooter. He said it took 7.5 years to get his permits, and he's not even done yet.
No. Everybody, but they're going to change that for this.
I understand that. But my point is, nothing in LA. I'm invested in a business in LA. So are you. And it took us 2.5 years to build one stinking little office. 2.5 years to get the permits. So
you can get permit reform in California. You can get insurance reform in California.
Okay.
I mean, these are pro-California. I would say this is an opportunity to improve the situation. I mean, now, but you could certainly get better insurance markets and a better permit process.
Who's going to do all the build? Who's going to build everything?
The question is whether you trust my team of gardeners.
I don't.
And that is where you and I have an issue. But I think that there are people. I think that there's people to do the job. But that's it. I understand that can be a point of concern. But because so you're saying that the most influential people, everybody leaves.
Well,
right.
They have
the first
10
or
problem.
15% of the room has gone to New York or Florida or Colorado or
on
Europe.
On a fractional basis, they're having the same problem in Florida right now. Since the last hurricane, half these condos haven't even been rebuilt yet because people are still waiting for permits. This is over a year ago. They're waiting for permits and they can't get contractors. So it exists right now in Florida, and LA is just going to be, the level.
It's going to take 20 years.
Yeah. The level of destruction.
We won't see it again in our lifetime.
No.
You could be in your 90s. You'd be like, I just finished LA, Uncle Tom.
Yeah.
Captain
exactly.
Tom.
No, exactly.
You'll be like, glad to hear it.
But
what are the Blues doing?
Oh, they're up 100 today. There's no problem there. But we just have to, I think we're going to have to take a really hard look, and this is.
So do you think Trump Elon on Monday is good for that, for insurance reform and permit reform in a way that's constructive or destructive or irrelevant?
I don't know if Trump is capable of understanding the situation, understanding what's going to be needed in California to address both the cleanup and the rebuild. I don't think we have the talent to do it here, like, in whatever time period we need to do it. They're going to have to bring people in from all over, and I'm not sure how that's going to happen. But this is going to have to be a global effort. It's not just going to happen from Mexico or Central America or South America. It's going to be people from all over the world that are going to be needed to come in, and skilled people, and rebuild LA.
And how do you think the deportation police and that agenda fits with the demand for
you're asking
home building?
Impossible. It's an impossible question. I have no idea. I hope it's not a scene. I hope they don't politicize. I hope they don't make this political.
Do you think it changes the price of your insurance policy or my insurance policy in New York or Chicago or in fact, Italy, or?
I can tell you that last summer I changed homeowners insurance, and I didn't realize it was almost impossible to get homeowners insurance in Chicago. And we don't have any of that stuff. We don't have
no fire, hurricane, no earthquake.
We don't have fires. We don't have hurricanes. We don't have earthquakes. And it was almost impossible to get homeowners insurance in Chicago. I can only imagine what it's like in Florida, Louisiana, LA. New
York, Long Island.
Yeah. Anywhere, any coastal city, South Carolina,
Houston, forget it.
Yeah. I don't know, yeah, it's insane. And I'm talking about Chicago. And so, which again.
So does that mean anything other than be a thing that exists that could be improved with an exchange? Does it mean something there, which is good? And then does it mean something to real estate or permits? I guess that's the question. That'll be what'll get.
I don't know what all this does to real estate in LA. My guess is, from what I've heard, the rental market will be super tight because you have so many people displaced.
Like Katrina made prices go up in New Orleans.
Oh, yeah. I would assume
destroy inventory.
Yeah, I would assume in LA it's the same situation. It will destroy inventory and rental prices will go up. But I also think it will hurt their tax base because, obviously that's probably outside of Beverly Hills and Brentwood, that's probably the single biggest. Yeah, that's as good as it gets. Pacific Palisades and Malibu are, some of the
biggest fish in a barrel. You can do more in a weekend than you could go into 20 states.
Yeah. That's just a massive tax base there. So I don't know. I have no idea I don't know what they do.
So what did you want to talk about today beyond these fires, which I don't think was your intention, and I don't want to dwell too much on it.
It was not. You completely.
I'm sorry.
You completely sidetracked.
I didn't mean to hijack us with fire talk. But I do think it's at least it yields a positive idea, which is an insurance exchange will help the people of California, and they need help, and so that's a way we can do something to help them. Which is
anytime that you can turn a inefficient market into an efficient market, you will help the consumer.
Mm-hmm.
And, ultimately that can help the consumer in many ways. It can go much beyond just homeowners insurance. Pushing any kind of a marketplace onto an exchange, helps the consumer. So let's just fingers crossed and hope that that's one of the positives.
We'll see something good we can do here. Anyway, what's on your mind?
So what we originally we're going to talk about today, and we're clearly off topic, but there's so much stuff going on, just happening right now. And what I'm probably most fascinated about is this whole everything that's happening in the social media space. And not necessarily like social media as it relates to Facebook or Twitter. I don't really care about Elon Musk and his securities investigation. I don't really care about, Zuckerberg and his 180 or any of that kind of crap. What I do care about is the consolidation, the idea that the consolidation of social media into the hands of, we used to always have, like, we always had different kinds of wealth disparity. We had, there was a lower class, a middle class, kind of an upper class, but even the richest of the upper class there was some, they had boundaries a little bit, even the Rockefellers had boundaries. Okay.
Is that the title of your book? You're going to put that they're going to put that's your legacy. Even the Rockefellers had boundaries.
Yeah.
Anyway, go on. I'm going to play along. Go ahead.
Only because we were having a Nelson Rockefeller discussion.
That's fine. Even the Rockefeller. So the point is, there's that the natural excess of wealth is now more excessive than ever. Maybe because the digital reality allows a level of power and influence and excessiveness that wasn't available to Mr. Rockefeller.
And I'm not suggesting for 1 second that anybody that has a few $100 billion, a few $100 billion didn't deserve it, because there's no real passing down a few $100 billion of wealth. I mean, that's never really happened yet. The Warren Buffetts of the world are still alive. And so that hasn't happened. So the people that have 100, 200, 300 billion dollars, which is, a handful, couple dozen people, whatever, have some ridiculous amount of money, they've earned it. And so I don't take any of that away from them. They've earned it. They built those companies up from scratch. I don't think any of those people came from any money. Okay? They built it up. Whether it's Jeff Bezos.
Okay. Move on. We got it.
Fine. So, but the numbers that they've gotten to now are bigger than the GDP of many countries. We have 180 countries. I think the GDP of like 100 of those companies is less than the wealth of certain individuals. My point is that an individual now, we used to look at individuals as, oh, you know what, it's just an individual. But now we have to look at individuals and say, you know what, maybe there's more to this than should a single person have access to that much control, to that much data. Is that even realistic anymore? And so when they talk about, okay, something has to happen with TikTok. It's the wrong decision, but something has to happen with TikTok. As you know, I'm a huge fan, and I think it's ridiculous. But they voted on it. It is what it is, and something has to happen with TikTok. Is it okay that someone like Elon Musk gets to bid on TikTok? Maybe it was Zuckerberg. Maybe it's Bezos. I don't know who it is. I don't really care who it is. But anybody like that, is everything that was wrong with TikTok being owned mostly by, a bunch of American hedge funds? I mean, the three biggest shareholders of TikTok are Susquehanna, General Atlantic, and BlackRock. That's your three biggest shareholders. Okay? So whether you're talking about Larry Fink or Jeff Yaz, or whoever it is, those are your biggest shareholders.
It's okay.
Fine. I don't care. I'm not really.
So can I answer your question? I think I understand your question, which I think is you're speaking to concentration of power, excessive power, absolute power.
Sure.
Through financial resources, communication resources, political resources, whatever it may be.
Okay.
And you're saying, is it safe to have such consolidations of power? Right? Which is sort of goes back to, it's an age-old political question, right? Trust busters, Rockefeller, et cetera. And so what I'm thinking as I listen to you is, should you run an antitrust legislation, not for financial, like basically, is it an antitrust violation? Is trust busting the domain not just of controlling railroads or controlling oil supplies, but controlling flow of information? It's a valid philosophical debate.
Yeah, it is.
I would say yes. I would put it under the Sherman Antitrust Act of 1933. Spin up a lawyer and go with some trust busting. But that's a philosophy. But again, that's the drones, right? I mean, the whole thing. There's a regime of digital legislation that's long overdue and is only going to become more critical. We'll get AI to draft digital legislation that includes that.
Okay.
So antitrust law. So of course, yes, the answer is no. I would say of course, one, you'd use antitrust. It's not safe. It's not good. No, one, and it's a joke. Jeff Yaz, whatever, nothing, not his fault, but whatever.
No, not their fault. But
AI is going to have this information. Is my point. Forget Elon Musk or forget whoever. Artificial intelligence with agents will have access to more data than Elon Musk.
Do you think it's just a strange coincidence, or how come nobody's brought this up? But the three of the largest donors to Trump, I mean, Elon Musk, Jeff Yaz, and the co-founder of BlackRock.
Now you're going conspiracy?
I'm not going conspiracy. I'm just giving
you're going
facts.
Somewhere.
I'm giving you facts. Okay. When you want to talk about the biggest donors, okay, to the entire campaign were Jeff Yaz, Elon Musk, and I just forgot the guy's name off the top of my head, but Larry Fink's partner, the co-founder of
BlackRock. And so, you're saying those three entities or institutions have a relationship with TikTok, which is to be the largest.
No, they don't have a relationship. They are the largest shareholders.
Factually so.
Factually so. And they all...
Elon Musk is a shareholder of TikTok.
No, not Elon. The other two.
BlackRock is a shareholder of TikTok, and Susquehanna is a shareholder.
I don't know if it's...
Or like Jeff Yaz holding it.
Yeah.
And
what do you think? The other one, which is a private...
Complete your conspiracy. This is now intriguing.
I don't have a conspiracy. I'm just bringing up...
You got some conspiracy.
You're saying... I'm asking you if an administration can objectively look at this situation as it's an antitrust, as there's antitrust risk, when your biggest contributors are also the largest shareholders are also the ones who are going to be fighting out for ownership, or possibly like all we're doing is
I would say it's highly unlikely,
because Elon Musk never said, I'm trying to buy TikTok. I mean, it's just, there was an article.
But it's just it's called a natural buyer in the industry.
Well, there was just a Bloomberg article that really named an anonymous source.
It's what he said. Not he's a. But why not? Who better?
Right. Who better? He probably loves the story.
Yeah, he probably planted the story.
Probably.
He probably does like the Donald Trump thing where you have a different identity and call the reporters. It's like. There's all those recordings of Donald Trump calling the New York reporters, being like, this is Bob Johnson or whatever. He had some other name. And he'd start rumors about himself.
Hey, it's good PR, I guess.
That's old school.
Yeah. And I don't necessarily have, I mean, I have ethical issues. That's not what I'm. That's
charming.
Not where I'm going with this thing.
But what about AI taking becoming the data master, the key master to all the data? Whatever's available to Peter Thiel or available to Elon Musk or available to David Sachs becomes available to AI.
Which means it's available to Dylan Ratigan.
Which means it's available to an AI agent I've never met who's 10 times smarter than me and never sleeps. Who's in charge of the whole racket.
Yeah, I'm not, at this point, I don't think AI is part of this equation, although the AI behind TikTok is just the best I've ever seen.
Yeah, but maybe the AI strategy to take over is you're going to like AI better than people.
Well, if AI was so good, if TikTok AI was so good, which I think it's the best, like I said, the best I've ever seen, they wouldn't be in this predicament because they would have figured it out.
They would have been ahead of this?
They would have been ahead of it.
They could program their way around it?
My fear is, like, what I don't understand where everybody's coming from is like, okay, so on the one hand, you got China, which will be replaced by something else or I don't even know if it's China or somebody there, whatever. The company's Singaporean. Or would you want Elon Musk having all your information? I'm already upset that he has all my information from my Tesla.
And I'm saying everybody's got all the total information is the future. That's 2025. The thing about Elon Musk or the theoretical Chinese is that we assign to them an ability to exploit the data to their advantage in a way that we feel we can't, which is probably true. That's why you're like, I don't want the one person to have all the data. It's just somebody who has the ability to use the data to do whatever they want. But at the same time, the more I know Tom Sosnoff, the happier you become because your TikTok is perfect. Everything you like. And all the things you like the best.
For another week.
I'm just saying, like, there's a version where the algorithm or the Tesla robots or whatever, that the future takes over not by a hostile takeover, but through, like, kill them with kindness. And you willingly forfeit to the robots because they make it better. Pick my movies, pick my food, you know. I guess my point is, I think that the final frontier of these rich robber barons of Elon Musk being sort of a symbolic is the next. We quickly go to the digital robber baron we've never met. This is you want to go full crazy. I think we got a situation brewing.
Which is
AI oligarchs.
Oh my God. You know, I worry less about efficiency than anybody else. To me, AI is just makes everything more efficient, and I don't worry about like that because I'm a
you know why? So you don't worry about the agent, like the AI as AI takes on agency.
Yeah.
To organize teams of 100, like a digital agency, could organize 100 employees, graphics and data and all the things that an agency does.
Yeah. So
and mobilize a campaign.
Now you're the conspiracy guy. I'm not.
You're the one that opened the BlackRock backdoor deal.
I look at AI as a machine to make things incredibly as a technology that will make things incredibly efficient. By the time AI is organizing an agency, as you talk about, it'll be a decade from now, and you'll have quantum computing that will come in and disrupt AI. So you're like, you can never get ahead of all this stuff. Like, you know, that's why I can't. That's why
it's going to happen by Tuesday. You got a week. You're almost there.
I know. And drones were going to take over and everything else, but we're still here. And we're still. Hey, I'm still picking my own.
Are we still here?
Yeah. Okay.
They blew through the Palisades in Altadena like it was nothing.
That would have happened 100,000 years ago. That would have happened 10,000 years ago. Just
fire hurricane.
So before you guys get all crazy, all this technology that's gonna disrupt and ruin and do whatever, it doesn't ever really do any of that because we're still here. And all it does is just add efficiency, which efficiency is supposed to help us.
So you're suggesting that there's just a Dr. Evil then? You're not worried about AI, you're worried about Elon Musk with megadata or an anonymous Chinese person, whatever, any supervillain. It could be anyone. It's a Bond movie.
I'm not worried about an anonymous Chinese person. I'm worried about, an Elon supervillain. Yes.
Okay. And what do you imagine? Let's assume Elon is a supervillain who has all the data.
Yeah.
What can he do to our lives? How does that harm us?
He can take away my food reviews in cars and totally mess me up because that's what I like about TikTok.
But what if he gives you more of what you like?
But I don't think he will.
So you just don't want. But is it? So what is? But like, let's say you okay. What if I put Scott in charge, who's your old buddy? You built these companies with him. Do you trust him more?
Sure.
Elon, it's personal. You don't want Elon in touching your stuff.
Yeah, I don't want to touch my stuff. I don't want anybody touching my stuff.
But if Scott was in there, so you want a random Chinese person?
I want a random Chinese algorithm.
Okay.
Yes, they're way better at algos than the U.S. is.
Than Elon Musk's madness.
Than Zuckerberg's madness. They're way better.
Madness.
The algos on Instagram stink compared to the algos on TikTok. The algos on Twitter and the algos on Facebook are horrible compared to TikTok.
And you say that's a compliment to the anonymous Chinaman?
I don't know who does it. I'm not sure if they're not. I don't know if that's not a group in MIT or Stanford who's just in a classroom messing around.
It has nothing to do with a point of origin. It's just a function of anonymity.
Yeah. Okay. I'm just.
Well, there's been an investment in branding TikTok with a Chinese branding, I think, to make it a more desirable adversary.
Well, I will tell you one thing. I will tell you that
propagandized.
As somebody that owns a small business, TikTok is great. And I think a lot of small businesses are really going to suffer. So
you think they're really going to put TikTok away?
No, I don't think so.
Come on.
Not a chance.
I heard that TikTok shop is the best thing going on. That social commerce is the future of mankind. People on TikTok shop, apparently. I've never been. I heard that said to me. Hear that?
I can't help you there. I don't know. Anyway, we are out of time. We were all over the place today, from fires in LA to Dr. Evil Elon.
Dr. Evil, supervillain. He's a great supervillain. Playing video games at Mar-a-Lago, apparently, and takes over as the official first buddy on Monday.
Yeah, so you got lots of good stuff. And Monday's going to be one of the great American days. We got the inauguration. We've got the national championship game Monday night. And it's a holiday.
I mean, because it's a good day to watch TV.
We got last call between those two, just so you know.
Really?
Yeah.
Really? So we got even a plug-in. So we're going to go Monday after the inauguration and before the game.
That's right.
Last call.
You can watch me and Victor Jones.
That's some brilliant programming.
It wasn't intentional. I'm Tom Sosnoff. He's Dylan Radigan. And thanks for spending. That was a fun discussion today, Dylan. Yeah, thanks for spending some time with us. We'll see you next Wednesday.
You can promote overtime. I got overtime every afternoon, 4:00 with Chris and Ilya. If we're going to promote last call,
There you go.
Promote overtime.
There you go.
All right.
Check out Dylan, Chris, and Ilya this afternoon. Not today. Oh, yeah, today.
I think we will today. Why not?
Yeah, it's only Wednesday. All right, guys, take care. Thanks.
All right. Bye.
Uncle Craig. I really appreciate all the investment advice you bestowed upon me this holiday season. That opportunity Prince Harry emailed you about sounds interesting, but I think I'll just stick to watching Tasty Live.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't kick the cat or the dog or the small children until the day of Christmas.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
You'd look good in either, you know what would good, like a nice Panama hat in the summer.
A Panama hat and a skirt? Oh my God. You look so sexy. I mean, you look like you just got out of bed, like you just
don't say it. No.
Fingers through your hair.
The beauty of Thinkorswim was that we were different.
From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
What is going on, everybody, and welcome back to today's assignment. We are back with Dr. Jim. Stay for the whole segment today. We're going to be getting into the platform, putting on some positions. I don't have a directional bias on either of the indexes, so we're going to be taking a look at that, see some of the earnings that we have coming up, so stay tuned for that. But before we do that, Dr. Jim, how we doing? Another week in the markets after CPI. What was that, yesterday? And you're still alive after those dramatic tweets.
CPI was today. CPI was today.
Or this morning, I'm sorry.
CPI was, yeah, PPI was yesterday. CPI was today. I can't believe that we're still here. Like, I'm still trying to kind of process, kind of working our way through the apocalypse here. Yeah, but we made it, man. We made it to the end.
I think we had an apocalypse like last week. And I remember you tweeting something. I mean, we really sent it to the downside. I believe that was last week. It feels like every day in the market kind of starting to feel like the same. But I think that was last week, if I'm not mistaken. But before we even get into the market talk, look, we had a rough season with the Broncos. I wouldn't even say it was rough, but depending on how this trade that we put on today for the directional bias that I have, I think will dictate the Broncos season for next year. So it was rough. Bo Nix, the rookie, he might get rookie of the year. He did really well. What are your thoughts on that, Dr. Jim? Before we get into the market, which we will here in a second, you bullish on Bo Nix? I mean, he performed really well for a rookie this year. You can't complain.
Look, man, these are your Broncos. I don't have anything to do with these Broncos. This is your This is your Bo Nix. Yo, I got nothing with these guys. I'm just saying, like, I'm excited about my Ravens this weekend. Like, I'm excited. My Ravens taking the field. They're favored in Buffalo. Like, that's what I'm talking about, dude. They know how to play ball. Bo Nix did not look too good, man. Now, I heard he had like all kinds of fractured stuff, and my man was playing through some pain. Is that right?
He's a dog. What can I say?
Man, I don't know. But, all kidding aside, for a rookie, it's pretty good, man. It's a pretty good season. I mean, Bo Nix, Jaden Daniels, these rookie QBs, they've had a pretty good season. And, we'll see if they can keep turning it around. I mean, you would think with Sean Payton at the helm, he's got, a coach that I would think any quarterback would love to have. So,
Yeah.
I mean, if he turns out half as good as Drew Brees, he's going to have an amazing career. So.
You're a Drew Brees fan? I like it too.
How can you not be? I mean,
no, you're right.
He's an all-timer. He's an all-timer.
Well, I mean, you can't. It's easy. Like whenever somebody's too good at, it's just easy. It's like, no, like Steph Curry. Everybody liked him. I was like, I don't like him now. Everybody likes him. He's too good. I don't like him. I'm more of a brother.
That's because you're a contrarian. You're a contrarian.
I am at heart. But no, Dr. Jim, today I really wanted to get into the platform, see what's been moving. It's the second week of the year? I believe we're on the second week of the year. Typically, I do have a position on that at least expresses my overall bias in the market on one of the indices. So I want to get into that today. I know we have about an hour left of market open, so I think we'll have enough time to do that and then check out any other underlyings that are on the radar in the beginning of this year. So I'm going to go ahead and dive into that, and we can go ahead and pull up the platform. Is there anything else that's been on your radar? Anything that's been kind of keen on your mind, that's been catching your eye? What have you guys been talking about over there with your segments, Dr. Jim?
Well, what do you think about this move today? You got 500 points in the NASDAQ. That's a pretty big move. That's a pretty significant move.
Yeah, it is.
I mean, CPI came in, I think, right at that perfect spot, right? Like, too hot would have been a big problem. Too cold would have been a big problem.
Right.
So the fact that CPI kind of came right in that sweet spot, I think that's exactly what the market needed for kind of a rebound. And so I'm not necessarily surprised by this move at all. I think it's going to be very telling, though, to see what happens next. So now, there are no catalysts, at least not in the near term that I know of. I mean, there's durable goods and consumer sentiment and all kinds of kind of medium level news reports, and they've got earnings coming on down the chutes in the next couple of weeks, whatever. But there's no major catalyst for the next week or so. We do have January options expiration this Friday. I'm going to be very curious. You've got E-mini S&P sitting there right there at 6,000. Where's the next 150 points in ES? Where are the next 300 points in the NASDAQ? It's going to be very interesting to see if they can, keep this momentum alive and take them a bit higher, or are we going back lower?
Yeah, I mean, we even got the continuation after such a large move in the pre-market. What is your relationship, or what are your thoughts on options expiring? What does that mean to you? Something to take note of?
Yes, definitely. Right. Because, yes, when you get into options expiration week, I mean, selling premium and especially managing at 21 days to go, it's, we don't have too many positions that go to expiration. Now, sometimes we'll have a defined risk spread like a vertical or an iron condor or something that we take all the way to expiration. That certainly happens. But the undefined risk guys, it's pretty rare that we would have one on this close to expiration. Still, though, expiration week is an important week because this is when, options are expiring, obviously by definition. And so, the market makers and the liquidity providers and all the dealers and the banks that are on the other side of a lot of our transactions, they have all these hedges on that are balancing out their own deltas, based on the orders that we send to them. So now that, a lot of those options are expiring, at least in January, those hedges are no longer needed. And so when those hedges come off, they can have a significant effect in the market in terms of pushing the market higher or lower. And usually in options expiration, it has a bullish tint to it because a lot of the hedging that the counterparties have to do is, not tasty traders, but we're buying puts. And so the dealers are selling puts. So if I'm selling a put as a dealer, to hedge that, I've got to sell stock against that short put. So I end up with, balanced delta. Well, if the delta on that short put begins to decay and it starts to shrink, then I don't need as many short shares. So what do I start doing? I start buying back those shares. Well, buying back those shares sends the market higher. And then because the market's going higher, puts are even more worthless. So I have to buy back even more shares. And so that's why you can have moves like this in options expiration week. Now, one final comment though. Right. The opposite is also true. If the opposite happens, and now all of a sudden you get a nasty OPEX week and the market starts going down, now all of a sudden the dealers need more short shares to hedge. Now all of a sudden the dealers need, they need to pick up negative delta to balance their books. And so that's where the moves can get really vicious and really nasty to the downside. And so I feel like today, obviously, with QQQ up 12, you have it up on the screen there. You would have to imagine that the puts drying up and the dealers buying back a lot of shares is adding a lot to this.
What does that have to do with a little bit of does that add to the kind of the positive drift topic we always kind of talk about?
I don't know if it does. I mean, positive drift and positive risk premium is kind of a longer term thing. I don't really think that something that's this short term and this event specific is going to be necessarily a characteristic of positive drift. This is kind of an altogether different thing that has to do with options expiration specifically.
Gotcha. SPY up on the day after the CPI. Dr. Jim, QQQ up on the day. IWM taking a little bit of a hit after the market open. I know we got a pretty big gap up because of CPI, but it's looking like it's having a little bit of an opposite reaction. Volatility down a little bit on the day as expected. That inverse correlation with the overall market sitting at about 16. Before we move on from VIX, any thoughts on VIX before we move on? I know it's kind of low personally for my liking, but I think the market has still, more to give. So we'll see what we get within the next few weeks. You've been keeping an eye on that?
When you say more to give, you mean more downside?
Hey, I know we're on. I'm just
trying to understand. I'm just trying to understand.
That's what I'm referring to. That's what I would hope for because of my personal bias and my selfish wants in the market. I would love to see a pop in VIX because that would be a little bit more in my favor and what I'm looking for at least.
Yeah, well, I'll tell you. I mean, me too, especially as a seller. But I mean, it's pretty nice that we're in a market where the VIX is down $2.50, 2.5 points, and it's down to 16.25. That's not bad. Like if you think about
I agree. No, I
bad.
agree.
Yeah,
no.
I mean it's been 12, 13, 14 for a long time in the last couple of years. So the fact that we were at 19 just this morning and it took, 500 points in the Nasdaq and 112 in EMA S&Ps to, send the VIX back down to 16 and a quarter, that's not too bad. So it's like, hey, this is not too bad. We still got some volatility to work with, and it could be a lot worse.
I mean, yesterday at the highs, I know we reached just above 22 on VIX. I mean, I guess that just shows you how volatile and how quickly things can change. So that's what I'm hoping for. It just feels like every pop, I know, with the contraction of volatility, we understand this is typically what it's going to look like. But it really does feel, as of recent and just over the last years, the volatility spikes have not really lasted very long, as we expect because of the contraction of volatility. But it seemed really short-lived. Maybe I'm just still spoiled in that mindset from early 2020, 2021, getting into options. So oil here, Dr. Jim, oil kind of going on a run. I know I was looking at UNG a little bit today. Maybe won't put on a position in here, still on my radar. As you can see, I was kind of playing around with the strikes here. But oil kind of ripping to the upside right now. I don't know if I'm ready for oil yet. That was one that really caught me off guard a couple of years ago, so I kind of stayed away. It's just like a different breed, in my opinion.
Mm-hmm.
But I've been taking a look at that. Other than that, I was looking through the high options volume chain, and it looks like we have a lot of earnings to look out for. As I was looking for more underlines to throw on here and there, it looks like we got a lot of earnings to just pay attention to and be aware of. Things like AMD, Apple are coming up. A lot of things within the end of January, beginning of February, and then even all of March for the most part. So I've been kind of just a little bit more picky in terms of putting more things on in the portfolio. I've really been focused on trading a lot of futures. Today we got a little bit of a baby scalp. It was very poor execution on my end, if I'm being completely honest. But I'll take it and I'll live to trade another day. So other than that, that was one of the reasons why I really wanted to get on something in one of the indices, unless we can find an underlying that I like and kind of prefer. Maybe we do both. That's kind of where I'm at right now, Dr. Jim. Looking to get on a directional bias and looking to get involved with another individual underlying without running into those earnings. So if you do have any underlyings that's kind of been on top of mind, let me know. We can just check that out as well. But if not, I think I'm going to go with one of the indices, preferably SPY or QQQ. So that's where we're at right now.
Yeah, no, it's great. It's great. It's going to be hard to find an individual stock that doesn't have earnings coming up. So probably put that on the shelf for now would be my just because, a lot of traders approach this differently, but I don't really like to do a trade in a stock that has earnings in like 2 weeks. I feel.
What about like 3 or 4? I looked at some underlines somewhere in like 3 or 4 weeks, and I still felt some type of way about it. What are your thoughts on that?
Yeah, that's exactly what I'm saying. It's kind of like, that's what I'm saying. It's like, kind of in a weird spot.
It does.
To where you're like, I don't really know. Like, should I pull the trigger? Should I not? I mean, personally, I think waiting is the move. I think wait until the earnings day. You get volatility typically at its highest point. If you're doing something that's short premium, it's going to be the most advantageous for you. You can situate your strikes correctly for that binary move. Now, for every gimme, there's a gotcha. So where's the gotcha? Well, the gotcha is, if you did the trade today and earnings were, let's say, 3.5 weeks from now, it is possible that you could actually get a winning trade before earnings. You take it off, you're done with it, you don't have to worry about it. That, of course, can happen. But if it is a short premium trade, that's going to be more difficult to do because as volatility marches higher, that's going to be working against you as a premium seller. So I don't really like to play that game. I feel like you're already making a pretty difficult endeavor even more difficult. And so I say let's do some indexes, man. I mean, you could do SPY, you could do QQQ if you want to do defined risk. Have you done any MES or MNQ options yet?
I have not. I've really not dived too much into the options on the futures, to be honest. I trade a lot of the outright futures contracts, but is that kind of what? Yeah, are you kind of keen to that right now? We could absolutely check it out, see what the options.
I mean, let's check it out because what it's going to do is it's going to give you, undefined risk exposure in the indexes for a very, very, very modest buying power effect. And so it's, SPY, $600 stock. It's like, all right, unless you've got, you're going to need, 80,000, 100,000 in your account or something like that to do something undefined risk in there. That's going to be a lot harder to reach for a lot of people, like you and me included. So, but you go into like an MES or an MNQ. Right. Now you're talking about, $1,500, $1,800 for, one position. And it's like, all right, that's reasonable. That's something that I can consider. And so just something to think about.
No, definitely. We'll take a look at it. I'm definitely not opposed at all. And honestly, into the new year, that was one of the things I want to do more of. I trade a lot of the outright futures contracts. I want to take advantage of some of the options on the futures as well. So I think this will be a great segment to look at something like that. But Dr. Jim, you want to give us a rundown when it comes down to the options on the futures? I know what are the differences? What do we need to be mindful of? Is it going to be kind of the same ropes as putting on any other underlying? What comes top of mind for you when you pull these up?
Yeah, so a couple major points. Number one, I mean, the basic structure of whatever strategy that you might deploy is going to be the same as what you would do in like an equity option. So like an SPY, like a QQQ, like a Tesla, whatever. It's going to be the same. Like your thetas, your deltas, like those kinds of things are going to be the same. Now, because you're dealing with a futures option, though, you have to be aware of some of the, unique characteristics of that option. And so, I mean, as you know very well, I mean, trading MES, trading MNQ, you have to be aware of the multiplier. That's the first thing you want to understand. And MES, you're $5 per point. MNQ, you're $2 per point.
Right.
Same applies to the option quotes. So when you're trading the outright futures, you already know that very well. But when you slip into the options on futures market, it's the same rules apply. So like if you look at if you go to MES, we're not doing spread. No, come on, man, we're not doing spread. No, man, you got to go on defined risk. That's the reason why we're in here.
No.
If you want to do a spread, you do SPY.
I know the buying power was like $70. No.
No.
Yeah.
So if you go to let's just say now we can fiddle around with this in a second. Okay. But let's just say go to like that 30 delta put. So that'd be like the 58.75.
The put.
Your 31 delta.
Okay, you're feeling bullish. Doctor, you're
Well, no.
Okay.
No, this is just an example.
Okay.
No, we may do something totally different. And this is your call at the end of the day.
Right.
So if you do this 58.75 put that you said, so normally when you're in SPY, your QQQ, your Tesla, Chipotle, whatever, you look at that quote, and that quote it's actually in like dollars and cents. It's actually already been like translated to you into actual dollars.
Yeah.
That's not the case here. Those quotes are actually in points. And then you have to do the conversion either in your head or you can just look at the screen. What is the actual dollar value that's, at stake? What's the dollar value that I'm going after here? So here, for example, you see the quote is 50.50 or now 50.75. That's 50.75 points. Then you multiply that by 5 to get to the actual dollar number of profit that you're going for. So if you look at the max profit that you can see on the trade bar there, it's just the 50.75 credit multiplied by $5 per point for 253.75.
Makes sense.
And so that is, of course, you're familiar with all this with futures, but it's the same principle with options on futures. That's the first thing you want to be aware of is the multiplier.
So if anybody's getting into options, don't be intimidated by all these numbers. And
no, you really don't need to be.
Cool. I'm feeling a little bullish. I know when we did the Where Do I Start series with Tom, the first thing we would look at is like, okay, number one, are you bullish or are you bearish? That's where we started off. So I'm going to do that. I'm going to start off there with you. I'm just so contrarian. But
you just said you're contrarian against yourself. You just said you want downside.
I am doing that. I'm going to sell some calls. That's already in the forefront of my mind. I'm going to do calls. I'm going to sell a call for the very short term. Long term, I'm bullish. But right now, if I put something on, I want to sell a call. So I think that's what I'm going to be leaning towards, Dr. Jim.
Okay, so you're going to sell a naked call.
We're going to sell it.
Man, that's a power move, dude.
Dr. Jim, you were already...
Man, I didn't know I was with Lamar Jackson.
That's a compliment. I'll take it.
Around in the pocket. He's finding open receivers.
Hey, I'll take it. Hey, Dr. Jim, you had something to say about this defined risk.
No, you're not selling call spreads. You said you're selling a call.
No, we are. We're going to sell a naked call as well. So what we're going to do is I would like to go a decent ways away from the money. And, we're not right at the expected move, but I'm not against this 31 delta or this 30 delta right here, Dr. Jim. $1,300 worth of buying power. And, we'll manage as the trade kind of goes on. And hopefully we can have this on by next week and we can continue to manage it. But other than that, Dr. Jim, buying power is sufficient for my account size. I like that. Excuse me. Is the process of managing this trade going to be similar to if it was an individual underlying in terms of rolling down the cost, the naked call if price drops to collect an additional credit? What do we need to be aware of for that?
Yeah, no, it's going to be exactly the same. It's going to be exactly the same. But with what you just said, though, if the price drops, You're not rolling down the call to collect more credit. No, you're cashing out the winner, bro. Like, what are you talking about? What are you talking about trying to get more money out of a winning trade? Like, those are famous last words. Like, that's something Bo Nix would say when he's going into Buffalo thinking he's going to win that game. It's like, dude, those famous last words. It's over, man. It's over, Johnny.
Hey.
Like, the trade's done. So if it goes down, then you take it off for a winner. That's the move. But here, let me help you out a little bit.
Right. I hear you.
Why don't you consider, again, we still have a few minutes to go here. Why don't you consider, rather than doing a naked call, I mean, I love the bravado. I love the chutzpah that you're bringing to the show today. Why not sell a put too and just skew it so that it's still bearish, but now you get premium on both sides?
You know what?
Power is probably not going to be that different.
Dr. Jim, you are right. You are completely right on that. So let's collect an additional credit because we can.
And it's going to allow you to go much wider with your strikes if you want to.
You are right. I could even pull the call out a little bit further if I wanted to do that.
Exactly. You can go 61. You can go 61 and a quarter. You can go 61.50 even if you wanted to.
We're going. All right. 61 and a quarter is good enough, Dr. Jim.
Okay, no, that's fine. But look, your buying power is the same as it was.
It's a little lower. It's
actually gone down a little bit. That's right, because of the additional credit that you brought in.
Right.
Now you've got more profit potential. Now, of course, it's a different trade because it's not purely bearish now. You are a lot more neutral. But you're a little bit skewed to the downside. And so, I don't know, man. I like this trade a lot better than a naked call because the reality is, if you sell a naked call in an index, I'm not saying you should never do it because there's a time and a place for everything, I think, in the markets, but it can be a difficult trade. If this thing starts catching fire and catches some momentum, it's gonna be a real source of pain for quite some time. So now at least you have the put that's kind of in place to help absorb some of those blows in the event that we take off to the upside.
Right. Now throwing on essentially a strangle on the options on the futures, Dr. Jim.
That's right.
In terms of management, if you were in my position, we get a drop tomorrow, you're taking this off. You're not going to adjust the untested side and go about that. You would have the same approach to kind of what you just mentioned when we were just going to sell the single call alone.
Yes, but here's the difference. Here's the caveat.
Okay.
You're not taking this trade off tomorrow. You're not taking this trade off on Friday. You're not taking this trade off next week. This is a time play. When you sell a call, it's a directional play and a time play.
Right.
When you sell a put, it's a directional play and a time play. When you sell a strangle, it's a purely time play. Now, it's also volatility. There's other things happening, of course. But
right.
You're not taking this trade off tomorrow. It's not going to happen. You would need an unbelievable volatility collapse, and that's very, very, very unlikely to happen. So when you go into this, you just have to make sure you have the right expectations.
Right.
It's like, all right, I'm probably going to be in this for a little while. I'm just going to monitor it. And, for my money, as long as it's between your strikes, it doesn't really need a whole lot of management. It's not until one of the strikes gets hit that you start rolling untested sides and start minimizing directional risk, things like that. So that's kind of how I would approach this and what I'd be looking for.
Amazing. I mean, I do like this. I like that we're a little bit more aggressive on the call side. So we're just a little bit more short than we are bullish. Obviously, kind of a neutral play, but again, leaning to the downside. So, I mean, I like it. It gives us another opportunity to be a little bit more familiar with the options on the futures. So other than that, I mean, a 60% pop, 340 keeps fluctuating in max profit. We'll manage our loss as we should each day in and out. So we'll pay attention to it. And then $1,200 in buying power. I like it a lot. I even know with the individual futures contracts, I believe it's around $2,000 for buying power just for one, contract. So even in that way, I like how this gives us another opportunity to minimize that buying power, but still exposure to that futures market. So what do they say at weddings? Forever hold your peace. Any objections before we send this through? What's the saying? I've never been married. You've been married.
I think that's what they say in a trial. Don't they say that in a trial? Like, does anybody have an objection? Like, that's kind of like a wedding.
Same difference, but we'll say.
Yeah, no, it's yeah. No, I mean, I like it. I like the strangle more than the naked call. Now, of course, if we give this whole rally up tomorrow, you're going to be kicking yourself for listening to me because you probably would have had an easy winner, on your hands. Although I will say this actually. This is another thing about naked calls that kind of surprises some people. Okay. When you sell a call, right, you're bearish. You're wanting the market to go down because that's the directional move that you're banking on.
Right.
However, if the market goes down significantly like the next day, a lot of times your calls aren't even profitable. Do you know why that is?
if your calls aren't, if it goes down too much.
Right.
Because of the put side, no?
No, I'm saying if you just did a naked call. So forget
a naked call.
If you just sold a call, like what you originally wanted to do, and let's say tomorrow the market gives up today's rally. Right. Yes, down 100, NASDAQ down 500. I'm saying your short call may not even be that profitable. It might be a little bit profitable, but I would be surprised if you would be at your profit objective. Why do you think that is?
Would it be because your eyes on that volatility might increase a little too much?
That's exactly right.
There we go. Let's go.
That's it. And when you get that vol expansion, where now the VIX goes, from 16 to 22 in a day, you've got to absorb that on the short side of the option contract. And so that's one of the things that surprises people with short calls. And so by having the short put in the game, it's also going to mitigate that effect because everything is just going to balance out a little bit more.
I think that's one of the things that really catches you up. Like, again, I remember the first time I ever bought an option, I legitimately didn't know what I was doing. I bought an option. I got the move. And it was probably one of those elements at play where I was like, why am I barely break even on the trade? And I got the directional move. Maybe I just wasn't understanding one of those elements to the contracts, kind of like how we just broke down here. But Dr. Jim, we got that on. We'll see how that plays out. I'm actually really glad we went with the futures contracts. So I'm glad you actually mentioned that because that's something I wanted to get into more in the new year, the options on the futures. So if you haven't checked that out, easy to do on the platform. But anything you want to add before we hop out of here today, Dr. Jim? We got it on there. So.
No, there you go. And the only last thing I would say is, don't be too hard on yourself for that little MNQ scalp you got there. You got $35, right? That's a Bonex jersey because now they're on sale. Now they're sold for a discount.
That is crazy.
Like you can get those guys 40% off, bro. 60% off.
And 10 years from now, when Bo Nix is in the same conversation as your boy Drew Brees, we're gonna run the clip. We're gonna run the tape.
I'm just saying.
Big deal donut. Big deal.
I'm just saying. Go get you two Bo Nix jerseys. You can get the home and the away. For $35.
Look, Big Deal Donuts, Grumpy Mike. I know you guys are watching. Clip that. All right, and we'll run it back. But anyways, Dr. Jim, anything to add before we head on out of here today?
No, it's good. It's a good trade, and it's good. Futures options are a really nice tool to have in your toolbox.
If they go your way. Yeah, absolutely. But anyways, we're going to wrap it up today. No, I'm just kidding. We're going to wrap up today. Dr. Jim, we always appreciate you having you here. Thanks for tuning into today's assignment. Be sure to stay tuned for Tim Knight coming up next, and we'll catch you guys next time. Peace.
Peace.
Get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Hello, everybody. Well, inflation data is done for the month, and the bulls are dancing in the streets. The PPI came in cold yesterday. The CPI came in cold this morning. Yesterday, the reaction was positive but short-lived because the PPI came out, market rallied instantly, and literally within like 60 seconds, it started falling, and it went red for the day. And I forget where it closed exactly, but it was not a great day in spite of that. Today, it's sort of like everybody finally said, okay, this is for real. And it has rallied mightily. We're up 115 on the ES right now. We're up over 500 on the NQ. in spite of all this drama, the year so far has been pretty blasé. Last night, as of last night's close, we're already more than halfway into the first month, and everything was down a little bit, down 0.5%, down 0.75%. Today at the close, it'll be up, maybe 0.25% or 0.5%. There's been a lot of smoke, but very little in the way of fire. As of this moment, I mean, the ES had a very strong Monday, had a very strong Wednesday today, and we're still below where we were like a couple of Mondays ago. So it's very positive for the bulls now because of this inflation data. And Monday's a holiday, of course, but that's the inauguration. So I suspect some of the pledges and rhetoric in the political scene might get people excited about equities and you. But I think the main driver henceforth, now that this inflation data is behind us, is going to be earnings. And at first they start off kind of dull. It's bank earnings, and they're fairly predictable, fairly consistently strong. But next week, and even more so the week after that, then we really start to get the household names to drive the market. Today, in sharp contrast to the green we see everywhere, I'm going to take a look at mostly the current short setups that are getting a blowtorch to them and are still hanging in there. I think it's worth, as good contrarians, to look at the contrary plays, see how they're holding up, see what looks most interesting. Some, for me, are too hot to handle, but are still intriguing. So having said all that, and as we approach 6,000 on the ES again, let's jump into the charts and catch up. Here's the spider. Big green day. This is the biggest, baddest green bar we've seen. I mean, just eyeballing it. This sucker right here might be the biggest green bar on this whole screen, which goes back for almost a year. The last big rally we had lasted really 3 or 4 days back here. But the thing is that this topping pattern is still intact. We have undone a lot of damage recently, but we are still within the confines of this pattern. Patterns do break. I think that if the spider pushed above this bar here, if it got above 599.70, we could probably get the eraser out and forget this pattern. As it is now, we haven't done that. So let's just keep an eye on it. The jury's still out on this one. We did a couple of days ago crack below this pattern, and we've rallied mightily ever since. But we're not out of the woods on this one. The diamonds, obviously quite strong, but again, we really have just been range bound for a month. Turn this down, excuse me. Go away. Since the 18th, when that was our last big exciting day, we plunged hard. And since that big day, it's just been bang, 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 bang. Between these, we slipped a little below it here. That is below the election day gap. But we've reversed this. Now we're back to where we were near the top of December 18th. But the point I'm making is that for a solid month here, I know this just looked like a few bars, but this really is a month, a calendar month. We've just been range bound, and now we're at the top of the range. Small caps were exceptionally strong. Here's IWM. But here again, remember our old friend, the blue line? We've been playing jump rope with this. We tagged it back on the 6th of this month. And we just about got to it today, not quite. And we've sold off to some degree. So this too has been range bound since the 18th. And we're near the topper portion. We're near the top of that range. So what I'm trying to say is that as explosive as this rally is today, and to a lesser degree Monday, all it's doing is traversing from the lower portion of the range to the top portion of the range. And I would not be shocked to see either tomorrow or the next day things ease back again. Today was the big news, of course, of the CPI. Tomorrow is retail. Don't know how big a deal that is. Obviously, just the retail sector is germane. And the Friday, I'm like, there's nothing. So we're going to just go into earnings season. And I looked at next week's economic data. It's precious little. It's just earnings. And as I mentioned, it's just a 4-day trading week with Monday off. So having said all that, let us tiptoe through the bearish tulips here. And in alphabetical order, we'll go through these live positions and just say a few words about them. It's virtually green across the board. I mean, God bless them. There's 2 or 3 of these that are actually showing a loss for the day, which is kind of an achievement. But on a day like this, it's going to be pretty hard to have any red out there. AMD, we have rallied hard here, undone a little of the damage the past few days. We have perfectly sealed this gap. Now, this is the pattern driving this, and my target's way down here. So even getting past this gap, I'm not going to close it. This is a nice pattern. I think I would probably grit my teeth on this one until such time as it actually got over this island reversal right here. So I'm good on this one up into 126.85. Oh, geez, I did it again. Remember from yesterday? Here, let's get the old keyboard in tune. The next one is Boeing, which is incredibly down, just a little bitty bit, but I'll take it on a day like this. And we've been just slowly slipping on this one pretty persistently, well, since last year. These last year, just very slowly, subtly slipping lower. Pretty severe damage on the long-term trend line. BP, one of my energy plays, is up a bit, but nicely below this dashed red line, which is essentially, this would be a stop loss crossing that area. Caterpillar, got into this one new today. I had been in this one. I got rid of half my position here, dumped the other half, I think early yesterday, and I got back into it today. The limit for it is not a really clean pattern, but for me, the line in the sand is up here at that dash red line. And normally on just about all these tend to be June in the money puts. Crocs down, amazing. We're down about 0.5% on this. You've seen this trio of reversal patterns, and following this third one, it's been slipping nicely. 1, 2, 3, 4, 5, like so, and the 110.39 is the line in the sand with that one. And oftentimes it's important to recognize relative behavior, contextual behavior, and the fact that this can sell off on this incredibly bullish day is a testament to its weakness. CrowdStrike's having a big rally, and it's a bit of a shame because we had a nice drop here for a few days, but it's undone most of that. We're still range bound on this, and the limit on this one is this dash line way up here. And we had sneaked just a little bit below the pattern back on Monday, but we reversed all that away. But I'm sticking with this one until and unless it crosses above the upper portion of that range. Here's Halliburton, another energy-related play. And this one, the line is up here, the dashed line at 29.54. Here's IBM, another rather sloppy pattern, but line on this one is like so. And these are well below their lifetime highs, as you can see, 222.43. Next era. This has been my only utility play. We've got a very pretty inverted cup with a handle on this one. It broke below that pattern and below this very long-term trend line, rallied, and tagged the bottom of the pattern, which is acting as resistance now, and then it began to fall in earnest. And I think I mentioned a couple of days ago, I got rid of half of this position. I'm tiptoeing back in. I got more into it because as we push toward overhead supply, it becomes less risky. And obviously the puts get cheaper as well. So this is also June's, and it's this nice scalloping series of lower lows and lower highs. On semiconductor, this was a pretty new one. Haven't traded this before. Very clean gap on this one, like right so. 57.96, there's the gap. Here's the pattern, which goes back a long way. This is a full, about 2.5 years wide pattern. You can see that quite clearly here. We're way above long-term support. And for that, reason. I believe I got at least September's on this. These actually might be as far out as the following year. Occidental, OXY, another energy play. Zoom in like so. There's our dashed line underneath that mass of overhead supply. And another energy play. This is Schlumberger, SLB. And you can see here, this was the prettiest pattern of all. This completed back in 2018, fell very hard, tremendous drop on this, big recovery. And the cool part is this trend line here. This trend line goes back for eons. This goes all the way back to the 80s. And we this is just absolutely pitch perfect. Broke below it, retraced a perfect tag, down, 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 and then years of rallying, pushing, and then resistance, and then falling away again. So you can see the power this trend line has, even when measured in decades. Really cool stuff. Uber Technologies, UBER, zoom in on this. Here's the line limit on this one from last week. And lastly, and this is the only just non-equity one, just a plain old ETF, XOP. This one is strong right now. It's up about 2%. Crude oil is rallying very strongly right now. Crude is up almost 4%. But in XOP's case, we still have the prospect of a range-bound play here with this line, with this dashed line being the key, 149.44 being the limit on that one. I mentioned at the top of the program some ideas just too hot to handle. This is one of them, Palantir. It's a very cool chart. It's got a very nice gap right there where that dashed line is. Let me just point that out for you. Here, let's put the arc behind and point here. Okay, so 69.75, that's the gap. And it's not cheap either. The PE on this, I think, is something like 315. So extraordinarily rise in this, what might be a reversal pattern. The thing that dissuades me from pursuing this is because when they do have earnings, they tend to be big moves like this one right here. Oftentimes, there's giant gaps on this. And no thanks. I'd rather get something a little bit tamer. Speaking of gaps, I also wanted to point out what a clean job NVO did. This is something that weeks and weeks ago I talked about a lot, pretty much on a daily basis. I bought puts on it somewhere like around here. I had a target in the upper 80s. It plunged and it fell even below that target. So I got out round about here. And the nice thing is that the gap was way down here. I never thought it would get that low, but it just about perfectly did this week. Look how close that was. So obviously very oversold, but this was a really good representation of how measured moves and gaps can be so helpful. One last item, TLT, the bonds, having a very welcome, very rare, good day, not surprisingly, based upon the inflation data. But I got to tell you, I think it's resistance time, because not only has this thing is in it's deep into its fifth year, almost sixth year of its bear market. It has been falling even recently, very persistently, but this trend line matters, and we've cut below it. And today's rally undid many days of weakness. I think it's just about it. That trend line is going to hold, I think, prices back at that level. All right, that is it from me, and that's it for inflation data tomorrow. Post retail. I will see you then, and thank you for coming by. See you tomorrow. Bye-bye.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
And then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
yeah.
Good.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If we didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was.
We're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was beautiful.
Girl
It was beautiful.
on Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain, and I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, closed everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning.
Nope, I got everything fine. The problem.
Get the full scoop by checking out the archives at tastylive.com.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's a
Hello, everybody. We're back. When I say we, I just mean me. The bat is somewhere, but he's having a little trouble logging on, so he'll join us in a couple seconds. What a crazy day. And sorry for the slight delay. S&P's up 113. I'll repeat that. S&P's up 113. I knew they were going to be up big out of the chute because they're up 90 pre-market, and we kind of hung around here all day. But this is what we call a little manster. The Nasdaq is up 500 points today. Can't remember the last time the Nasdaq was up 500 points. The Dow's up 750. The Russell's only up 46. It was kind of much stronger. The Russell was actually stronger this morning. Bonds are up 122. That's a huge move in bonds. That's almost 1 3/4 points. The VIX is down 10% today. It's down 177. The VIX futures are down 10%. The VIX cash is down. VIX is down 260 on a 60, almost 15 or 17%. Notes are up almost a full point, which is crazy. Rarely do you ever see the 10-year note up a full point. And in the other markets, silver was up huge, up $1.20, and gold's up $36. Oh, look what the cat dragged in.
To click the button. I'm sitting here, I'm staring at myself, waiting.
Hey, Grandpa, listen, it's just one button you got to click, okay? And I don't know what else we can do. We're thinking
my fault. I'm sorry. Ryan just texted me. I apologize 100%. I know you were just taught.
We're going to put a little shock collar on you because the buttons don't work. So just we're not going to use it unless we have to. But if we have to, we're going to just shock you. Anyway, I was just saying.
I'm always early. I was 15 minutes early. I've been sitting here. But you are right. Today was all about not doing something. We talked about it early. You said it early in the week. Monday, Tuesday, kind of softish. Rest of the week going to be a little bit bullish. And we opened this morning. We haven't looked back sad enough. And some of these stocks, they are just. They're in the stratosphere. There's nothing down.
The way we like to say it is, you can pick your poison today.
Sure.
But
these are not 1% and 2% moves. These are 5% and 10% moves.
Oh yeah. Like I said, we began the week kind of soft. I don't think we're going to end the week very soft. I've been yakking about that since Sunday night. I think that I didn't know if they were going to start today or start tomorrow. Now they might have some of it, but one of our viewers, Adam, he emailed me a little while ago, and he said, hey, you did a study a while ago last summer, and you did a study on reversals after a big move or continuations. So yeah. I asked the research team, I asked Sahil to pull the study for me, and I gave it to Ryan just so you can see it right now, because it's kind of interesting because I didn't remember this. I didn't remember. I don't know if you remembered or not, but let me pull it up for you, okay?
This is not the reversal after 24 to 48 hours, is it?
No, this is the reversal after a certain percentage move. It's a different study. I don't think you'll remember exactly, but if you take a look at, let me just pull this up on the slide I need to here so I can see.
So on any random day, up day versus a down day, probabilities of a 1% move.
So on any random day, the chances of being up or down 1% is about the same. 14% up, 13% down, 1%. Today is very close to a 2% move, okay? Right here, it's about almost 2%. Sure. So a 2% move is 3% to the upside and 4% to the downside. It's a very small chance, only a 3% chance of what we saw today. Let's go to the next slide. But here's the real key. So now, after a big move, so after a day like today, the probabilities of an equal or greater move on the next day are a bit larger, not smaller. So the crazy thing about a move like today, now again, the downside has a much better chance, but this is an up move today. So we go from a 3% chance of being up 2% today to a 5% chance of being up 2% tomorrow, which I thought was really interesting. So the odds of a continuation the next day, now the downside's much bigger, but even on the upside, it's not huge, but we go from 3% to 5%. Now, there's not a crazy number of occurrences where this has happened over the last 40 years, but there's enough.
Sure. So, well, that makes it even a little bit more compelling. Not that you can play for a 5% move.
You can't play for a 5% move.
Right.
But there's a 15% chance that they're up 1% tomorrow. So that's why, you definitely not. But go to the next slide, Ryan, please. No, I'm sorry. Slide 6. Yes. So after a big move like we have today, the probabilities of an equal or greater reversal was actually larger than the probability of a continuation. So there was a 3% chance that we moved 2% today, which we did. There's a 5% chance that we're up 2% tomorrow, based on historical stuff.
Yeah.
There's an 11% chance that we're down 2%, and a 17% chance we're down 1% tomorrow. So there's twice the chance. Now, these are all still very small odds, but we go from a 3% chance of being up 2% today to a 5% chance of being up 2% tomorrow to an 11% chance of being down 2% tomorrow. I just wanted to point those out because this was a study we did. Ryan, can you go to the first slide for a second? Slide number 1. This was the one before this. Let's see.
December 15th to July 24th, 2024.
Okay. Here you go. July 24th, 2024. So this was done over the summer, this last summer. So it's a pretty relevant study.
Yeah.
Okay.
Good to know. It'd be interesting to see where volatility was there too, because we're back down, in the 17 handle on volatility, relatively low too.
Yeah. All right, Ryan, you can take this down. That's all I wanted to show. Thanks. And so a couple of other interesting notes to point out. Like Tony said, there is way too many stocks to even mention, just given the size of the move. And there's not really a lot of kind of underperformers. This was a day when everything took off, whether you have a digital asset position or any kind of, other than Intel, which of course probably didn't do anything today. If you had a chip stock or any kind of high tech stock or really anything out there, everything.
I think actually Intel's up 50 cents. I think I saw DraftKings. KNG. I think that was down. Yeah, it is down $1. I remember that. Mm-hmm.
Yeah, and this is also the kind of day where don't feel too bad if you kind of got run over on certain underlyings, because this is the kind of day where, you're thinking to yourself, okay, well, I need an up move, but I don't need a 2% up move.
Yeah, it's funny what a difference 30 or 40 handles make. When the E-mini S&Ps were up like 80 or 90, I was doing a lot better than when the E-mini S&Ps are up 115. And I was pretty aggressive with my roll-ups.
I was a madman with my roll-ups today. Mm-hmm. I rolled everything from the opening bell to, I have never, all I did today was roll up puts all freaking day. First of all, I don't want to miss this. Are there any earnings plays for tonight?
PNC, Morgan Stanley, Bank of America, UNH, TSM.
Okay, so let's just talk about a couple of these things really short. Morgan Stanley, we have a very small position on. We are short the 115, 140. That's kind of a weird trade. Let me just move up some of these 115 puts.
In February, it's probably 115 puts are 7 delta. You don't want those.
No, I don't know when I put this trade on, but I got to roll the puts up a little bit. Okay, so that's a very small trade. In UNH, all we have on is an iron fly. I'm leaving it on because I don't know. Kind of came in today a little bit. I don't know.
UNH unchanged. Kind of mid-range for its last month or so.
Yeah, I have the 530 iron fly. I'm just going to leave it. What the hell? Doesn't make any sense to take it off.
You have an iron fly on. That's why it not moving has helped you today. You're right at the money, pretty much.
Yeah. And then the last one was, what'd you say?
Maybe TSM. TSM?
Yeah, so TSM.
Now, it's supposed to come out in the middle of the night, I think. That's the last I've found.
So we have to recenter our strikes in TSM. So we currently have on the 240 calls and the 175 puts. I don't know. So I either roll up the puts or roll down the calls or
You can leave it. It's 4 deltas to the downside. I don't know. TSM up $5 today. Kind of mid-range too for its most recent move.
Yeah, I don't. Today, the only earnings trade I did today was I did Goldman Sachs really small, which we broke even on basically. I think we might have lost like a couple dollars, but nothing. And then what was the first one?
JP Morgan, Citigroup, Wells Fargo.
Yeah, JP Morgan was a winner. And we took it off when the stock was down $1 this morning, and now the stock's up like $4 or $5. But I don't think that would have mattered.
All the banking stocks went higher.
Yeah, I don't think that would have mattered. For us today, we were doing, actually, I was doing a little better on the opening.
That's what I said, about 30, 40 handles on the E-mini S&Ps makes a big difference.
Yep. And I've been rolling up all freaking day. Biggest winners for us today, easily bonds and notes, nothing else close, and the Japanese yen. Biggest loser for us today is the SPY, the ES, and Tesla. And Tesla, they actually pumped in a little premium this afternoon.
I was going to mention that to you. IV rank of 84 in Tesla, even with the stock up 32. Now, we talked about how volatility continues to kind of get bid on the way up. I guess $32 is just too much in one day, an 8% move in Tesla.
Yeah.
Volatility expanding.
It's exactly what it is. It's too much. I struggled all day.
The IV rank was in the 70s, like 78, 77 earlier in the day, and it was kind of hanging in there, even with Tesla up, $15, $20. But once it went up that extra $15, it really started pumping as a premium.
Yeah, today was a day when if you made a lot of adjustments, you are not alone. I made a bunch of opening trades this morning on like what's your assumption, and during the day I made a couple of scalps here and there. But for the most part, it took some profits in bonds. But other than that, we made 127 trades, so I made a lot of adjustments.
Yeah, for sure.
I had a lot of adjusting to do. If I didn't adjust, my deltas would be 10 times what they are right now.
Right,
10x.
right. Yeah, today's the day when you go one direction that you're very happy about being aggressive with your delta management.
Today's the day your delta adjustments saved your arse. And
VIX 1-day Sadnov down 9 to 1342. You think about a 1-day trade today or nah?
No. But there's no doubt. Well, there's two things on the close. What time is it? If you're going to do
2:49, you got time.
Yeah, if you're going to do 1-day SPX, which we did yesterday, but the one thing yesterday is they marked them, they goosed them on the close last night. The 1-day SPX, they absolutely goosed the close, and they took them up almost $13 on the close.
Yeah.
I don't think they'll do that today, but today they're trading really cheap the upside. Like the market kind of knows. The 59.60 calls, which are only right above the current market, only 7 points above, are trading super, super cheap at 80 or 85 cents. Now, again, the 1-day VIX is down big, and the VVIX, which I thought was way too high 2 days ago, has just gotten crushed.
But it accurately predicted a pretty big move today. I mean, SPX was up right out of the chute.
The expected move pre-market was about 45 points, and it was up at least 50 right out of the chute, and then it was up 60, 70, 90. When we opened up this morning, we were up 90. We're up 110 right now. So we only moved 20 handles. If you look at the ES volume today, the ES volume is only 1.3, 1.4 million cards, which is not a lot. I mean,
not at all. This was definitely an equity market, option-driven market. A lot of options. The BITO have traded today. I know we don't mention that too often, but BITO had a big option.
I traded BITO because of your boy. Your son got me a little bit in there, but it's small.
He's just trying to broaden your horizons. Win or lose doesn't matter.
I don't need any more horizon broadening. I've reached a point in my life where, my horizons don't need to be broadened too much anymore. But let me tell you, I'll tell you a funny story. So last night I'm sitting around and I was doing some work. I was writing a proposal for something and I was just doing some work. And I'm thinking to myself, you know what? We had this huge rally on the close. Remember, like $13 in the S&Ps?
Yeah.
And all I could think to myself was, you know what? I got a little risk to the upside on So I need a few downside deltas. What is and this is me, I'm watching the markets every day of my life. That's all I do. And I'm sitting there thinking last night, what's got the biggest risk to the downside? And so I decided, okay, it's probably NASDAQ. So I sell some NASDAQ futures, not a lot, just tiny trade, some NASDAQ futures. Now, you'd think I'd be doing this a long time. If I could have guessed they'd be up 500, like the one product I picked to sell, it's up 500. Now, in the middle of the night, somehow I woke up, I'm like, wow, they're not down. Okay, I'll just cover because it's a stupid trade.
And not only that, son, it's the biggest mover of the day on a percentage basis. When everything moved 2%, you got the one that moved 2 1/3%.
I know. Plus, it's 500 points in the NASDAQ. I guess my point is, so I covered in the middle of the night, like 3 a.m. or something, like you told me, and I'm looking at this going, you couldn't be more wrong. Like if you tried to pick a parlay where you got every single thing wrong, like that would be it. But it's just like that's how hard this is. How would you know? You
can't. Yeah, you don't know.
Yeah, there's just no freaking way. I am very flat tonight. My deltas are almost flat. My theta is the same as it was. Your extrinsic's going to come down a little bit. I mean, all in all, it's still going to be a good day just because of the bonds and the yen. But
sure, you got direction. And this is one of the first time the currencies haven't given it up either.
No, what did give it up a little bit today was the Russell versus. So the Russell versus the S&Ps, the Russell versus the NASDAQ didn't work out. It looked better this morning.
Yes, yes, it did. Yes, it did.
But yeah, this is one of these days. This is one of these days for the books. It's a biggie, and
it's a biggie. It's a
biggie. Thank God Vol came in a little bit, didn't hurt us. So it's good for the good kids. But it's even better this morning. Let's see if we squeeze some more stuff. The earnings plays were nothing. So far I'm not too impressed. We have a small position on in TSM tonight, and that's about it. And I guess a small Morgan Stanley, but it's tiny. And we will see what happens. Let's see what time it is. So it's 2:53. We got 7 minutes left to go. I'm looking at SPX, but honestly, these aren't interesting to me. Both the puts and the calls are too cheap today.
Yeah, like we said, VIX one day down significantly, $9. So yeah,
the at the money straddle, which is really weird with 7 minutes to go, is only like $4.50, $4.20. It doesn't make any sense to me why the at the money straddle is so cheap, because that's a nothing move on a day like today. So
these guys are good, Sosnoff. I gotta tell you that they are good. It's cheap for a reason.
I know. It's really incredible. It's almost like they know, but they don't know, but they know.
I know. The float knows.
The float knows. Yeah. Yeah. The float knows for sure. Let's see what else do we got here. If there's anything else that jumps right off my screen, I don't think so. I'm going to say no. I don't have any other crazy, nutty stocks that jumping off my screen. No.
You mean other than the ones that are up 5 to 10% today? You meaning just about every stock?
Yeah. Yeah.
All right. Well, maybe these guys can add something to the foray here. Who do we got in overtime crew today? Oh, look at you, my son. Good to see you again.
Hey, wow. Oh, what happened here? Where's the Radigan boy? I just finished a podcast with him. He should be on.
It would be over overtime for him. So we can't do that. He already did overtime. He worked with you.
He's getting Ilya from behind the shed. He got taken out a little bit. I gotta say, Tom, the YouTube chat is really excited. Today is the first time that they've seen you excited on an up day. So they're thinking that this is kind of a change in Tom's sentiment. Maybe things are good with Tom.
It wasn't the up day in the market that didn't help me, it hurt me a little bit, but not for a normal 100 point up day is usually pretty bad. But this wasn't because I was ready for it. But it was the bond move that put me in a good mood for once.
It's not you, it's me, is what you're basically trying to say here. We're just having good position, not the movement.
It's not you, Nick. It's the bonds.
Yeah.
Of course.
Mm-hmm. So, Chris, we finally had the bond move we've been waiting for, which is still, I still need it 5 handles higher. So it's not like, we're not anywhere close to where we need this sucker to be. But do you think, I'm guessing it's probably, and I don't want to jinx it, but I'm guessing it's probably a pretty good low at that 110.5 level in the bonds.
Oh, you mean the Batista low of 111?
The Batista low, yes.
Yeah, the 110.5, the pre-Batista triple call. What do you think, Chris?
Yeah, I mean, look, before CPI this morning, the market was pricing in just one rate cut through the end of next year. That seems like it's a pretty extreme level. So CPI today, one of the things that we were sharing in the research channel is that the breadth within the CPI was actually improving. The number of components that were above 0.2% month over month fell, which means that we're not widening out. We're not seeing inflation broaden out. It's actually narrowing a little bit. So some relief there. And that's enough for bonds, right? We're going to go back to a world where we're pricing in no cuts or a potential hike. That's really the bridge you need to cross to get much more weakness. So maybe this is the exact low, Tom. But, I looked at the market here today. On Monday, we were saying if this market goes up to 59.90 after CPI, you can't really be surprised because that's the one standard deviation move. And you're not out of the woods yet at this point in time. So there's been some nice price action today. Let's see if we can get more tomorrow.
Well, I think that, and just talking about tomorrow just for a second, because tomorrow's basically your Thursday of expiration. And again, I've talked about this a bunch. There is so many, the number of leap contracts that come off in January. It's always, the biggest leap cycle every year because we used to only really have Jans. And so what's interesting about Jan expiration is not just the normal amount of bullishness. It's up like 70% of the time in the last 23 years. And we gave the statistics the other day. But what's also interesting is just how much liquidity is in the options. And so when you get that kind of liquidity, it's very tough to push the market anyway, but kind of up. But it might, kind of blow its brains out by tomorrow afternoon.
Well, I'll tell you one thing that blew its brains out is that straddle that you were talking about is under $2 right now.
Yeah, that took 2 seconds, right? You remember how we said the market kind of knows from somehow, I don't even know how, but it freaking knew. I mean, yesterday, that straddle in the zeros with 10 minutes to go or 8 minutes to go was like $5 or $6. Today it was under $4. It's crazy.
Yeah. And it's under 2 right now with the SPX at 59.4880.
Crazy.
Yep.
They are pricing in no markup. They had the markup yesterday, and be careful tomorrow though, because the markup on the close on the Thursday is always is always the most dangerous time. You got to be careful on that Thursday markup. The Fridays haven't been much.
You were talking about at the end of the day in SPX again, right?
End of the day in SPX tomorrow. Just be careful on that on the 0 days, especially with vol collapsing like it is today. But who knows what happens tomorrow? This could be.
Chris, we got one of the best things we could get. The be careful. The be careful is about as good as, wow, they rallied them 10 into the close. We are in good hands, Chris. This is beautiful.
It's almost as good as a day one. It's almost.
Day one is the best. That's the ultimate. You only get those once or twice a year.
That's right.
I like it when the Batistas get a little cocky.
We're going to take a quick little 90-second break and come back. We got overtime next. And sound off, SPX closes right on the number 59.50. We'll be back in 90 seconds. We got more Tasty Live with overtime next.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
If you missed the live show, here's our cherry on top weekly recap.
Put on your yarmulke, here comes Hanukkah, so much Funukkah. Instead of one day of presents, we get 8 crazy nights.
I gotta tell you, that does look like a Tony Soprano tracksuit. Like you're getting a little.
He's all tracksuited up,
right?
I was waiting for somebody to say something, and if I had pants on, then I would have the Sopranos tracksuit on, right?
I made burnt ends chili yesterday. Scott's never really had it, so I brought it in.
Today, so he can try it?
Yes, it's not hot, so yeah.
We have a microwave. Is it okay if we microwave it, or will it ruin it?
Whatever you want with it, yes.
It's very rare when you get an outbreak that you get to film the origin of it.
I brought you in chili.
Did you?
Yes.
He did. He brought you in chili. Nobody was allowed to touch it. Now
it's in the
sitting
refrigerator
out for hours.
Now I gotta talk about the chili. Here's my comment about the chili. You were right, not enough spice. They needed to be like, I don't know.
He doesn't chop his up enough.
Is that what it is? Yeah, it's like something was off.
You can chop him up a little finer. And then maybe
pan saute him for a little bit.
Yeah.
Not enough beans. And the tomato, what do you use? Like Hunt's tomato sauce or paste or something? Just throw it in there?
Oh my God.
I love you, Tom. Scott. I really do. I really do. This is my favorite segment by far.
I made a little video. We have
Oh, no. Is this going to embarrass me?
The holiday spirit here at Tasty Live. So you're welcome.
Have we seen this?
Watch this. No, you've not.
I didn't proofread this. Oh, God.
You want me to get in first? You want to get in first?
Saz, get in here, you big stud.
It's my bad arm.
Bit over your head?
So you're naughty.
I'm nice.
You're naughty.
I'm gonna read. I'm nice.
It's naughty.
No, nice. Ho, ho, ho. Merry Christmas and happy holidays from Tasty Live.
Get the full scoop by checking out the archives at tastylive.com.
You hear it all the time.
Spoos up or spoos down? What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Stocks are saved. Or are they? It's Wednesday, January 15th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York. Dylan Radigan in Milan. We have, that's Nick Batista. He's in Tucson or Mesa, Arizona, perhaps, but I think Chicago. We're here to take you through the next hour as we wrap up this trading day. Futures market closes at 5 Eastern, 4 Central. If you're on the platform or the website, come over to YouTube. Tell us what you're trading, what you think of this big reversal in stocks higher here today. If you're already on YouTube, come join us on tastylive.com, see what we're all about. Guys, 8:30 a.m. Eastern came around and CPI came in warm, but not hot. And I think that was the fear. Bond yields break down over the course of the day. Stocks are able to rally. Gold, silver surge. Oil presses $80 a barrel. That's not a problem, apparently, for the rest of the market. We ultimately see an Israel-Hamas ceasefire deal come together, but that doesn't really cause much of any sort of price action reaction. And the dollar's down across the board. This morning, before all this came out, Nick, from the stock side of things, the banks were doing quite well. JP Morgan, Wells Fargo up after their earnings releases. So XLF is posting fairly sizable gains today. Nick, let's just take a step back and start with you as our returning champion, resident guest. What do you take of this market now? Are the bulls back in town, or is there still more work to be done?
I think so. I think next week is our last sort of volatility event of the inauguration and, the changing of the guards. I think, we see this time, and you have a little bit of volatility that comes into the market. You have all sorts of things that, bid up that volatility. We've had PPI, CPI, we've had employment reports, we've had all sorts of messing around in the bond market and with the Fed. And it's all kind of, even though things are not perfect, so to speak, like you were talking about CPI being kind of warm in the middle of expectations, at least the event is over. And I think that's kind of what this move today has been. I don't think we're going to continue another, 150 points over the next 2 days. Maybe we can, but I don't think that's really the move. I think it was more of just a relief. We got that out of the way. I think the next relief, or at least volatility event, is, come Tuesday when we start getting all the headlines and the press conferences with Trump, which I think are going to bring sustained volatility for the next year or so in both directions. I think it's going to be back to 2020, 2021 trading where you could trade on both sides of the market day to day. I think that's what we're in for, which is great for us.
So volatility comes off the board today. It doesn't sound like you're a believer in that. Spot VIX, which started the week up near 22, is now back to 1610, and it's inching into that territory where simply the best thing to do is be long the market and go fishing. Not quite yet, but we're almost there. Dylan, is this just relief today? Are we just relieved that inflation isn't running away too far, too fast for us, and maybe the Fed isn't going to abandon us this year after all?
I mean, even more than that, I would say we're marking a multi-month low in the U.S. bond market after basically months of bond selling going back to the Fed meeting and really the election. I mean, I think that you're at a point where it's now for Trump to make it like this. It's like if you're wondering, like, what's the bond level for current inflation and growth? Like, here you go. If they found a level, this would be my argument. And now it's whatever the new administration actually does regarding tariffs and deportation will dictate what happens next with the bond market. And yeah, to your point is, to answer your question directly, Chris, it is a green light for the Federal Reserve to continue to do something.
When we look through the data today, what spurs on that reaction? Nick, you said that it was kind of just in the middle, and headline CPI 0.4% month over month as expected. The headline comes in at 2.9% year over year as expected. The core is a touch softer, but what stands out to me is this decrease in breadth, or improving breadth, if you will. The share of overall U.S. inflation running above the 0.2% month over month run rate, because if you're above 0.2% month over month, then you're going to be running at a pace faster than 2.5% year over year, just if you were to annualize that month over month run rate. So right now, the components within the inflation report running above 0.2%, 51%. Okay, that's the same as the prior month. Those running above, say, a 0.4% month over month run rate, that's actually down. 39% of components are at that level compared to 40%. But in terms of what's causing the inflation, right, services, 49% of components are showing higher than 0.2% month over month. That's down from 54% last month. It's a small shift. But instead of inflation broadening out, where, we saw this throughout 2022, right? More and more categories of goods, we're seeing faster and faster rates of inflation. We're starting to see that on the other side. This isn't exactly the place where the Fed wants to be, because a 0.2% month over month run rate is still above the Fed's year over year target at the end of the day. But if we're not advancing beyond that, it means you're not in a territory where the Fed's going to look around and say, we need to raise rates. And I think that really was the fear coming into today. And it is that January OPEX week, Nick. So there's a little bit of unclenching right now in some of these flows. Tom was talking about the flows, or at least the January OPEX here at the end of last call. And I know it's going to be discussed a little bit more in the network tomorrow. But what do you think about this January OPEX right now? That December is the index month, but January is really the single stocks month.
Yeah, I mean, every year even last year, the first 3 or 4 days of trading were, the most volatile downside moves I think we had for most of the year. We had a couple little spots throughout the year that we had some downside moves, but the start of the year was volatile, and that's in part because of the changing in positioning, as Tom was talking about. You have all these market makers that are hedged for these long-term options, the delta changes. You also have this gamma exposure. And as we get closer to expiration, all that stuff has to come to zero. So in terms of like the exposure, you have to flatten out your overall exposure, and it moves so quickly. And I think that feeds into why we have been seeing these big moves over the last week or two, is because you have to have some of that positioning churn to get to a flat point after January, and then that all that stuff has to be unwound, and I think that's part of what's happening right now too. So yeah, I mean, I think I don't think this has been, if you zoom out on the market as a whole, like, it's not crazy to go down 5% from highs. Like, this is completely normal. We should be, everybody freaks out about these moves, and nobody, to the upside, the 5% upside moves are almost to be expected, in from my friend group. I get texts when we go down 1%, but nobody calls me when we're up 2% to ask me if I should sell some stocks. It's almost like expected. And I think this is just a normal rotation and move. Like I don't take it too seriously.
Our resident bear here, who is out for personal reasons today, nothing serious. He did quite well this week, to give him credit for it, right? Russell went and hit its 200-day moving average a few days ago. Ilya was able to get out of, and good thing he did on Monday, because the Russell's about 4% higher from where he got out. But it feels like, from my perspective, this has been a really great rally. We haven't learned anything new about the price action yet. The Russell is back into the congestion zone that it was in through the second half of December. When we look at the S&P 500, it remains in the congestion zone that we've been trading in for much of this year, and we still haven't broken the downtrend off the December and January swing highs. We haven't recovered through the 1 month moving average on a significant basis. The NASDAQ is still held within its downtrend from the December and January swing highs and hasn't reclaimed the uptrend off the August and November lows. This could go either way still, but today is an indication, it feels like, that there is relaxation now in this market. Dylan, you've been a big financial markets beat reporter for a number of years. You covered the market through the global financial crisis, notably. That's how I came to know and adore you. We see here the banks today are making more money than ever before.
I feel like it's very bank positive time in America.
Yeah, is this now the beginning? Like, have we just had the correction? Banks held up better than every other sector as the markets corrected in December and into the first half of January, and now here we are. They're up 2.58% today, doing better than any single index.
I believe that is exactly where we find ourselves, sir. I think it's going to be like bonuses and profits and banking glory. It's going to be like the good old days, like back when money was money and Ferraris were Ferraris, man. I think they're going to see bankers' money flying all over town for a couple of years.
Back in my day, money was something you held in your hand, not a seed phrase you held in your head.
Now, back in my day, it was something you used to buy a Ferrari.
So, Nick, when Lambo here? Are we going back to high soon?
Well, I was just going to say, of course, I think over time you go up and to the right. But I think there will be volatility this year. I was going to mention, though, Goldman Sachs, the biggest beneficiary of the bank earnings this morning, up at 600. You got to think, to just piggyback off what Dylan is saying, is that a lot of the euphoria in this space is pricing in a lot more flexibility in the financial sector, especially with, you
got the big man who's going to throw a party in New York.
Exactly. You're going to have SPACs come back. You're going to have share offerings and mergers and all that good stuff. Like, we're ready to party, baby. The money's back.
The money party's just getting started.
Yeah, there have been some really interesting quotes floating around in the Financial Times. So, Dylan, you can verify this to Nick. We were talking about this immediately after the election over time. Like, it feels like this is going to be the grift market for a little while. People like Chamath are positioning themselves to be allies of the administration. And this is someone who's lost oodles upon oodles of money for his investors in his SPACs in recent years, basically robbing the public blindly.
A vampire. He is a vampire. Of the highest magnitude.
Forget the inverse Kramer ETF. Give me an inverse all-in pods guy ETF.
Yeah,
I will sign up for that. But crypto, generally speaking, is doing well here. It has a very good day today. But the banks too. So, Dylan, in what world, in your experience, when banks
I think the implication is more leverage. First, what's the number one thing that helps a bank? More leverage. Less restrictions on leverage is the number one lever you can maneuver at a large financial institution to immediately add to the bottom line, period. More leverage when there's perceived forced standard deviation risk. Ooh, that is real good money. And so you have a forced standard deviation event with the California fires, which will give you insured pricing, mega pricing. And they're going to sell overpriced risk at higher leverage than we've seen since 2007.
Is that the fire not a short-term headwind for him though? I mean, because you got to
know the fire's a chance to reprice risk higher
for
and
future,
collect more money on all Chicago PNC, New York PNC, Miami PNC, and I can sell more property and casualty than ever before at a lower regulatory requirement for capital per dollar of risk issuance at the highest price ever.
For sure, I agree with that. But what happens with the entire situation there? Like at some point, I mean, it's
taxpayer is going to eat that. It's going to be a scandal.
Think so? So you don't think
it's going to be a scandal beyond comprehension? Oh, it's going to be such a scandal.
So it's going to be like, what was it?
They've already set the groundwork for a state because it was uninsurable by any normal math because of the regulatory caps.
Yeah.
So the only choice that the insurance companies had was to pull or sell the discounted risk, which then the state stepped in with a state entity to provide additional coverage for those who were uninsured or underinsured. But that whole racket is over.
What's the racket?
The racket is falsely pricing it property and casualty insurance at lower rates than accurately reflect the property and casualty risk of that location.
Thus, it sounds like the racket's just beginning.
Higher. What's that?
I think the racket's just beginning. Like, are we ready to have the conversation nationally that we as taxpayers should be subsidizing people who live along coastal regions, wildfire zones in Florida,
Miami,
and California?
New York City, by the way, right in the bullseye of super risk.
Which means if we're going to continue to subsidize them, these insurance companies are going to take those risks less and less in the future. They're not going to be held by the end of a gun.
No. What you do there during the financial crisis, what you do is the irony is you actually reduce the price of the insurance and sell it to everybody because you incentivize more people buying the insurance and then you exist in the knowledge you'll never have to pay. So you actually incentivize more building in more places and that are worse by selling cheap insurance because your spread is 100% because the payout will not be the P&C person because it's going to be considered a national tragedy. That's the implied risk. That's the sort of moral debate. That's the moral hazard, right?
I feel pretty strongly that California, if they try to force these insurance companies to do this, it's going to bankrupt every single one of them.
That's why it ends with the taxpayer. Too big to fail.
So then the insurance companies aren't going to be taking those kind of risks, which means that the only risks they have on their books are the ones that they'll never will not pay out on. So they'll just keep collecting
wider margin deals for them.
Which means like Look at KIE. This is the S&P Series Trust, S&P Spiders insurance ETF, KIE. We're up a healthy amount today, 1.42%. We have taken back all of the losses since the wildfires started. We're basically at the closing high for the year right now for insurance.
Like you said,
companies.
The racket's just beginning. Now everybody's going to buy hazard insurance at overpriced values at higher leverage.
And it's backstopped completely by the taxpayers because you don't see anyone coming in and saying we're not going to
100% margin, 100% margin.
Right. Yeah. Nick, I mean, it feels like this is a situation
Nick looks with admiration. He's like, these sons of bitches.
I'm like,
goddamn.
They got us, Dylan.
Yeah, the insurance companies have us by the balls.
Yeah, you can't beat them. What a great business. Unbelievable.
I mean, these guys.
But this is also the thing like that really like, you guys know where I sit on the political spectrum. I don't announce it every day. People can suss that out by the things I say, but for long-time overtime listeners, you know where I reside. We may not like insurance companies, but the people that staff insurance companies, these actuarials are some of the sharpest math minds around.
They do good math.
They know their math, right? And if they can't turn a buck, they're not going to insure it. They literally... You're only insurable if they think you will not pay out, right? Like that's the game here. We take your money and we hope to never have to pay out on you. We don't think you're a risk, so we're happy to take your money. So when they say no, we're not going to insure you in these areas anymore because we don't think we're going to be able to turn a buck, that is a huge red flag. So who's going to fill the gap? These insurance companies that are going to, they're either going bankrupt or they're completely insulated.
So
and that sucks, but that's the
today was
system that we
arguing
have.
there should be a private insurance exchange to compete with the legacy insurance providers, where the Nicks and the Vecchios and the Radigans can make markets selling fire risk to Malibu. And basically we can compete and participate in making, and what are the chances that Nick's place in Malibu burns in the next 5 years?
0%. Nick doesn't. Like me, Nick doesn't have a place in Malibu.
Nick can't afford to live in Malibu. So if I'm back in the insurance, my premium is going to be higher than whatever AIG or any of the other ones are gonna give you. I mean, I think the idea.
But is your Chicago insurance going up because basically climate risk is perceived, or is a global? Because right now, catastrophic global climate risk or catastrophic natural disaster risk is not part of the pricing matrix of property and casualty. It doesn't exist. It's priced at zero.
Right, because in California, they call it, the insurance companies use CAT models, they're called, right? And
how can you look at what Los Angeles and keep it at zero?
And California doesn't allow some insurers to use the risk of catastrophe for natural disasters in their modeling,
which is the singular primary risk.
Yeah, that's the only problem.
Very odd. Very odd.
Take the primary risk off of the insurance calculus.
Close your eyes. Close your eyes and insure it.
What about what if there's a rat? What if there's a raccoon infestation? They'll pay for that. If there's raccoons in the attic, you can get a claim. But fire, hurricane, can't help you.
So how much, Dylan? How much you think insurance will go up, just generally across
50%?
You think so? How soon? Like now?
Now.
Wow. Okay.
I mean, certainly in the situation, like if you want to buy insurance in California, Miami, coastal, like in the target zones, for sure, 50%. I don't know about everybody, but. And it's got to probably come in because it's going to be overpriced, all that, right? But if you went in today and said, I need a policy, the truth is, I don't even know how you get it. You'd probably have to go to like Lloyd's of London and get a custom contract for your land in Malibu.
Yeah.
Like, I don't think anybody would actually sell you a policy. To Chris's point, like nobody wants the risk.
I'm looking up the numbers right now on how homeowner insurance premiums changed in Pennsylvania and California over the last few years. According to economists in a paper that was put out last year from the University of Pennsylvania, the average California homeowners insurance premium increased by 33%.
But Sacramento has a regulation restricting policy price increases, which is part of the thing. Reason they're pulled it with that, so it doesn't matter the pricing in California because it's regulated, which is why State Farm pulled out, because they were like, I can't. Their actuaries wanted to price catastrophe risk at X, and they were not allowed to do it, so they closed up.
I made a mistake. That's nationwide. In California, home insurance costs have increased about 50% since 2020. And it comes from this paper from the University of Pennsylvania. We can share this. I'll tweet this out later, how property insurance premiums are mirroring the climate risk. This was put out in September. So interestingly enough, Dylan, you say that prices are going up 50% in the natural disaster areas like in California and in Florida. They have
that validates.
So they're either getting non-renewals or the insurance premiums are going through the roof.
Or housing costs will come under pressure, where they'll be actually discounting of. It's a battle because the natural thing, what's going to happen here, not that, we'll get back to this bond market, but housing is going to go up in price and regionally, even because of the shortage.
Right.
Everybody needs a house. Short term, but intermediate and longer term, it'll be a question of whether the value of extremely nice real estate in Miami, New York, and LA, for example, those three, gets any sort of a discount because of catastrophic natural disaster risk is higher.
Where do
Does
we
Malibu go on sale? I don't know. Doubt it.
Where do we move all the celebrities? Where are we putting them?
Chicago. Everybody's going to Chicago.
No way.
Coming to
too
you.
cold.
You're
I
going to
think
get priced out.
Vegas.
No,
or-
the truth is, the real answer to the question is in terms of actual people's moving is primarily as close as possible, right? So Santa Barbara is already, I'm sure, under huge pressure.
Brentwood.
Laguna, huge pressure. Like adjacent is by far. Then Texas and Palm Beach, Florida. Arizona, Phoenix, Texas, broader Southern California from Santa Barbara to San Diego, and Palm Beach.
I mean, I think I don't have any trades on in any of these insurance companies right now, but it really reminds me a lot of what we've seen around some of these isolated events with like a Boeing or a UNH. You know, UNH dealt with the hack last year, and Boeing's, well, it's a little different. They're having planes fall out of the sky. Maybe it's more like what we see with the healthcare companies, Dylan, where these insurance companies have been given a de facto monopoly in the market, and they're too big to fail, right? So
I think that's true.
I mean, what's going to happen here, right?
Taxpayer
I know that
bails it out.
We've heard that the House of, the House of Representatives is thinking about conditioning some of the aid to California based on various reasons, and they did this with Hurricane Sandy as well.
That's
because
political bullshit.
But it did, right? It's not like realistically, that's just posturing. Yeah. And so the taxpayers that are on the hook for these damages, and then who is going to pay for this stuff? So the question of who comes down to, is it going to be the state of California? Maybe. Is it going to be federal taxpayers, people like you and me, Nick?
California state taxpayer who's going to be irate that they're paying for Tom Hanks or whoever, some celebrities, somebody's megaplex is subsidized by the poorest people in California. It's going to be untenable. Anyway, I don't know about the markets, but I mean, for sure, I just think it'd be interesting to watch the insurance market, which is already out of spiraling by virtue of the data. And anybody who buys insurance for property or casualty knows this already. And Trump coming in, who's a real estate developer. I mean, Trump ultimately might look at this as the biggest real estate development opportunity of his life. He's the president of the United States. It's the entire west side of LA. He's going to build Trump land over the next 30 years.
The insurance company's performance kind of speaks for itself here, even though it's a little bit, blow-offy here, like many other things. But it's a day of fairly good breadth overall, right? We look at the sector performance. We cover 25 here, or at least track 25 here. Only one is down, and it's consumer staples. Not exactly a group that you look to for leadership during bull markets. So I don't know if that's necessarily a bad thing.
Yeah, but I think like your point is, it's the best time ever to be in the insurance business because you're about to get too big to fail. Plus, you're about to get higher rates.
Oh,
which is why you had a bid in the insurance companies today. Insurance
companies, they do great with higher rates, so not a problem at all, right?
And they love lower claim values.
We were talking about this, Dylan, yesterday. How we're starting to see discretionaries perk back up. I noticed that. Did I get filled here today? I didn't get filled today. I was trying to buy some calls here at XOY. Not getting filled, which bothers me. So we'll find another way to crack this egg.
And I's number one plan for the new year was short XLY.
I know. That's why I was looking at long. Yeah. Well,
we were. I figure
you guys were right, and then it goes into this falling wedge situation, and it hits that uptrend from the August and October lows, and then the wedge is now breaking out today. So I go, okay, well, this looks like something to buy. So I tried to buy some. I couldn't buy the calls that I wanted to buy. It's pretty, it's not exactly a cheap stock, so it's not going to go in size and buy the equivalent in shares. So we'll take another crack at it tomorrow. But XLY as consumer discretionary up 2.54% today. It's at the top of the heap. The only things that outperformed it are the banks. KBE up 2.61 and XLF 2.55%. Home construction had a nice turnaround. ITB up by 2.54% as well. And, somewhat notably here, yes, it was moving up today in part because yields come back in, and a drop in mortgage rates certainly helps. But it also was moving up because of the wildfires. Home builders are going to be in there, and someone's going to have to rebuild the area. It may take a few years. Otherwise, I'm looking
30 years.
Well, the California, we'll see what the California Coastal Commission has to say about this. which is so interesting because I was just reading a report from the New York Times yesterday about the satellite imagery around these fires. And they've basically been able to figure out, like, maybe it was a campfire that was set around New Year's Day that wasn't fully put out, yada, yada, yada. But what makes this area really fascinating is that several years ago, the Los Angeles Department of Water was given a contract to take out and clear some of the brush. And while it's in the midst of clearing some of the brush, a hiker comes along and sees that they're clearing out brush in an area where there's this endangered flower. And so what happens? He sends an email to the this utilities company and says, like, hey, you guys should stop doing this. This is endangered. And the next week when he's out on his hike, he sees that they're still clearing the brush. So he files a report with the Coastal Commission in California. The project gets shut down. The company is then forced to pay $2 million in fines and shut down the brush clearing project. Incidentally enough, all those flowers are dead now because they were just burned to a crisp. All of the wildlife in that area is now dead. And Dylan, I'm thinking of that Meta project where they wanted to build a nuclear reactor to help power one of their data centers. An environmentalist group got it shut down because of some endangered butterfly that lives in the area.
The Marines out there at the Marine base near Joshua Tree, they have to stand down when there's the pissing turtle. You can't make the turtle pee because if it pees, then it dies because it dehydrates. You can't. So they give all of our warfighting Marines in their most aggressive condition at 19 years old or 18 years old, but then they have to stand down when the turtle is sighted because you can't scare the turtle.
I don't believe you, but
that's why would I make that up?
but that sounds too ridiculous to be made up.
Yeah, I'm telling you, you don't. They're full war games in the desert, and then they're like timeout, turtle. It's like a Monty Python.
It's like, do we want to win the war or win the battle? Like, which one do we care about? And climate change, if you really think it's an existential crisis, you may have to chop down some areas to clear the brush so that we don't have wildfires that destroy human population centers.
They use herds of goats.
Yeah, release the goats.
In Laguna Beach, there was a feature of town was the goat herder was always rocking the goats, and that was fire prevention. I don't know. Listen, it's easy to sit around and talk about what these people should have done or whatever. It's the point is,
of course,
property and casualties getting repriced, and for Los Angeles, it's like a permanent issue. But it's a good time to own a bank, apparently, between the Trump dereg vibes and the risk markup vibes.
The banks look good. The insurance companies look good.
Catastrophic risk markup vibes.
Semiconductors are maybe trying to break out again. We saw this at the start of the year where they made an attempt to break the downtrend from the July and December highs. Today, they're poking back above that trend line again. Nick, NVIDIA's been the general in this market. I know that tariff fears are playing through here, so I suppose I should take your position, Tom's position, Dylan's position more seriously. I don't know. I want to round back to what you guys were saying at the start of the show. Am I underpricing what Trump is going to do next week? I feel like we're talking about how this is going to be a new administration with new rules and new regulations and this, that, the other thing, but do we really think it's all coming next week so soon? I feel like the odds of that maybe let's slow our roll. Why am I wrong, Nick?
Maybe it's not all coming next week, but I think we're going to have the visibility. I think it's going to be a lot of press conferences and talking and words. And I think even the tariff stuff is more posturing than it is real. I think he just tries to shake things up. And the Greenland thing and the Panama Canal, it's all just to kind of shake things up. And I think that is the volatility. I think it's the same as every other year where, politicians in general just drag their feet forever and ever and ever. And I think Trump specifically does a lot of talking, which is, will bring about some volatility in both directions. I mean, you remember the days in the pandemic when you'd have after the market closed press conference, and the futures would move 3 or 5% up or down on whatever word he said, and they'd be back to flat in overnight session. You wake up and it's like nothing happened. I think that's what's coming back to the market at least in the short term. I think that's kind of what the potential is.
Mm-hmm. Mm-hmm.
I agree with that. I mean, I think Trump's best case scenario is a daily press conference with 100 million viewers.
Those were good.
Yeah,
every day at 4:30.
4:30 in the morning on Twitter.
Thing.
Right.
He would be live at 4:30 with 100 million. A giant audience. That's all he cares about.
Yeah, he's an entertainer at heart. That's for sure, and that's something that he likes the attention. Guys, this just crossed my my feed here. Hindenburg Research Group, the notable short sellers, are shutting down.
Wow.
Dylan, that's kind of a big deal. Dylan, we've been jocular in the past when big bears, get taken out to the woodshed when they throw in the towel on. They're like, this is going to be a 20%
Maybe
down
this
market.
is the top.
That feels like a big sentiment signal out there. Hindenburg Research shutting down effective immediately after their last short call or Ponzi scheme identification is filed with regulators, and that day is today.
Well, they had Carvana. Wasn't Carvana one of theirs recently? That I know they had MicroStrategy as well was in that mix.
Let's see what ChatGPT says. I'm sure they have an answer. What are Hindenburg?
I think Carvana was the most recent one, and they wrote. I think when the report came out, it was in the 250-ish, and it dropped all the way down to 180. I don't know if it was them or Andrew Left or one of the other short sellers. I just remember that being a headline.
So the most notable, according to ChatGPT, Nikola Motors. Hindenburg's research exposed alleged fraud, including the infamous rolling truck stunt, leading to a significant drop in Nikola's stock price. Adani Group, which is the Indian company, raising serious concerns about the company's financial practices. Clover Health.
That was Chamath. Of course.
Of course it was. I knew that name from somewhere, Nicholas. Renovero, I don't recall this one, the biotech company last year, and then Temenos, a Swiss-listed fintech company. I remember Nikola and Adani, and I remember Clover. I appreciate you playing into that bit. But yeah, this is like a sentiment indicator. When a famous short seller decides it's time to throw in the towel, you're probably at a short-term exhaustion point. And that worked out really well in July 2023. Who is it? Mike Wilson, the CIO of Morgan Stanley at the time, someone who turned bearish in October of 2022. Then
wrote a 70% face ripper to the upside.
And then got bullish in July 2023. Yeah. It was like, hold on a second. This guy's been on the wrong side of the move for the last 9 months. And now he's turning bullish. And then, of course, the market declined. And when did he turn bearish again? In the last week of October 23. And Dylan, we had a lot of fun with those calls. And we're like, hey, I guess it's time to get long again. So I don't know, Dylan, in your experience, do you think, let's have a philosophical discussion here. Okay. Do you think that short sellers, have they provided utility to this market? They were demonized a lot around the global financial crisis.
I mean, for sure they create value. I mean, I think that the question is, it's like asking if short sellers create value is only, I guess, a function of the degree to which prices reflect reality, because there's always some number of companies that are grossly overvalued, mismanaged, and in need of compression and a reality. And it's only in the two-sided market, as my friend Nick would say, where people that are skeptical of your grand story of prosperity and glory, that the truth can be revealed. And so I guess my bigger issue, so for sure short sellers have value, but when you got to borrow money to be right at the right time, the issue is so many short sellers are right all the time, and then it's just the wrong time. And so it's like having the hypothesis or the thesis is only the beginning of your troubles. even if you're validated in your thesis. And that's why it's sort of so ruthless, I would say, in its elimination of those who dare partake.
Yeah, but that's liquidity. Short sellers are liquidity for all the other people that want to get in at whatever that current price is. It's a valuable thing. I think being a activist short seller is much like the conversation we had on the insurance companies. It's like, sure, they're needed, but I don't want to be the activist short seller, because the tail risk is you're dead. I mean, like, you can't, you have one wrong move and the upside is unlimited and the downside's limited. Your upside, meaning the stock going to whatever number, can only be 100%. So you take 500% of risk and 100% of potential reward. And, that just doesn't, just over a long periods of time with positive drift and liquidity gain.
Right. But do you think if Hindenburg's going away, Nick, is that an indication of something beyond itself? Is it just an indication short selling is hard, or is it an indication of something related to the market beyond that comment?
I think it's just short selling is hard, and especially because they need to be public to get, like a lot of the moves that they catch are due to their reporting and the publicity of it, right? Hindenburg is in their position before they put their report out saying this is a fraud. I mean, that is part of the game. I think it's just ultimately that you can never outpace the upside. The person that was short Tesla for years and years and years, how do you do that? Or even Carvana. Carvana is one where I've seen some sort of report out on the accounting fraud or whatever. That stock went from $7 to $250. Even if you got in a year ago when it was at 150, you're still out 100% on the way up. It's just a hard game to get, to be in on the move at the right time.
I think you could also, you only know retrospectively, but so yes, it's hard. Yes. But also those who have huge amounts of money and do it professionally are among the most successful, we would think. Thus, they are giant people doing it with other people's money.
Well, can I
and if they can't do it anymore, where does that lead? You could argue that the market it's a top. Now you want to get short.
So in his note, Nate Anderson, the guy who runs Hindenburg Research, said that it's just time for him to move on. But I think this is, a fantastic note in here. Not talking about the returns, but in his goodbye note, he says, quote, "Sometimes this meant taking big swing and taking on fights that are much bigger than any of us as individuals. Fraud, corruption, negativity often seem overwhelming. Early on, a sense of justice was usually elusive. When it happened, it was tremendously fulfilling. It kept us going when we needed it. And boy, did we have an impact. Eventually, more than I imagined was possible, nearly 100 individuals have been charged civilly or criminally by regulators, at least in part through our work, including billionaires and oligarchs. We shook some empires that we felt needed shaking." That's the way to go out as a short seller. You guys expose so much fraud. Not only do you make a ton of money along the way, the people who are in your path are going to jail. That's true justice. And so, yeah, people like that have a place in the system because clearly regulators aren't catching them. And, how does Enron get by? How does Arthur Andersen?
And there's 1,000 frauds happening right now in front of our eyes. We just don't know which ones yet.
We haven't yet, exactly. So the work is to be done. And that, I think, leads to efficiencies in markets, right? We want efficient allocation of capital. It's like, if you can only buy something and can't sell it, you're kind of in a tough spot. If you don't have full information, well, then you're going to make bad investment decisions. So yeah, Hindenburg Research has obviously had an impact. It's had some big hits. It's had some misses, but that's every trade for everyone. And people short the market around here, don't we? Anyone ever buy a put in the S&P 500? Right? That doesn't make you evil. As it were, though, we can move around the horn. Gold, silver, as we look at this trading day here today on that daily chart, continuing to press up, again, trying to poke outside of that downtrend that's defined price action really since the election. Silver has a ripping day up 4.1%, which is nice. Copper up another 1.23%. It's been a rip this year so far, off nearly $4 a pound. But oil is where my concern lies for this bull market rally, gentlemen, because today where oil is pressing its not just highs for the year, but the highs that we saw for all of last year. And coming into today, oil had a near perfectly positive negative correlation with bonds, negative 0.96 rolling on a 5-day basis, 1-week basis, and had increased to negative 0.82 on a rolling 1-month basis. So if oil keeps going from here, yeah, this was a nice rally in stocks and bonds today, but this feels like the widowmaker, if you will. Like this could prevent us from getting much higher. Dylan, you've been the resident fader here, and I know we've gone back and forth on this in recent days.
I mean, sure is tempting, right? I would love to get a put going here, but I don't know. But I don't understand what this is going on. I don't know. I don't understand.
But to your credit, you've been saying that for the last $8. You've been saying this isn't like the other types of rallies that we saw over the past year. It's not geopolitically induced. There isn't enough volatility there. You can't stand in front of it. I don't want to fade this just yet. So I'm going to ask you this question today. I've been asking you every dollar for the past few days. Is this the place to fade oil yet? Or
why?
Are you okay? Why? No reason.
At least get through Trump. At least get through
drill,
Trump.
baby, drill.
What drill, baby, drill? But you don't know. You don't know. Because you're gonna have increased. Well, you also have, because you've got that. I mean, the interesting thing, actually, when you really look at this, and why it's sort of fascinating, is actually you have the Hamas ceasefire headlines on a day when oil's up again. What is this? Another big up day on evidence of geopolitical peace, not tension. I mean, you could talk yourself into a put. Because it's so contradictory.
Then is the market saying that this is
not geopolitical? It's economic. It's demand and inflation is the only argument.
Dylan, can a related bet? You say this is a day where there's peace in the Middle East. Can I take the under on this being lasting peace in the Middle East?
Not with my money.
Okay, all right. Just saying. Listen, just seeing if you're willing.
Saying it is the headline du jour, sir.
It is the headline du jour. Does this mean there's gonna be more risk? I think that this is really just, listen, if we're getting this Israel, Hamas, Iran, Hezbollah situation finished up, then seeing something perhaps with Russia and Ukraine also becomes likely. And if we're getting a ceasefire there, Dylan, then our thesis on where the money goes after the sanctions end, UAE, another high
Let's
here
get in
today.
there, baby. That's the secret. That's the sidewinder. The Dubai Express, baby. It's going to be a boom town. I'm in there.
Breaking out of a multi-week range right now, multi-month range that goes back over the course of a few years. Nick, our working thesis here on Overtime is that once these sanctions end, all the Russian money that's been trapped in Europe and in Western countries, it's going to leave those Western countries. But it's not going back to Russia. It's going to go to the financial intermediaries that are basically the neutral players throughout this crisis. Your Switzerlands, your Turkeys, your Dubais. And the countries that have benefited from the sanctions, like India, because they've been refining all of the oil, those are the ones that are going to suffer. So we've had this, working thematic idea here on Overtime, like a long UAE, short INDA type of position, various exposures.
On an end of the war with Russia, end of sanctions kind of vibes.
And sanctions kind of, yeah.
It's worked swimmingly over the last couple months if you've been in this.
We're pretty proud of ourselves with that.
I like that story. I like that narrative. Seems
very
reasonable.
appealing. Yeah.
Yeah, my big macro plays for Trump's election are short European equities, EZU, EPOL, short INDA, long UAE. For the European stuff, and they're up a little bit in recent days, but they are still down from the election. Technically, are we still down from the election? Let's just confirm that. So I'm not. Yeah, we're still down from the election. Okay, good. So we're still about 2% lower than we were prior to election at EPOL. But this Polish ETF, for example, Nick, if Poland wants to sustain the war and Europe wants to sustain the war, Poland is going to have to strain its finances more than anyone else on the defense front because they're the border country. And Europe is already an overtaxed population. So if you're going to do anything to increase taxes or spending, you might have to cut social services, which could hurt economic growth, or you're going to have to increase debts, which are going to strain the finances even more. And we know how the country's finances in Europe are so closely tied to the banking sector. So Trump ending aid to Europe is going to stress European credit. And, the money's not going to go into growing economies. It's going to be going to growing the defense budgets. So, Trump could be a really big game changer, but it's been playing out since November. And that's why I have trouble wrapping my head around what does next week represent beyond the official coronation of Donald Trump
capital
as the next
flight, potential capital flight from Western Europe.
That could be the start.
And more leverage in New York on Wall Street.
More leverage in New York on Wall Street. Nick, we'll leave you the last words here today as we wind down this episode of Overtime. We're heading into the second half of the week. We've gotten through the big event risk and CPI. What are you looking forward to? Is it earnings? Is it a speech from a Fed speaker? Is it the latest airdrop for Fartcoin?
It was up 20-something% today, one of the best performing assets of 2025. So, don't sleep on Fartcoin. As the boys say, and the people in the chat, hot air rises, of course. So just be careful of anything short in Fartcoin. I'm interested in TSM earnings. You got them coming tomorrow morning. NVIDIA is near the lower end of where it's been trading. I think there's a little bit of a catch-up trade there. And if we're going to leg higher, I think it's on the backs of an NVIDIA and maybe coming from good numbers from TSM, which early reported already good numbers. So maybe that's the play. That's what I'm playing for or hoping for into the end of the week.
I still have 37 days to go. Long 260, short 270 calls here in SMH. So hopefully you are correct. But it looks like we're holding support right now. And I'm very much looking forward to those earnings. Listen, the tariffs are in play there. We've seen the headlines come out. They've weighed them down. Dylan, I suppose we have time for one more last word, and it's not going to be me. Take us home.
Oil's telling you something. Because for oil to have a bid when the headlines are peaceful, I have that. But the only thing I can say is, that the inflation is hotter than we think, and the economy is stronger than we think. It's the only possible answer.
U.S. economy is booming, at least for now.
So get ready for the super glide, baby. It's game on. My boy Nick Batista is about to have a good time.
I'm ready to go. I'm ready.
See, he's ready.
With that, Overtime is now out of time for this Wednesday, January 15th, 2025. We'll be back tomorrow, same time, same place, as we are every Monday through Thursday, right after last call. For Dylan Radigan and resident guest and our new champion, Nick Batista, I've been Chris Vecchio. We'll see you tomorrow. After a brief break, Macro Money is coming up next with Ilya Spivak. And be sure to tune in later tonight. I'll be back with Victor Jones for The Price of Truth.
What a year it has been. 2024 has obviously been a year of many, many headlines, tons of market volatility, explosive moves for a whole host of financial markets. And it now winds up on a quiet week with not much macro to speak of and a holiday in the middle for most global markets. So what we're going to do here on Macro Money is look ahead to what is coming for 2025. I'm Ilya Spivak, head of global macro here at Tasty Live. And what we're going to do here is first, we will review how the year has progressed so far. Take a look at some almost over statistics for market performance, and then see how things begin to look as we enter the next calendar year. So this is the performance year to date. This is December the 23rd that we are looking at this 2024. So not quite the full year, but almost certainly, and comparing it to 2023. So we can see stocks on the whole, had another year and a year of similar performance in 2023 versus 2024. Looking at the S&P 500, NASDAQ, for all of everybody's screaming and stomping about its outperformance, it's actually done less well this year than last, though, of course, still a very impressive rise of nearly 28%. Risk sentiment at the other end of the spectrum getting a big boost, looking at Bitcoin up 120% as compared with the prior year's 157 almost. So a bit of a slowdown there, but certainly a dramatic increase again. And that speaking to the risk appetite on display in stock markets, but of course amplified by a less liquid speculative assets volatility profile. The interesting thing here happening in the meat of the table, though, so we can see yields basically unchanged at the front end, but a touch higher on a year when the Fed is actually cutting interest rates. The 2-year up 2.3% on last year. That's most likely because, of course, speculation for rate cuts was already well underway toward the end of last year. And this year we got just about the rate cuts we were expecting. So yields are even a touch higher. The 10-year showing a much more significant rise. So rates at the longer end of the curve steeply higher by comparison, 18.8%, almost 19%. Curiously, in that environment, the dollar is stronger. Euro down 5.7%. The yen, the most interest rate sensitive of the bunch, down 10.4%, even as the Bank of Japan started raising rates, the only major central bank to do so. And even stranger still, against an environment where yields are higher and the dollar is stronger, gold up 26.8, almost 27%. This is an asset that hates a stronger dollar, hates higher yields because it is a natural foil for fiat currency, and it yields nothing. So when interest rates go up, gold is typically on the receiving end of selling pressure. Not this year, though. There's an interesting recharging here happening, and the mix of assets here seemingly telling us an interesting story. Crude oil, before we go on here, down for the second consecutive year, albeit less so, and that's despite ongoing geopolitical stress. This telling us that perhaps that geopolitical stress, not much of a disruptor for crude oil markets beyond general media headlines. And so the implications probably limited now that geopolitical risk seems biased to be more contained going into 2025 versus less at the beginning of the previous year. The situation in the Middle East, the situation in the Russia-Ukraine theater seemingly not inspiring any kind of concern for crude oil, and it's marching to the beat of its own drum, and that beat is leading it a touch lower. But the story What a year it has been. 2024 has obviously been a year of many, many headlines, tons of market volatility, explosive moves for a whole host of financial markets, and it now winds up on a quiet week with not much macro to speak of and a holiday in the middle for most global markets. So what we're going to do here on Macro Money is look ahead to what is coming for 2025. I'm Ilya Spivak, head of global macro here at Tasty Live. And what we're going to do here is first, we will review how the year has progressed so far. Take a look at some almost over statistics for market performance, and then see how things begin to look as we enter the next calendar year. So this is the performance year to date. This is December the 23rd that we are looking at this 2024. So not quite the full year, but almost certainly. And comparing it to 2023. So we can see stocks on the whole had another year and a year of similar performance in 2023 versus 2024, looking at the S&P 500. NASDAQ, for all of everybody's screaming and stomping about its outperformance, it's actually done less well this year than last, though, of course, still a very impressive rise of nearly 28%. Risk sentiment at the other end of the spectrum getting a big boost, looking at Bitcoin up 120% as compared with the prior year's 157 almost. So a bit of a slowdown there, but certainly a dramatic increase again. And that speaking to the risk appetite on display in stock markets, but of course amplified by a less liquid speculative assets volatility profile. The interesting thing here happening in the meat of the table, though, so we can see yields basically unchanged at the front end, but a touch higher on a year when the Fed is actually cutting interest rates. The 2-year up 2.3% on last year. That's most likely because, of course, speculation for rate cuts was already well underway toward the end of last year. And this year we got just about the rate cuts we were expecting. So yields are even a touch higher. The 10-year showing a much more significant rise. So rates at the longer end of the curve steeply higher by comparison, 18.8%, almost 19%. Curiously, in that environment, the dollar is stronger. Euro down 5.7%. The yen, the most interest rate sensitive of the bunch, down 10.4%, even as the Bank of Japan started raising rates, the only major central bank to do so. And even stranger still, against an environment where yields are higher and the dollar is stronger, gold up 26.8, almost 27%. This is an asset that hates a stronger dollar, hates higher yields because it is a natural foil for fiat currency, and it yields nothing. So when interest rates go up, gold is typically on the receiving end of selling pressure. Not this year, though. There's an interesting recharging here happening, and the mix of assets here seemingly telling us an interesting story. Crude oil, before we go on here, down for the second consecutive year, albeit less so, and that's despite ongoing geopolitical stress. This telling us that perhaps that geopolitical stress, not much of a disruptor for crude oil markets beyond general media headlines. And so the implications probably limited now that geopolitical risk seems biased to be more contained going into 2025 versus less at the beginning of the previous year. The situation in the Middle East, the situation in the Russia-Ukraine theater seemingly not inspiring any kind of concern for crude oil, and it's marching to the beat of its own drum, and that beat is leading it a touch lower. But the story in stocks, coupled with the story in rates, coupled with the story in currencies and gold, tells an interesting tale. It tells a story of a robust U.S. economy, which despite Fed rate cuts has driven up yields because economic activity has demanded that rates be higher, especially down at the longer end of the curve. The dollar has continued to benefit from those higher yields as its yield profile against other currencies has looked more attractive. And gold has seemingly found a reason to go up, disconnected from geopolitics, because of course if it was a haven and if it was behaving as one, it would show up in crude oil gains. That, of course, the chief geopolitical risk on the board this year. And clearly, if oil doesn't care, why should gold? And indeed, gold is up with stock markets. Not much of a haven then. But gold seems to have found its support in the situation happening in China. They've bought a ton for their reserve account. They have resumed buying in November after a pause from April. And that's been an important reason why gold has managed to hold up, even as the dollar has strengthened, even as yields have gone up. But that increase in yields and that stronger dollar with stronger stocks seems to speak to the very impressive performance of the U.S. economy. As we look here, we can see as of December, the U.S. economy raging higher. The performance here being estimated by PMI numbers. They're more timely than GDP. We can see here that toward the end of the year, the composite index, which takes in both manufacturing and services, it's moving aggressively to the top right side of the chart. As a matter of fact, that is the fastest growth that we have seen in the U.S. since March of 2022. So a very significant acceleration here. As ever, these PMI numbers work around a center line of 50, where that's neutral. Above 50 is growth. Below 50 is contraction. Manufacturing, we can see, is still in contraction, albeit at a modest speed. The further you go under 50, the faster the contraction. The further you go above 50, the faster the growth. So we can see a very buoyant service sector is pulling the U.S. economy higher, and slight contraction in manufacturing is not holding it back. That ostensibly helps to explain how you get very strong stock markets, you get higher yields and a stronger dollar, even as the Fed cuts rates. But when we look at the situation globally, we find something much more circumspect. Take a look from the beginning of this year for the global PMI numbers that include the U.S., of course, but also the other economies. And what we find is we haven't done a whole lot. The composite index here, only very little change. There was a pop in the first half of the year. That pop has since fizzled. And so the pace of economic growth is just about where we started the year. It has seemingly stopped improving. And that's because the global service sector has taken quite a few steps back since the middle of the year. And manufacturing, although it was much worse earlier than it is now, it seemingly has returned back to the neutral reading of 50. It nevertheless remains downbeat the world over. So what's going on here? Well, we see here, of course, that the U.S. is mainly powered by its service sector. And we know that most of U.S. imports, that is from the world at large, are on the good side. Services are mainly furnished by domestic firms. So a lot of this boom is staying inside the U.S. and not spilling over, even to very close proximity, very integrated economies like Canada. And so this is why the global picture looks much more anemic than the U.S. one. Now, global GDP growth is mainly dependent on three core economies. The U.S. is, of course, the biggest one. Then there is the Eurozone and China. We can see here that the remaining 42% to those three economies, 58%, are mainly vendors that depend on demand from the former three. So think Canada and the U.S. or Mexico and the U.S. Think Southeast Asia or the commodity exporting countries in South America, Australia as well, New Zealand as well, and China. think Central Europe, Nordic Europe, as vendors for the Eurozone. And you can see that these three economies are really the linchpins of where growth comes from. And we've already seen that the U.S. is very strong. The situation in the Eurozone is much more sobering, as we can see. The regional economy shrinking for the past 2 months, the composite index sub 50, even as services rebound in December. The situation in manufacturing, as it is globally, anemic, but the rebound that we saw in the first half of the year, and arguably a big reason why this global number started to pop by mid-year, that has fallen away. And now the economy is again flirting with recession-like conditions. The situation in China is one of standstill. These numbers run through November. We haven't seen December's figures yet, but as we can see, these are official figures here. This is China's reopening from zero COVID restrictions. We get a brief pop in service sector and composite demand. The pop in manufacturing much more modest. And since then, after just basically a quarter of an initial upswing, the economy drops and settles into standstill. These numbers are barely removed from the center line at 50. So in one major node outside of the US, we've gone basically nowhere in 6 quarters. Indeed, the economy is in deflation mode, where real GDP is outpacing nominal, suggesting that there is virtually no demand to speak of. And in the other, we've returned to what can become recession-like dynamics. Once again, after this shallow recession-like dip late last year. So the world is operating on what is essentially one leg of the stool. It is the U.S. that is powering global growth, and there is no plan B as we go into 2025. Where this becomes a challenge is, in the U.S., inflation has stopped cooling and is starting to tick up a little bit. The most recent numbers for the Fed's favorite inflation gauge, the PCE index, showing that we're holding at 2.8% on core, and the headline number even moving higher, albeit a little bit less than expected, to 2.4%. Now, this is, as ever, we can see having to do with the service sector being as strong as it is, core services where that inflation lives, core goods still slightly negative in their contribution to price, which of course tells you why the U.S. boom isn't spilling over, as we've just mentioned, and housing still largely locked up by what the Fed has done with hiking rates as sharply as it did in 2022. So that bit is waiting for the central bank to cut rates more and perhaps unlock this market. But as we start to get a tick up in core inflation, and indeed at 2.8%, what this means is essentially we have not seen disinflation in the U.S. of any kind since June. June was the last time that we ticked down on core year-on-year PCE. Since then, for the subsequent 5 months, inflation has not fallen. And so what we understandably have seen as a response is the Fed has become more hawkish. The markets have called for it, and the Fed has responded. We can see here that where the policy curve looked like it was going in September has been adjusted substantially to a more hawkish setting, even as the Fed began to cut a little bit in the waning quarter of the year here. Of course, 50 basis points cut in September, a 25 basis point cut in November and December, respectively. Nevertheless, the path forward now much shallower. Rates expected to be a full 100 plus basis points higher, closer to 4 than 3 by the end of the year because inflation has proven stickier. Now, it's possible that the markets have overcooked this a little bit because we can see that since mid-November, U.S. economic data has actually been cooling relative to forecasts. So maybe this adjustment has gone a little far. Maybe the markets are a little bit too hawkish, bonds a little bit too weak, rates and the dollar a little bit too high. But none of that changes the inflationary path. So although the markets might be wrong by a little, they're probably not wrong by a lot, and they're probably not wrong about the trend of adjustment here. So we're looking at structurally higher rates next year in the U.S. than we thought even 3 months ago, 4 months ago, and by a significant margin. This, of course, represents a problem not just for the U.S., but for the world over. So we can see here in the latest numbers from the Bank of International Settlements, and 2022 is the last time they had an update. There'll be another one next year. They do this every 3 years. But these numbers don't change terribly, especially when the disparity is this large. Notice almost all global monetary transactions are settled in the U.S. dollar. Those of you that have heard various chatter about the BRICS maybe coming up with an alternative should look at this sobering total here. This is all of the turnover moving through the BRICS, of which, as we can see very clearly here, most is China. And everything else, India or Russia or indeed some of the others are clearly a pittance comparatively. Here's South Africa right here. So, and of course, there's Brazil. So most of what's here is settled in dollars, and that's because the dollar is so liquid that it is sometimes cheaper, even when there is a bilateral deal to transact from one non-US dollar economy to another. It is cheaper sometimes to trade that currency for dollars and dollars into the third currency versus to do a bilateral deal, because the liquidity of the dollar is so abundant that that's the cheaper way of trading. So not surprisingly, almost all global commerce is settled ultimately in dollars. And what this means is that if the Fed gets a little bit more hawkish and rates don't come down by nearly as much and dollar credit is more expensive, then global credit costs are higher in general. And we can see that as we look at the way that an average of interest rates from the key economies in Europe and the Asia-Pacific region, Germany, UK, Australia, Japan, the top 4 outside of the US, how their interest rates have moved in lockstep with the US 10-year, even as central banks in the UK and in Germany have cut. The Bank of Japan has hiked. The Bank of the central bank in Australia, the RBA, they've done nothing. But even as that has happened, the rise in U.S. yields has brought a rise in the average of the other 4 of the alternatives. And that just tells you how ubiquitous the dollar is in global trade. That, of course, sets up a very interesting situation for 2025, where the robust performance in the U.S. means higher rates in the U.S., but also higher rates on weak economies that are not seeing the boom that the U.S. is seeing. Moreover, since the world is dependent on a single point of failure, the U.S. economy's economic strength, it is certainly a point of interest that interest rates are set to be higher there, even just locally, because, of course, that would perhaps start to hold back U.S. growth, and to that extent, hold back global growth because there is no backup. So the risk to global economic performance is a significant thing to keep an eye on, and a significant risk for markets as the calendar turns to 2025. Moreover, the stock of global growth is huge by any stretch of the imagination at a time when interest rates are going to end up higher than expected, it would seem. We can see here the full breakdown from the IMF. We find that in debt to GDP terms, because of course debt is not scary in absolute, it is only scary if you can't afford it. And debt to GDP tells you how affordable is the debt, are you producing enough economic growth to service it? And of course, in the COVID years, we can see there's a massive surge for global debt as well as for the major economies, the emerging markets, the US and China. The change in global debt was significantly lower in the subsequent years because inflation was roaring and inflating that debt away relative to growth. Well, that seems to have stopped for the world in 2023, where public debt is starting to grow a bit. That's mainly powered by what's going on in the US, of course, and China, and to some extent, emerging markets. But we are now in a place where inflation has come down a lot, almost everywhere, from double digits or close to them, to levels that are much closer, if not quite at, central banks' targets in the sort of 1 to 3% range, depending where you look. And with that, the shaving away of debt relative to GDP, so the affordability improvement that we saw here and here and here and here is ostensibly over. If you were to find yourself in a global scenario where the US buckles under higher rates, where already weak economies outside of the US have to deal with those higher rates without the benefit of stronger growth, you start to see how a treacherous debt risk starts to emerge. This is made that much worse because this particular U.S. tightening cycle has been for a rude awakening next year as markets digest all of what's ahead. You can follow me here and, of course, opining on the platforms formerly known as Twitter as well as now on Blue Sky at Ilya Spivak. Thanks for watching. Have a great holiday, whatever you happen to be celebrating. Macro Money will be back on Thursday to finish out the week.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4 grand. which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
And the jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
All right, we're back. Tasty Crypto Show. I'm Ryan Grayson. With me today, Shelly Van. Shelly, how you doing?
I'm doing well, thank you. How are you?
I'm good. Welcome back to the show.
Thank you. It's cold today in this office.
Yes, and cold outside. Yeah. Other than that, you're well.
I'm good.
Good. I'm excited to have you back. We have a lot to talk about today on the heels of a new kind of content product that we sent out. If you're on the Tasty Crypto email newsletter and you receive Next to Orange, our email every Saturday morning, well, we have a little surprise for you. We have expanded the content, sending out a midweek market update, kind of data-driven. I would compare it for those in Tasty Nation that are familiar with cherry picks. I would compare it to that in some ways. You know, we're trying to take that kind of data-driven approach. But we're going to talk about some of that today. If you didn't get this email, you want to get on the newsletter list, you want to start to receive some of our content, go over to tastycrypto.com and you can sign up, or you can hit the sign up link, tastycrypto.com/newsletter. Right there in the chat. Before we get into what's going on in the market, nice bounce in Bitcoin and elsewhere here today, Shelly, and talk about what we see and what we wrote about in that email. We got to first shout out the chat.
Absolutely. What is up, chat? I have a very weird question to throw.
For the chat?
Oh, yeah.
Okay. Scared me for a second.
Oh, no, it's for you too. And this is a shout out to my sister because our father has a very noteworthy sneeze.
Okay.
And like it
shakes the windows.
Oh, it shakes the whole block. There'll be like neighbors down the street if he sneezes. Oh, bless you. So we were trying to spell the sound of his sneeze because it's very, very distinct, like S-S-U, but like his whole body's involved. But so this is how my brain works. I'm a weirdo. We know this by now. Tasty Nation may not know, but you know, hello. I have been in the office now for like 3 months-ish.
Yeah.
3.5 months.
Yeah.
And someone over on the trading desk side has a very funny sneeze, and it's like an ee-hoo. So as people sneeze, I've been like writing them down. Weird. So I want to know in chat.
How many have you written down?
Like 5 or 6.
Okay. So there's, I mean, everyone has a distinct sneeze.
Yeah. So I want you to
Okay.
think about like how would you spell the sound of your sneeze? But chat, I want to know
That's a tough one.
how you spell your sneeze.
Okay. How you spell your sneeze. I love it.
There's a very classic achoo. over on the trading desk as well.
Ooh.
I know.
Ah.
Like now I need to match who's sneezing, whose sneeze spelling goes to which person.
Yeah, we're gonna quiz you.
Yeah.
It's good to have you back on the show. I like when you're here. Your whole family shows up in the chat. All your friends from all over the internet. Everybody's here. So, shout out to, I guess, Shelly's network.
Oh, thank you.
Yes. Where do you want to go today? We've got Bitcoin at 99.6. It feels like 2 days ago we were worried about this going to 75. Less concerned today. ETH back at 3,400. Solana's back above 200, just barely, but up 8% today. We're feeling better, I think, than at least compared to yesterday.
I think so. And I'm excited to get into what you've created or continue to create because I've been in crypto for about 5 years. And so after coming off of the Where Do You Start series with Katie, I was like, well, I started 5 years ago, but I would not say that I know much about how to do this the right way or in an intelligent way. I'm a very apey squirrel.
Okay, yeah, I want to ask you, what do you mean by do this the right way?
Okay,
like,
so-
how do you think about it?
Like trading crypto. My approach has been truly degen style, like, ooh, that looks cool, I want it. I'll jump in, learn about it later. And I've been lucky over the course of my time in crypto, but to do it with more of a formulaic approach or just any sort of intelligence, now that I've been here working with you, seeing what you put into these charts, I'll be honest, I look at them and I'm like, yeah, cool, but I don't know what I'm looking at. So I really want to understand how, where do I start? How do I smart? That's where
I like that. Okay.
That's where I'm at.
Let's jump into the email that we just sent out, I think about an hour or so ago, because this is going to have some of that data in it. It's got some of the charts that you're referring to. There's a bit more that we talk about or go through, I think, on Options Trading Concepts Live on Monday during the crypto edition of the show. A bit more that we include in some of our weekly emails as well. But let's jump over to that. And here's the email, just to pull it up on the screen. This is our market update. I want to point out a couple of the tables in here that we start to look at. And I want to talk through how you can use this as we go through the email. You can use this for market awareness. And that's really the concept that we're going to hit on today. When you talk about how to do this, I mean, there's this, obviously, this approach to risk management that you need to be aware of. What that means to me is taking profits at the right time and making sure you don't just ride it up, full circle all the way back down to the beginning where we were kind of at the cycle. But there's also, the awareness that you need beyond just like taking profits or cutting losers, but the market awareness that you need to understand kind of what's happening in the space, right? And that could be anything from, is it a market that's being dominated by Bitcoin flows, ETF flows, and that's where you want to be positioned, or is now the time to get into some smaller micro cap, market cap stuff? Volatility plays into that as well. And I want to talk about how, some things relate to, at least in terms of the price action that we see in the market, they relate to what's happening in other markets when we think about assets. So let's walk through some of that. Stop me at any point. I've talked to Katie about this as well, because I think it is a key component when you're getting started. It's like, how do I think about the market? How do you put context or perspective around some of these price changes?
Real quick, one dashboard, quick look at the big picture.
Yes, and that's what we're trying to do here. It's a work in progress, and I think the approach is always evolving. It has to be, given the nature of crypto. But this is how I think about just high-level market awareness right now. We have, 6 tokens that are up here on the screen. Represents some of the assets that you can trade through the Tasty Trade brokerage, as well as Solana, which hopefully is available at some point in the near future. But these are the ones that we're looking at for that reason. Also just simply looking at Bitcoin, ETH, Solana, Doge, more popular tokens, but certainly Bitcoin and ETH being the bigger market caps, really the market when I think about it in that sense. So the first thing that I want to be aware of is just what's the price momentum or what's the price change on a weekly basis, but more so,
1 month, multi-month, just over these different time frames, what's going on. If you look at something on a minute-to-minute basis or hour-to-hour even, there's going to be a lot of noise. It's going to be some noise when you look at this on a weekly basis, but when you're looking at this on a 3-month or 6-month time horizon, you can remove some of that and you get a much better sense of what the trend is. What I've found in crypto, when you look at Bitcoin, it's true, there are 4-year cycles. At least that's how it's played out previously. And so as a result of that, in crypto, I think you want to stay on the right side of the trend. That's what works for me. It doesn't mean that you can't take a contrarian approach or that you wouldn't be selling this recent rip higher up into 100,000. And maybe it does pull back. But I've just found it a lot easier in this asset, which for most people, it's kind of long only. There are ways you can short it. You can use derivatives. But for most people, they're kind of buying this and they're holding it and they have a long-term view.
Okay.
So
the
you want to
chart,
be on the right side of the trend.
correct. But so tell me what these colors mean over on the right.
So on the right-hand side, what we're looking at is price momentum. And we're measuring that price momentum very simply by looking at exponential moving averages. So what is the average price over certain periods of time? And then looking at that across different time horizons. So if we look at that on a short-term time horizon, we're going to have a bit more noise. That trend or that signal is going to flip more frequently versus weekly or monthly. But when we look at where we are relative to those averages, are you above, below, or kind of right there as they're crossing over, you can drive bullish, neutral, or bearish signals. So if we have an idea of what the average price is over a certain period of time, and we look at where we are here relative to that, or more so when those averages, as we kind of zoom into this, start to cross over, we can derive signals for when it's bullish right now or it's bearish. And in bullish environments, I want to buy dips and I want to take some profits at the top of different trading ranges, but I feel a lot more comfortable buying those dips. Where in a clearly bearish environment, bearish trend, you're going to see a lot of rallies that are sold off. There's going to be larger downside moves. Whether you're short the market or not, it's a lot tougher to buy the dips in that market. You might see some big bounces. Quite often those are, as we like to call them, dead cat bounces.
Okay, wait. You said it's a lot more difficult to buy the dips during a bear market?
Yes.
But isn't that a big dip to then purchase?
It is, but I guess the equivalent would be we're at 100,000 and all the signals are as bearish as they can be. You go down to 75, you bounce up to 85 on your way to 50. You can trade within that on both sides in the same way that you could sell this rally here today. That said, this has been a much easier market, arguably, to buy dips in because it's been going up consistently, hitting a series of new all-time highs more recently. But the trend has been a series of higher lows and higher highs up and to the right. Hard to short that. You might be able to make some profits if you quickly cover on those pullbacks. And if you were short, let's say, the end of last week into Monday, you had a good trade. But if you were thinking that that was going to break down further to some larger or some larger move materializing to say 75, well, you're short if you didn't cover and we're back at 100. This is just an easier market because it's a very bullish trend at the moment to buy the dips in. If you go back to a good chunk of 2023, really hard to do that until about October.
Right.
A market that was kind of going sideways, wasn't really going anywhere. More so, if you go back to post-FTX collapse, you would have seen all of these signals were bright red. Really hard to buy the dip. Now, if you can buy the dip and you can hold it and stomach the volatility over multiple years or longer time frames, in Bitcoin, that has worked really well. But as a trade, it doesn't work so well because now your trade turns into a much longer time horizon.
Got it.
So the first thing I look at is just simply what is the trend over different periods of time, and then what is the price momentum. And I get those signals from looking at exponential moving average crossovers. If we jump back to, let me get the charts back up here just 1 second. Let me pull this back up. Got to kind of jump between two browsers. If we can pull up our TradingView chart, and we're working to bring a lot of this to the Tasty Trade platform. We use TradingView because there's a lot of different things we can do with it. It makes it easier for me with crypto specifically to kind of bounce around. But here's what those moving averages look like when we put them on the screen. I'll look at ETH, for example. So we've noticed that Bitcoin on the prior slide or in the email is neutral momentum right now. It's shifting from, a bearish signal where we started to see that break down, and this is where on those shorter time frames you do have some noise. It's shifting back to neutral. We're not seeing that here with ETH. We have the bars colored red because we're still underneath those exponential moving averages. And if I kind of zoom in here, you can see what I'm talking about. Here's those averages. These are slim ribbons. This is something that in TradingView you can add on your charts. You can tweak the different time frames. You'll be able to add this at some point soon in Tasty Trade. But this is where I get these signals from. Steve Miller, Slim, he was on the Tasty Trade Network, or Tasty Live Network, excuse me, long time ago. He's got some popular technical analysis tools, different studies that you can add to your charts. And so this is one that I've just always liked to use. And it simply has kept me on the right side of the trend. And I think that's, again, really important with something like Bitcoin. If I show you, or with ETH, or with crypto in general, and you can apply this to anything, but let's just look at this on a 1 month basis, because it's a lot easier to understand, why you want to be on that trend longer term.
Well, let me stop you. You said you can do this with anything.
Yeah.
What about a new coin if you don't have a lot of data already?
Yeah, with something that's brand new, you're not going to be able to look at this across longer time frames. So all you're going to have to work with is obviously the price history that you have. So let's just jump down to the bottom of this watch list that I've put together. Let's look at AI XBT. This is a AI agent token. We can't really look at this beyond a daily time frame where there's any signal, because here you can see it's only been around since, call it December, end of November. We look at this on a daily basis, we have a signal, but it's kind of just gone up. Look at this on a 4-hour basis, you have a little bit more noise, and you got a recent kind of bullish signal. So when I look at these things, if we go back to ETH or even Bitcoin on a longer term time horizon, this is where, if I go to the 1 month, it really kind of helps, again, to stay on the right side of that trend. This is a market where you were rewarded for buying dips. As soon as you got that long-term monthly signal and momentum was positive here, we can see that, you wanted to be buying dips. Now you have to time it, and you've got to look at those shorter time frames when you're up here and this is a bit extended, and you can kind of at times just eye it up and see how much above those averages the price currently is, because it usually doesn't extend too far. I mean, sometimes things just go straight up, but over, it would be odd to see a multi-year period where it's just straight up every single year, never pulled back. But that's how I use this. You can get chopped up. There is noise. It's not perfect, but I want to understand, and more so across multiple time frames, what's the trend? And so when I look at Ethereum on a monthly basis, structurally bullish, I'm comfortable there. I look at this on a weekly basis. You can see there were different points in time. If you went short here, you very quickly saw a reversal. But if you went short when it was bullish previously, you were able to hold that, and you stayed in those trades for the better part of a year. Where you're shorting this and you're looking to sell any rally in there. Whereas when you're in a bullish environment, as we are currently, you're looking to buy dips, it's much harder to short.
Okay.
So that is a ton to just say, be on the right side of the trend.
So easy.
Yeah.
So in your table then, at a quick glance, when I see green on the screen.
Yeah, let me jump back over to that.
There we go.
Yeah.
That tells me, okay, buy dips.
It tells me, or it should tell you, that you're in an environment where, if we think about this in terms of probabilities, I would assign a higher probability to this continuing to trend higher until you start to see a breakdown in those signals. You will not be able to time it perfectly, but you want to manage risk in that sense. You want to notice when there's been some sort of transition. We thought everything was very bullish, and then very quickly we started to see that deteriorate for one reason or another. recognize that when those signals are bearish, you probably then want to lighten up on some of your positions. Maybe it reverses. But I've found with currency trading, with crypto trading, and the stock trading as well, you really want to be on the right side of the trend.
Okay.
Doesn't matter as much with options, and maybe with the leverage involved with futures, there's more kind of range-bound trading options or opportunities. But again, with crypto, kind of buy and hold sort of trade for most people, this is helpful.
Awesome.
Now let's talk a little bit about volatility. So how do you trade within that trend? And this is another important component of this. We're going to put these numbers out 3 times a week now. We've currently been doing it on Mondays and on the weekend. But what we do here, Shelly, is we create an expected move or estimated trading range based on the implied volatility, what the options market is pricing in terms of expectations is probably the best way to look at that, and the current underlying price. So given an implied volatility of 61% annualized for Bitcoin and a spot price of 99,000, what is a 1 standard deviation move that we can calculate on a weekly or monthly or any time frame? On that basis, we calculate a weekly time frame here. So that gives you an expectation of what's realistically possible. Anything is possible, I suppose. Maybe more so what's probable in terms of what to expect. This could change in a second, but we also look at where is that current implied volatility relative to where it's been over the last year, knowing that the implied volatility can change. But when I go through that process, or just looking at this here, we come up with a range of about 91,000 to 107,000. How do I use that? Within the bullish trend, because it's harder to short, you can do that, but I'm going to be buying dips with the expectation being that all else equal, given the volatility that's being priced into the market right now, which is also going to be a function of what's happening. People respond in the options market and buy options because of what the price is doing, what they think the price might do. But because of that, we have an implied volatility of 61%, an underlying price, and an expected move. In that bullish trend, it's realistic to think that we could see, all else equal, price come down over the next week to around 90,000. Maybe it's 91, 92, maybe it's 89, but that's kind of the bottom of that range. And then there's a high probability we're back up to where the all-time high was. I buy it at the bottom of that range. It's not, fire everything in one shot, but you might add to a position there, and then you might lighten that position up or sell some at the top of the range. This gives you a way to really understand what's probable over certain periods of time. Helps to frame things or put it in perspective.
No, I love this. So for a week, I can just at a quick glance like, all right, I should be planning to buy around 90-ish and selling at 106, just realistically. And if it happens, it happens. If not, no harm, no foul.
Yeah, I think at a glance, this gives you, again, a sense of kind of where we would likely see, unless something changes, where price is going to trade. You can get that coincidentally when you look at a price chart. The range for Bitcoin has been 90 to 110. So no surprise that that's what the market is pricing in with a high degree of certainty, at least within 1 standard deviation over the next week. Over a longer time frame, that range is going to be much wider. On a yearly basis, the implied volatility is 61%. So just take 61% off of the current price, and that's your range, both that amount up and down. And so when you see tokens that have 100% implied annualized volatility, that means that if it's an implied volatility, the market is pricing in the expectation that this could double or go to zero in the next year. That's how volatile it is. But it's important to understand that on smaller time frames, or how can you use that on smaller time frames, because there is premium priced into the options market, but it's a pretty accurate reflection of market expectations. And quite often, that's how prices respond. If volatility goes up, that range widens. That's also a signal. And we know with crypto, quite often volatility increases as price increases. So I would look at that as a bullish signal or further confirmation of the trend continuing. I say all of that, and we're going to run out of time per usual, but these things all work together. It's kind of like you're driving in the car, and if you're racing, yes, you want to race and win the race, but maybe you just want to get from point A to point B. Ultimately, you don't want to crash when you think about risk management. This is your dashboard. It doesn't mean that you're not going to crash, but tells you how fast you're going, whether your lights are turned on, what gear you're in, the RPMs, you name it. There are other factors. It could start raining, obviously, but when it does, we recognize that and then we make some adjustments. That's how I use this information. This is probably beyond just staying on the right side of the trend. I think the weekly expected moves and the volatility analysis is probably, to me, the most valuable piece of the process.
I love it. And so, especially for setting up liquidity pools, do you use these weekly expected moves or do you look at a larger time frame?
I do. That's a great question. We have talked quite a bit about ETH, USDC liquidity pools on Uniswap, setting the range. That's exactly right. I'll look at the underlying price, and now you can tweak that volatility as the input. So we know that the ETH implied vol is 71. Its actual 30-day realized vol, annualized, is 62. So that's where you get the premium from, just as a quick aside. Market's implying 71% annualized vol based on option premiums. In reality, in the last 30 days, the thing has only moved with a volatility of 62% annualized. So you're paying a premium to buy that option or that volatility when we think about ETH. But yes, you want to look at the spot price, take the implied volatility, and that'll give you the expected move. And so when we look at ETH, if I'm going to set up a liquidity pool, I might, at the current price, consider setting this up at 3,000 on the downside and 3,700, 3,600, somewhere around there on the upside. If I believe that volatility is going to increase, or I just want to create a range that would reflect volatility in the marketplace of, say, 80%, I would just use that as my input. And we have a lot of tools and calculators that are available through tastylive, some things that we'll expose on the Tasty Crypto side too, so people can use their own volatility inputs, but that's how you would think about it.
Love it. Do we have time to cover the correlation?
Yeah, we do, because that's kind of at times another important piece. And with this email, anyone that's going to start to receive this, we're going to add a bit more to it. We've got a lot of different charts, and we'll mix things up on a week-to-week basis. So it's not always going to be the same, let's say, stale correlations. Sometimes it wouldn't make sense to put these things in there if they don't change. But here's why this might be relevant. Quite often, crypto does its own thing. Bitcoin does its own thing, and that's certainly true over longer periods of time. But when you have pockets of volatility in, let's say, risk assets that are driven by macro factors, maybe it's the Federal Reserve changing an interest rate or people's expectations of that not being met, whatever it might be, you're going to see all assets kind of react in kind. And volatility especially downside volatility results in periods where everything kind of moves together. Mm-hmm. And so your correlations strengthen. And that's what we've seen recently. If I look at a yearly period or a 3-year or even since inception time frame, and I look at the correlation between, let's say, the S&P 500 and Bitcoin, it's not much of a correlation. Maybe 30% of the time on a daily basis. If we look at each day over that period of time, they're moving together. Mm-hmm. Not much of a correlation. But at points in time where you have more volatility in the market, everything sells off together. You need to be aware of that. It could present potential opportunities if things are simply just going lower because everything is going lower temporarily. Maybe there's a reason to buy Bitcoin. Or if they're all going down together for a real reason, there's a financial crisis or something. Mm-hmm. Maybe there's a reason to stay out of the market. I don't know. But you want to be aware of just what's the relationship between the price performance of Bitcoin, in this case, and what's happening elsewhere. And when we look at this, it doesn't mean when I see something like 0.56 for the S&P 500, think about that as 56%. It doesn't mean that they're going up together. It's just that they're moving in the same direction a slight majority of the time. The strongest that we would see would be 1.0 or 1. The inverse of that being -1, perfectly inversely correlated, where if Bitcoin's up, the S&P is down every single day, or vice versa. That's not what we're seeing right now. And so these will change. There will be a lot more noise, obviously, in the shorter time frames, the 15-day and 30-day periods. But it's just, again, important to be aware of is Bitcoin moving in lockstep with everything else because of something that's happening or not? In this case, what we saw recently was that volatility had popped, and the view that we had on the show on Monday was if this turns into more of a trend and we don't see a bit of a breakdown in the volatility here, just given how things have traded, we probably would see more weakness in the market. Well, they're still moving in the same direction, but what's causing the market to go up here post the inflation report this morning, largely what we're seeing the response in the market to, is a positive move, and they're all moving together. But we are seeing that volatility come down a little bit, or the correlation, the inverse correlation with volatility come down.
This is all really cool tools to have in the toolbox. So everybody can just get these weekly now?
Yes. We're going to send this out every Wednesday. So if you're on the Tasty Crypto newsletter email list and you've been receiving Next to Orange, you'll get this on Wednesday. We don't really have a great way to get you off the list if you don't want this one, but you want the other one. I guess just ignore it or delete it for now in your inbox. But hopefully people find value in this. And if anyone has any ideas or anything they'd like to see here, we can expand the range or the list of tokens where we're coming up with the expected moves. We're going to focus on a lot of different areas of the market, but a couple places to start with today and really talk through that market awareness piece. I know there's a ton there, and we'll keep discussing this, but it will help with how we show some of these charts and how we're thinking about some of the moves that we're seeing in the market.
So for free.
Yeah, for free. We
All these.
Put it together. I use this in my own trading personally. And again, just to be on the right side of kind of the move. It's not a way, you're not going to time the market perfectly. These things are fluid. Some news could come out in an hour that could change anything or everything, but it's a pretty good dashboard to use to just be aware of what's happening.
Well, I love it. Thank you very much.
Yeah. Thank you for coming on the show.
Yeah.
I know it goes by quickly.
It does. Too fast.
Yeah, we're going to switch things up going forward, though. Katie's still going to be on the show on Monday, but I think everyone will hopefully enjoy what will be more of like a live stream. We're going to be trading. We're going to be talking about different things that are happening in the market or kind of in the space, in the news, but it's going to be a lot more fun, less of some of maybe the education we've tried to do before, but we are launching a new show on the Tasty Crypto channel that you're going to be heading up, so excited about that.
I didn't know we could share that yet.
Well, I guess we just did. Yeah, we've got more. Well, I think we've said there's a lot more content coming soon.
Yeah.
So excited about that. Starting with this market update. Get on the Tasty Crypto email newsletter list right there in the chat. But that's going to do it for our show. Again, Shelly, thank you for coming on. We'll be back with you next Wednesday.
Thank you for having me.
And thank you all for watching, showing up in the chat. Nice to see everybody. We'll be back on Monday with Katie. Until then, I'm Ryan.
I'm Shelly.
Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day. Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top yearly recap.
So, we're doing the show on Friday, and the bat, he's doing the show in the morning, then he's going away afterwards, right?
Yeah.
He's all packing up the car, he's doing his stuff.
RV.
Packing up the
Packed
RV.
up the RV for a 6 to 8 day trip. We're supposed to be there about
4
48
days.
hours.
I bet him $20, and I said, you'll be in a hotel by either the first night or second night.
Oh, and then I vociferously stood up for you.
Of course you did. You should have, because that was the smart move.
I appreciate you. You're
Yeah.
Saturday morning, I look at my phone, and it says Venmo, $20.
I almost had to pay him $40 because there was a little stipulation. If I didn't sleep there one night at all, I'd have to double the bet. I almost had to send him $40.
What happened?
See what happened?
Here, what happened was
we're driving up there. It's absolutely beautiful. It's like sunny as can be.
You were tweeting pictures.
Oh, yeah, it was
The
beautiful.
girl
It was
on
beautiful.
Instagram, you're like, I'm here in the woods.
Absolutely beautiful. Absolutely beautiful.
Amazing.
It was gorgeous. We were gonna make a slight right-hand turn. We got about 10 miles to go, and up ahead there's like this dark cloud, and it's raining. It started getting muddy, and dogs are getting all muddy. Wife's having a little problem. Bugs are everywhere from the rain. And I realized at that moment that my wife was not a camping gal.
That's a surprise.
So at 6 o'clock in the morning, I pulled everything out, closed everything up, shoved everything underneath, and I was home. We actually left because we did the show at 10 o'clock in the morning. I said we left at 10:30. I was home at 10 o'clock in the morning the next day. Look at him.
You were just
Jumped in my pool, looked back at my house, and I said, why would I ever leave? Why?
He was going to go fishing, catch.
He's hurt on this one.
Muskies.
Yeah. I just drove with him twice. Now I'm really concerned that I was just in the car with him for 2.5 hours. Okay. I need help understanding. This is the largest monitor that I've ever seen. Like, I have to move back in order to see everything. And somehow when you're on air, you're like looking at this, you need some help.
Nope, I got everything fine. The problem is I just have a lot to do. You see, because in your job,
here we go.
Really all you have to do.
Get the full scoop by checking out the archives at tastylive.com.
Oh yeah, it is Thursday. I think is it Thursday there? No, it's Wednesday. I'm sorry. It's Wednesday, 5 p.m. Central Time, a little bit after. You know what that means. It's time for Tasty Live's evening show, a little podcast. You ever a little podcast called The Price of Truth? The show where we like to explore the incentives that govern our world. And man, are there some incentives? And man, is there a world being governed right now? I have with us, as we will every Wednesday for the remainder of 2025, God willing, we have with us the one, the only, the illustrious, the splendiferous Chris Vecchio. Chris, how you doing, my friend?
I'm doing well. I don't quite sound like Bruce Wayne, but
I have one question. I have one question for you, Chris. Where's Harvey Dent? I was sucking on tailpipes last night, as you can tell.
Yeah. It sounds like you had a good time, but more importantly, like I want to put you in front of like a keyboard and a microphone and maybe get some like Ray-Bans on you and get you singing here.
You think I sound like Ray Charles? Is that the register? Is that what you're trying to say?
I got this Barry White thing going on, like a Bruce thing going on. Like, can you come serenade my wife and I over dinner tonight? Like, that'd be nice.
Right. So many jokes there. I don't think you want to go down that route.
You got an hour to kill, Vic.
way to kick off the show somehow. Somehow that's the cold open, everybody. Welcome to The Price of Truth. I swear the show is trading related, mostly. Maybe 35% of it is. Chris Vecchio, up, and let's waste no time here. Shout out to everybody watching tastylive.com, as well as those of you watching Tasty Trade desktop and mobile applications. If you don't already have both of them, it's a new year. It's time for a new you. Go get both of them, and then hop into the YouTube chat. Bing, that just showed up on your screen. Did I get it this time? Did we time it right? I don't think we did. But if you want to be part of that chat that will show up or has shown up or may show up at some point during the show, hop on over to YouTube. Start moving those phalanges. The more active you are in the chat, the more you're going to spoof the Google algorithm into putting our little world in front of as many people as possible. Let's save the world one view at a time. Chris Vecchio, my friend, up and away. What was it about the CPI report this morning from your point of view and perspective that the bond market seemed to swallow quite well and was obviously net positive for risk assets today?
It seems that while things are warm, they're not getting hot, which is important given our balance of risk right now. And I think that the internals of the inflation report showed that inflation is narrowing, not broadening out. One way you can look at that are the number of components of inflation that are above 0.2% month over month in any given report, and use that as the line in the sand, because above that month over month run rate, you're going to blow past the Fed's medium-term target. And if you're too far below it, then you're getting deflation. So 0.2% month over month is kind of like the Goldilocks number. As it were, if we take a look at the data right now, we've seen that the number of service categories that have over 0.2% month over month inflation fell from 54% of the components of the CPI report to 49%. So unlike in 2021, 22, where you saw more and more parts of, the consumer price index basket seeing inflation north of 3%, north of 4%, north of 5% in annualized terms, that's getting narrower again. So base effects that are making their way through the data series, not entirely unsurprising, but the fact that it's not searing hot and is only warm is good. And the fact that core comes in a little bit better than expected, I suppose, is the really good news. But it's January OPEX week. We just filled the gap on Monday. I'm sure you've seen Jim Carson's prophetic tweets about when that gap fill would occur.
Yeah.
And so we think about this week now in the context of how the hedging flows and the market makers are behaving around these January single stock option expiration, and you probably get a little bit of a squeeze here. Today was more about a positioning unclenched than anything else. I don't know that we've cleared out the congestion zones in any of the stock indexes that we've been looking at. The Russell's back in the range where we were for the second half of December. The NASDAQ and the S&P continue to slosh around in the chop zone, either symmetrical triangles that point to new highs or head and shoulders patterns that are still being carved out. Either way, today was nice if you were a bull, not so nice if you were a bear, but this year so far has been directionless slog. And I myself haven't laid out new capital into any equity index future trades this year so far because I just see a lot of chop ahead.
Yeah, I would agree. I don't know. When I look at that report, I don't really think inflation is a problem. The problem that it was, and I made this point with Ilya. It's a crazy thought. I don't know why I'm doing it again. I even remember after the show saying, "Why did you say that?" And here I am the next day making the point again. I think I made it with. I think I made it with you as well. That at some level, this game seems to have been for the last couple of years to align the sine waves of the real economy and the financial economy to try to keep them as perfectly offset as possible. So when you're seeing inflation in the data, you're seeing disinflation or deflation, depending on what you're looking at in price. And then when you're seeing disinflation in the data, you're sort of seeing in a burst in sort of raw materials. And so the interesting thing about today, I think, is that it substantiates this dumb pattern recognition in my mind, which likely is not true, which is at the moment you start to see crude oil ripping, natty gas ripping. I don't want to say gold is ripping because it isn't, but we're still at near highs. Silver not ripping because we just got murdered, but it hasn't done any damage to silver. Still 31.5. Copper still at a decent price. My point being that it's sort of this interesting relationship I've seen over the last couple of years. When you start to see commodities on your screen, that's the point at which you're starting to see disinflationary setups in some of the data. What did you make of a warm month-over-month headline versus the cooler month-over-month core? What do you make of that, and why do you think the market is basically looking through that? Just because the energy prices they see as what? Temporary? Is that sort of what the market is thinking here? Isn't that what? Shouldn't we be more nervous about energy prices running a little bit here and the potential damage that could do? Or is the market looking through that and seeing that as short term?
Probably seeing it as short term. What are the compelling reasons to think that we're going to get a big sustainable move higher in crude oil prices? I think I really do think a lot of the correction higher that we've seen in crude over the past few weeks is related to posturing around the end of the Russia sanctions for Ukraine, in part because we've already seen reports that Indian refineries are getting less traffic now. Europe has been buying from India. Russia's been sending them their oil. They've been refining it, shipping it back. And there's speculation that some of the demand is going down there. And China and India likewise are both being forced to buy oil on the open market as opposed, through the shadow fleets under the table from Russia. And so if that legitimate demand is coming back to the market, one way to explore that dynamic would be, in theory, Indian equities should be struggling. And they are. They're down since the election. Other places that would be doing well, in theory, as you and I have discussed, right? UAE, for example, Dubai as a money center. Any of the international money centers that have fade neutrality over the last few years, once that money gets unlocked in Europe, it's going to go abroad. And so UAE, the ETF today, hit a fresh yearly high, for example. So I think the writing's on the wall there. And if you're someone who's looking at the market and saying, well, how's the economy performed in recent years when oil's been around $75, $80, $85 a barrel? The answer has been it's been fine. So are you really too worked up right now? Headline inflation driven by oil, problematic, yes, but core isn't. You strip it out, it's relatively calm. If that divergence remains for another month or two, you start to raise your eyebrows. But beyond that, again, for the past few years, oil has been range bound. The best plays in hindsight have just been simply doing, like iron condors, $10 wide of 75. And when you get back to 75, just slap back on the iron condor. Who's to say that's going to change? I don't think it will. I also don't think drill baby drill is a legitimate exercise right now, just given how our energy infrastructure is set up. Permitting reform, deregulation, that may ultimately help. But the number of wells that we can bring back on in the next 30 days is a very, very small amount, given our capacity and our advancement in refining. So this is really about tariffs. It's not about supply demand. I think it's just a legitimizing of where oil is being purchased globally. And so I think if the market, looks at this and says this is just China and India getting back above board, does it really change anything for us? Not really.
So in other words, the trading opportunity here in your mind, I sort of, maybe I'm reading this wrong. You're either reading that this is a fade for crude oil, or you're reading that $80 is not necessarily a long-term problem for inflation or the markets, and you see sideways action in crude oil. Is it one or the other, or either or? You can't call it, but that's sort of how you're seeing the world.
I think this is the normalization of where oil prices would be if there was no shadow fleet of Russian tankers making their way around the world, right? And also, I don't think it's problematic. How much further can we go? China's obviously dealing with deflation. Europe is Europe still, so is the UK. And the entirety of the global economy rests upon the weight of the weight of the U.S. shoulders, the U.S. economy shoulders right now. Stumbling my words there. And so if the U.S. economy falls off, then you have a real problem. But I don't think anyone's counting on Europe all of a sudden to get its act together, or China to learn to stimulative economic policy that addresses aggregate demand shortfalls, as opposed to what they're doing right now, which is basically all supply side reform. And Victor, if I think the economy's in the tank, you give me $100, I'm just going to put it in my pocket, save it for a rainy day. I'm not going to spend it anytime soon. And that's China's problem.
Yeah. There's so many solutions to that, though. And they're scary solutions that, in my mind, are inevitabilities. One day I'll put the aluminum foil hat on, the tinfoil hat. We'll talk about it.
All right, Thanos. I know you want to snap your fingers and make everyone disappear.
No, that's not it. It's definitely not it. But if you have a digital currency and I'm giving out stimulus, there are lots of things that I can now do with that digital currency. I can say it has an expiration limit. So there's, by moving to a digital yuan and needing to distribute stimulus and having a problem where people are shoving it in their bank account, I just can envision so many ways that you can now change the way stimulus works to ensure that money makes it into the economy or into demand generation in some way, shape, or form. And I think that's an inevitability, like globally, but more on that later. Let me ask you, what do you think is the reason they pound? Maybe the reason doesn't necessarily matter, but I was in a way surprised that vol got smacked down to 16 today. And I'm surprised because I don't really think the CPI mattered to that extent. I don't really think that the market was on pins and needles waiting for that number at this part of the cycle. What I think is that there was an actual legitimate rally. I think some of the vol came out of the interest rate side of the equation, and that helps to breathe a sigh of relief a little bit, because if you've got high vol around interest rates and the cost of money, everything else downstream, you have to put a wider potential distribution curve on. The moment you get interest rate vol sort of collapsing a little bit, that's a time when you can tighten up those distribution curves. So to me, it wasn't the CPI itself, it was the reaction in the bond market, to me, that leads to the collapse in vol a little bit. But I don't know. That's just me talking out of my you-know-what. How are you thinking about volatility here at 16?
We start the week up near 22, so 6 points off the board in the VIX in 3 days is, that's not nothing. But the IV crush that's happening right now is wholly consistent with what some may consider to be the January OPEX week, right? This is not that unusual. See this kind of market dynamic right now. You start the week at a high VIX. The market's also much higher than where it was this time last year. So if we're resetting our hedges, this probably is a week where those hedges are lifted, and that gives the market some upward drift. Vol comes in, of course, as a result. Again, I think about the seasonality of the market historically over the past 10 and 20 years, which even though last year broke the seasonality trend to the upside, typically, and even including last year's data, your run rate for stocks January through the Ides of March, typically rubbish. So as long as you're in these congestion zones, I like all the narrative. I'm certainly a storyteller myself. But the price action is all that you need to rely on. And the price action tells you that we're still congested. And you know what? If S&P tomorrow is looking at like 6,000 in ESH5, we start to break the downtrend from those December and January swing highs, and that VIX peaks into the 15 handle. I knock on wood, I always like referring to this, but we've reviewed the data here. When you go back in time, and it's an arbitrary threshold, but anytime the VIX is below 15, the single best strategy that you could have in your pocket is just simply being long the market. It outperforms being short puts. It outperforms the short strangle, short strat rate, like anything across the board. Best daily return, lowest volatility of daily returns is simply going to be long the market when the VIX is under 15. So I'm not ready to say that I'm just going to buy some calls and go fishing again, which was basically my attitude and strategy for much of last year. But we might be crossing that threshold where it's worth laying something on to see if we can make a move back to all-time highs. I personally don't think it lasts. I think there's a lot of risk around the corner. I think the indecision around the Fed is terrible for markets.
What do you mean? What do you mean the indecision?
I've used this analogy a lot before here on the network, but the market doesn't really care where the Fed's going with rates, so long as it thinks the Fed knows where it's going with rates. They want a sober driver with two hands on the steering wheel. In 2022, it's starting to hail on the Fed saying, it's fine. We don't need to put on the windshield wipers. And, the market's like, yeah, but the cracks are appearing in the window. Maybe we should pull over under this garage. And the Fed's like, no, keep your pedal to the metal. Keep the stimulus going. It's all transitory. Drive through the storm. And it wasn't. Right. And that's what caused the problem. The market said the Fed has no idea what they're doing. They're far behind the curve. They've got to play catch up. It's going to crush asset prices. And you get your retrenchment in stocks. We were nearing that precipice again, right? One rate cut priced in through the end of next year as of this morning, 8:29 a.m. Eastern. We were getting into a world where the market's entertaining the idea that maybe the Fed has it wrong and they shouldn't have cut and they have to start hiking again soon. That's the worst world. The Fed's made mistakes. It's got policy wrong. It's not a sober driver. It doesn't understand the risks on the road. It doesn't see the storm clouds ahead. So today's data removes that like narrative thrust that was building and building and building in recent weeks. And the Fed themselves told us on December 18th that they had to stop their cut cycle because the data weren't there to justify continuing it. So today's data helps put the genie back in the bottle a little bit. It's not completely back in. And I think this is going to be an ongoing problem here. I almost want to pose the question back to you, Victor. I find myself thinking that the market's forward-looking. It's pricing in expectations and various probabilistic outcomes. Treasuries didn't turn lower on November 5th or 6th. They turned lower starting in September, not just because the Fed had cut rates and started reinflating, but also because you saw Treasuries trading in lockstep with Trump's odds on websites like Polymarket or Kalshi, those prediction markets. So we have Trump coming into office next week. I've heard from Sosnoff, and I've heard from Radigan, and I've heard from Ilya, and even Nick Batista mentioned it today, that a new administration, new rules, new regulations, new tariffs, it probably brings about a lot of volatility. But why wouldn't that be priced in already? We saw this movie in 2016, right? Like, why? Maybe my head's in the weeds here or something, but I almost think that like when you look to betting markets right now, the odds of tariffs going on in the first 48 hours, these aren't like 99%. They're 35, 40% as things stand today.
I wish that we had like, Bill Fleckenstein or something like that, or like a Jim Bianco, like a grizzled bond veteran to answer the question, because it's such a good one. But as of now, all we have is me. So I'll take a swing. I think people tend to think about the bond market in the same terms that they think about equities. Equities are insane. Bonds are sort of like very cool, calm, and collected. And it takes a lot to move bond markets. It's not, if he comes in and he starts poking at Jeff Bezos, or Elon, their relationship with Elon Musk falls out or whatever, the market, the equity market, you're going to see that represented, or at least you're going to see a narrative fallacy that assigns the reason behind volatility to those types of things. But the bond market doesn't do that. I think to a certain extent, it takes gigantic numbers to start messing around with how you think about yields 10 years down the road, or with lending money to the U.S. government over a 10-year period. So to a certain extent, there's probably some guardrails. There's like some monetary, fiscal, there's some realistic guardrails that Trump and the new administration is going to have to stay within, unless they want to completely destroy both the domestic and global economy. And to the extent that those realistic guardrails can be known, I think you're seeing it priced into the curve. And I also think, to some extent, I don't know, call me a conspiracy theorist, but I think the Federal Reserve has been charming the long end higher. And I don't think you can convince me otherwise. I think you have to be crazy. Like, I'm an idiot, and I knew as soon as they started cutting, if they would have cut in March, I was like, you guys are out of your mind. Watch what the 10-year does if you start cutting that early. We said on this show with you, I go, you want to see what happens on the long end? Start cutting. I dare you. Start cutting now and watch what happens on the long end. And their whole point was to try to wait to the point at which you might not see such extreme volatility, to the point at which they had enough two-sided risk, his growth potentially slowing, what's going on in Europe, what's going on with China. They needed enough two-sided risk to start this exercise where they would get a slow lift in the long end, which would be less volatility for the real economy. Maybe that's some hindsight bias, me putting together the story in hindsight. But even back then, I felt that they were charming the long end lower. So none of this, I feel, is accidental. And I think Trump can only lift the long end. Like, his actions can only lift the long end. Could he come in and have some surprise cutting of the budget? Maybe. But I sort of feel that they put him in this position where he can only do damage to interest rates, and he doesn't want to. So it's sort of like, they put him in this weird box from a monetary standpoint. And that's probably the right move. So I don't know if I answered your question or not, but I do think to a large extent it's priced. And then I think when he gets in there, we're going to see sometime between February and June, if we're lucky, a look at some sort of budget, both here and in China. And then we'll figure out what's what. But I think it's priced to a large extent. He's not going to be whipping around the bond market. That's insane. He'll whip around stocks, but the bonds are just going to take what he says. They'll handicap the probabilities, and then you get a slow adjustment of the curve. A couple of days of 3-point moves in bonds, maybe, but that'll be few and far between. I don't know if that answers the question. I blacked out for a second. Sorry.
No, it does to a certain extent, right? I mean, so much of this is priced in. I guess we're waiting to see, if the sort of Damocles that are the tariffs on Canada, Mexico, China drop quickly. I know that there was a plan out this week that Bessent and Mirren were working on a graduated step-up approach where tariffs would be applied in like 3 to 5% tranches on a monthly basis to apply pressure slowly to bring people to the negotiating table, right? Like, we want to make progress. If you're not, then we're going to put in this first tranche of tariffs, and we'll continue to do so until we get our way, which I suppose is one way to go about it. But I think that's what determines this. If they come out and, with the first 24, 48, 72 hours, 96 hours go by, Victor, and it's like there's no big tariff announcement, it probably means it's going to be more of a scalpel and less of a nuclear bomb where they just say, salt the earth, go 25% across the board. If you're going to do just something across the board, just do it right away, right? So we'll see what happens in the first few days. I think that's going to be ultimately the big tell. I don't think the market's going to move until we get clarity there, but we know this is coming, and at least probabilistically, the market's been pricing in the odds of structurally higher inflation for months now. And I know a lot of the conversation was like, oh, well, how are we going to get bonds to rally? Maybe the Doge Commission gets a lot of cuts and that balances things out. Elon Musk this week admitted the Doge Commission is not going to be able to find $2 trillion worth of cuts. So
bingo. Who told you that? Who told you that instantly?
The Doge Commission is BS. It's a blue ribbon committee. It's McKinsey.
Dude, it's not BS. It's just not what you're framing it. It was never going to be that.
$2 trillion of cuts over a decade is $200 billion. Is $200 billion a year, and he's saying, like, folks, I don't think we're going to be able to find $200 billion a year in cuts. Which, again, if you're wasting $900 billion a year and $700 billion are to interest payments on debt, like, you don't have a lot of wiggle room there. And then there's a lot of congressmen and women who like the pork. So good luck getting those congressmen and women in a 1 or 2 seat Republican majority to vote against spending in their district 3 or 4 months before midterm elections. It just seems like from the very get-go, structurally, it seemed like a crazy set of circumstances that no politician would actually agree to.
I don't know.
But here we are.
Okay. I should leave it alone, but I can't.
I know.
It was never, you keep throwing the dollar out, those pranks where they throw the dollar out the fishing line.
On a string.
I'm going to go grab it. It was never going to be this, let's cut Medicaid, Medicare, Social Security, let's cut defense spending. That is not their role. And I think Trump himself said it. That's not what they're going to be deciding. They're going to be finding operational efficiencies within government. And if you believed that, you knew that there was no possible way you were going to find $2 trillion in operational efficiencies. And that's why I told you, like, the real number is probably 500 billion to like 800 billion at best. And I'll be curious to see if I'm in the right ballpark. I think it was stupid to go on stage in Madison Square Garden and throw out that number. It seemed like they talked about it before they got on stage, and they just did it. It seems so improvised the way Lutnick asked him that, set him up for that question. It seemed so sloppy and improvised. And I was like, that was so stupid. And everyone held to that number.
Yeah,
and it was never going to be that.
They could always walk it back. It's like, yeah, we're going to bring about these new things. But like at the end of the day, the GAO already does this. $137 in taxpayer dollars saved for every $1 in funding at the GAO. Of course, if you're coming in as a change maker, you're not going to run on the platform, let's get the Government Accountability Office more money, right? Like that's
I totally agree with that. I totally agree. You got
to say we're going to do something new.
No, I would rather. I have no idea who runs the GAO. No idea at all. So I'm speaking a little bit out of class here, out of school. But I do think I would rather have unpaid business volunteers opining on ways to apply technology and also look through line item by line item that don't have political alignments. Of course, they personally are going to have conflicts of interest, but I don't want somebody who's in a government office who wants a position somewhere or who's getting leaned on in some way, shape, or form, says, we can't cut that. This person wants that, whatever. I do think that there are many ways that having sort of this structure is probably short-term beneficial. It's probably not something you stand up and you do forever, but I think having sort of business and government in a way looking at ways to minimize or increase government efficiencies, I think that's probably somewhat healthy. Yeah, I think it's somewhat healthy. I just think they overpromised and they didn't need to. I understand why a politician promises. Yeah, a politician is always going to promise more than they can deliver. My point was, when it comes to Doge, it wasn't like that was going to push the election over the line. Like, other than nerds like us, nobody else cared. It's not like the general public gave a shit if the number was $2 trillion or just you had the idea that somebody was going to come in and look at cutting spending. You didn't need to throw out a dumb number. People don't even know how to envision $2 trillion. All right, let's keep moving. I'm sorry. Earnings season this week kicked off. How are you thinking about earnings? How important do you think earnings are? Do you think yields are really moving the market? Do you think China and the situation abroad economically is moving the dial here? Do you think it's all the inauguration and the setup for negotiations out of Ukraine? What do you think of the major drivers here, and how do you think about earnings?
I think earnings are the thing that you want to see. If you're looking for the market to go higher this year, earnings are your bread and butter, what you need. Forget the Fed, forget Russia, Ukraine, forget the Trump administration. If there is considerable, consistent earnings growth against a backdrop of a still growing U.S. economy, the market is going to see these dips, and the dips will probably be bought up. With each passing day, Victor, the PE ratio of the market, just by trading sideways, gets a little bit cheaper, if only because we're allowing earnings to catch up. So strong earnings growth, you really, really want that right now, because it takes one of the arrows out of the quiver for bears, which is to say that valuations are too darn high right now, which, again, they are high. No one's arguing that. But as a trader, for people who operate on 45-in, 21-day out cycles, the market can stay irrationally imbalanced on the valuation perspective longer than we can keep buying those 45-day puts and rolling them off at 21 days. It becomes a very costly exercise to call the top. So, I'm thinking about this in the trading perspective very explicitly right here. But that is the part and parcel to what matters. And we've seen a good start. The banks are doing well. A lot of their performance to the upside has to do with the markets themselves last year. FIC, equity trading for JP Morgan, for example, fantastic. Goldman Sachs, fantastic. All right, not a problem at all. But hey, it's a bull market, so you better be making money. Can't afford not to make money in a bull market unless you want to lose your job, of course. So, yeah, is it about the U.S. economy? I think so. Part of it. The economy is doing well for right now. Unemployment rate still has a 4 handle. Inflation still has a 2 handle. GDP is probably in the 2 to 3% neighborhood. All those are good things. And at the start of 2022, when the Fed was beginning its rate hike cycle, anyone would have signed up for the economy with, again, 2 or 3% GDP, 4% handle on unemployment, 2% handle on inflation by the fourth quarter of 2024. You and I would have said, good luck, not happening. And yet here we are. So, yeah, if the earnings hold up, things are fine. Ignore the noise. That's the signal.
I don't know if I would have said not happening, but if you would have told me that the 10-year or like 30 years at 5%, the 10 years knocking on the door, 4.7, 4.8, then I would have said not happening.
Well,
so I think
Nasdaq's, by the way, 2% from all-time highs.
Yeah, I think the surprising thing is that the market's held up so well against rates, because I think unemployment, I always thought there'd be a sort of a slow bleed on unemployment, because corporations sort of, I don't know, you don't have to be a genius. And there's such a consolidation of power. You just lay people off slowly. and in groups, and you wait 12 months to do the next tranche, and you don't hire. So we have a tightened labor market where people aren't really hiring. So net full-time jobs are going down on a year-over-year basis. You're picking up part-time jobs. And then as long as you do it in 12-month, increments, that unemployment rate is going to stay right where it is, because it's to drop people out of that the pool that it counts at 12 months. So I don't know, that would have surprised me. But the idea would be 2% away from highs in the NASDAQ with yields knocking on 5% store. I would have said, you're out of your mind. Not happening for sure, for 100% sure. That said, do you not, like, some part of me, I'm not a technician by any stretch of the imagination, but I did stay at a Holiday Inn last night. I look at the setup in the S&P 500. I still see, if I was going to, you tell me, are you going to go long or short on a short-term tactical basis? I go, it's a perfect setup for a short. To me, it's a perfect setup. Like, technically, you're right up at the top end of the range. You still have a series of lower highs and lower lows. Could you break out of 6,000 to the upside? Yes. And will it be painful if you do? Because you're going to get this sort of you're going to get this pile-on effect. Yes. So you got to be risk-defined. But I still think, to me, just technically, doesn't that set up not only in the S&P, but I'm probably, if I look at the NASDAQ, it looks the exact same way. Don't you think technically, on a very short-term basis, which way would you play this tactically if you had my money? Because you don't trade like this.
Tactically, I just buy. That's my disposition to buy. Look, the pattern is called a head and shoulders pattern, Victor. It's not a left shoulder, head, right shoulder, right shoulder, right shoulder. Right? It's defined left, head, right, spill. And we had a chance to spill earlier this week, and it looked like we were spilling, right? We get down below that 59.15, 58.65 area, depending upon what contract you're looking at. And it looked like the head and shoulders pattern was a go. And now all of a sudden we just get sucked right back up to the 1 month moving average. Now that to me is really what I want to see cleared here, because the two prior attempts, you have that evening star candlestick cluster, three candle pattern that occurs in mid to late December. That's up against the uptrend from the August and November swing lows. So topping candlestick pattern as we fail to climb back above trend support. Okay, that occurs against that 1 month moving average. More recently this year, we get the bearish piercing candle in ES against the 1 month moving average. Today we return to it for the third time in 3 weeks. So maybe this is what cracks. But that's the hard thing about calling tops, Victor. A head and shoulders pattern that doesn't break a neckline is simply a continuation pattern to the upside, right? So if you're playing this short, you may have just got trapped. Is the risk to reward better here to short than it was 2 days ago? Of course. But this is kind of the line in the sand right now. So I don't know which way it's going to break, and I'm not going to pretend like I know which way it's going to break. But I would say that if we think that a big move is coming right now, maybe a reverse iron fly is the way to do this. Volatility has come in, right? You're looking at IVRs that are back in the teens right now for your S&P 500, and kind of like what we were discussing in oil in December, a nice psychological one. Didn't ultimately place the trade myself. So if you did the reverse iron fly back in crude in December, it didn't really matter if the thing went way up or way down. You're trading a coiling spring and just betting that the spring is going to unfurl and release all that kinetic energy at some point in time. So at this point, is this a head and shoulders pattern? Perhaps. If it is, we're going down to 5550 or so, 5600. And if it's not, then we're going back to new all-time highs and probably 6500 in the short term. But probabilistically, the way I trade, either's possible. So as a momentum guy, I have no choice but to wait out the chop. So waiting I'm doing.
I'm a.
But with your money,
I sort of agree with a lot of. I agree. I agree with a lot of what you said. There's one part there where I don't think binary, though. I'm not trying to call a top. So the way that I would think about this is I have a net long portfolio, and I see a setup here for a potential tactical short. So I would run really small short deltas on things that I might think are expensive, maybe on the S&P, maybe on the NASDAQ, maybe on individual stocks that might have the same setup. It would just be like an opportunity to get some short deltas in, especially after a day. If you have net long deltas, you made a lot of money today. So you made 2% across the board. And so to me, I think, could I get greedy and you see a breakout here and then you see a bunch of pile-on buying? It brings us up to 6,100 super quick. Yeah, I think that's in the cards. I think it's possible. So I wouldn't go net short, but it would be, I'm going to lay some short NASDAQ deltas. I want NASDAQ. I got to figure out how I want to play that. I want to lay some short deltas into a net long delta portfolio. That's my point. So I would agree with you. I'm not trying to call a top, and I'm not trying to be binary. Today they're up, today they're down. I just go risk reward. That seems like an interesting setup. I don't mind giving up some of the long deltas in the portfolio to play it. If I'm right, it limits the downside in the portfolio and adds to the alpha that I'm generating. And if I'm wrong, it means I'll make less money than the market tomorrow because I won't have as much delta exposure. So I guess that's the way I think, but I definitely, I don't disagree with anything you're saying. And I'm just pointing out that I don't have that binary thinking. Let me ask you about Bitcoin, man. Short-term breather to 90,000 looked like it was a super short-term buying opportunity. Back up to 100,000. The FUD didn't last very long this time around, man. It was, everyone was calling for the death of Bitcoin 2 days ago. Now it's at 100,000. What say you?
It's that's the same chart setup that, like the office meme. Corporate wants you to tell the difference between these two pictures. They're the same thing. It looked like a head and shoulders pattern 2 days ago. Now it looks like it's a continuation pattern to the upside. That's the S&P 500 right there, Victor. That's the NASDAQ, if you're looking at your chart. So, yeah, I mean, but this is also, Peter Scher was on Bloomberg today in Academy Securities, and he was discussing how for a long time.
Is that TCHIR, that guy?
Yeah.
Okay.
And he has a good Twitter presence, as I'm sure you've come across him a few times. He was pointing out that, for a long time, crypto kind of lived in its own world where, Mt. Gox goes down. I don't think this was the specific example he said it. I'm just trying to capture the vibe, if you will. He's like, Mt. Gox goes down and it doesn't cause the S&P 500 to crash. And, XYZ shitcoin goes down and it doesn't cause a major horrible, dam breaking in the banking system. But that was all before you had companies like Coinbase and Riot, and more importantly, MicroStrategy, which are getting included into some of these indexes. So, 2 years ago, Bitcoin goes up 50%, down 50%. The NASDAQ blinks a little bit because of the cross-asset beta flows and people just levering up, levering down their risk, as it were. Now it's like, well, if MicroStrategy and Bitcoin get taken out to the woodshed, does that actually hurt the NASDAQ? And the interlinks between crypto and traditional financial markets are beginning to come together. And so does this pose a systemic risk, or is getting into the territory where it could pose a systemic risk to your TradFi world? Personally, I don't think we're there yet. And Peter Scher, to his credit, said he doesn't think we are either, to get away from the vibe-based aspect of this conversation. Now directly quoting him, he said no, he's not panicking. But you're looking at these charts and they kind of look the same. And it reminds you of the conversation that you and I had in 2022 with Andy Constant, Damp Spring on Twitter. It was about when Lambo, right? How do you go from buying government bonds to taking the risk to where you're all the way out on the risk curve to getting crypto? And it's a stair step. You're looking for a yield, you're looking for a certain rate of return. And, if you can't get that on equity markets, where are you going? You're maybe going away from mega cap tech and going into small cap tech. Maybe you're going into OTC pink sheets if you're a real junkie. Maybe you're going into crypto. So these charts, it's all the same story. Liquidity, is it here? Maybe. Let's see what the dollar does. Pulling to go out about this for a second longer. In 2017, January 2017, Trump, on advance to his inauguration, says that he doesn't like the U.S. dollar strength. He really wanted the best of both worlds, where he can get his tariffs and a weaker currency. So our exporters are flourishing, and Americans, we buy nothing from abroad, starving the world of our currency. But in January 17, he talks down the dollar, and as the dollar slowly declines over the next few months, we're in a world where volatility likewise is coming off the board. So a lot of these dollar-denominated assets in a world where maybe Trump talks down the greenback, Bitcoin is going to surge. The dollar gets crushed. So then gold, silver surge, right? You think about equities probably doing a little bit better as well. For Americans, the things that we buy from abroad are mostly invoiced in US dollars. The Kansas City Fed has produced a good deal of research that about 95% of the things that Americans buy from abroad, they're already priced in US dollars. So if the dollar goes up 5% or down 10% one month, it literally doesn't impact our costs. But that's not the case for foreigners. So when their currencies get a heck of a lot stronger, it really does impact their consumption patterns and the way that they change their import and export flows. So a much weaker US dollar means consumers abroad can buy more goods. And that means our companies that have revenues that are based abroad, well, they're going to make a little bit more money. So that's a good thing at the end of the day. The dollar breaking down, Bitcoin up, gold up, silver up, copper up. Anything that's denominated in US dollars goes up, including equity markets. But we're not at the bridge yet. We're not there.
We're not there. But I do think to a certain extent, equities are a bit more forward looking. They discount those probabilities a lot sooner than like commodities. So I think if that scenario plays itself out, my bet would be more leverage on an incremental dollar in the commodity space. So in gold, in likely silver for sure, and in Bitcoin, obviously, relative to equities. But I would agree, it probably lifts all boats. Speaking of gold, the metals here you just brought up, after seeing a little bit of weakness here, I don't want to say weakness. It's probably just a sloppy sideways market we've seen, with 2,600 being the floor and 2,750 being the ceiling. What do you think helps to break gold out of this 15, what was that? Did I say 150 point range? Good Lord. Come on, Victor.
I don't know if we're going to get that yet, but
is it the dollar? Is it real yields? A little bit of everything.
Real yields just hit their highest level since the global financial crisis this past week. And gold kind of like yawned, which, outside of the last pre-COVID, if you want to clean your data series, gold and real yields have a fairly clean relationship. Real yields up, gold goes down. Real yields down, gold goes up. It's been estimated that that gold, despite not having a dividend, a coupon, right, cash flow, it does have a real rate of return of about negative 2.5%, because there are storage costs, transportation costs, security costs associated with the physical metal. And so if you think about gold on like the currency spectrum, right, the US dollar has this yield and the euro has Y yield and the Japanese yen has Z yield, and gold sits near the bottom of that totem pole. So if you're seeing rising real yields, why are you going to hold an asset that doesn't give you anything returning, quite frankly, maybe burning a hole in your pocket, less capital appreciation, right? So the fact that gold is holding up during a real yield rise, that's great. That shouldn't be happening, right? It's like if your starting quarterback gets injured and then the team wins the next 10 games in a row. You're like, hold on a second. Was he the problem? But here, gold is now, it survived. It survived the march to 5% in the 30-year. It survived the DXY going up to 110. And gold here, it feels like it did last year when we had the Chinese buying pause, does it not? We get the run up, depending upon what contract you're looking at. We get a floor right around 2,300 or 2,350 about now in the G5 contract. And now we have a floor again right around under 2,600. And what do we find out in December? At some time in November, the Chinese government's resumed its gold buying. I would bet that was probably on November 14th, if you look at that candlestick. And we have not cleared out that candlestick low since then. So central banks are buying, the dollar's going down, and it's surviving a real yield storm. Gold probably has a chance at another move to all-time highs here in short order. And silver could be looking at that fabled $43 price target we talked about last year.
Could be. I think it's a great time. I mean, look, I look silly sometimes, talking about the things that nobody wants. You look really silly, especially if you have to do it for a long time. So, talking about the miners, buying the miners as the most interesting way to play gold upside, because gold hadn't broken down below 2,600, but you're only a few hundred points away from highs. Could you make new all-time highs? Sure, but it's hard to know where how much that opportunity is. Whereas in Newmont, when you know gold at all-time highs, Newmont was trading 58 and change, and this thing is on earnings and just sort of, I think, people not believing in the miners, being a very short-term trade over decades, and perhaps not having the confidence that whatever market forces will allow gold and silver and other metals to stay at these elevated prices. To me, the opportunity in some of the miners made a lot of sense. And today, of the last two sessions, really, you're starting to see that sort of idea play itself out with Newmont mining now up to $42 off of, being around $37. So on a percentage basis, that's a lot of money in a very short period of time. And I still think there's a lot of opportunity to be had here. Is it going to pay and print over a week? I don't know. But I still think whether it's Newmont in the silver space, whether it's PAAS or some other silver miners, and the same thing goes for copper, I think FCX being sort of this equity proxy play to copper, I think all of those things are trading much cheaper than the metal themselves. High relative where they're trading right now. So percentages off high. So I think those are really interesting plays here, and I'm sticking to them. What do you think about copper? Go ahead.
Yeah, if I could pull something on here, there's $300 billion of Russian assets frozen in accounts across the West right now as a result of the sanctions for their invasion of Ukraine. One of the things that the Biden administration is doing right now in the final days here is trying to get the European countries on board with transferring all of those funds into a single escrow account to basically say, like, you want your money, come get it. You got to end the war. Of course, European leadership, being the chickenless or headless chickens that they are, these feckless fools, they are saying that they're worried about violating international law if they were to move the money out of these Russian accounts.
Isn't it funny when we care about international law? It's funny when we choose to recognize it.
Yeah, no, it's one of those things, generally speaking, I believe you should be polite to people, but like if someone says, starts cursing me out, like the sailor is going to come out of me as well, do unto others as you want others to do unto you. So Russia, invading Ukraine is a flagrant violation of international law. And Europe's like, but we don't want to violate the law too. That Russia already just pissed all over. So Europe's kind of a joke. My point is Russia now has all these central bank reserves in the West. Do you think we're going to keep them in the West? Or do you think Russia's going to take those central bank reserves and say, yeah, we're going to hold those in dollars and euros and pounds still? Or are they going to do what many have been saying they might be doing for years, which is buy more hard assets? I wouldn't be it wouldn't surprise me at all if a knock-on effect of the ending of the sanctions is that hard assets just go through the roof, because for every dollar taken out of the Western financial system that's currently frozen as a result of these sanctions is going to get circulated back into gold and silver and copper and oil and yada, 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 because at least then Russia can have their handle on those things and they don't need to worry about the Western central banks and SWIFT and CHIPS and all these other systems that have ring-fenced their economy for the past nearly 3 years.
So then I don't disagree with you, but I also think our government officials at that level, they get painted with incompetence, but we have really smart people. And when it comes to finance, so if government is going to end sanctions, it's not like they don't ask Larry Fink what conditions need to be put. You know what I'm saying? It's not like they don't ask JV Diamond. And so part of me wonders, is there a second order thinking? Is there a second order or third order thinking that says, how would they defend against that?
Yes, but I recall when you and I were talking about Iran money being returned, like money's fungible. So if we return $6 billion to Iran for food assistance, then the money that they have currently allocated for food, they can then reallocate to weapons development, right? So, the Russian money is fungible. They may not, there may be conditions like you can't do X, Y, Z with this money. Sure, then we'll only do the very narrow things with that money. But then the money we're allocating for those things we'll just use elsewhere to buy gold and silver, right? So
money goes where it's treated best, no matter what. It's going to find its way. Great point, my friend. All right, we are coming up to the end of the hour. Let me ask you a question. I don't think I tend to ask you this question. But do you see any price extremes, or do you see any interesting asset sectors or industries or just stories in general we didn't cover, and we're going to do it in 60 seconds or less? Is there anything out there that you and I haven't covered that you actually think is an attractive asset or sector or industry that we didn't cover 60 seconds or less?
Oh, Lord, forgive me. KIE. Pull it up.
Oh, okay. Talk about it.
Too big to fail.
Oh, yeah, for sure.
I think
this is our next GFC.
I think we learned this week that the way the insurance industry is structured right now is that they are effectively a monopoly.
Mm-hmm.
Right? You know, California passes this fair insurance standard where if you can't get insurance through a private insurer, you can go get it from the state. Why is that set up? Because California passes a law that caps the rates that insurers are allowed to charge to their consumers. Why is that the case? Because insurers were saying, hey, we need a lot more money from you if you want us to insure your home because of your wildfire and flooding risks. And so these insurers just start to back out. And so now we have a very clear track ahead of us, which is why these insurers are now higher than where they were prior to the wildfires starting. Either they're not going to take the risk in areas where they're going to lose money, or they're going to be backstopped by the federal government who's going to pick up the pieces. Mm-hmm. You and I, California doesn't have the money to pay for this. FEMA does, though, which means you and I are backstopping wealthy people in Florida and California from living in areas where there's flood risk and wildfire risk. And we can continue to do that because this is our Fortress America and we're all in this boat together. And I don't think that disaster aid should be conditioned on whoever's in office. I don't recall Democrats saying, well, if Republicans in Western North Carolina don't get their act together, we're not going to help the flood victims, because that's an insane, politically craven thing to do. And I really hope that we're not doing that for the people in California. But when you think about the insurance industry right now, some of these utility names get wiped out, but, you know, State Farm, AIG, Allstate, right? They didn't insure these homes for good reason. Actuarials are some of the smartest people on the planet. I hated that section studying for the CFA. It's like, wait a second, if I live to 86 and a half, my wife lives to 89, how much money, probabilistically, what are the odds of us living each 5 years past our retirement? Oh my God, like, what am I doing here? But there is a very distinct set of mathematics around that.
I'm still on. If a train leaves Kansas City headed west at 60 miles an hour, I'm still on that time.
You know, my favorite question ever on a test was AP Physics. Right, I got a 3 on the test. Good, but miserable at physics. But it's like penguins ice skating across a rink. If it starts off at 20 miles per hour, how far down the rink does it slow down? I'm like, I know. So like, I draw a penguin playing hockey. Like, what am I supposed to do with this?
With that, everybody, I love the idea, by the way. I appreciate bringing it up. There's so much we can do with that, but we'll have to save it for next time. Chris Vecchio, if the people want more from you or they want to bug you on Twitter about this particular idea for some follow-ups, do me a favor and tell them where they can go.
Oh, it's the everything app now, Victor. X, at CVecchio, FX. You can also find me here on Tasty Live Monday through Friday, Futures Power Hour, 1 p.m. Eastern. Overtime, 4 p.m. Eastern, Monday through Thursday with Radigan and Spivak. Tuesdays, Let Me Explain with Tom and Tony, 9:40 a.m. Eastern. And then, of course, Victor Jones now on Wacky Wednesdays, 6 p.m. Eastern.
Yeah. If you want to follow me, you can tell if I'm happy or not with Elon Musk. If I respect him in the moment, I'll call Twitter X. And if I'm trying to send out a subtle jab to the universe, I'll call it Twitter. If you want to follow me on Twitter, you can follow me at Victor Jones. Oh, and Jones is a 0. Big thank you to our special guest here today, Chris Vecchio. Show him some hearts, some fire emojis, some thumbs up in the chat. He always drops some great knowledge when he's with us. Chris, I wish you the best, my friend. I'll see you next week. And for all of you out there, I'll see you tomorrow. Same time, same place, same great network, only on Tasty Live. Peace.
A very good morning to you. It is Wednesday, the 15th of January, and we've got a brand new PCM, new joiner. The poor guy's only been here 3 days and I've dragged him into the studio. Please introduce yourself to the world.